kindly do not skip this introduction what I'm talking about. Fine. This is income tax marathon, which is newly done, completely applicable for May 26, September 26 and Jan 27 exams. Even if you are a CMA student, for you also the same marathon is equally applicable for June 26 and December 26 exams. Guys, this marathon is going to be totally in two parts. Almost 21 hours I did this marathon. I'm telling you, you are going to experience income tax like never before. I made very detailed marathon this time. All the CA Inter and CMA Inter students, I'm telling you, you will really love the content like anything. Now, look at the timestamps below. We have given timestamps, right? Look at below the timestamps. You will find which part marathon you're watching. For example, part 1 marathon will have these topics: basics, which has a weightage of 6 marks, agriculture taxation, which has a weightage of 4, sometimes even 6 marks, PGBP, almost 5 hours I discussed PGBP chapter in depth. Capital gains, immovable property taxation is discussed in this part 1, TDS, TCS. Guess what? This time I'll tell you one point. There are 7 chapters where amendments happen. 7 chapters amendments happen, guys. This time 7 chapters. Substantial number of amendments happen, guys, so don't take it granted. For example, in basic topics, default tax regime, complete rates were amended. Rebate provision under default tax regime is fully amended. It's not even like what you think, the substantial amendment. Salaries chapter, specified employee limit is amended. Medical facility travel reimbursement exemption limit has been changed. House property, unoccupied property amendment, PGBP 43B, micro small enterprise limits have been changed. Chapter 6A, ATCCT, very minor amendment, not a big deal at all. TDS, TCS, again, substantial amendments happen. Many sections, more than 15 sections were amended in TDS. Substantial amendment, guys. And return of income, a biggest provision in return of income is updated return, and that got amended. And guys, what topics I'm going to cover in the marathon? 100% of the income tax, except one topic, that is return of income. Only return of income I have not yet covered in the marathon in these 2 parts. Part 1 will cover these topics. Part 2 will have residential status, salaries, house property, IFOS, clubbing, Setoff and Carry forward, chapter 6A, AMT. Now, here I just want to give one small disclaimer. IFOS, clubbing, Setoff, and then chapter 6A. These 4, literally we don't have any amendments. For these 4 topics, I'm using for now my previous version recording, which is as part of part number 2. Okay, again I will do new version marathon and again post it again along with return of income. But I need one favor from you. Please like the video. Many of you are appreciating my content and sharing to your friends. All that is good, but please show by liking the video and commenting. Definitely you will be learning a lot of new points in this marathon. I will be very happy if you comment and appreciate, because that motivates us a lot to do more and more videos, and share it to your friends also. Guys, please, there is a couple of introduction that is there, continuation, where to download the books, what is the weightage available, all that were discussed in the part 1 video. Please watch the part 1 video. If at all any of you are directly watching part 2 video, please go back and watch part 1 video, guys. And one more important clarification, below timestamps were given. Okay, in the part 1 video, these are the topics which are covered. In part 2 video, these are the topics which are covered. Remember, your income tax paper with choice will be 65 marks, guys. It's not 50. With choice, it is 65 marks. 100% syllabus I'm covering in this marathon. Total marathon, including return of income, upcoming, going to be put together will be 22 to 23 hours, guys. Exhaustive mega marathon, which is what I'm giving you. Okay, that's it. Continue watching. Do not even skip 1 minute. Okay, continue watching. You will experience income tax like never before. That's it. All the very best. Yeah, now let's begin heads of income discussion. Remember, I already covered introduction, basic concepts is over, residential status is also over. Now we are discussing heads of income. In that, the first head of income is salaries. Okay, now now look at, we have totally 5 heads of incomes, right? How to compute total income? Just now briefly in the basic concepts chapter, I briefly told how to compute total income. First to know all heads of incomes. all heads of incomes plus clubbing provision plus set off and carry forward provisions if you apply, then what you will get is called as gross total income minus chapter 6A deduction and 10A deduction if you reduce, then what you will get is actually called as total income. Now all heads of income means what? We have 5 heads of income: income from salaries, income from house property, income from business or profession, income from capital gain, income from other sources. Correct? Now income from salary, we have only 3 sections, 50 into 70. Only 3 sections, capital gains, sorry, a salary set of income. Then we have house property. It starts with 22 to 27. Sir, what about 18, 19, 20, 21? They were omitted. These sections were non-operative. Okay. 18, 19, 20, 21 sections were not existing right now in income tax law. Means they were omitted. Then PGBP 28 to 44. We have up to 28 to 44 AE in our syllabus. We have up to 44 AE in our syllabus, PGBP. Then capital gains, it starts with 45. We have up to 55 A. Then we have other sources, which is 56 to 59. Are you clear? Then we have clubbing provisions, 60 to 64. No, I can say 65. Then we have set off and carry forward provision, which will start from 70 to which will end at 80. Okay. Then we have chapter 6A deductions, which we have 80A to 80U. Clear? These are the main provisions that we are having. Then after that we have, apart from that, we have TDS TCS provisions 190 to 215, 190 to 215. We have all the provisions. Apart from that, we have 234 series. Then we have 139 series. That's it in our syllabus. 139 series is nothing but return of income. That's it. So this is what our exact syllabus is composing of. Now in that, the first head of income is income from salary. In salaries, we have totally 3 sections, 15, 16, 17. 15 talks about what is taxable under salary. What is taxable under salary? I can say charging section. What is it? Charging section. 15 is charging section. 17 talks about what are all income taxable under salaries. What are all income taxable under salaries? 16 talks about deductions. What is it actually talks about? Deductions. Remember, any head of income you take, the computation mechanism is same. First you have to compute gross income under that head. First you should compute gross income under that head. Here we compute gross salary. Gross salary, how to compute? Section 17 is guiding. 17 is guiding us. How to compute gross salary? 17 is guiding us. Minus deductions under section 16. Deductions, first we need to reduce. Then what we get is called as income from salary. Now first I will discuss about deductions from salary. First I will discuss about deductions. What deductions I will get? Remember, deductions will be reduced from gross salary. By the way, for May 26, September 26 and Jan 27 put together, is there any amendment? Yes, 2 amendments are there in salary set of income. 2 amendments were there in salary set of income. You remember, in salaries there is a definition called specified employee. Specified employee definition is there, right? And you remember medical treatment at abroad. Yes or no? For that, traveling expenditure, remember, there is a point on traveling expenditure. If traveling expenditure for medical treatment at abroad, is it exempted? Yes, it is exempted if at all the gross total income is not exceeding 2 lakh. Now they removed the 2 lakh limit and they mentioned a specified limit now. Right now the limit is not 2 lakhs, they increased it. How much they increased? That is not yet announced. Are you clear? So in that salary, traveling expenditure for medical treatment abroad, is exempted if gross total income is not exceeding 2 lakh. This 2 lakh word is up to Jan exams. But for May 26 onwards, it is not linked with 2 lakhs. Traveling expenditure for medical treatment abroad is exempted if the gross total income does not exceed prescribed amount. Hello? Then prescribed amount. What is prescribed? Not yet prescribed. Are you clear? Yeah. Next. Specified employee. 3 persons are specified employee. 1, a director. 2. An employee who is having substantial interest in the entity. 3. An employee drawing per annum more than 50,000 rupees monetary salary. Monetary amount he is drawing is more than 50. That more than 50 is the right, they striked and they mention prescribed amount, which is not yet prescribed. Okay, that's it. These are the two changes right now that are applicable for May 26, September 26 and Jan 27. No other amendment is there in salary. Are you clear? Okay, now look at. So deductions. What are the deductions we have under section 16? We have totally 3 deductions. What are the deduction 16? Okay, we have a standard deduction. Then we have deduction for entertainment elements, yes or no? Then we have a third deduction, which is deduction for profession tax paid by the employee out of his pocket. Profession tax paid by employee out of his pocket. Are you clear? No. Profession tax paid, total profession tax paid, whether company paid or employee paid doesn't matter. Both are allowed. Are you clear? Both are. Total profession tax paid is allowed. Simple. Whether you pay it or your boss paid doesn't matter. Total profession tax paid, how much will be allowed as deduction? You know, when company pay the tax, no, on my name profession tax, no, first I will treat it as income. Since it is treated as income, I am only bearing it indirectly. Yes or no? So I will get total profession tax paid by me and profession tax paid by my employer. Together I will get deduction. Do you agree? Yes or no? Now, by the way, standard deduction under optional tax regime, flat 50,000. What is the standard deduction? Flat 50,000. Under default tax regime, the standard deduction is flat 75,000. By the way, you must know one point. Deductions under section 16 should not be more than gross salary. Arey sir, my salary itself is 50,000 sir. Will I get 75,000 deduction? No. Deduction is always equal to maximum salary. Yes or no? Sir, my salary is 50 lakhs sir. Then can I claim deduction of 75,000? Absolutely. No problem. Yes or no? That's it. Now, under optional tax regime, this much deduction. Under default tax regime, this much. Now, what about entertainment elements? Under optional tax regime, allowed. Under default tax regime, no deduction. What about profession tax? Under optional tax regime, deduction is allowed. Under default tax regime, deduction is not allowed. Remember this. Under section 16, if at all SSC is choosing default tax regime, only standard deduction he'll get. He will not get deduction for profession tax, entertainment elements. Whereas optional tax regime, all the 3 deductions he can claim. Now, how much he can claim? Profession tax, how much he can claim? Whatever actual amount paid. No restriction on that. If it is 4,000, 4,000. If it's 10,000, 10,000. If it is 2,000, 2,000. How much is paid? That much. Suppose if profession tax on behalf of your company paying it, nothing to worry. First treat it as income from salary. Treat it as perquisite, gross salary. Then reduce it here below. Clear? Yes or no? That's it. Now, entertainment elements. Deduction will be there only in optional tax regime, right? For whom? Only for government employee. Entertainment elements is allowed. Entertainment elements is allowed as deduction only for government employee, not for non-government. Only if at all the employee is a government employee. Entertainment elements is allowed as deduction. First of all, entertainment elements is fully taxable. Suppose I am a government employee. I am receiving entertainment allowance of 1,20,000 per annum. So 1,20,000 first you will treat it as gross salary, part of gross salary. So I will tax it. First I will tax it. Then my gross salary is what? 1,20,000 minus section 16. Entertainment elements deduction I will claim here. How much I will claim? Working note number 1. This working note you will claim when, that too if he is a government employee plus moreover he is optional tax regime, then only. Otherwise you will not get deduction. How much? 3 criterias. 1, 2, 3. Actual amount how much? 1,20,000. Maximum deduction 5,000. Maximum deduction 1/5 of basic salary. What is it? 1/5 of basic salary. So basic salary information they will give in the question. You will get the basic salary information on that 1/5 you put. In our example, let us assume basic salary is 10 lakh. 1/5 of basic salary means what? 2 lakh. 1/5 of basic salary means what? 2 lakh. Second criteria, statutory limit 5,000 and actual amount 1,20,000, whichever is lower. 5,000 is the maximum deduction. How much you will get? 5,000. Do you understand how to treat entertainment elements? First tax it, then claim deduction. Are you clear? Standard deduction I told, entertainment allowance I told, and then profession tax deduction I told. Deductions under section 16 is completed. Are you clear? Now if you observe the salary computation mechanism, gross salary first we should compute, then minus deduction we should compute, then what we get? Income from salary. We are discussing the chapter called income from salary. In this deductions part we completed. Now we need to understand how to compute gross salary. Yes or no? How to compute gross salary we should compute. If at all we understood computation of gross salary predominantly, this chapter is over. Understood? Now tell me, if a person is working in a company, what amounts he will get? What amounts he will get? You know, there are two types of benefits. DTS, during the service. I will call it as what? During the service. Employee getting salary during the service. That is income from salary. Retirement benefits. RB. What is it? Retirement benefits. Not Royal Challenges Bangalore. Okay. Retirement benefits. So retirement benefits means what? Employee receiving money from employer at the time of retirement or after retirement. Anything it can be. At the time of retirement or after retirement. Best example of after retirement benefit is pension. Pension he will receive every month. No, that's an after retirement benefit. Are you clear? Now tell me, what are the retirement benefits? First one is pension. In the pension, no, I have two classifications. Uncommuted pension. What is it? Uncommuted pension. What is uncommuted pension? You know, monthly pension. If at all you worked in government company or a government sector, generally in government sector only pension is very popular. Okay, even private sector also you might get pension. After you retire, every month you will get some amount monthly as a pension, and that pension is called as what? Uncommuted pension, monthly pension. Are you clear? Then we have commuted pension. What is it? Commuted. Commuted means what? You know, lump sum amount. Apart from that you have gratuity. Apart from that you have leave encashment. Apart from that you have voluntary retirement scheme related compensation. Then apart from that you have retrenchment compensation. What is it? Retrenchment compensation. Broadly, these are retirement benefits. Broadly, we have in our syllabus we have only these retirement benefits. Apart from that, you might also have RPF withdrawal. What is it? RPF withdrawal. Superannuation fund withdrawal. Like that, some more things are also there, but they're not that important from exam point of view. I will discuss whatever is important from exam point of view. Clear? That's it. These are all during the retirement or after the retirement we get this money. Clear? Now for this we have a taxation. Okay, now gratuity 10 clause 10 talks about gratuity taxation. Leave encashment 10 clause 10 AA talks about leave encashment. Correct? Then VRS 10 clause 10C talks about leave encashment. Retrenchment 10 clause 10B. Okay, PPF with RPF. This RPF withdrawal is 12, 13 like that, 11 and all is it? That's a different one. Okay, then entire pension 10 clause 10A talks about pension. 10 clause 10A talks about pension, how to tax it. Then apart from that, during the service, again when I'm working in the company, no, I get benefits. Remember, salary set of income is applicable only when section 15 charging section is satisfied. As per charging section, there must be a relationship of employer and employee. Only when the relationship of employer and employee exists, salary set of income will apply. Otherwise, salary set of income will not apply. Are you clear? First point, suppose an auditor providing audit services to an audit client and he's getting remuneration for the audit. No head of income. The salary set of income will not apply because that's a profession to me. Me and the client do not have employer-employee relationship. Are you clear? Therefore, that income is not taxable under salary. So, to get taxable under salary, to get salaries provisions attracted, there must be employer-employee relationship. Are you clear? Next, during the service, what benefits I will get? I may get monetary benefits. What is it? I may get monetary. I may also get non-monetary benefits. Non-monetary benefits, rent-free accommodation. Non-monetary benefits, motor car. Non-monetary benefits, servant, yes or no, gas, water, facility. I'm talking about what ma? Facilities I'm talking about. Then I will get education, a facility. Remember that, education facility. Then I can get medical facility. That's it. Non-monetary major items are this only. Non-monetary major. There is one more non-monetary, I can say, sweat equity. Sweat equity shares is also non-monetary. Am I right? I'm getting shares, which is not a monetary. Yes or no? These are all non-monetary benefits. How to tax them? For this, rule number 3, perquisite valuation rules are there. Perquisite valuation rules. Rule number 3 of income tax rules, which talks about valuation, how to value these benefits, because these are non-monetary, right? How much is taxable for you? Rules were there. Apart from that, there is one more item, movable asset. What is it also there? Movable asset. Company might give you an asset to use. Apart from immovable property, they will also use give an asset to you. How to tax it? This is one. Apart from this, you get monetary benefits. What are monetary benefits? Obviously, basic salary. Am I right? Basic salary is a monetary benefits. DNS allowance, which is forming part of retirement. DNS allowance not forming part of retirement. You know, DNS allowance is 2 types. DNS allowance forming part of retirement. That is one word. DNS allowance, nothing is given. If nothing is given in the exam, we assume that DA not forming part of retirement. We assume that DA not forming part of retirement. In CMA, those of you writing CMA exams, in CMA study material, DA, if at all nothing is mentioned also, they are taking by default for retirement. But in CA exam, CA Inter exam, if DA alone is given, nothing is mentioned in the bracket, we assume that it is not considered for retirement. Only when they specifically given that it is considered for retirement, then only I will consider. Are you clear? Then again, DA forming part of retirement is there, right? For that, there is another expression. There is another terminology expression. DA forming part of terms of employment. DA forming part of terms of employment. You know, the DA for retirement means what? It is 2 types. They can, in the exam, they will tell you forms a part of retirement or forms a part of terms of employment. Any way they can use. Whether they are using as per the terms of employment or whether they are using the word retirement, I assume that the DA is calculated for retirement purpose. By the way, whether DA is calculated for retirement or not calculated for retirement, leave it. It's a monetary benefit for me or not? Yes or no? It's a monetary benefit or not? That's it. It is a monetary benefit. Look, right now I'm not yet talking about taxability. I'm only listing out what are monetary, what are non-monetary. I'm just telling you what benefits he will get. I'm not listing out. I'm not talking about taxability. Taxability will talk one after one. Understood? Now next one. Third benefit, another benefit what I will get? House rent allowance. For that, no, 10 clause 13A exemption is there. Okay, then I can get education allowance. Am I right? I can get hostel allowance. Hello? Hostel allowance. I can get transport allowance. Yes or no? I can get transport allowance. Or else I'll do one thing. You know, I'll not write like this. I will simply write allowances. I will simply write allowances. What I get in monetary allowances? Allowances are various types. Okay, various. Education allowance, telephone allowance, medical allowance, hostel allowance, transport allowance, travel allowance, conveyance allowance, daily allowance, helper allowance, uniform allowance, research allowance. So many allowances we have. Tribal area allowance, hill area allowance, high altitude allowance. There's so many allowances that we have. Okay, we'll discuss one after one. Taxability. Now these are the benefits we get. Am I right? Now we need to discuss one after one how the benefits are to be taxed. Okay, first I will discuss about allowances discussion. Then I will discuss about monetary. Simply, first I will discuss all monetary benefits. Then at last I will discuss about how to tax non-monetary benefits. Salary, set of income. This is how you should learn. First learn how to tax monetary. Monetary means what? These are monetary. Even retirement benefits are generally monetary. Then how to tax non-monetary benefits. So that's how we should learn the subject. Clear? Now the first and foremost thing, what are monetary benefits? What are monetary benefits? Monetary means allowance. Monetary means what? Allowance. Able to understand? Generally whenever we are giving monetary, by the way, monetary benefits are again 2 types basically. One is allowance, another one is reimbursement. What is it? Reimbursement. Suppose if the reimbursement is for personal purpose and reimbursement is for official purpose, any reimbursement generally given for official purpose is exempt. What is the difference between reimbursement and allowance? In reimbursement, first you will spend. Employee first he will spend. Come back and show the bill. Then company will reimburse the bill. That's called reimbursement. Allowance means what? First I will give you the money. Whether you will spend or not, I will not ask. That's basically generally called as allowance. Now, again, these allowances are two types. Official allowances, personal allowances. These allowances are again two types. Official allowances, personal allowances. Now, within official allowances, again two more types. Within official allowances, there are again two more types. What are they? Helper allowance, research allowance, uniform allowance. What is it? Uniform allowance. Then there is another type. Travel allowance. What is it? Travel allowance, daily allowance, conveyance allowance. What is it? Conveyance allowance. All are official only, but we categorize them into two parts. Now, why we need to categorize them into two parts? The second part is, and first and second part. Second part is what? Travel, daily, conveyance. What is this? You know, these are exempted. Suppose employee is getting the travel allowance, employee getting daily allowance, employee getting conveyance allowance. These are exempted. These are exempted to the extent spend. To the extent spent. Sir, company gave me travel allowance 1 lakh. I spent fully 1 lakh. How much is taxable? 0. Sir, company gave me travel, conveyance, daily allowance together 1 lakh. I spent 50,000 cleverly. Remaining 50,000 I saved in my pocket. How much is taxable? 50,000. Are you clear? Whether you call it as optional tax regime, default tax regime, doesn't matter. The provision remains the same. Hello? Everybody. Whereas helper allowance, research allowance, uniform allowance, 3 allowances were there, right? Helper, research, uniform. I'll tell you the meanings also. Wait, don't worry. Helper, research, uniform, is that right? They are fully taxable under default tax regime. What is it? Fully taxable under default tax regime. Sir, what if it is an optional tax regime? How much ever spent, that much is exempted. Under optional tax regime, how much you spent, that much is exempted. Which means official allowances under optional tax regime, how much ever you spent from the amount received from the company, that much is fully exempt. Are you clear? Whereas travel allowance, daily allowance, conveyance allowance, they are also same treatment for default also. However, helper allowance, research allowance, uniform allowance, these allowances are fully taxable under default tax regime, but under optional tax regime, exempted how much ever you spent. Whereas conveyance allowance, daily allowance, travel allowance, default or optional, leave it. They are fully exempted if you spent them fully. If you partly spent and partly saved, that much is taxable fully in your hand. Are you clear? So that's the difference between two types of official allowance. Both are official. Now, sir, what is a travel allowance? Very simple. On business purpose, I am going to some other place, some other city, some other state, some other country for business purpose. For my company purpose, I'm traveling. For the traveling purpose, they are giving me allowance. That's travel allowance. Now tell me, whenever I travel for the purpose of company, I have to stay outside now in a hotel where I have to eat outside food, everything for the company purpose. Tell me, what is the necessity for me here? Only for company purpose I'm going there. Daily, I incur some expenditure when I travel somewhere else. For recovering that expenditure, company is giving me allowance, and that's called daily allowance. Are you clear? Now, apart from that, whether I am staying in the same city where I am working or whether I am staying in some other city I am working, yes or no, I have to travel for company purpose, meeting various company vendors, company customers, meeting company customers and all. I'm a marketing executive. Yes or no? So I have to always book a cab and then go by cab and meet a client. Go book a cab and go and meet a vendor, meet a customer. For that purpose, company is paying me allowance. That's called conveyance allowance. What is it actually called as? Conveyance allowance. Are you clear? So conveyance allowance means allowance given for commutation on official purpose. Travel allowance means what? That is also an allowance given for traveling to various cities and all for company purpose. Daily allowance. Whenever you travel for various city or whatever reason, company is giving you a daily allowance for spending for official purposes. You are traveling on official purpose. Daily you will be incurring some expenses for food, all that. No, for that company is giving you the money. That is called daily allowance. And these three allowances are exempted. How much ever you spent, whether it is DTR or OTR, doesn't matter. Whereas helper allowance, you can take helper with your PA. Yes or no? Research, you want to grow in your life. Yes or no? Yes or no? Like you are researching or you're doing some research for the company purpose. Yes or no? If at all research is successful, you will get sweaty equity shares tomorrow. Yes or no? So for that research, you're doing research and I want to encourage you. I'll give you elements for that. Uniform, for the company purpose, you have to wear a uniform or at least a blazer with our company logo. For that reason, I'm giving you elements. That's called uniform elements. So these three were exempted fully under optional tax regime. If at all they were fully spent. Default tax regime, fully taxable. Are you clear? Then apart from that, we have personal allowances. What are various personal allowances? Personal allowances, what you know? Very simple. Basic salary, you can treat it as allowance, fully taxable. Personal allowances are fully taxable by default. All personal allowances, sir, it's a basic salary, sir, treat it as personal allowance, fully taxable. Sir, I'm getting DNS allowance, sir. DNS allowance is also for personal reason only. Whether it is for retirement or not for retirement, to leave it, fully taxable. Sir, I'm getting telephone allowance, sir, fully taxable. Telephone, by the way, here what is it? Telephone allowance, and you know, guess what? In recently in one of the MTP or RTP, there was a question. Telephone allowance they gave, but this is to reimburse the bill. Telephone allowance was given to reimburse a telephone bill they gave. Actually, you know, telephone reimbursement is different. Telephone facility is different. Telephone allowance is different. Able to understand? Telephone reimbursement, fully exempt. Fully exempt. Telephone facility, fully exempt. Telephone allowance, fully taxable. This is the rule. Actual rule is what? Telephone allowance is fully taxable. Suppose if the telephone allowance is given as a reimbursement for the bill, maybe the word used is allowance, but actually it's a reimbursement. Then again it is exempted to the extent reimbursed, to the extent spent. Suppose no, if an employee was given telephone allowance without any actual limit, whether you spend or not, I don't worry about it. In exam, no, how much he spent, they have not given that information. Telephone allowance given, fully tax it. Suppose the employee, suppose in the question they mentioned, out of the allowance, no, employee spent on telephone bills this much, they gave that information, then you can consider that as a reimbursement. Actually, that interpretation was wrong, but that's how it was considered in MTP. Are you clear? In Jan 26, one of the MTP, that's how they considered, which is actually a wrong treatment. Do you understand? Telephone allowance, whenever it's an allowance, it's fully taxable, no exemption at all. Telephone reimbursement is exempted. Telephone facility exempted. What is telephone reimbursement? First I will pay, then I will show the bill to the company and get the money. That is telephone reimbursement, fully exempt. Company itself put the telephone connection in my home or gave my SIM card and all, company also bearing telephone facility. That's fully exempt. Sir, they're paying me money, sir. Whether I use Jio network, Airtel network, whatever, they doesn't bother, sir. Then that's a telephone allowance, which is fully taxable as per the original law. But in one of the MTP, telephone allowance they gave, within the bracket they mentioned very clearly, it is for reimbursing telephone expenditure, they said, which means that is not an allowance, that is to be considered as reimbursement. You know what is allowance? I give you money. I don't care whether what you do with that. I will give money, telephone allowance, medical allowance, I will give you with some name, but I don't care what you do with that. If that is the nature, then that's an allowance. Allowance is by default fully taxable. If it is for personal purpose, allowance is by default fully taxable. Basic salary, fully taxable. DNS, fully taxable. Telephone allowance, fully taxable. Medical allowance, fully taxable. Education allowance, fully taxable by default. That's the main provision. Telephone allowance. Then there is one more allowance. Next allowance is what, you know? Next allowance is what? Education allowance. What is it? Education allowance. Children education allowance, children hostel allowance, house rent allowance, children hostel allowance, house rent allowance. Able to understand everyone? Yes. Now look at, apart from all this, there is one more allowance called transport allowance. What is it? Transport allowance. Now transport allowance, traveling allowance, conveyance allowance, leave travel assistance. Okay, these four are different. Transport allowance means what? Amount given to you so that you travel from home to here, from home to office, office to home to office and back. Okay, on and off. For that reason, if at all I'm giving you allowance, that's called transport allowance. If I'm giving you allowance for company official duties, you are traveling, conveyance allowance. If at all I'm giving you allowance for company official purpose, traveling to some other city and all, that's again travel allowance. If I'm giving you to spend on a daily expenses for the company purpose, daily allowance. Do you understand? Leave travel facility. You put a leave to the office, go with your family for a vacation. And for that, with the expenditure of travel companies bearing, that's leave travel concession, or that's called as leave travel assistance, which is 10 clause 5, which is another monetary benefit, which we will discuss later. Until now, clear? Yes or no? Now what is the tax treatment for one of each of it? Transport allowance. What is the tax treatment for transport allowance? Transport allowance is fully taxable for everybody. However, if at all the employee is blind, deaf, dumb, physically handicapped, the employee is blind, deaf, dumb, physically handicapped, I can call them as disabled employee. Yes or no? I can call them as an employee who is disabled, or you can also call them as in a respectable way differently abled. Yes or no? If an employee is a differently abled employee or a disabled employee or blind, deaf, dumb, physically handicapped, then if at all company is paying to them the allowance, which allowance by the way? Transport allowance. Never confuse. Travel is different, conveyance is different, daily is different, LTA is different, transport is different. Are you clear? If at all a company is paying to a disabled employee transport allowance, 3,200 per month is exempted. How much is exempted? 3,200 per month. This exemption is not available for a normal employee. Only for a disabled employee it is exempted. Where? Under which regime it is exempted? Both under default tax regime as well as optional tax regime. In both the cases it is exempted. Easy or not? Now coming to remaining. Sir, what about basic salary? Fully taxable for everybody. Default or optional or doesn't matter. Sir, what about DNS allowance? Fully taxable for everybody. Default or optional or doesn't matter. Sir, what about telephone allowance? I already told, fully taxable for everybody. Basically telephone allowance is fully taxable for everybody. But in exam, if they give you within bracket, it is given as a reimbursement for telephone expenditure incurred, then to that extent exempted, balance amount only tax it. To the extent exempted and tax only balance amount. Hello everybody, able to understand? Balance only you tax it. Next next education allowance, children education allowance. Now regarding education, I will talk two things simultaneously. Okay, children education, what is it I'm talking about? Children education. Suppose if the company is paying me allowance, or if the company is giving me a facility. Facility means what? Company had a company itself has a school, or company had a tie-up with one school. In that school my children are studying. In both the cases I call it as what? Facility. Allowance means what? Company is not providing any education facility to my children. They're directly giving me money. For example, company is giving me 10,000 rupees per month for children education purpose. 100 rupees per month only exempted. That too per child. Are you clear? Maximum 2 child. Yes or no? Maximum for 2 children. Sir, what if it is an education facility? What if it is an education facility? Here we will see similar education cost per month. How much? Similar education cost per month, how much? We will check. If per month in a similar coaching institute, similar education institute, what is the monthly education cost? I will see. If the monthly education cost is less than or equal to 1,000 rupees per month, if the monthly education cost is less than or equal to 1,000 per month, entire facility given is exempt. Entire facility given is exempt. Are you clear? Sir, if at all similar education cost is exceeding 1,000 rupees, exceeding 1,000 rupees, then entire facility is fully taxable. Entire facility is fully taxable. Now here there is an alternative treatment. Sir, my employer is giving me, my employer to my children, he is giving education facilities, sir. Okay, I have 2 children, sir. 2,000 rupees is the monthly cost. 12 months into 2 is equal to how much? 2 children into 12 months into 2,000, 12 into 24. Total I'm getting 48,000 worth of the facility. And you know what? Similar education is 2,000 ma. That's what. Minus 1000 per month per child is exempted, right? Yes or no? How much is exempted? 1000 per month for 2 children into 12 months. How much is exempted? 12,000 per annum for 2 children. 24,000 is exempted. How much is taxable? 24,000 is taxable. This is one treatment. Another treatment is what, you know? Don't give exemption. Fully tax it. Now in exam, which one I should follow? You tax fully. And also put a note point. In the below note point, alternatively, exemption of 1000 rupees per month per child can be claimed. You should write an alternative answer, which is what there in the ICA book, every answer. Able to understand? In the main answer, they are fully taxing it. In the below, they are tax. Second option, another alternative answer is exempting 1000 rupees per month. Understood or not? This is when education facility. Suppose no, the company is providing education allowance, ma'am. The company is providing education allowance if they are providing. Now tell me, if it is education allowance, what is the tax treatment? 100 rupees per month per child is exempted. Correct? Remember, basically, personal allowances are fully taxable under default tax regime. Only under optional tax regime, this 100 rupees per child per month. Hostel allowance, 300 rupees per child per month. Tribal area allowance, 200 rupees per month is all these exemptions. Personal allowances, exemptions are there only in optional tax regime. If it is default tax regime, fully taxable. If it is default tax regime, fully taxable. But transport allowance is also personal only. But for transport allowance, whether you go for default, whether you go for optional, for disabled people, 3,200 is exempted. Are you clear? Official allowances, travel, conveyance, daily, DTR, OTR, doesn't matter. Fully exempted up to the extent spent only, that too. If it is uniform helper research, only under OTR, optional tax regime, spent is exempted. Under DTR, full amount of allowance received is fully taxable. Correct? Now look at, now children education allowance, biggest mistake what many students do, you know. For example, company paying me for my children's, you know, for my elder son, 130 rupees per month they are giving me allowance. For my elder son, how much they are giving me allowance? 130 rupees. For my younger son, per month company is paying me 80 rupees allowance. What majority students do, you know, total allowance is 210 rupees. What is actually total allowance is 210 multiplied by 12. How much is received? 210 into 12 is equal to 2,520 they received, minus 100 per month for 2 children. For 12 months is exempted, right? What majority will do? 2,400 they will exempt. And balance 120 they will tax it to the outer column in the computation problem. This is wrong. How you should reduce? Exemption is not 200 per SSE. Exemption is 100 per child. Now, out of 130 for younger son, 100 rupees exempt per month. For younger son, 8 rupees you received, only 8 is exempted. So, for elder son, 30 is taxable into 12 is equal to 360. The answer is 360 taxable. This is how you should calculate. Don't get tempted. Are you clear? Specifically, you should calculate like this the exemption. Understood or not? Same is the reason with hostel allowance. Hostel allowance, how much is exempted? 300 per month. That too per child only it is. That too maximum of 2 children. This is the hostel related allowance. By the way, this 100 per month, 300 rupees per month for 2 children, this exemption and all we should calculate only in case of optional tax regime. If it is default tax regime, no exemption at all. Are you clear? Next, then we have next point, then we have HRA. Next allowance is what? HRA, house rent allowance received. Okay, if at all an employee is receiving allowance for house rent purpose, then there is an exemption under 10 clause 13A. There is an exemption under 10 clause 13A. How much exemption is there under 10 clause 13A? Remember, this exemption is applicable only under optional tax regime. HRA is also personal only. It's your personal purpose only. Personal allowances, you will get exemption only under optional tax regime. Simple. Personal allowances, you will not get exemption under default tax regime at all. Easy. Official allowances, whether it is default or optional, you get exemption of how much ever you spent. Only uniform allowance, helper allowance, research allowance, default tax regime, fully taxable. Remaining all official allowances, you will get exemption to the extent spent. Understood? Have you all studied all this? Able to recollect now? Yes. Next, look at HRA. 1013A exemption available, that too under optional tax regime. How much is the exemption? 3 criteria. How much actual amount received? How much actual amount received? Second one, how much rent paid minus 10% of salary. Then 50% of salary, option 1. Option 2, 40% of salary. When option 1 is applicable, if the SSC is staying in a rented accommodation, SSC is staying in a rented accommodation in the city, Delhi, Mumbai, Chennai, Kolkata, yes or no? DMKC or DMCK, yes or no? If at all SSC is staying in these cities on rental accommodation, then 50% of salary is the criteria. Any other city, then exemption criteria is 40% of salary. Now first criteria, second criteria, third. Second criteria is what? Rent paid how much? Identify, minus 10% of salary you identify, yes or no? Then you will get, this itself is expressed as rent paid in excess of 10% of salary. How they expressed in the law? Actually, you know, rent paid in excess of 10% of salary, nothing but rent paid minus 10% of salary, remove it, you will get excess amount paid. So that much, whichever is lower, that much is exempted. Now when you're computing HR, you know, you should compute deduction month wise. You should compute deduction month wise. Never do it for 12 months at a time unless all the 12 months same data is there. Unless all the 12 months same information is provided. Otherwise you should compute month wise. For example, no, SSC, no, HRA 12 months he received. April and May, no, he didn't stay in rented house. He stayed with his parents. April and May HRA whatever he received, no, fully taxable. April and May HRA received is fully taxable. June, July, August, September, October, no, 5 months, no, he was staying in a non-metro city. So let us assume he's staying in Hyderabad. Then for those 5-6 months, no, exemption will be calculated based on 40% rent paid minus actual amount for those 5 months separately. Sir, later SSC moved to Delhi, sir. Then for remaining months, no, again you should calculate separately HRA. Are you clear? So in HRA, no, there are some ingredients. What are the ingredients? HRA amount, one item. Salary is another item. Rent paid, that too location is another item. If at all any change is there, any of this, for the changed portion you should compute separately. Simple. Compute month wise, you will get 100% right answer. Month wise. Suppose in all the months, no, details are same, then compute 12 months at a time. Sir, for 6 months details are same, and then 6 months details are same, then these 2 6 months separately you compute. Able to understand? You have a wonderful problem in the ICA book, TYK question number 1. You solve that later. You will understand this. Okay. So HRA you will get exemption only when you really pay the rent for a particular month. For a particular month you are not paying rent. For that month you will not get any deduction. For that month entire HRA received is fully taxable. Are you clear? Month wise you should calculate. Now they said 10% of salary, 50% of salary, 40% of salary. Sir, what do you mean by salary? Salary means basic plus DA for retirement plus commission. There is one more monetary benefit which is received as a percentage of turnover. Another one more monetary benefit is commission. In the list of monetary benefits I didn't mention it. Okay, you will also get one more monetary benefit called commission. Commission is 2 types again. Fixed commission that you get. 2, performance commission. Performance commission means what? It is based on percentage of turnover. Able to understand? So that percentage of turnover commission only you should take into account. So basic DA for retirement plus commission percentage of turnover. And now you know what? This salary definition is there, right? This is used at 4 more places. The same definition is used at 4 more places. Same salary definition. Now gratuity, where gratuity act is not applicable, the same definition. VRS, the same salary definition. Next, rent, RPF contribution more than 12% of salary, the same definition they have used. RPF related calculations also the same definition they have used. One is this one, gratuity, VRS, RPF. Leave encashment, the salary means the same definition. Totally 5 purposes. Nothing to worry, ma. In our book, no, at the end of the book, at the end of the chapter, just a minute. Yeah, just a minute. So at the end of the chapter you will find it. salaries chapter at the end, you will find summary of all salary definition. You can see here. Meaning of salary for various purposes. In salary set of income, for various reasons, salary definition will be different. One is for contribution to RPF, for VRS under 1010C, gratuity under 10 clause 10, leave encashment under 1010AA, HRA under 1013A. In all these sections, wherever they refer salary, salary means basic DA for retirement plus commission percentage of turnover. Key observations under salary chapter I gave at one place. Clear? Next, for gratuity where act is applicable, salary means basic plus DA, any DA. Then again I have given under salaries, default tax regime impact is what? Suppose if the SSC is choosing default tax regime, he will not get the following benefits. What he will not get? Helper elements reduction he will not get. Uniform elements reduction he will not get. Research elements reduction he will not get. Yes or no? And all special allowances which are getting for personal use, he will not get any deduction for personal allowances, except unless the personal allowance is transport allowance for differently abled people. Except that, rest all other personal allowances, no deduction at all. Are you clear? This is what I told. Am I right or not? You see, at one place you can get entire summary of default tax related provision under salary set of income. Default tax regime, optional tax regime has a huge impact in salary set of income and house property only. PGBP, not a major impact. 35 AD you won't get, additional depreciation you won't get, basically in PGBP. Then in capital gains, no link at all with regime. Capital gains is the only head of income where there is no link at all with default tax regime, optional tax regime. Then other sources also we don't have any link on, default tax and other optional tax regime. Able to understand? So you have somewhat heavy link, heavy connection only with salary set of income. Able to understand? Everyone? Next, so with that, HRA discussion is over. Are you clear? HRA discussion is over. So I am just telling you how we should compute HRA, all that. Okay, one after one I'll open the topic. Until now clear HRA point? Now what are other personal allowances that we have? Transport allowance I covered. Children education allowance I covered. Medical allowance fully taxable. Telephone allowance I covered, fully taxable. Yes or no? Then I showed you right now this one. HRA, just now we saw the exemption. And you know what? Uncommuted pension. What is it? Uncommuted pension. It is also fully taxable, just like an allowance. It is fully taxable. Now, shall I focus on retirement benefits now? Okay, now we will focus on retirement benefits. First retirement benefit is pension. The first retirement benefits that I am going to focus is on pension. 1010A. 10 section 10 clause 10A. Okay, just 1 minute. I'll stop this recording immediately. We'll start. 2 minutes. Yeah, look at pension. Pension, guys. Pension is of two types. One is uncommuted pension. Means this is a pension which you receive on a monthly basis. This is fully taxable. Tell me, pension when will I receive? Only after retirement. I will not receive the pension before retirement. I will only receive it after retirement. Then we have something called commuted pension. Now what is the tax treatment? Very simple. One example I will take. I retired from the company on 31st December 2025. I retired because in our exam problems will be always based on 25-26 year. So I retired in the 25-26 year on 31st December, which means I will receive pension from 1st January 2026. Am I right? Now, since I am computing income for 25-26, I am only worried about up to 31st March 26 only. Up to 31st March, what salary income I am getting, that one I am worried about. April onwards, whatever I am getting, that again in the next year, that taxable under next year. Hello, everyone. Now look at, so 1st January to 31st March. Now, company told me on the date of retirement, the company boss called me. Harsha, I'll give you 5,000 rupees per month, one option. And or second option, I'll give you one more thing. You take 5 lakh rupee today and then go. No more relation further. Okay. Hi, bye, function, I'll come. Any function is there, invite me, I will come. That's it. So 2 options the company is giving you. 1, 5,000 per month forever. 5 lakhs at a time, lump sum. I put a different proposal. Boss, do one thing. Or else, let us do. I thought what, I'm 5 lakhs per month and all. I don't want all that FD rate and all, outside market fixed deposit rate of interest and all very low. I selected 5,000 per month. Now, from 1st April 2025 to 31st December 2025, my monthly salary was 50,000 rupees into 9 months. How much is my income that time? 4,50,000. Now from 1st January onwards, I am no more salary because 31st December I retired. So January month, what company paid me 5,000 rupees pension for me. They paid me how much pension? 5,000. February and March also, every month I will receive how much? 5,000. But guess what happened? On 25th January, I met one of my friend. I told him that I retired just now. Company is paying me every month 5,000 and my boss gave me 5,000 option per month or 5 lakh option at a time. My friend told me, are you stupid? You take money at least 2,50,000. 50% you take at least. Invest in gold, invest in silver ETF. It is now growing like anything. You get, it will double in next 2-3 years itself, he told me. Ayo, I don't know all this. So after my friend told me, again I went back to the company on 1st February. Sir, don't pay me 5,000. Wait. I asked him. On 1st February, what I told, sir, you said 5,000 per month option or 5 lakhs at a time. No, I have a small proposal, sir. Okay. 40% of monthly amount, or else let us assume 60% of the monthly amount. I don't want. February 1st onwards, no, pay me monthly only 2,000 rupees. February 1st onwards, pay me monthly 2,000. 3,000 don't pay me. Instead of that, can you give me 3 lakh rupee in hand? I asked him. He was so generous. He agreed. What he did? Okay, Harsha, I'll give you 1st February. Take this 3 lakhs lump sum. Now monthly you're eligible for 5,000. No. Now I gave you 3 lakh. No. 3,000 rupees I'll cancel it. 2,000 rupees I'll pay. Now tell me, February month 2,000 rupees I'll receive. March month how much I'll receive? 2,000. So February and March put together how much I'll receive? 4,000. So what is my total monetary benefit I received till now? 4,59,000. This is my salary without considering the lump sum amount. Am I right? Now the company paid me lump sum amount of 3 lakh. Now what is the tax treatment for this? If I am a government employee, fully exempt. If I am a non-government employee, now here the biggest doubt I'll tell you, I don't know whether you have it or not. Government employee means direct government employee, not government company employee. Be careful. Able to understand? If I'm working in Bharat Petroleum Corporation Limited, that's a government company. If at all I'm an employee of a government company, I'm not government employee. Government employee means what? I'm working under Ministry of Finance. I'm working in Army. I'm working in a local authority. I'm working under Prime Minister office. I'm working in, C&AG. Direct under government department I'm working. Then I'm a government employee. I'm working in a government company. I'm not government employee. Are you clear? Government company is different from government. Do you agree with that? Yes or no? Government company is different, government is different. GST, you have government definition. Those books of whose books of accounts are liable to be maintained as per so and so article, then only it's called government. Government company will maintain books of accounts as per Companies Act 128 section, not as per constitution articles. So government company will not come under government. Do you understand? Okay, fine. So non-government employee. Now 3 lakhs. Sir, what is this? What about this 3 lakhs? I'm a non-government employee. Maybe I am a private sector employee, or maybe I am a government company employee. Are you clear? Yes or no? Only government employee is fully exempted. Non-government, you are not an employee directly under the government. Yes or no? Then 3 lakhs, some of it will be taxable. How much is taxable? This is the question. Now, working note again. How much I received, ma? 3 lakh. Yes or no? Now, I need to calculate exemption under 1010A because I'm a non-government employee. Fully it is not taxable. Some exemption is there. Now, exemption is linked with one criteria. Is Gratuity Act applicable or is Gratuity Act not applicable? Wrong answer. Wrong answer. It's not Gratuity Act applicable or not applicable. It's gratuity received or not received. Be clear. Many students have a doubt. Many students have a confusion. I may receive gratuity whether act is applicable or not. My company is so good. They paid me gratuity even though Gratuity Act does not apply. Here in pension exemption calculation, the criteria is not about act applicability. The criteria is about whether are you receiving gratuity or not. Sir, I am receiving gratuity, sir. I am receiving gratuity or I am not receiving gratuity. Suppose you are receiving gratuity, yeah, then 1/3 of amount received is exempted. No. 1/3 of what is exempted? Full pension value is exempted. Sir, you are receiving gratuity. Oh, you are receiving gratuity. You are claiming exemption there also, no? Yes, sir, I am claiming exemption. Then here I will reduce low. I will give less exemption. Sir, I am not receiving gratuity. Pension is the only amount I am getting now from the company. Oh, if pension is the only amount you are getting, then I will give you bigger exemption. Half of full pension value. Tell me, 1/2, 1/3, which is bigger? Some students are thinking again. Array, 1/2, 0.5, 1/3, 0.3. Yes or no? So, sir, 2, 3 bigger than 3. Okay, fine. Clear everybody? Yeah. So, if you are not receiving gratuity, half of full value exempt. If you are receiving gratuity, 1/3 of full value is only exempted. Now, sir, by the way, I received 3 lakhs, sir. How much is exempted? Tell me. Suppose you are receiving gratuity, yeah? 1/3 of full pension value. Sir, what is full value, sir? Tell me how much you received? 3 lakh. Yes or no? How much you sacrificed monthly amount? 60%. Company told me 5,000. I sacrificed 3,000. Then only they're paying me 2,000. Now tell me how much percentage I sacrificed. Ayo, 3,000 rupees I sacrificed out of 5,000. How much I sacrificed? 60%. Now 3 lakhs is equal to 60% of my monthly rate. Am I right? 3 lakh rupee is equal to 60% of my monthly rate. That monthly 60% I sacrifice, they're giving me 3 lakhs. Tell me, which means full value would be how much? 5 lakh. Are you clear? Now 1/3 of 5 lakh. How much is exempted? 1/3 of 5 lakh, which means 1,66,667 is exempted. Received how much, by the way? 3 lakh. 3 lakh minus 1,66,000 exempted how much? 1,33,333 taxable. Do you agree? Sir, suppose no, I'm not receiving gratuity, sir. How much is exempt? Full value same 5 lakhs. We computed just now. Half is exempted is equal to 2,50,000. How much we received? 3 lakh. Exempted is how much? 250. Balance taxable is 50. Sometimes in exam what they will ask, tell me total pension taxable. Total pension taxable is uncommuted pension 5,000 for January month is taxable, 2,000 for February month, 2,000 for March month. Total uncomputed pension 9,000 taxable. Commuted pension option 1 1.33 lakhs taxable, option 2 50,000 taxable. Depending on the option you need to select it. That's it. Pension answer over. Pension discussion over. Easy or not? Now further, if at all a person who worked in army suffered with an injury, then he is getting disability pension on a monthly basis. Disability pension we call. Disability pension received by armed forces out of injury, that is fully exempt. Basically monthly pension is fully taxable for everybody. If it is monthly pension, government or non-government, doesn't matter, fully taxable for everybody. But if an army person is receiving disability pension, whether he retired or not doesn't matter, leave it. Disability pension you are receiving because you are suffered with disability, fully exempted. Sir, army person died, sir. Their family is receiving family pension, sir. What about that? Fully exempted. An army person who is a government employee, central government employee or a state government employee who has received Paramveer Chakra, Veer Chakra, Mahavir Chakra, yes or no? So all this, don't try Sudarshan Chakra and all. Yes or no? Some students will write all chakras. Yes or no? Fine. So yes or no? If an army person is receiving, if a person who is in army has received Paramveer Chakra, Veer Chakra, Mahavir Chakra, yes or no? If at all he received that and their family members is getting family pension, that is fully exempted. That's it. Entire pension discussion over. Easy or not? We still have gratuity, leave encashment, VRS retrenchment I'll not discuss, not that important also exam point of view. Okay, so gratuity, leave encashment I'll discuss, LTA I'll discuss, which is again important, leave travel assistance I'll discuss. Then we have non-monetary benefits. Once we discuss non-monetary benefits, the chapter will be over. Easy until now? Everyone? Yes, just a minute. So we started discussing retirement benefits and in that pension is completed. Okay, now let's continue discussion of gratuity. Gratuity. Remember, if at all we are receiving gratuity during the service, it's treated equal to allowance and it is fully taxable. If the gratuity is received during the service, it is fully taxable. No exemption at all. Now, further, if gratuity received on retirement, then there is an exemption under 10 clause 10, okay, where the exemption is discussed in 3 parts. If it is government employee, gratuity received on retirement is fully exempt, yes or no? Suppose if gratuity is received by non-government employee, then exemption is dependent upon act applicability, correct? Suppose if gratuity act is applicable, then exemption is different. If gratuity act is not applicable, exemption is different, right? For example, if gratuity act is applicable, just a minute, I'm opening that. We have 3 criteria. One is 20 lakh statutory limit. Another one 15 by 26 into completed years of service or part thereof in excess of 6 months multiplied by last drawn salary. Yes or no? And max actual amount received, whichever is lower. So instead of writing, because that takes time, sometimes we'll directly discuss it from the book. Okay. Now, simple look at, if gratuity received during the service, fully taxable. Gratuity received at the time of retirement, suppose if it is received by an employee of defense, employees of central government, employees of civil services, local authority employees, or state government employees, that is fully exempted. Government company is not covered if you see here. The same logic is applicable everywhere. Government employee is different from government company employee. Clear? Then other employees, suppose if they were covered under Payment of Gratuity Act, then how much is exempted? Least of the following 3 criteria. Criteria 1, either 20 lakhs or actual amount received how much, or 15 by 26 multiplied by completed years of service multiplied by last drawn salary. Now completed years of service means what? Completed years means the date when you joined in that organization and the date when you're leaving. Okay, date your retirement, date of retirement. So that gap, if it is how many years were there, you check it. Completed years how many? For example, if the years were 25 years, 4 months is the gap, then you will take 25. If the gap is 25 years 6 months exactly, then you will take 26. Are you clear? If the gap is 25 years 8 months, if you take, then it is again rounded up to 26. Able to understand? Even if the gap is 25 years 11 months 20 days, still it is 26. Able to understand? Completed years of service or part thereof, even part of a year in excess of 6 months, that is also considered as full year. Am I right? And multiplied by, what is the amount that you should multiply with? Last drawn salary. Now what is a last drawn salary? Hash mark I given. What is a last drawn salary? Salary means basic plus any DA. What do you mean by any DA? It may be DA meant for retirement or it may be not meant for retirement. Doesn't matter. If it is dearness elements, that's enough. So any DA will be considered. Are you clear? Suppose if at all the employee is not covered under Gratuity Act. If at all the employee is not covered under Gratuity Act, then same first 2 criteria, no change at all. But third criteria, 15 by 30. Actually, they also call it as half a month salary. It is also called as what? Half a month salary. Or you can also call it as 15 by 30 multiplied by CYS only. Completed years of service only. Fraction has to be ignored. Multiplied by average salary. You see, where act is applicable, they didn't use the word average salary. They have used the word last drawn salary. Now, what do you mean by average salary? First of all, here salary means what again? Salary means basic plus DA for retirement plus commission percentage of turnover. Are you clear? Now, if you observe, I told you at totally 5 places this salary definition will be used. HRA, gratuity where act is not applicable, VRS, leave encashment, RPF contribution by employer towards provident fund. In all these 5 places, this formula only gets used. Are you clear? Now, what is an average salary? Average salary means salary of last 10 months, correct? Salary of last 10 months preceding month of retirement. In which month you retire? Ignore that month. 1st December you retire. Ignore December. November is the 10th month. November, October, September, like that. You go backward 10 months. 10 months related. What you should take, 10 months related. Basic salary you take. The 10 months related DNS allowance, that to retirement alone you take. The 10 months related commission percentage of turnover you take. Sometimes in exam, no, percentage of turnover per annum value they give. 12 months turnover they'll give. You should convert it first into 10 months turnover. Are you clear? Then 10 months turnover into commission, how much you calculate. 10 months DA, how much you calculate. 10 months basic, you calculate how much. This is 10 months salary divided by 10 is equal to average salary you will get. Able to understand? Never apply shortcut here. Last 10 months, list it out. Month, 1st December you retired. January is 1st month, December is 12th month. So December you retired, leave it. January you leave it. 10 months means February to November. February to November. February 2025 to November 2025 in our example. From February 25 to November 2025, what is the basic salary for all these 10 months identifies? Generally, it will be constant, but sometimes there can be a change. Basic salary can be different. For example, February and March basic salary could be different. April onwards basic salary could be different. Same way, DA for February and March could be different, whereas April to November it could be different. But total the 10 months DA, total the 10 months basic, total 10 months commission. By 10 you put, you get average salary. This is, average salary computation is what challenging here in gratuity. Are you clear? Okay, now we have a question in our book. So if you observe, we will just directly solve that question. Yeah, this is residential status chapter. No, not that. Income from salaries. Residential status itself, we have so many questions. Almost 40 questions will be there, 40 plus. In this question bank, in every chapter we divided questions into 3 parts. Illustrations from ICA book, TYK from ICA book, MRP, MTP, RTP past exam questions put together one category. If you find orange background, it's illustration. Blue color background, if you find TYK. Yellow color, green color background or yellow color background if you find, then that's actually MRP category we call. You can see here. If at all in this way it is there. Exceptional tag will be there for up to residential status. Okay, even for remaining also we will give exceptional questions list. Exceptional means these questions are something unique, different. Only when you solve that question, some twist will be there in that question. Those questions were called as what? Exceptional questions. Okay, I will release a list of exceptional questions under income tax law very soon. Okay, PDF I will release separately so that you can solve later. So next, so in this salaries chapter, by the way, can I solve this illustration too? Just roughly. Okay. Mr. Srikanth has 2 sons. He is in receiving children education allowance of 150 rupees per month for elder son, 70 rupees per month for younger son. For younger son, 70 rupees is fully exempt. Am I right? For elder son, out of 150, 100 exempted. Only 50 is taxable. Correct? Both the sons are going to school. He also received transport elements. Remember, compute is taxable. By default, I will assume under default if at all nothing is mentioned. But here, no, I will compute under OTR also. Optional tax regime also I'll compute both. If it is default tax regime, this is fully taxable. Tribal area allowance fully taxable. Educational allowance fully taxable. If it is optional tax regime, educational allowance is only 50 rupees taxable. For younger son, nothing is taxable. For transport elements, fully 800 into 12. Even if in optional tax regime, fully taxable. Am I right or not? Whereas tribal area allowance, 200 rupees per month is exempted. Tribal area allowance alone is exempted how much? Up to 200 per month. By the way, this exemption is available only under optional tax regime. That's it. Next, if you see similar problem only we did, pension. Then we have gratuity. Look at this gratuity. Mr. Ravi retired on 15th June, means June 2025 is the retirement month. After completing 26 years 8 months, where act is applicable, we take 26. Sorry, where act is applicable, we take 27. If act is not applicable, we take 26. Okay, and he received a gratuity of 15 lakh. At the time of retirement, his salary was as below. Salary per month at the time of retirement means last drawn salary. Correct? Last drawn salary means what? When you are retiring, how much is the salary? That's it. 50,000 per month. DA 10,000, but 60% only is forming part of retirement. Commission per annum turnover they gave. Yes or no? And bonus 25,000 per annum. Now compute the taxable salary. Is government employee, taxable salary is 0. Is a private sector employee, not covered under payment of gratuity. Not covered under gratuity act means how should we compute? Not covered under the act. Tell me, like how much amount we receive? 15 lakh, yes or no? Least of the following, 20 lakh, actual amount 15 lakh, 15 by 30 into completed years of service into average salary. Am I right? Now, complete years of service, just now we saw 26. How much is the number? 26. Completed years of service, if act is not applicable, part of a year we should ignore completely. Yes or no? 26 multiplied by average salary. Average salary means what? Salary is equal to basic salary into 10 months plus DNS allowance into allowance for retirement into 10 months. Yes or no? Plus commission of 10 months you should take. Am I right? Next, basic salary in the given question. What is the basic salary given? 50,000 per month. And did they give any in the 10 months any change related information? No. Therefore, I assume 50,000 is there constant in the last 10 months. So last 10 months basic salary is how much? 5 lakh. DNS allowance. How much is the DA here? DNS allowance is 10,000 per month, but 60% only retirement. We should only take retirement DA. 6,000 per month. Correct? 6,000 to 10 months. How much it is? 60,000. Plus commission percentage of turnover. How much commission is getting? 1% is getting. 12 months turnover 1 crore 20 lakh. I assume that every month turnover is equal. So 10 months turnover is 1 crore. 1 crore into 1%. How much it is? 1 lakh. For last 10 months put together, how much is the turnover? 1%. Yeah, that is 1%. 1% commission is per annum turnover. For 10 months, how much turnover he will get? 1 lakh he will get. Are you clear? Like how did I calculate commission turnover? 1 crore 20 lakh. 1 crore 20 lakh is turnover. Am I right? Into 1% into 10 by 12. Am I right? This is how I should calculate. So this amount we will get how much? 1 lakh. So now tell me, total 6 lakh 60,000 is the 10 months salary. Now average salary is equal to 6.6 lakh divided by 10 months. Monthly average is how much? 66,000. Therefore 66,000. Correct? And this amount how much it is? 66,000 in 8 lakh 58,000. Least of the following 15. Okay, 858. So 8 lakh 58,000. So how much is taxable? 6 lakh 42,000 is taxable. Are you clear? Next, suppose no act is applicable. If that is the question, then third criteria alone will change. 15 by 26 into 27 it will come. Why? 26 years 8 months. 26 plus part of year in excess of 6 months is equal to rounded up to 1 multiplied by last on salary. Last on salary means basic plus any DA. Correct? Any DA. Basic is how much? 50,000. Any DA. It doesn't matter which DA. 10,000. Therefore, last on salary is how much? 60,000. That's it. Commission to be ignored. Nothing. Not considered. How much is the amount? 9 lakh? 9 lakh 34? 6? Okay. So 15 lakh minus 9 lakh 34 is equal to 5 lakh 65,370 385. Correct? 5 lakh 65 385. That's it. The answer. So how much is the answer? 5 lakh 75 375. Okay, probably small. 385. Correct? Here only there's a computation mistake. 385. And whereas here it is not received 6 lakh 62. We got how much? We got how much? How much? I think some calculation mistake here. Yeah, 6 lakh 42. Correct? Then this is nil. Correct? That's it. Exemption amount you see 8 lakh 58 exemption. We also computed 9 lakh 34 315. Correct? 8 lakh 58. Then another exemption is what? 9 lakh 34 615 exemption. Exemption is correct. So automatically balance amount is taxable. Easy. Then with this gratuity discussion is over. Now leave encashment. Okay. Now leave encashment. How to calculate exemption for leave encashment? Leave encashment is one where every student do mistake. Most of the students, they don't understand leave encashment. Fourth criteria. How much is the exemption for leave encashment? By the way, regarding gratuity, one important clarification. 20 lakhs limit is there, right? That's the lifetime limit for exemption. Means, suppose if at all I am working with 3-4 companies and I am retiring from 3-4 companies. Okay, from all the companies put together, exemption amount shall not exceed 20 lakh. For example, company 1, I claimed 4 lakh exemption. Then in company 2, when I'm considering limits, no, I should take only 16 lakhs as the criteria. I should take only 16 lakhs. I will not take 20 lakhs criteria because now already 4 lakh exemption I claimed. So statutory limit, how much I will claim now? 16 lakhs only I will claim. Do you understand that? Fine. So now leave encashment, how much is exempted? Actual amount. Exemption cannot be more than actual amount. Statutory limit is 25 lakh. 10 months into average salary, and this is leave attributable to unutilized leave. Getting it? Leave salary attributable to unutilized leave calculated at 30 days per annum. Very simple. How should, there is a formula I'll give you. Completed years of service identify. Only completed years. Part of a year, 9 months, 10 months, 11 months, 11 months he worked extra. Ignore. Only completed year you should take. Part of a year, 11 months, 20 days he worked. Ignore. It doesn't matter. Okay. Completed years multiplied by per annum how many leaves is eligible. Look at the question. They'll give you per annum how many leaves is eligible. They'll give you very clearly. They'll give you per annum 40 days is eligible. Per annum 50 days is eligible. Per annum 30 days only he is eligible. Per annum as per company policy leaves how many eligible, or per annum company policy. This is also called as what? Company policy, or 30. Under income tax only 30 we should consider maximum. So now if you look at this, if you first compute this, what you will get? For example, no, employee completed 30 years of service multiplied by, as per company policy, 40 days in a year he can take leave. But under income tax, maximum leave eligibility per annum should not exceed 30, which means company policy 40 or 30, whichever is lower, 30 is equal to 900 gross leaves he is eligible for. How many leaves is eligible for? 900 minus, in exam they'll give you how many leaves utilized. In exam they'll give you how many leaves utilized. Sir, he utilized 400 leaves already, which means unutilized leave is how much? 500. 500 divided by, for 30 days your average salary is this much for 30 days. For 500 days how much? This is what fourth criteria is. This is what fourth criteria is. Look at how it has to be, how it is conveyed here. Cash equivalent to, cash equivalent of unavailed leave. Unavailed means what? Leave is given but you didn't use it. Nothing but cash equivalent to unutilized leave. Correct? Which is based on, okay, to his credit at the time of retirement. Cash equivalent of unavailed leave to his credit at the time of retirement. Remember, earned leave entitlement. Earned leave means what? How much leave you are eligible. That cannot exceed 30 days for every year of service rendered. Means in a year, your eligibility for total leave shall not exceed 30. That's why I say company policy or 30, whichever is lower. Yes or no? That's it. So accordingly, so first what I computed here? First what I computed? Completed years multiplied by company policy or 30, whichever is lower. Total leave earned by the employee is 900. Already used is 400. Unutilized is 500. Now what is the actual option? What point? The cash equivalent to unutilized leave. Correct? Now how much salary belonging to this 500 days? That's what I'm computing. Correct? Salary means what? Average salary. Average salary for 30 days 66,000 for example. Then for 500 days how much? You will get the answer. That's how fourth criteria has to be calculated. Are you clear? Able to understand this formula? If you understand, no need to mug up the leave encashment. Okay, first identify total leave available. Completed years of service multiplied by company policy or 30, whichever is lower, is equal to total leave available, minus identify how many leaves he utilized. Then you will get unutilized leave divided by 30 into average salary. That's the fourth criteria. Sometimes in exam, no, they directly give you unutilized leave value. Sometimes they will give you directly unutilized leave value, which is computed based on 30 days logic only. Like for example, in question what they will tell you, no, employee has unutilized leave in his account 300 days, where unutilized leave is computed. Unutilized leave is computed based on 30 days per annum leave, which means that unutilized leave numerator they themselves gave. We can as it is take it. We can as it is take it. So how to calculate this fourth criteria? Tell me how to calculate this fourth criteria. You can take a note of it. Okay, completed years of service multiplied by complete years of service multiplied by company policy or 30, whichever is lower. This you will get first gross leave available minus leaves utilized, yes or no, divided by 30, correct? Multiplied by average salary. Are you clear? Now this entire numerator is nothing but what? Unutilized leave, correct? Unutilized leave, which is calculated based on eligibility of leave per annum 30 days. That's it. This is how you should calculate that leave encashment. If at all you understood this formula correctly, you will never get wrong answer in leave encashment. Clear? Now here also average salary means what? Salary preceding the date of retirement. What is it? Preceding date of retirement. Average salary refers to 10 months average. 10 months average you should take. Average of monthly salary. Monthly average only you should take. 1 month average only you should take. But this average is to be calculated based on 10 months salary. Which 10 months? Preceding month of retirement or preceding date of retirement? Preceding date of retirement. Where gratuity act is not applicable. Preceding month of retirement. Where gratuity act is applicable. Preceding date of retirement. Are you clear? So date of retirement is what used here in leave encashment. See, generally in law, no, inconsistencies are common like this. Okay, because no, all the provisions are not drafted at a point of time. Remember, 10 clause 10 only was there originally in the income tax law, original act. 10 clause 10A, 10 clause 10AA were added later on. Different people at different points of time, they add the provisions, they modify the provisions. So inconsistency is common. So in the income tax law, salary definition, why different definitions were there? Is there any logic behind it? Is there any? Nothing, no logic. Different people drafted the law at different points of time. Simple. Are you clear? That's it. So that's regarding leave encashment. Confident? Again, leave encashment also. Lifetime exemption is how much more? It cannot exceed 25 lakh. Easy or not? Now, one question I'll solve regarding leave encashment here. Yeah. So look at this. Gupta retired on 1st December 2025 after 20 years of service. Only 20. Fraction they have not given. Even if fraction is given, we should ignore. 11 months, 10 months, it doesn't matter. Fraction doesn't matter. Ignore. And he received a salary of 5 lakh. Sorry, leave salary of how much? 5 lakh. Other details are as below. Basic DA. Only retirement DA is relevant for us. Am I right? Commission. 500 per month they said, which means it's a fixed commission, not a percentage of turnover. Only when it is percentage of turnover I will consider. Bonus doesn't matter for me for leave encashment, because for leave encashment average salary I should compute, right? Salary means what? Basic, DA for retirement, commission, percentage of turnover. Am I right or not? Now look at the time of retirement, no, his salary was 5,000 per month, but before he retired, no, that too, this 5,000 per month is receiving only from 1st April. Before 1st April, he is getting 4,000 rupees only. Are you clear? So 5,000 per month. This is after 1,000 rupees increased. Getting it? Suppose before 1,000 rupees increase, no, before 1st April, no, how much is his salary actually? 4,000. Tell me, when he retired, 1st December. 1st December preceding date is 30th November is the 10th month ending. Able to understand? 10th month ending, which means last 10 months means, in this question, last 10 months means February 25 to November 25. Do you agree with me? February, March, April, May, June, July, August, September, October, November. 10 months exactly. Are you clear? Now, for these 10 months, we should compute total salary first. Then we should divide it with the 10. Then we get average salary. Am I right? Now, first I will compute total salary for that month. February and March, no, he is getting 4,000 rupees per month only, 2 months. Is equal to how much more? 8,000 plus. April to November, he is getting 5,000 per month into 8 months, 40,000. Hello everyone. So 10 months basic salary is equal to 48,000. Do you all agree? Then DA for retirement. How much is the DA for retirement? 3,000 rupees monthly, but 60% only for retirement. In 3,000 into 60, 1,800 per month. 1,800 multiplied by 10 months. How much is 10 months DA? 18,000. Commission percentage of turnover 0. Therefore, 10 months salary is 66,000. Average salary 66,000 divided by 10 is equal to 6,600. Do you agree? Now, how much in this case employee received? He has received 5 lakh rupee. Now criteria 1, 5 lakh actual amount received, correct? Then 5 lakh. Then criteria 2, statutory limit of 25 lakh. Criteria 3, 10 months into monthly average is equal to 66,000. Criteria 4, as I told, no formula, completed years of service into company policy or 30, whichever is lower, minus leaves utilized divided by 30 multiplied by average salary, correct? Average salary 6,600. This numerator we should compute. Now did they give any information on that? Look at, wow, leave availed. Leave availed means what? See, leave earned means total leave eligible. Leave availed means utilized. Leave unavailed means unutilized. How many he utilized? 480 days. And moreover, look at it, he is eligible for 30 days leave every year. Right now I can compute, all the information is available. Completed years of service, how many? 20. Yes or no? 20 multiplied by, per annum is eligible for 30, whichever is lower, 30 or 30, whichever is 30, is equal to how much it is? 600 minus leaves unutilized. Leaves utilized, how much it is? 480. Therefore numerator is 120 divided by, for 30 days 6,600, for numerator how much? 26,400. Now 4 criteria. Criteria 1, 5 lakh. Criteria 2, 25. Criteria 3, 66. Criteria 4, whichever is lower, 26,400. Now I have received 5 lakh, but exemption is 26,400. 4 lakh 73,600. Easy. Do you understand now how to compute? No need to mug up nothing. Yes or no? It's easy. Any problem you apply this logic, you can compute easily. Now look at how much is the answer. That's it. 26,400 is exempted. So automatically taxable amount is 4,73,600. Suppose if it's a government employee, fully exempted. Further, leave encashment received during service, fully taxable irrespective of the employee. Whoever it is fully taxable. Leave encashment received during service is treated as allowance. It is treated as at par with allowance. That's it. Accordingly, how for allowance, what is the tax treatment? We will tax fully. Same way, leave encashment received during service is fully taxable. That's it. Leave encashment over. Clear all of you? Next. That's it. Just a minute. Next. Now, when you are solving questions, no, gross salary questions sometimes they'll give you, okay, they'll give you multiple benefits. One of the benefit is employer contributing to recognized provident fund in the name of the employee. In the name of the employee, company is paying to provident fund contribution. You know what? Up to 12% of salary, is exempted. Up to 12% of salary, employer contribution to provident fund is exempted. Able to understand? Now, up to 12% of salary. Salary means what? Basic, DA for retirement plus commission percentage of turnover. Now, for example, you know, in exam, no, they'll give you like employee basic salary, okay, per month is 20,000 per month. Employee dearness allowance, okay, for retirement, or maybe dearness allowance, 40% is for retirement, okay, 40% is for retirement, but full DA, how much I'm showing you? Full DA, monthly he is getting 10,000 per month. Full DA is how much? 10,000 per month. Remember, 40% is for retirement. Then commission, which is as a percentage of turnover, let us assume turnover per annum is same, 1 crore 20 lakh, let us assume. Are you clear? Turnover per annum is 1 crore 20 lakh. Now they will give you 20% of basic salary is contributed to RPF. Employer contributed how much it is? 20% of basic salary. Now, how many students do you know? 20, no. 12 is exempted, no. 8% they will tax it, which is absolutely wrong. You should never do that. You should always do as per the process. First to know, I will compute how much amount is contributed. Contribution by employer to RPF. First I will see. Basic salary, how much company contributed? 20% of basic salary. Basic salary per month is what? 20,000. In that year, 12 months he worked. Let us assume there is no retirement. If at all employee retired on 1st December, then only for 8 months company will contribute to RPF. Because now once you retire, Contribution will not be there. You will withdraw. Able to understand? If retirement is not there in the problem, then for 12 months contribution will be there. Correct? Now 20,000 multiplied by 12 months multiplied by how much company is contributing, ma? 20%. 2,40,000. Correct? 2,40,000 into 20%. How much company contributed? 48,000 they contributed. But tell me, under 17 subsection 1, 12% of salary is exempted. Yes or no? Salary means what? Basic, DA for retirement, commission, percentage of turnover. Basic 20,000 per month. Am I right? DA for retirement only 4,000. In our example, only 4,000. Commission I will take per annum. This per annum I will take is equal to 48,000. This also per annum I will take, which is 2,40,000. This also per annum I will take 1 crore 20 lakh into 1%. Let us assume per annum commission is 1% is equal to how much, ma? 12,000. Remember, I am calculating here RPF contribution for 12 months. Therefore, here also I have to take details for 12 months. Am I right or not? Yes or no? Now, what is the 1.2 lakh? Sorry. Yeah. Here it is 1,20,000 is the commission. 1 crore 20 lakh into 1% per annum commission. Therefore, 1 crore 20. How much it is? 4,08,000. 1,20,000 plus 360 plus 48. Yeah, 4,08,000. On this, 12% is exempted. Am I right or not? How much is exempted? 12%. Now tell me, how much is the answer? 48,000. Therefore, nothing is taxable. Taxable amount cannot be negative. Therefore, nothing is taxable. Some students, what they do, 8% they will tax it directly. What they do? 20% of basic salary. 12% of salary exempted, no. So what they will do, 20,000 multiplied by 12 is equal to 2,40,000 multiplied by 8%, they will tax it. That's wrong. Because exemption is different, contribution is different. Contribution they may express in any way. Sometimes in a problem they'll give you 10 lakhs contributed. Exemption you should calculate always in the same manner. Never go for shortcut. Working notice required for this. Are you clear? That's it. This is RPF contribution taxability. Are you clear? Sometimes in problem they will also give you employee is also contributing equal amount. They will give you employee is also contributing equal amount. Employee contribution, he can claim deduction under 80C. If it is a optional tax regime, he can claim deduction for that in 80C. He can't claim deduction in case of default tax regime. Are you clear? Now, every year he is contributing, right? Now, one day he wanted the money and he withdraw the money. What is the tax treatment on withdrawal from RPF? This is the question. What is the tax treatment on withdrawal from RPF? Look at. What is the tax treatment for withdrawal? Very simple. Are you withdrawing after 5 years of service? Check out. Sir, I completed 5 years, sir. In this company, 3 years I worked. Last company I worked 7 years. Total 10 years I worked. No problem then. If you withdraw after 5 years of service, 5 years of service means need not be with the same employer. It can be with all the employers in past put together. Able to understand? So if at all you are withdrawing after completion of 5 years of service, then whatever amount you withdrawn, fully exempt. No questions asked. Sir, 5 years I have not yet covered. I just recently 3 years back I qualified CA. I joined in a company. Every year company saving in my name. Now suddenly I need money. My marriage got fixed and I want to withdraw money and spend for my marriage. And you withdrawn it. Are you clear? And since 5 years is not completed, it is fully taxable. Withdrawn amount is fully taxable. However, even though if you withdraw within 5 years for some emergency purposes, again retaxability will not apply. What do you mean by emergency purpose? 1. Ill health. Employee was not healthy. He was suffering from some issues, health issues. For that reason, he withdraw within 5 years itself for medical treatment or some other reason. Then no taxability. Or employer himself business is closing. Now he gave me the money. Hello employee, take your money. I'm closing my business. Or termination of employee. Any other reason beyond the control. I didn't withdraw the money. Company itself paid me the money because they're closing the business. Able to understand? If at all my service is terminated, on termination I'm getting the money. Either due to ill health or due to contraction or discontinuance of company business or due to any other reason beyond my control. This is not me withdrawal. I didn't withdraw, but they paid me my money back. If these, because of these three reasons, if at all I'm withdrawing within 5 years, no taxability at all. Suppose not three reasons, but I still withdrawn. Why? I'm changing to another company. Whatever money I saved here in Provident Fund, no, I need to transfer it to my new company Provident Fund scheme. If at all entire balance credit to the employee transfer to new employer, yes or no, I withdrawn, but again I'm transferring it to new company's Provident Fund trust. No taxability, because I didn't withdraw anything. I'm not keeping in my pocket anything. Are you clear? Or I withdraw within 5 years, but what I did, I purchased a 80CCD pension plan with that money. Means again, I money invested, reinvested by me. Again, no taxability. Are you clear? Tell me all these three reasons: withdrawing and transferring to new employer, withdrawing and transferring to NPS, all these points and all, when should I see? If you are withdrawing before 5 years of service. Sir, I completed 5 years of service and now I withdrawn. Fully exempt, no questions asked. Sir, before 5 years I'm withdrawing, I will have to see all these points, whether it is exempted or taxable, or to know it. Suppose you withdrawn within 5 years, it is taxable, right? How to tax it? How to tax it? How to tax it? Very simple. Tell me, when you withdraw the Provident Fund, no, when you withdraw lump sum amount from your Provident Fund trust, no, whatever your savings, no, in your name it was saved, right? What you will withdraw, 4 amounts you will withdraw. When you withdraw, that amount will consist of 4 parts. You will get a statement. You will get a statement on withdrawal, PF withdrawal statement, what you withdrawn. In that, no, the statement shows, see, your employer contribution 10 lakhs you withdrawn. Your own contribution is also 10 lakhs. That also refunded you back. Interest on, wait. Interest on employer contribution 2 lakh. Interest on employee contribution 2 lakhs. Totally, I withdraw 24 lakh rupee. Now, what is this 24 lakh rupee? When I asked them the breakup, they gave me one PF statement. In that, 10 lakhs is for employer contribution, 10 lakhs is employee contribution, means your own contribution, 2 lakhs. On that, your company contribution, no, they added 2 lakhs interest. On your contribution also, they added 2 lakhs interest. Now, you are withdrawing entire 24 lakhs within 5 years, right? Within 5 years, you are withdrawing, right? By the way, this amount is your amount, you paid, you are getting back. No income. There is no income at all here, because your money you are getting back. Now, these three put together, 14 lakh is income. Now, where it is taxable? Now, employer contribution, employer, 12 lakhs is taxable under salary set of income. This 2 lakhs is taxable under income from other sources. That's it. Are you clear? The same is the treatment when you are withdrawing from URPF, unrecognized provident fund. If at all your company contributing in your name to URPF, nothing is taxable. You are contributing URPF, no deduction for you. But at the end of the day, somehow you are withdrawing. Same treatment is applicable. Are you clear? That's it. This is provident fund taxation. Clear, all of you? Main theme of provident fund taxation I told you. Remaining not that important. Clear? That's it. Yes. Now let us discuss leave travel assistance or leave travel concession. LTC, LTA. Anyway they can use. 10 clause 5. What is this? Very simple. It's nothing but employee with his family going for a vacation. That vacation related travel cost, only travel cost, remember, not staying, not food expense, only travel cost, company will bear. Now, if the employee vacation holiday purpose related travel expenses, if the company is bearing, that entire travel expenditure is exempted under default tax regime. Optional tax regime. Suppose if at all the SSC is choosing default tax regime, LTC is fully taxable. Even though the employer is bearing the entire travel amount, that is fully taxable. If at all it is optional tax regime, only travel expenditure of the employee and his family member. Travel expenditure of the employee and family member, that is exempted. Now, what do you mean by family member here? Same family member which we referred in medical facility. Yes or no? Like medical facility, they might have referred parents and then children, brother or sister probably. Okay, we'll discuss what is family in the medical facility. We will discuss, because for perquisite valuations, what are all family members, is that the same valuation, the same definition will be covered here. Now look at what is eligible for exemption here. The exemption is eligible for only travel expenditure. Correct? Huh? That who are all spouse, children, dependent parent, dependent brother or sister. So 5-finger logic, very simple. Family member means what? 5-finger logic. Parents, siblings, spouse, children. That's it. Clear? So for the SSC, for parents, brother or sister, spouse, and then children, provided all of them must be dependent on you. Yes or no? All of them must be dependent on you. For children and spouse only, dependency condition is not there. In income tax, children and spouse, dependency condition is there only at one place, 80DD. What is it? 80DD. Okay, dependency condition is there only at one place, 80DD, because the section itself is disability section for dependents. Yes or no? In all other sections, dependency condition is not there for spouse and then children. 80C, I took insurance policy for my family member, my spouse and then children. Happily you can take, whether they are major or minor or doesn't matter. 80D, insurance policy, medical insurance policy you have taken for your spouse and then children, no problem at all. For parents, dependency should be there, then only eligibility. Parents and all, wherever you see parents, dependency point is common generally. Are you clear? 80DD, everywhere, everyone should be dependent on you, then only you will get deduction for that. Now look at it. So the exemption is available for travel expenditure. The exemption is applicable only for 2 children. That's what the meaning. 2 surviving children means 2 children. So if you are carrying a spouse, children, parents and brother or sister, all of you are going as a family vacation. Suppose you have 3 or 4 children, you will not get deduction at all. That too, suppose no, you have multiple children before 1989 something, 1999 they tell, okay, 1986. I mean not that, 1998, before 1st October 1998, if at all you are having children, no limit at all. If at all children were born before 1998 1st October, no limit. If at all children were born after 1998 1st October, then 2 children only exemption is available. Are you clear? Now here, twins, singular, all that logic is there. Very simple. First time itself, after 1998 1st October, the employee was blessed with twin children. 2 already counted. That's it. No more extra. Even if at all you are having more children, if the company is paying you the travel reimbursement, still the extra children travel reimbursement is there, right? Fully taxable. Are you clear? Now, for how many trips company can bear like this? 2 trips. For how many trips? 2 trips. 2 holidays. 2 holidays, 2 journeys in a block of 4 calendar years. Right now, the block going on is, 2026 to 6, 7, 8, 9. 2029 block is going on. Last block is 2022, 3, 4, 5. Previous block is 22 to 25. Right now block is 26 to 29. So in this calendar block or in this 4 years block, if you are spending 2 journeys related, entire travel cost which company reimburses is fully exempt, provided the travel cost is reimbursed for whom? For the employee, obviously employee, spouse, children, dependent parents, dependent brother or sisters. So spouse, children, dependent parents, dependent brother or sister. Suppose your grandfather is also coming along with you the trip. Company out of generosity, they paid grandfather trip cost 10,000 rupees they paid. The 10,000 is taxable for you. Third children, you are having 3 children, okay? Third one also you are taking. For the third one extra 10,000 company reimbursed. Company only reimbursed. 10,000 is taxable for you. Remember here, when the benefit will come only when the company reimburses the travel cost. Suppose no, you carry 10 family members, you only borne the entire cost, company did not bear the cost, then there is no question of benefit at all from the company, there is no question of taxation will arise. Are you clear? Suppose company reimbursed hotel expenses, boarding and lodging, everything, that fully taxable. Boarding and lodging is fully taxable, even if it is for employee or spouse, doesn't matter, it is fully taxable, because 10 clause 5 is exempting only for leave travel. Only travel expense is exempted. That too, the travel cost is borne by company. Which travel cost is exempted? Travel cost of the employee, spouse, children, dependent parents, dependent brother or sister. Only to their travel cost is exempted. Again within children, for how many children travel cost is exempted if company is bearing 2 children? If at all employee first was blessed with single child, second time he was blessed with twins, then it is considered as 2 only. That's it. Entire provision is over. Now, in this one more clarification, sir, employee did not perform journey at all in a block of 4 years, sir. COVID came, sir, in that. Okay, 4 years. 2 years he didn't go for any trip, and next 2 years he was having full work pressure. In a block of 4 years, no, 2 journeys he didn't perform at all. Now, next block, 2 journeys were there, right? Can I carry forward these 2 to the next block? No, only 1 you can carry forward. Are you clear? That's it. So this is regarding entire leave travel assistance. Easy or not? That's it. That's it. And here, how much travel cost means which travel cost is exempted? Economy fare is exempted. In case of aeroplane, economy fare is exempted. In case of rail, first class service is exempted. That's it. Only these 2 if you remember, that's absolutely sufficient. Okay. Yeah. Next, medical facility. Remember, medical facility means there are these benefits. Regarding medical, no, these benefits were there. First of all, insurance. Personal accident insurance. What is it? Personal accident insurance. Medical insurance. Another one is medical insurance. There is another type of insurance, simple life insurance policy. What is it? Simple life insurance policy. Personal accident insurance exempt. Medical insurance exempt. Any other life insurance policy where employee will get a future benefit. Okay. Now here insurance means obviously company is paying premium, correct? Here who took the policy, insurance policy? Company. In whose name the policy was taken? Employee. Beneficiary is who? Employee. Now he is getting benefit, but who is bearing the premium? Company. Which means the premium borne by the company is an expenditure for the company. It's a benefit for the employee because he is not incurring it. Yes or no? Now is the premium paid by the company and insurance, is it taxable or not is the question. Suppose if it is a personal accident insurance policy, employee will get benefit there ultimately only when he die. Therefore there is no benefit when he is alive. Yes or no? Therefore the benefit is zero. Medical insurance policy, here you will get benefit only when you are admitted in hospital. Means only for medical treatment you get the benefit. Your family or you out in your pocket, nothing you will receive. Therefore the amount is exempt. Company, though they are paying premium, that is fully exempt. Whereas a life insurance policy, once policy matures, maturity amount employee will receive. Maturity amount anyhow 10 class 10D exempted. 10 class 10D maturity amount is exempted. If the premium per annum does not exceed 10%, 15% as the logic, 10 class 10D exempts it. But company is paying premium, right? Whatever premium company paid, no, every year, that premium paid is taxable in your hands as perquisite. Able to understand? Because no, here you get some maturity amount during when you are alive, 99%. Able to understand? Any other life insurance policy, this point is taxable. Are you clear? LIC policy is taxable. If it is personal accident insurance, exempt. Premium paid is exempted. Medical insurance, premium paid is exempt. Any other life insurance policy, premium paid is fully taxable in the hands of the employee. This is regarding insurance. Are you clear? Now let me talk about medical treatment. Suppose no, employee was sick. By the way, medical treatment for whom? Employee and his family. Employee and his family means same 5-finger logic. Yes or no? Spouse plus children plus dependent parents, dependent siblings. Simple. Siblings means brother or sister. Cousin is not a brother and cousins and all not considered here. Are you clear? Fine. So medical treatment. Now medical treatment, if company is bearing some expenditure, company is bearing it, or you are spending, company reimbursing you. By the way, remember, medical allowance is fully taxable. Medical allowance given to employee is fully taxable, no exemption at all. If at all a company paying you every month some fixed amount for medical purpose, fully taxable, no questions asked. How much you spent and all, it doesn't matter for me, fully taxable. Suppose you incurred for medical treatment, you spent some money on medical treatment for you or your family member, and company is now reimbursing you, that is exempted if the medical treatment is in a government hospital. If the medical treatment in a government hospital, or if the medical treatment in a employer hospital, employer has a tie-up with one hospital, or employer himself is having one hospital. Okay, so in that hospital, if at all you are getting medical treatment, or in a government hospital if you are getting medical treatment, or you are getting medical treatment for specified diseases, they have given some list of specific diseases. That list is not relevant for us. It is not given also in the ICA book. Are you clear? If at all you are getting medical reimbursement, company is only bearing. You or your family members is having some specified disease, and you are getting treatment for that. For that you incur some 10 lakh rupee. Company reimburse that entire 10 lakh rupee. Since it is for specified disease reimbursement, fully exempt. Or it is for COVID-19 related medical treatment, fully exempt. Are you clear? For these 4 purposes, if at all you are getting medical treatment reimbursement, it is fully exempt. Suppose I went and consulted my family doctor and I incurred 5,000 rupees. I showed the bill to the company. Company paid me 5,000 rupees. Fully taxable. Why? Because family doctor does not come under government hospital, does not come under employer hospital, does not come under specified disease, does not come under COVID-19. Are you clear? My grandfather has some severe health issue. We admitted him in hospital. Some 10 lakh rupee spent. I shared this, sad news with my employer. My employer, out of courtesy, 2 lakh rupee he paid me. Okay, Harsha, you take your 2 lakh rupee. Now, medical treatment for my grandfather's related medical expense. Grandfather is not covered in the relative definition. Therefore, that entire 2 lakhs which company paid me, reimbursed me, fully taxable. Easy or not? That's how questions will come. Now, if at all medical treatment cost is reimbursed by employer, that too, for treatment for these 4 categories only exempted. Yes or no? My dependent mother in a private hospital, normal private hospital, I admitted her and I spent 5 lakh rupee. Company reimbursed me 2 lakh rupee, fully taxable, because that is a private hospital, not a government, not a employer tie-up hospital, not a specific disease, not COVID. Therefore, automatically taxable. Easy or not? Now, here there is a medical treatment at abroad. What is it? Medical treatment abroad. Sometimes the employee might be spending, the employee or his family member might get medical treatment outside India. Now, suppose if you are going for medical treatment outside India and your company, they said, we will take care of entire expenditure. Now tell me, what expenses will be there for treatment abroad India? One, of course, you need to travel, yes or no? You need to stay, yes or no? And you need to have medical expense, yes or no? Treatment cost, nothing but. Now, stay and medical expense. What is it? Stay and medical expenses fully exempted. How much is fully exempted? To the extent permitted by RBI. For example, you went for medical treatment abroad. Medical treatment abroad. Company policy, they will help you. That to medical treatment for whom? Employee, spouse, children, dependent parents, dependent brother or sister. Only for them. If it is, if the reimbursement is only relating to them, only all this. Now, for stay, company reimbursed 1 lakh. For medical expenditure, company reimbursed 7 lakh. Total reimbursement is 8 lakh. RBI permitted 7 lakhs only. Therefore, 1 lakh is taxable. That to this 1 lakh, when it is taxable? Company reimbursed it. No, that's why it is taxable. Suppose RBI permitted 7 lakh. Company reimbursed me 5 lakh. I incurred out of my pocket 2 lakh. Nothing is taxable. Understood or not? See, here benefit means what? Only when my company is bearing out of their pocket for my purpose, then only it's a benefit to me. If there is no benefit to me, taxability question itself does not arise. Am I right? Next, what about travel? Company, for me, the person who is sick, for him plus 1 dependent, for 1 dependent, travel expenditure also incurred. 5 lakhs is the travel cost, ambulance cost, airplane, on air ambulance is there. We have used air ambulance facility, all that entire travel cost is there. Now, how much is it travel cost related reimbursement? How much is exempted? This is linked with the gross total income of the employee. Old amendment, if gross total income is not exceeding 2 lakhs, this entire reimbursement is exempt. But now this 2 lakhs limit is removed and they mentioned prescribed amount, which is not yet mentioned it. Are you clear? Yes or no? So what about travel reimbursement for medical treatment abroad? How much is exempted? Exemption is, it's not about how much. Is it exempted or not is the only question. It is exempted if the gross total income of the employee does not exceed prescribed limit, then it is fully exempt. If the gross total income cross prescribed limit, travel reimbursement is fully taxable. Are you clear? This is for medical treatment abroad. Understood? There is a question in our book also, you can solve it later. Okay, see, I'm telling you everywhere crystal clear. You watch this and solve immediately, you will pakka get the answer. Understood? So I'm giving you crystal clear clarity on how to apply the numbers, how to apply the logic everywhere clearly. If you just apply the problem, it will be easy. Application is very easy if at all you are clear with the provision. Confident? So with this, medical facility over, education facility over. Yes or no? That's it. Now in the next we will discuss immediately rent-free accommodation. Okay? Yes. Next we'll proceed. So rent-free accommodation, valuation of RFA. Now look at this. This is how exactly you should present in exam also. RFA is a working note, correct? When you are computing gross salary, one of the adjustment is RFA. You should always do RFA computation at last. See, how do you compute income from salary question generally? If at all you need to solve, first you will add basic, then you will add DA, then you will add HRA if at all is there, yes or no, then you will add telephone elements if at all is there, then you will add RPF taxability if at all is there, then gratuity if at all is there, all that you will be adding, and then RFA you should add at last. Maybe in the order, here RFA you presented, but don't put the amount at the first. RFA problem, you RFA solving alone, you do always at last. RFA should be your last working note. RFA should be your last working note. First list out everything here. What are all taxable items? List out everything here. Why RFA you should do at last? I'll tell you now. Okay. Now look at. So RFA you should do at last. First point. Now working note. RFA working note 1 you will put, right? Working note 8 or working note 5 or something you put, right? In the working note, what is the gross perquisite value? First put that. Okay, gross perquisite value, working note format. Gross RFA value, nothing but gross accommodation value minus, sometimes we recover amount from employee, correct? For example, no, company gave accommodation to the employee. As per valuation rules, perquisite valuation rules, the accommodation value came 1,20,000 per annum. We gave you 1,20,000 rupees per annum worth of house for you. Are you clear? We gave you 1,20,000 worth. Remember, RFA will be computed only for the period he occupied. Only for the period he occupied. Occupied means what? The date he took over the control. Suppose, you know, employee company gave me from 1st April itself onwards. 1st April onwards itself accommodation facilities they gave. I told company politely, sir, I don't need it. 6 months I'm going to stay here in my relative's house only. 1st October onwards I will take his set. 1st October he took over the house, which means you should calculate RFA only for 6 months. Are you clear? Only for the relevant period he occupied the house. Only for that 6 months he should take. Now 1st October he took no. In between, Pongal holidays came. 10 days he went to his hometown. That is for the 10 days. Will you consider RFA or not? That is considered. It is in his control only, no? It is in his control only, no? Suppose, no, you joined in a hostel. Okay. So you are staying every month, hostel fees 10,000 rupees. In between Pongal holidays, 10 days you went home. Will you pay the fees or will you not pay the fee? Exactly. They will not agree, no? Because in your room is in your control, right? That's it. If you vacate the hostel, that's a different story. But the hostel is in your control. The accommodation is in my control. Whether I'm staying or not is not matter. Is it in my control is what or not? That the point looks into. So 1st April company provided you, but you didn't take it. But from 1st October you took into your control. Then for 6 months you should calculate the RFA. Are you clear? Now for the 6 months, no. When we apply valuation rule, let us assume the value came 1,20,000 for 6 months. Are you clear? But guess what? Every month from October, we told the employee pay 5,000 rupees back. So for 6 months, he paid 30,000 rupees back. So which means the taxable perquisite of RFA is how much ma? 90. Now, how did this 1,20,000 get calculated? This is the question. This is calculated based on rule number 3. This is calculated based on rule number 3. Now look at 1,20,000 means what? What is this 1,20,000? 1,20,000 includes two things. 1, accommodation perquisite value. 2, within the accommodation, company will provide some furniture also, right? Company will provide ACs, TV, all that also, right? They will give. Guest house means what? Nothing but like this only. Company gave, RBI is there, staff quarters they will give. Some companies are there, Reliance and all. To directors' quarters they will give, staff quarters they will give, a bungalow they will give. Yes or no? Now, first you should calculate the accommodation value. Then you should calculate assets in the accommodation value. Total put together, gross perquisite value. Correct? Total put together, gross perquisite value. Now, tell me, you might have seen this provision like furnished, unfurnished, how to get that and all. Leave it. It's easy to compute like this. Okay. First we should calculate only for accommodation. Then check whether company gave him any assets also. Movable assets. If movable assets are there, movable assets value also added. Then you get gross value. For example, in our example, gross value how much we got? 1,20,000. How this 1,20,000 we got, you know? 90,000 for accommodation value. 30,000 is for movable assets, furniture, all other purposes. 30,000. Total 1,20,000. Now, sir, how did this 90,000 we got it? How we got this 90,000? For example, accommodation is provided by not government but some other employer. Accommodation is provided by whom? Private sector, not government employer. That time, now suppose, now accommodation company gave a bungalow to you, right? That bungalow owned by the company. That bungalow is owned by the company. Then the perquisite will be 10% of salary if the population in the city where the bungalow is situated, okay, if it is more than 40 lakh. In exam they'll give you, in exam if population information they didn't give, by default we assume it is more than 40 lakh, sorry, yeah, more than 40 lakh by default we assume. So automatically perquisite value will be 10% of salary. Suppose if the population is between 15 to 40 lakh, then 7.5. If the population is any other area, then 5% of salary. This is deemed to be the value of the house given to you. This is deemed to be the value of the house given to you, because house is owned by me. Yes or no? I don't know how much rent I will get, all that. I'm just giving it to you exclusively for bungalow. So how much is the value of the house per annum? Per annum value how much? Per annum value will be 10% of salary, 7.5 or 5%. Suppose he is occupying only for 6 months, then 6 months only. Salary you will take 6 months automatically. Generally salary you will take for 12 months into 10%. 10% into 12 months salary. 7.5% into 12 months salary. 5% into 12 months salary. Suppose if at all it is given only for 6 months, then salary itself we will take for 6 months. If the employee occupied the house only for 4 months, then 4 months only we will take into account. Are you clear? So salary here, salary for how many months you should compute? You should compute salary only for that many months employee occupied the bungalow. Are you clear? Not any other period. Easy. This is when if the accommodation given to employee is owned by the company. Suppose accommodation, no, company took it on rent. They took it on rent and then given it to you. Now 10% of salary or actual rent, whichever is lower. 10% of salary or actual rent, whichever is lower. Suppose if the accommodation is given for you in a hotel, 5-star hotel they give, then how much? Same actual rent or 24% of salary, whichever is lower. Now either 10% of salary, 7.5% of salary, or like this amount, or this amount can come, or this amount can come. Are you clear? Sometimes if the problem has to be really tough, they will give all the 3 incidents in the same year. Employee was newly hired. April and May month he was given hotel accommodation. June, July, August, September, company has taken a house on rent for these 4 months. Rented accommodation was given. Remaining months company has constructed own bungalow. Yes or no? They gave that accommodation. Like that also they can give. The paper want to be really tough. In such a case, first 2 months you should apply this rule. Next 4 months you should apply this rule. Remaining months you should apply this rule carefully. Are you getting the point? Now, so if you apply that, what you will get first? Accommodation related value you get. But guess what? The employee opened the bungalow and saw inside. He saw beautiful furniture. Yes or no? ACs, television, dining table, sofa set, everything was there. For that also perquisite valuation rule will apply. Yes or no? Because only for bungalow I taxed you. What about furniture? For furniture also we should tax. How much for furniture we will tax? How much for furniture you will tax? Sir, furniture owned by the company, sir. Furniture owned by the company, sir. Then original cost you take multiplied by 10% per annum. Suppose if the employee took it for 4 months, 10% into 4 by 12. If employee used it for 6 months, 10% into 6 by 12. Able to understand. Sir, if the assets are hired, some ACs and TV, no, we took it on rent and then kept in the bungalow, sir. Then actual amount paid. Are you clear? Then actual amount paid. So that amount. So this is for movable assets. Automatically, first accommodation value we calculated. Now furniture value we calculated. Automatically that is total furnished accommodation valuation. Over. If furniture value remove it, that's unfurnished accommodation value. Are you getting it? Now accommodation value we added plus furniture value we added. Now you will get total perquisite value. That's called gross perquisite value. Do you understand? Do you understand gross perquisite value? How do we calculate? Okay. Next, from that amount recovered for accommodation movable asset, whatever it is, for assets, accommodation, movable asset, no, company paid monthly 5,000 written back to the company. Reduce that. Balance amount is the net benefit given to the employee. Only that is taxable. Are you clear? Now 10% of salary, 7.5% of salary, 5% of salary, 10% of salary, 24% of salary. Salary means what? Salary means, this is one of the complicated definition of salary. They gave a very big definition, but I'm giving you a simple definition for it. Salary means what? Salary is equal to basic plus DA for retirement plus any commission plus bonus plus taxable portion of allowances. Only taxable portion, guys. Only taxable portion of allowances you should take. You should not take any other allowance. Only taxable portion you should take. That's it. Now I am computing the problem. Okay, I went back to my main problem where I already wrote some information. You know, I saw basic salary 2,40,000 is there per annum already. Let us assume it is per annum 2,40,000 is there. DNS allowance, okay, nothing is mentioned in the problem. If nothing is mentioned in the problem, I assume that it is not for retirement. That is also 2,40,000 is there. Are you clear? Then entertainment allowance 40,000 is there. What is entertainment allowance? 40. Then telephone allowance is there, which is also again 40. Let us assume here there is no reimbursement concept. Telephone allowances and allowance, it is fully taxable. And right now I am doing optional tax regime. What am I doing? Optional tax regime. Children education allowance, they received actually 10,000 rupees, but 2,400 is exempted. Balance amount taxable is what? 7,600. Hello everyone, yes or no? Then HRA is not there because for this 12 months he was given RFA. Accommodation is given by the company. So do you think HRA will be given simultaneously? No. HRA will give, or accommodation they will give. Any one only they will give generally. They will not give both. Okay. Next up. So then transport allowance. What is it? Transport allowance. This employee is a blind employee or deaf, dumb, physically handicapped. He got 10,000 per month transport allowance. How much is exempt? 3,200. How much is taxable? 6,800 into 12. How much is it taxable? 6,800 into 12 is equal to 81,600. Correct? Now he received gratuity during service. He received gratuity during service. 50,000 he received, fully taxable. It is treated as allowance. Are you clear? Then RPF, contribution to RPF, only taxable portion is 20,000. Employer, no, he paid contribution to RPF minus 12% of salary, we removed it. So balance amount came how much? 20,000. Like this you computed. Now at the last, you are doing now rent free accommodation. Now working note 1. Are you clear? Now for example, company gave the rent free accommodation in a city owned by the company. It is owned by the company in the city where population is more than 40 lakh. Automatically, what is accommodation perquisite value? 10% of salary. Remember, it was given for 12 months. Employee also occupied for 12 months. Okay. Now look at employee occupied for 12 months. Now 10% of salary. Am I right? Now salary means what? Basic. DA for retirement. No. This is not a DA for retirement. And you should take commission, not there. Bonus, not there. Taxable portion of allowances. This is what? Entertainment allowance, fully taxable. Yes, consider. Telephone allowance, fully taxable. Consider. Education allowance, gross is 10,000, but taxable portion? Exactly. Transport allowance, taxable portion. Gratuity, sir, it is not allowance, no. Gratuity received during service is treated as allowance. Therefore, consider for 12 months. Yes or no? And RPF, that's not an allowance at all. That's not an allowance. RPF is a contribution. Allowance means what? Amount coming into your pocket. That is what allowance. Is RPF contribution allowance? No, it is not an allowance. Therefore, not considered. Now look at. So 2,40,000, 40,000, 40,000. So 2,80,000, 3,20,000. Correct? 3,20,000, 4,07,000, 4,72,200. Am I right? Totally, no, whatever rounded items. Okay. 4,50,000. Okay, 4,59,200. 10% is equal to 45,920. This is accommodation value. Are you clear? And guess what? The answer is not yet over. RFA information still there. This is accommodation value for 12 months. Sometimes in the question they will say accommodation occupied by employee for 4 months only. That time you should take all these values for 4 months only. Are you clear? Now in exam gratuity per annum figure they give. 4 months figure they didn't give. You should take proportionate. You should take what? Proportionate. Compute per annum into take 4 by 12. Simple. Able to understand? Now this is for accommodation plus company gave 2 ACs in the employee house. Bangla is given 2 ACs also they have given. Per AC 1,000 rupees rent they are paying. 2 ACs for 12 months. How much is the AC rental charge? 24 24,000 rupees. Are you clear? Company gave one LED TV in the employee house, but TV is owned by company. That LED TV cost is 2 lakhs. 12 months it was given, multiplied by 10% is equal to how much? 20,000. That's it. All put together, how much is the gross perquisite value? 89,920. This is the gross perquisite value. In return, employee paying monthly 2,000 back. This is the benefit we gave, but he is paying back how much more? 2,000 per month. 24,000 per month he paid back to the company, which means net benefit how much we gave as per valuation rules? 65,000. That's it, the answer. Are you clear? Do you understand? So here should I apply 10%, 7.5, 5, 24? That is the only question. Easy or not? Sometimes if the employer is a government employer, rent to owned, that concept is not there. In case of government employer, no, license fee word they call it as. What they call it as? License fee. In case of government company, not government employer, in case of government employer, if they are giving accommodation, they may get it on rent and then give you, or it may be owned by them and then given to you. It doesn't matter. License fee will be determined 10,000 per month. 12 months are 1,20,000 over. If license fee concept is there, license fee into 12. That's it. If you are occupying for 4 months, license fee into 4 months. Remember, this license fee 10%, 7.5%, 5%, 24%. These are all only for accommodation, not for furniture, not for TV, all that. For furniture and TV, you should always separately calculate and then add it. Are you clear? That's it. This is how RFA problem has to be computed. Now you understand why you should solve RFA at last, so that you will understand all the taxable portion of items at a time. You don't have to once again redo it for RFA working notes. For RFA, some students they do it here and they will do taxable portion allowances once again in problem working note. Again they will have to do it anyhow in gross salary computation. Twice why you need to do the same brain application? You can save time, no? So RFA always do at last. Maybe here you might have put RFA, but don't put the amount here. You keep it pending. At last you do. After you doing RFA, then what you get total is called as gross salary. Correct? Minus deductions is equal to net income from salary over. Are you clear? With this, RFA concept is over. Now here one important adjustment. If at all the paper want to be really tough, he will ask you a question on subsequent year valuation. What is subsequent year valuation? RFA subsequent year valuation. What exactly is that? For example, no, you are working with the company for the first time in 24-25. First time you are working with the company, how much ma? For first time, how much you are working with the company? 24-25. What is the perquisite value? Let us assume 45. No. Perquisite value is what ma? Furnished value you should take. How much it is? 89,920. Okay. So perquisite value, this is first year in which you worked, 89,920. Now in 25-26 also you continued with the same company. In 25-26 also accommodation is given to you as it is. But guess what? In 25-26 your salary was 5 times increased. Your salary was increased by 5 times. But same house only you're staying. You're staying in the same house. But tell me, since your salary has been increased by 5 times, accommodation valuation also will increase by 5 times automatically. Is it right or not? But it is not fair. Correct? My salary increases because I am doing so much of work, I am doing so much of all this contribution to the company. So the company paid me 5 times increment because I found one intellectual property. In the last year, first year of my service itself, I did some intellectual property and know-how I found. Company director was impressed. He wanted to retain me. 5 times he package gave me. Are you clear? So earlier my basic salary was, per annum 2,40,000, right? Now I got 12 lakhs basic salary. Now whenever in 25-26, again if you see, 10% of salary I should compute as usual perquisite value. When I computed 10% of salary, my answer is coming 7 lakh rupee perquisite. Array, accommodation 7 lakh, same house I stayed, no? Yes or no? Did I change house? Did they give me bigger house? No, same house. Okay, bigger house they are giving. How can you tax in proportion to my salary? How do you think? See, my renting, suppose my salary increases by 5 times. Do you think my rent value increases 5 times? Accommodation value, will they increase any 5 times? But if at all 10% of salary logic is applied, the value is coming extremely high. Yes or no? Do one thing. Compute like this. Sir, accommodation value 7 lakhs coming, sir. Last year it was only 89,000. But this year, as per same definition, 7 lakhs it is coming. Now, should I tax 7 lakhs RFA? No. Wait. First year, how much you taxed, ma? 89,920. Furnished value you should take. Here, what value you should take? Furnished accommodation value you should take. Gross value. Before reducing amount. Before reducing deduction, 24,000 you reduce, no recovery amount. Before reducing the recovery amount, gross perquisite value is there, right? Take that. Multiplied by CII of 25-26 year number divided by CI of 24-25 number you put. Okay. Now, let us assume the indexed value is coming 92,000 rupees only. Then in the second year, perquisite cannot be more than 92. If at all the answer is 7 lakhs, whereas indexed value is 92, then answer will be 92,000. Are you clear? How much is taxable in the second year? 92,000 only taxable. Indexed value is only taxable. That is maximum limit. Suppose in second year, no, actual value you calculated, it is just 90. It is exactly how much? 90. Indexed value 92. Then 90 only taxable. Actual value 1 lakh, 2 lakh, 3 lakh. Indexed value 92. Then maximum taxable is 92. Are you clear? So compute 10% of the salary, 7.5%, 5%. Compute as per the valuation rule in the second year, or indexed value, whichever is lower. That is the maximum amount that is taxable. So that's what. Do you understand the logic behind why indexed value is there? Yes or no? Now look at. So subsequent year, if the accommodation is continued to be provided to the same employee for more than 1 year, the perquisite value of the subsequent year shall not exceed. They didn't say perquisite value will be equal to this. They said perquisite value shall not be more than this. Means actual amount you see perquisite value and compare with maximum limit mentioned here. What is the maximum limit? Value in the first year. 24-25 you got accommodation first year. Multiplied by CA of the current year divided by CA of the first year. That's it. Easy. So with this, RFA concept is over. Okay, RFA concept is over. Then car facility, just 2 minutes, we'll discuss about the car facility. Clear? Then we have car facility, gift facility, gift one, car, gift, movable asset topic is there. And outstanding loan topic. If these 4 were over, salaries chapter will be over. Deductions we already discussed at the beginning. Yeah, let's continue. Let's continue. Another concept I will tell you first is movable asset concept. Okay. A company, immovable asset if they give, accommodation, nothing but. Company is giving immovable property to employee for usage. Immovable property means what? What immovable property? House only. Yes or no? Do you think they'll give gold owner? Obviously not. Okay. That's it. Now, if a company gave a movable asset also to the employee, like furniture, all that, yes or no? How to value the perquisite? See, if at all employee was given furniture, AC as a part of accommodation, then it will be valued as part of accommodation benefit. And when you are applying indexation value, no, accommodation put together, furniture put together value, on that value you should apply indexation benefit. Able to understand? Now, if at all employee was given any other movable asset for usage, then movable asset usage purpose we gave. We didn't gifted him. We didn't gift him. We just gave it for usage. If it is for usage, laptop and computer, 0. The perquisite is deemed to be 0. Any other asset company is given to the employee. Any other asset. Obviously, here movable asset is used for personal purpose only. For personal, then 10% per annum of original cost if the asset is purchased by the company and given to employee, or if the asset is hired by the company on rent and given to the employee, then rental expense which company is bearing, that is the perquisite value. Do you agree? Yes or no? Suppose no, movable asset is gifted. Company gifted it. Gifted it means what? Gift means what? It may be without consideration or it may be inadequate consideration. Inadequate means they sold it. That's what the meaning. If at all company sold a movable asset to the employee, regarding that we have the provision here. Use of transfer of movable asset, you can see here. First of all, if at all company is giving asset for usage, how much is the perquisite? For laptop and computer? 0. Whereas any other movable asset, own asset company gave 10% per annum of the original cost. If it is rented asset, amount of rent. Suppose company transferred movable asset. What is it? Transferred. For example, no, company has purchased a car which is originally costing for the company is 5 lakh. Original cost of the car was 5 lakh. Now company purchased the car. Original cost is 5 lakh. In the hands of the company, it is there for 2 completed years. It is there for 2 completed years. Like how? Like first no, you should reduce notional depreciation for every completed year of usage by the employer. So for example, no, company bought some 3-4 years back one car, 3 years back one car they bought, which costed is 5 lakhs. After 3 years they are using, you know, today the company gave me the car. They just took from me 1 lakh rupee. They just took from me how much? 1 lakh. I paid 1 lakh rupee to the company and bought company car. Now company car became my car. Now how much is the benefit I got in this? I need to calculate. First we should calculate value of the car on the date you bought for 1 lakh. On the date when you bought for 1 lakh, now what is the value of the car? Perquisite valuation rules give how to value the car. What is the value of the car? For example, original cost for the company is how much? 5 lakh. Yes or no? For example, company bought this car on 10th August 2023. Whereas you purchased this car in this year 25-26 on 7th July 2025 you bought. 7th July 2025 you bought the car. Now at this time company purchased it for 5 lakhs. And when you bought just by paying 1 lakh. Now we want to know what is the benefit that you got. First, how much you paid 1 lakh, leave it. I will consider that at last. What is the value of the car that you bought? That I will have to calculate. Now here, how many completed years were there? 10th August 2023 to 9th August 2023, 1 year. Sorry, 24, 1 year. 9th August 2025. Oh, 9th August 2025 not yet came. Before that, before second year completed itself, you took the car. Means, how many complete years were there? 1.8 year approximately. Fraction we should always ignore here. Only 1 year completed. In the company hands, car was there for how many full years? 1 full year only company it was having. Second year is about to complete, but you took that. Second year we will not consider. Now, notional depreciation. In our example, we should only calculate for 1 year. Now, how much is the depreciation rate? For car, 20% WDV method. How much is what is the depreciation rate notional as per valuation rules? 20% WDV. See, in the company books of accounts, they may be charging depreciation on this car at 15%. That doesn't matter. Perquisite valuation rules, depreciation rate 20%, rules they speak. What rules have given 20%. You should only take that rule number, rule value. You should not take what real value company is charging. Income tax section 32 depreciation rate, that and all doesn't matter. For perquisite valuation, the depreciation rates are given in the valuation rules itself. You should take that rule, that value only. Are you clear? 20% first original cost. Even if it is WDV, first we will apply it on original cost 1 lakh. So minus what is the WDV on 7th July 2025? 4 lakh. Ayyo, 4 lakhs worth of car you just paid 1 lakh rupee and bought, which means 3 lakh is the benefit for you. This 3 lakh is treated as income from salary. Able to understand? For example, here instead of July he bought on September. Instead of July he bought it on September. Then what will happen? 10th August to 9th August 2024, 1 year. 9th August 2025, 2 years. Still employee did not buy. He bought in September only. 9th August 2026. 2026 company is not there. The car is not with the company. Before that itself employee bought. How many completed years? 2 completed years. Which means how to calculate here? 5 lakhs minus first 20%. Am I right? First 1 year, first completed year. Then 4 lakh. Again for second completed year. Another 20%. Am I right? WDV. Therefore, by the time of the date, 3 lakh 20, 1 lakh he paid is equal to 2 lakh 20 is the perquisite value. Are you clear? Now, if it is car, 20% WDV method. If it is laptops and computer sold to the employee, not for usage, sold to the employee, then 50% WDV for completed year of usage. What is the depreciation rate? For every completed year of usage, you see how you should present in exam. First original cost you take. Then less notional depreciation at the rate specified for every year, reduce it. Then you will get WDV. This is the gross benefit value given to you minus amount paid by you is equal to balance perquisite. Now, what is the specified rate? Motor car 20% method is WDV. Computers 50% method is WDV. Any other asset 10% on SLM basis. Are you clear? Sometimes in exam how they will give you, how they will give you is a television is provided to the employee. A television is provided to the employee at his residence. Okay, a television was provided by the company long ago. Now employee is using. Provided means not transferred. Remember, transfer is different, provided is different. It was provided. That is first point. Second point, the same television on 1st October 2025 was sold to the employee. At 20,000 rupees, they will tell you. Now, from 1st April 25 to 1st October, nothing but 6 months, you are using it first. You are using it. For usage for 6 months, first tax it. Then on 1st October, you bought it. Again, you should tax it for purchase. Able to understand? First 6 months, you are using it as an employee. That is company TV. You are using it. For usage, 6 months, you tax it. 10% per annum original cost into 6 by 12 is equal to usage perquisite value. Then on 1st October, you bought it. When you bought it, know how to calculate first original cost. Company original cost is 1 lakh. Yes or no? Television is used by the company. Up to 1st October, it is company owned property. It is up to 1st October, company owned property. Up to 30th September, no. Number of years fully owned by the company, if you check, no, 5 years is there. Number of fully owned years, how many? 5. Now, television, not a computer and laptop, not a car. Automatically it comes under any other asset. Now, how much is the depreciation? 10% per annum on original cost. Yes or no? So, 1 lakh into 10% is equal to how much more? 10,000. Into how many years company is owning it? 5. So 50,000 is the notional depreciation. The television value that is given to you is 50,000, whereas you paid only 20 in return. Therefore, 30,000 is taxable. Like this also we have problems. Are you clear? Where same asset, usage will be there, transfer will be there. Up to the date of transfer, usage taxation will be there. Once it is transferred, transfer taxation will be there. That's it. That's regarding use of mobile asset, transfer of mobile asset. That's it. Clear? Then gift. What is gift? Gift is 2 types. Gift in cash, fully taxable. It is treated as allowance. It is treated as allowance. And if RFA you are calculating, this allowance also you should consider. This allowance also you should consider in salary definition for the purpose of RFA. Are you clear? Because gift in cash is treated as allowance. Gift in kind. What is the tax treatment? If the value is not exceeding 5,000 rupees, fully exempt. If the value exceeding 5,000 rupees, fully taxable. Are you clear? Here there is an alternative treatment. Up to 5,000 you exempt, extra amount you tax it. Both the treatments are valid. You can write any treatment in the exam, both you will get marks. Even in the ICA book also, problems when they are giving both the treatments, they gave the answer. Hello? Everyone? That's it. This is regarding gift. Then coming to food and beverages. What is regarding food and beverages? Which beverage? Alcohol? No. Non-alcoholic beverages. Alcohol beverages fully taxable. Food and non-alcoholic beverages provided to the employee. What is the tax treatment? Whether you give money to the employee or whether you give voucher. Generally the concept discussed is voucher. Food allowance is fully taxable. Voucher company gave. A company gave voucher or food facility they gave. They have a canteen, you can go and have. Then up to 50 rupees per meal is exempted. Per meal, it is not per month, okay? 50 rupees per meal is exempted. No restriction on number of meals, okay? Per meal 50 rupees is exempted, okay? This exemption is available only under optional tax regime. Suppose if you are taking default tax regime, this 50 rupees per meal exemption is also not available. Are you clear? Regarding food and beverages, food and non-alcoholic beverages. Clear? Next. Employee was given a loan. And what is the rate of interest company is charging? 3%. How much loan given? 10 lakhs. How much is the loan given? 10 lakhs. Employee, they are charging just 3% rate of interest. If at all, he went and borrowed it from State Bank of India. If at all he went and borrowed the same loan from State Bank of India will charge 10% rate of interest. But I am charging only 3%. 7% he's saving. Am I right? 10 lakhs into 7% per annum. If at all per annum loan is outstanding, then 7% per annum. 70,000 is the perquisite value. Are you clear? Suppose employee repaying back every month some amount. Employee repaying back every month some amount. Suppose no, opening 10 lakhs loan I gave. April 30, if you look at, outstanding loan is 9.5 lakh. May 31st, if you see, outstanding loan is 9 lakh. June 30, if you see, outstanding loan is 8.5. Nothing but every month, some 5th or 10th, he's paying 50,000 back to the company, which means at the end of every month, what is it? At the end of every month, how much outstanding balance you identify. This is called MOMB, maximum outstanding monthly balance. What is it called as? Maximum outstanding monthly balance. I computed maximum outstanding monthly balance. This is how it is coming. So 7% into 1 by 12, 7% into 1 by 12, 7% into 1 by 12. Like that you calculate, you get the perquisite value. Why 7%? 10 minus 3. What is this 10? Rate of interest charged by State Bank of India on a similar loan. Which rate of interest, which date you should consider? On 1st April of the relevant previous year. For which year you are computing perquisite? No, 1st April relevant year is there, na? That 1st April State Bank of India interest rate card you see. 10% is there, that loan interest. That much is taxable. Are you clear? However, if the loan amount itself is less than or equal to 20,000, no need to calculate this perquisite. Or if the loan is given for medical treatment of specified diseases, if the loan is given for medical treatment of specified disease, no need to calculate perquisite. If loan is given for any other purpose, rate of interest as per State Bank of India minus rate of interest that you are charging, remove it. Then balance rate of interest is taxable on MOMB balance. On a monthly basis you should tax. Are you clear? That's it. All the major provisions of income from salary, predominant provisions we have covered. Easy. Got some connection of entire salaries? Yes or no? That's it. So we'll take a break and get back and then go with house property discussion. Okay? Yeah. Now look at. Finally, we understood at the introduction itself how to compute salary. At the introduction itself, I understood deductions. We understood deductions. So how to calculate salary? Gross salary first you should compute. Minus deduction you should compute. Yes or no? Yeah. So minus deduction you should compute. Then what you will get is income from salary. Gross salary comprises of what? Basic, DA for retirement or non for retirement, commission, bonus, gratuity, leave encashment, RFA, motor car, all that values we understood. Now if you total it, what you get is actually called as gross salary minus deductions. Standard deduction 50,000 in optional tax regime, 75,000 in default tax regime. Profession tax, entertainment elements, you will get deduction only under optional tax regime. Accordingly you calculate, because we already discussed at the beginning itself. Then what you get is income from salaries. Are you clear? So this is the conclusion. All the benefits we have covered. Retirement benefits we covered, non-monetary we covered, monetary we covered, allowances we covered. Tell me, allowances, what is the conclusion? Official allowances always exempt. Only 3 official allowances are fully taxable under default tax regime. Uniform allowance, servant allowance, research allowance. They are taxable under default tax regime only. Otherwise they are also fully exempted to the extent spent by you. Travel allowance, conveyance allowance, daily allowance, they are exempted to the extent spent under whatever the regime it is. All personal allowances fully taxable. Both the regimes it is fully taxable. However, if it is optional tax regime, educational allowance 100 per month per child exempted up to 2 children. Hostel allowance 300 per month per child up to 2 children. Tribal area allowance 200 per month is exempted. Transport allowance, irrespective of regime, for disabled employee 3,200 rupees per month is exempted. Are you clear? Further, there is one small allowance, transport allowance given to transport sector employee. Transport allowance given to a transport sector employee. How much is exempted? 70% of allowance received. How much is exempt? 70%. Sir, I am getting 7,000, sir. 70%, 4,900 is exempted. Balance is taxable. Or maximum exemption is 10,000 per month is maximum exemption. Are you clear? Many think that, suppose no, if at all I give 10,000 transport elements, student think 10,000 minus 10,000 exempted. No, 10,000 I received into 70, 7,000, or maximum per month 10, whichever is lower 7, 10,000 I received minus 7,000, balance 3,000 is taxable. Are you clear? And by the way, this exemption is also available only under optional tax regime. That's it. Clear? Fine. With this, salaries topic is completely done. Okay. So in the next session, we'll discuss about house property. House property, you will get again. There are minor points. There are some points where you will definitely do mistake. Pre-construction period concept, all that. There you will get crystal clear clarity in the house property. And house property will not take much time. It's very easy. Okay. That's it. Yeah, next. Let's begin. House property head of income. Okay. So tell me honestly, how many of you strongly believe that I know very well house property? Don't worry. Tell me one more thing. Have you learned a new point in every section? Almost in every provision or every point, have you learned in a new dimension to look at it? Yes or no? I won't teach different. I teach what is there in the act as it is. That's what the difference. I won't try. For example, in house property, you might have learned how to tax let out property, how to tax self-occupied property, how to tax unoccupied property, how to tax part of your let out, part of your self-occupied, how to tax partly let out, partly self-occupied, how to tax deemed let out. Combinations, have you learned? Have you learned these combinations? I mean, in this way only you learned the combinations. We are not going to use all those combinations. We are not going to use that combination at all. We are going to discuss that house property provision in an act manner. In the way, in the act, how it was discussed. In the same I'm going to discuss. You don't have to mug up also. You don't have to mug up anything. Okay. See how it is going to be. Tell me, any head of income again. How do we compute income? Revenue minus expense is equal to income. Am I right? In house property, revenue is called as gross annual value. What is it? Revenue is called as gross annual value. So first of all, house property head of income, what is the format? Basic general format I'm telling you. What is gross annual value? First you should put. Then minus municipal taxes paid you should reduce. Then you get net annual value. Then from that minus flat 30% off NAV, yes or no, reduce it. Minus interest on loan, you reduce it. Then what you get is called as house property income or house property loss. That's it, as simple as such the format. Now, if you understand what is gross annual value, what is municipal taxes paid, what is 30% of NAV, what is interest on loan, if you understand these four, house property chapter is done. Am I right? Everyone? Yes. Now tell me, when house property head of income is applicable? Section 22, charging section. You know, what is taxable? Annual value is taxable. What is taxable? Annual value, not the rent. What is taxable is not the rent, but annual value. Of what is taxable? Property, which is building or land attached to building. Land attached to building. In the recent JAN exam, land attached to building, that point is tested as an MCQ. In the recent JAN exam, house property 6 marks MCQs came. 6 marks MCQs came from house property charging section interpretation. Understood? So fine. Building or land attached to building is taxable. Which building? Residential building or commercial building? It doesn't matter. It doesn't matter. I'm a owner. I have a shopping complex. That's a building. Or it's a land attached, or I have a land which is attached to the building. Suppose I have a land also attached to shopping complex, parking place. I'm renting that for parking. Still, house property head of income is only applicable. I am leasing it to a parking lot. I'm leasing it for a parking seller. Parking service provider is different. I'm just leasing it for the person who is doing parking business. Able to understand? Suppose if I am running parking business directly, then that's a business property. Are you clear? Suppose now I have a shopping complex, right? I am not running any shops in that. I am just renting it to people. House property head of income applicable. What is applicable? House property head of income. Because I am a owner of that building, house property head of income is applicable. Now, suppose in that shopping mall, entire shops are mine only. I am only running a business. Then that building is not liable for house property head of income. That building is liable for PGBP. Nothing but in PGBP, I show that as a fixed asset. I add it to the block. I claim 10% depreciation on that building comfortably. And whatever the shops I'm getting revenue, expenses, all that PGBP income will be applicable. Are you clear? This is the first rule that you need to understand. Okay? It doesn't matter. Commercial or residential, it doesn't matter. If I am running my own business in that building, house property charging section will not apply on that building. If I am not using for my own business, somebody else is using that building for their business, I'm getting monthly rent. House property head of income is applicable. One clarification of Supreme Court is there. If at all my business itself is renting buildings, if my business itself is renting buildings, frequently I buy the property rent, every year, every day, one tenant will vacate, one tenant will add, all that. If my business itself is renting building, then you can classify that building under PGBP. That's one exception. If my business, I'm unable to prove that it's a house property renting. If my business itself is renting of buildings, if I couldn't prove that, house property head of income is applicable for that building. Again, if that building is used for my own business or profession, I will show it as a block of asset. I will not show it as a house property. I will show it under block of asset. Are you clear? Okay, this is regarding charging section. Now tell me. I have a building. Okay. Computation format, you remove gross annual value minus municipal taxes, then net annual value minus 30% minus interest on loan. Yes or no? Now, how should I compute the house property income? First thing that you should see in the question, can NAV is equal to 0 be claimed or not? First thing that you should see is what? Can NAV is equal to 0? Can I claim it or not? You should see. When I can claim NAV is equal to 0? One condition, two conditions are there. NAV is equal to 0. You can claim only when these two conditions are satisfied. One, property shall not be let out. Property shall not be let out throughout the year. First condition, you should not rent the property throughout the year. Even if you rent for 1 day, gone. NAV 0 benefit you can't claim. The property should not be rented for throughout the year. Entire 12 months, you should not rent it. You are owner for 12 months, right? Then 12 months you should not rent it. You are owner only for 6 months. You latestly bought. Then for 6 months you should not rent it. Before you buy, somebody else would have rented. That's unnecessary for me. As long as I am owner in this year, I should not rent it. First condition. Second condition, you should not get any benefit from such house property. You should not get any benefit from that property. You want to stay, you stay comfortably. You want your parents to stay, happily you can stay. But you are indirectly benefiting for example, how indirect benefit I can get, Suppose, I got a job in Chennai. In Chennai only I have a house. But you know what? In my job contract, company will give me accommodation. I went and told the company, sir, I already have a house, sir. Instead of that, give me money. They said, no, sir, we can't give you. We will give accommodation only. I was having a dilemma. Sir, in the same city I have a house, sir. Why you were giving accommodation? Unnecessary, no. Okay, tell me, where are you going? No, Harsha, I have to search for a rent and then give it to you as per the company policy. Sir, thank God. Take my house on rent. Give me back on accommodation, RFA. Take my house on rent and give me as RFA. I think seems fine, Harsha. I'll do one thing. Yes, fine. I take your house on rent. Let's open lease agreement. I took a property on rent, and in employment contract, I'll have one more agreement. Take it, given to you as an RFA. Now see, effectively, I'm staying in my same house. Can I claim SOP benefit? No, 0. Why, Now company is paying me rent here. Every month they are paying me rent. Because I leased this property to the company, no? Now, in the same property, I'm staying as an employee, no? Hello? In the same property, I'm staying as an employee. Okay, for your satisfaction, I'll do one thing. I will lease to the company. I vacate the house. Next day, they gave me the house on RFA. I will go back and stay in the house. Now you are happy? Yeah, I will give it on lease to the company. I'll vacate the house. 2 days, I will stay on the road. I'll stay on the road. After 2 days, sir, give me as a rent-free accommodation, sir. Amma, they gave me. Again, I'll go back to the house. Okay? Now tell me, can I do this? Now tell me, after I give it to the company on lease and then I am getting the same house as an RFA, in that house I'm staying, no? Am I staying as a owner? Am I staying as an employee? Exactly. Now, sir, I am only staying. SOP, sir, NAV is equal to 0. No, not permitted because you are getting a benefit. Are you clear? Now you understand that meaning? If both the conditions are satisfied, then you can claim what? NAV is equal to 0. Fine. First condition, it should not be rented. In house property, one biggest amendment happened. Unoccupied property definition is amended. What is it? Unoccupied property definition. Fine, I'll come back to it. Okay. It should not be rented. Not rented means what? That house, either I should stay or it should be empty. If I have a house, I have some building, you call it house, you call it shopping complex, you call it as a shop, you call it as a godown, anything you call building. It's a building. Either I should stay fully or it should be idle fully. Yes or no? If these two conditions are satisfied and I should not get benefit from that, then NAV is equal to 0 can be claimed on that property. When I can show NAV is equal to 0, sir, I am staying there. Sir, it is empty. Nobody is there. Yes or no? And I am not getting single rupee benefit also. Tell me how will I pay tax on that? NAV is equal to 0. Are you clear? Now, not let out means what? It can be self-occupied. It can be unoccupied. Unoccupied property, once upon a time, what is the definition? You know, unoccupied property, once upon a time, I even gave the definition here. Just open the book. Unoccupied property definition I gave. 1 minute. 63. Look at this unoccupied property definition I've given. Yeah, here you see. Once upon a time, no, unoccupied property is the one that cannot be used by owner because any reason. It doesn't matter. This is the now latest amendment. Earlier, how it is there, you know, because they are living somewhere else, because of the work, business, profession, or residing at such other place in a building not owned by him. That unnecessary complication is there. They removed that. That building is unoccupied. Why? Nobody is occupying that. That's it. Whether I am staying in the same city, different city, unnecessary nonsense. Yes or no? This was the biggest amendment in unoccupied property definition. Are you clear? That's why I kept the old provision and then striked it. Okay. So clear everybody? Now unoccupied. So either the property is throughout the year unoccupied or throughout the year self-occupied. NAV is equal to 0. Then I can claim NAV is equal to 0. Now look at. You know what? I have 4 houses. I have 4 houses where all the 4 houses, if you see, I'm a film actor. Okay, for example, just example, okay. I'm a film actor or a politician. I have a house in Hyderabad, Mumbai, Bangalore, Chennai, Delhi, Kolkata. 6 houses I have. All are bungalows. Everywhere I have made watchmen everywhere. They maintain. Everywhere they maintain in an intact condition. I don't know where I will be there. Today I'll be in Chennai, tomorrow I'll be in Bangalore, day after I'll be in Delhi. Yes or no? So that's how I travel. 4 houses I have, totally 4 bungalows I have at 4 different places. Am I renting them? Am I getting any benefit from them? So I am filing IT return with the department. Sir, NAV is equal to 0 for all 4 houses. Department, hello mister. You can't claim NAV is equal to 0. I agree. All the 4 houses satisfying 2 conditions, I agree. You can claim any 2 house properties only. What is it? For any 2 house properties only, NAV is equal to 0, that can be claimed. That too, by the way, any 2 means not your choice. Those 2 houses also must satisfy with both the conditions. What are the conditions? It should not be rented, you should not get any benefit. That is the first condition. Then only NAV is equal to 0 you can claim. That too, NAV is equal to 0 can be claimed for how many buildings? 2. 2 properties only you can claim. Are you clear? Sir, but what about remaining 2? I will deem it to be let out. I will assume that they are deemed let out property. Okay, what is the consequence? You have to compute gross annual value. You have to compute gross annual value. Suppose you satisfy NAV is equal to 0 criteria, condition. You want to claim NAV is equal to 0? 2 conditions are there. Property should not be rented. 2. It should not be, you should not have any benefit. If these 2 conditions are satisfied, happily you can take NAV is equal to 0. Like that, for how many houses you can claim? 2 houses. Provided those 2 houses should also be satisfying both these conditions. If at all you are having extra houses which are also satisfying these conditions, that extra houses I will not give NAV is equal to 0. Okay sir, if NAV is equal to not 0, what you will do? I will compute gross annual value. Now let's understand how to compute gross annual value. When I will compute gross annual value? Only when I cannot claim NAV is equal to 0. When I can claim NAV is equal to 0, you should not be renting it. Means either self-occupied or unoccupied. 2, you should not have any benefit throughout the year. Then only you can claim NAV is equal to 0. For how many houses you can claim NAV is equal to 0? 2 houses. That's it. Now, if gross annual value I have to compute, how should I compute? Mister, very simple. Step 1, step 2, step 3, 3 steps. Very simple. First one, step 1. Sir, what is annual value? Sir, I'm only staying in my house. Nobody, I'm not getting 1 rupee. We won't bother about how much you're getting. We look at how much you can get. Expected rent. What is it? Expected rent. So I will calculate expected rent, mister. How do you expect, sir? Don't worry, I'll go to your neighbor. The same bungalow, in the same street, one more bungalow is there. I will see how much at what price he is renting it. That's called similar property rent. Sir, that's a very big bungalow, sir. That's a very big bungalow, and he has all internal lifts. All the mine is a very simple bungalow. That's why I will adjust it to fair calculation, fair rent. SPR or fair rent. I will see municipal value also. I will see municipal value. All these are calculated per annum. All these are calculated per annum. Provided you are owner for 12 months in that year. Suppose if the SSC is owner only for 6 months, then step 1 is calculated for 6 months. If the SSC is owner for 8 months, then step 1 is calculated for 8 months. First checkpoint when you are computing expected rent is when the SSC purchased this house. He purchased long ago. In this year, did he sell it? Check it out. No, he didn't sell it. Means entire 12 months is owner, which means expected rent will be computed for 12 months. In exam, to make you confuse, they will give you SSC during the year. 1st October only he bought the house. 1st October only he constructed. Completion certificate he got on 1st October. Means only for 6 months the property is ready for use. Only for 6 months you can expect the rent. You know what? Before getting completion certificate, if you rent, no, they will put you in jail. So can I expect the rent before getting completion certificate? No. Local authority should approve it. Okay, sir, property is now fit. You can use or you can rent it. That certificate is called as what? Completion certificate. Are you clear? So 1st October I got. Then 6 months only I should calculate expected. But they will give you in exam fair rent per annum. They'll give you municipal value per annum. They'll give you similar property rent per annum. They'll give you. You should not consider that. So similar property rent, fair rent or municipal value, whichever is higher. But maximum of standard rent. What is standard rent? You know, legally how much you can expect. Legally how much you can expect. Can you expect more than what legally permitted? Exactly. Therefore expected rent shall be less than or equal to standard rent. Are you clear? Now for example, that bungalow, expected rent per annum is 10 lakh, standard rent per annum is 8 lakhs. So whichever is lower, 8 lakh. This 10 lakh is how calculated? You know, municipal value 8 lakhs, fair rent 9 lakhs, similar property rent 10 lakhs, whichever is higher, 10 lakh. Able to understand? So now, but legal I can't expect more than 8 lakhs. Therefore 8 lakhs. This is per annum value. That's it. Now step number 2. Step number 2. What is step number 2? In gross annual value, step number 2 you should compute. Sir, step number 2, actual rent received you should compute. What you should compute? Received. How to compute received? Actual rent receivable first you compute. Receivable you compute. How to compute receivable? Let out period. How many months you let out? Monthly rent how much? Sir, entire 12 months I rented, sir. Then 12 months multiplied by monthly rent. Put it. Minus. Did the tenant paid you all the rent income? All the rent he paid? No, sir. 2 months he vacated already. 2 months rent he didn't pay. Silently vacated. I filed a case also in the police station. I took steps to recover. Tenancy agreement is there. You see, it's a bona fide tenant. I know. Rule number 4. Rule number 4. Unrelated rent. All the conditions satisfied. You reduce it. Then what you get is called as actual rent received. Remember, here unrealized rent you can reduce only if you satisfy the conditions. Are you clear? But right now, in the example which we started, politician, bungalow, actual rent is not there. If actual rent step 2 is not there, gross annual value is equal to expected rent. Suppose I'm really renting. I have 4 bungalows, right? 2 bungalows I will never rent. 2 bungalows, whenever I'm not there, I'm renting it. 2 bungalows, whenever I'm not there, I'm renting it. Or maybe I'm really renting it for some other tenant. Are you clear? So for some other tenant, I'm renting 2 bungalows. Now, if renting I'm doing, how much is the monthly rent? Sir, I'm charging 1 lakh rent. For how many months you rented in that year? 9 months only I rented, sir. Why? Remaining 3 months, what happened? Nobody is there, sir. Tenant vacated. Okay? Tenant vacated. First, I will check 12 months logic. First, I will check 12 months logic. So, how much is the amount? 12 lakhs, sir. How much you should receive, ma? 12 lakh. Now, in this, no, tenant did not pay 4 months rent. 4 months rent he didn't pay. He didn't pay 4 months. Still he's staying. He's staying. He's my friend only. Then you can't reduce it. You can't reduce it. He should have vacated. He should have vacated. Have you filed a case on him? Yes, I filed a case on him. Then only you can reduce. If without filing a case, without making him vacate, if you continue still, That is not unrealized rent. You are just gambling with me. When unrealized rent, I'll believe. How do you prove me that it's unrealized rent? You should have filed a case on him. He should have vacated the house. He should not occupy in some other house. He should not occupy in some other house. Similar adjustment was asked in Jan 26. Yes or no? Then only you should reduce it. 4 lakhs. Now received rent is how much? 8 lakhs. If at all, even though I really did not collect, but if I do not took any steps to recover the money, or he didn't vacate the property, still even though I did not collect, I will not reduce it. When I will reduce it, he should have vacated or steps have been taken to vacate, and he should not occupy any other house property, and you should have filed a case upon him. Then only rule number 4 is satisfied. Then only you can reduce. Are you clear? Hello? Then step number 3. Now here step number 1, let us assume it is 9 lakhs. Step number 1, what is it? 9 lakhs. Step number 2, 8 lakhs. Step number 2, how much? 8 lakhs. Now what is gross annual value? What is gross annual value? What is gross annual value? Simple. First I will see one point. Is step number 2 value right now how much, 8 lakh. Is it lower than step number 1 value? Yes. Now here in step number 2, is there a vacancy? No. Entire 12 months it was occupied. It was occupied entire 12 months. Oh, there is no vacancy. Then do one thing. Step number 1 or step number 2, whichever is higher, 9 lakhs is the gross annual value. Go back and put it in the table. Continue the remaining problem. Hello? Hello everyone? Until now? Yes or no? That's it. Suppose, sir, here we rented only for 9 months, sir. Unrealized rent is only for 1 lakh. 1 month only unrealized, sir. So accordingly 8 lakhs is the actual rent received, sir. Why you rented for 9 months? What about 3 months? Property was empty. Property was vacant. We even put two-let boat. We tried our level best to make sure the property get occupied, but still it was vacant. And for that reason, step 2 is less than step 1. Vacancy is there. Am I right? Tell me, if vacancy is not there, my step 2 answer would have been, actually right now my answer step 2 is what? 8. If vacancy is there for 3 months, right? If vacancy is not there, that 3 months, 3 lakh also I will be collecting, na? Total my step 2 answer would have been 11 lakh. Had there is no vacancy, if there is no vacancy, my step 2 answer would have been 11 lakh. But now there is a vacancy. For that reason only 8 lakhs. Now tell me, department, no, they always collect income under house property on expected rent. If your actual rent is higher, actual rent. If your expected rent is higher, expected rent. Department is saying, hey, no, I don't bother about your actual rent, all that. I want your expected rent only. This and all, you are gambling to me. Actual rent and all, you are showing and then gambling me. No. Sir, sincerely, look at my last year ITR. I showed actual rent more than expected and I paid more tax to you. This year, genuinely the property was idle. And because of that vacancy, step 2 value became less than step 1. Now you should tax me only on actual amount I received. You should not tax me on expected rent, because here my actual rent is lower only because of vacancy. Here, if vacancy is not there, how do I prove? Sir, look at, sir, my step 2 is 8 lakh. If there is no vacancy period rent also I will collect, na. Another 3 lakhs would have been added. That time I would have showed 11 lakh income. Not 9 lakhs, sir. You are asking only 9 lakh expected rent. If at all vacancy is not there, I would have showed 11. But right now, vacancy is there. That's why I am showing 8 lakhs. Therefore, gross annual value is equal to step 2 only, which is 8 lakh. Are you clear? Suppose no. Suppose if vacancy is not there, that time step 2 value is still 9 lakh only coming. Still less than 9 lakh only coming. Hello. Even if there is no vacancy, your actual rent is lesser only. Means you are charging lower rent. Who are responsible for that? You are only responsible. I will ignore that. I will tax expected rent. If at all your step 2 answer actual rent is lesser, because you are collecting lesser rent per month, I am not responsible. I will take based on expected rent. Able to understand? That's it. Do you understand gross annual value computation? Easy or not? By the way, when should I compute? Actually, in this so much other discussion is there, but this is sufficient. Basic discussion. This is main theme discussion. Tell me, when should I compute gross annual value? Only when NAV is equal to 0 cannot be claimed. Don't say for let out property I'll compute, for deemed let out property I'll compute. Simple. Say that if NAV is equal to not 0, then I'll compute GAV. Are you clear? Now let's look at one more discussion. I have a building. It has two portions. This portion, no, completely self-occupied. Means I am only staying in that portion. Whereas this portion, I'm renting it for somebody. Now tell me, sir, same property. But the problem is, one part I'm fully occupied, sir. Another part fully let out, sir. What about this? This part, condition 1, condition 2 apply. Satisfied? Yes, satisfied, sir. Then for this part, NAV is equal to 0. For this part, condition 1, condition 2 failed. Any one condition failed, gone. Then do GAV computation for this part. When you are computing GAV for that part, because conditions are failed, apply GAV computation step. Proportionate values only you should take. Are you clear? So now GAV we understood. Do you understand? Yes or no? Now, for example, another example I'll take. Sir, I have only one house, sir. 6 months I stayed, sir. 6 months I rented, sir. Now, condition number 1. SOP is equal to 0. Sir, NAV is equal to 0. I can claim. First condition, only if it is not rented throughout the year. You rented for 6 months, man. Condition 1 failed, man. If condition 1 failed, entire house, I will compute GAV. Part of a year let occupied, part of a year self-occupied. Treat it as if it is let out. GAV compute for whole year. This is what you learned, huh? That is mugging up. NAV is equal to you can't claim. NAV is equal to 0, you can't claim because it was rented for part of a year. This is section 23 subsection 2. What is it? 23 subsection 2. Are you clear? That's it. So GAV you computed. Now we understood how to compute GAV. In our example, what is the GAV? 9 lakhs. Let us assume 9 lakhs ma. It is case 1 ma. Whichever is higher logic is applicable, 9 lakhs we got. Minus municipal taxes paid. Some they said 1 lakh in the problem. Whatever actually paid only you take. Municipal taxes paid alone is taken on cash basis. Then what you get is 8 lakhs, which is actually called as net annual value. Now minus 30% flat deduction. Yes or no? 2 lakh 40,000. Then minus interest on loan. What is the next one? Interest on loan. Working note 1. What is interest on loan? Working note 1. Yes or no? Now, what is working note 1? Interest on loan means what? For this building, to construct this or to buy this, I borrowed a loan. On that, I am paying interest. That is one expenditure I am paying. Remember, for house property, to make you confused, they will give you many expenses. Repairs, insurance, fire insurance, motor repair, painting, all expenses. Ignore all that. First deduction, flat 30% of NAV. Second deduction, interest on loan. How much interest you can claim? Don't think about that. I will tell you when to think about it. Okay. Interest on loan. What is interest on loan? Simple. Whatever interest you incur on the borrowed loan in the relevant previous year. Whatever interest is incurred in the relevant previous year on the borrowed loan. That interest expenditure incurred. Remember, interest paid is different. Interest incurred is different. Here, interest amount calculated based on accrual basis. Interest incurred is important. That interest incurred in the relevant year, whatever in the current year total interest incurred. Bank loan, then do one thing. Bank loan certificate will be there. No, loan statement. In that interest amount you calculate for 12 months. Over. That is interest expenditure incurred. Take that interest expenditure incurred. That interest expenditure, whatever is there, reduce it. Whatever is there here, reduce it. No more questions asked. Whatever interest is there, reduce it. Related to current year interest. That is related to current year interest. Hello, everybody. Until now, clear or not? I have not yet brought the concept of regime discussion. I have not yet brought the concept of regime. Interest expenditure related to current year. Whatever is there, reduce it. Now look at, sir, not only this interest, sir, I also have pre-construction period interest. Interest expenditure is calculated in two parts. Pre-construction period interest, current year. Current year means for which year you are doing income, for that year whatever interest amount incurred is called current year interest. Current year interest, whatever is there as it is take. Sir, my current year interest 2 lakhs, sir. Okay, take it. Okay, take it. No problem at all. What about PCPI? Sir, before I bought the property, before I construct this property and ready to use it, earlier years, no, interest expenditure incurred. That time property is not there. I didn't compute income from house property, but I paid interest and all. What about that interest? That interest is called as what interest? pre-construction period interest. What is pre-construction period? What is pre-construction period? Suppose when the house was constructed, August 2025, nothing but this comes under which year? 25-26, before 31st March 25, that's PCP ending. Very simple. Date of construction they'll give na before 31st March. Date of completion of construction, date of purchase they will give in exam. Date of purchase, you see, sir, date of purchase 5th April 2025, sir, before 31st March. What is it? 31st March 2025. Hello, sir, date of construction is on 1st April 2025, before 31st March means 31st March 2025. PCP end date is calculated like this. PCP end date is calculated. From date is what? Construction, pre-construction period means from date. From is nothing but borrower of loan. PCP is equal to borrower, date of borrower to 31st March of the previous year preceding date of completion of construction. Look at the date of completion of construction, immediate 31st March, preceding 31st March, you take it. So up to that date is called as what period? Pre-construction period. Now in this period, if at all you are spending any interest, that interest expenditure is called as pre-construction period interest. What is it called as? Pre-construction period interest. For example, I started construction of the property on 1st August 2023 onwards. I constructed property. Guess what? My property construction completion completed on 1st April 2025. The property came into my hand. Means for the first time on this building, I will start compute house property income from which year onwards? 25-26, because 25-26 only property came into existence. Am I right? Now what is PCP? 1st April onwards property is existing before 31st March. 31st March means what? 31st March 2025. Sir, one day gap only, still PCP apply. Yeah, obviously. There is no link. Simple. Completion when? 25, 26. Before 31st March. What 31st March? Whatever before it comes. That's it. Able to understand. Suppose I'll tell you one example. Sir, I completed property construction on 20th March 2025, sir. I completed property construction on 20 March. Completion certificate is on 20 March. Then PCP end date 31st March. Exactly, that's it, sir. It's near, no, 10 days only there, still closable year will be, that and all doesn't matter. PCP ends on 31st March 2024. Simple. The year in which the property was born, don't consider that in PCP. Up to 31st March of the previous year, you consider for PCP. Now, able to understand? Now, look at this. So, date of borrower 2023 to 31st March 2025. In this period, no, I spent approximately 10 lakhs interest. How much I spent? 10 lakhs interest. 10 lakhs interest I spent. In 25-26 properties existence is live now. Okay. In this year also, loan will be there now every year. I didn't repay the loan yet. In this year, the loan interest is how much, 3 lakh. The interest is how much? 3 lakh. PCP interest is 10 lakh. Now look at PCPI is equal to 10 lakh. Current year interest is 3 lakh in the current year. Current year interest you can claim, no problem. PCP, claim it in 5 installments. PCP interest, don't claim at a time. Claim it in 5 installments. From which year? From year of birth. From year of construction. In our example, 25-26 is the first year. 26-27, 27-28, 29-30. In these years you can claim equal amounts. 2 lakh, 2 lakh, 2 lakh, 2 lakh, 2 lakh. Which means in the current year, 2 lakhs PCP interest, 3 lakhs current year interest. Total interest is how much? 5 lakh. Now again go back to the example. 9 lakhs GAV minus municipal taxes paid 1 lakh. 8 lakhs NAV minus 30%, which is 2.4 lakh. Am I right? Yes or no? Minus interest. PCP 2 lakhs installment, current year 3 lakhs, totally 5 lakh. Balance income is called as income from house property. Hello? 8 minus 2, 7, 60,000 rupees is income from house property. Are you clear? Now, you might have seen interest limit of 2 lakh, interest limit of 30,000. When that gets attracted? When NAV is equal to 0. When that gets attracted? When NAV is equal to 0, we are about to conclude the topic, 5 more minutes. Okay. Suppose, sir, right now you reduced whatever interest is your computer reduced. No, you didn't check any 2 lakhs limit and all. Not required. When I am computing GAV, that limits are unnecessary for me. When that limits are necessary for me, I gave you exemption on house property taxation. You claimed already exemption of NAV is equal to 0. That time, interest amount and all I will restrict you. Suppose you are taxing it. You are computing GAV, you are computing NAV and you are paying me some tax on it. Then how much ever interest you have, claim it. I will not object it. But if you are saying NAV is equal to 0, first of all, you can't say that without condition 1, condition 2. You satisfied condition 1, condition 2 and you say NAV is equal to 0. Yes or no? Then you have interest deduction, right? Here I will put a maximum cap. This cap will come into picture only when NAV is equal to 0. Never say SOP NAV is equal to 0. Yes sir, never say for SOP 2 lakhs limit is there. Never say that. That's a wrong interpretation, because an SOP can be DLOP, where GAV will be computed. If you say on SOP 2 lakhs limit you can claim, indirectly you apply by mistake that logic on DLOP also. On DLOP interest limit you should not apply. Why? GAV you are computing. Able to understand. So if NAV is equal to 0 is taken, then only max interest limit is applicable. Otherwise interest limit concept will not come into picture at all. Now regime. Sir, default tax regime, sir. Okay, whatever regime, you can claim NAV is equal to 0 if those two conditions are satisfied. You satisfied? Yes sir. Under default tax regime, if NAV is equal to 0, no deduction for interest. No deduction for interest. 0. No, forget about 2,30,000 also. No limit at all. If at all you are claiming NAV is equal to 0, no limit question. You don't get deduction at all. Sir, I'm going for optional tax regime. What about me, sir? NAV is equal to 0, condition 1, condition 2 satisfied? Yes sir, satisfied sir. Now, interest amount, how much you incurred? Sir, I showed no sir. PCP interest 2 lakhs sir, installment. Current year interest 3 lakhs sir. Total 5 lakhs I incurred sir. No, you can't claim 5 lakh. You can claim maximum 2 lakh. Maximum you can claim 2 lakh. That too, conditions are there. Loan must be borrowed on or after 1st April 1999. The loan must be borrowed for construction purpose, purchase purpose, not repair renovation. By the way, you borrowed this loan for construction only. Then okay, then good. 2 lakhs limit is applicable. The construction must be completed within 5 years from the end of the year in which loan was borrowed. That condition generally they won't test much. The third condition generally they won't test in exam, but first 2 conditions they'll test. Loan borrowed on or after 1999. Loan must be borrowed for construction or purchase. If you borrow the loans for these two, if you satisfy these 3 conditions and NAV is equal to 0 and you satisfy these 3 conditions, then you can claim maximum interest of how much more? 2 lakh. Suppose you failed to comply with these 3 conditions. Any one condition failed also, gone. Maximum interest you can claim is 30,000. Until now clear. In this given case, no, SSI borrowed loan in 23. Just now we saw. Construction was completed in 5 years only. We saw. Loan was borrowed for construction. We saw. So maximum limit is how much? 2. Therefore, NAV is equal to 0 minus interest is equal to minus 2 lakhs. So loss from house property is 2 lakhs. You can set off with other heads of incomes under optional tax regime. Under optional tax regime, you can set off with other heads of income. How much you can set off? Maximum with other heads, 2 lakhs. Under default tax regime, you won't get deduction first of all like this. You won't get deduction first of all like this. Are you clear? Anyhow, when I'm discussing Setoff and Carry forward, there I will discuss about Setoff point. Until now clear. Now, you know what? I have 2 houses, no? NAV is equal to 0. NAV is equal to 0 for 2 houses, I showed no? Interest. Here it is 2 lakhs reduction is applicable. Here also it is 2 lakhs applicable. So 2 lakhs loss here, 2 lakhs loss. Optional tax regime. No, again. Per house it is 2 lakhs restricted. SSC wise again 2 lakhs restricted. SSC wise it is again 2 lakhs restricted. Able to understand. So it is per SSC. You have a co-ownership problem and all. There you will understand. Are you clear? Interest on loan. You understood how to compute GAV? You understood MTP? You understood 30% of NAV? You understood interest calculation briefly? Everyone? Yes or no? Now tell me, GAV itself when I will compute, when I can't claim NAV is equal to 0. When you should compute NAV is equal to 0, condition 1, condition 2. If you compute NAV is equal to 0, interest, should I apply limit or not? Default tax regime, ignore completely interest point. Optional tax regime, 2 lakhs limit or 30,000 limit subject to 3 condition satisfaction. Easy. If it is GAV, NAV is not 0. GAV you compute it specifically. Interest, question of limit does not arise. Indirectly, let out property, deemed let out property. There is no link with regime. There is no link with regime. SOP, nothing but SOP, UOP, where NAV is equal to 0, regime point will come into picture. Optional tax regime only 2 lakhs limit, 30,000 limit, all that is applicable. Otherwise, it is not applicable. And I told you, 2 lakhs limit is also per SSC, not per property. First, we restrict per property wise, then we restrict to overall SSC wise. Understood? Finally, one more provision. Section 25A, arrears of rent recovered, unrealized rent recovered. Last long back, some 4 or 5 years back, one tenant is there, arrears is there, I recovered. Unrealized rent is there, I recovered. In exam, they'll give you some other information to confuse you. Leave all that. How much amount I collected now, check it out. Whether I am owner in this year or not, doesn't matter. Whether, all that doesn't matter. How much you collected? Unrealized rent, I collected now 10 lakhs. Arrears of rent, I collected now 15 lakh. Tax it. Just blindly tax it. Minus 30% flat deduction. 10.5 lakh is balance taxable amount. In exam, they will give you to confuse you. Out of 15, 10 lakhs is arrears, no? Sorry, unrealized rent, no? They will tell you this amount was reduced at that time when computing income from house property. This amount was reduced in the actual rent computation. Irrelevant for me, that data. Last, 10 lakhs is unrealized rent. Whether I got deduction, I didn't get deduction, I paid tax on this, I didn't pay tax on this, irrelevant. Now you collected, what you collected, URR you collected, what you collected, arrears you collected, total it, tax it, minus 30%, balance is taxable. Are you clear? Then apart from this, you have in house property, real estate people, 2 years exemption is there. Okay, that one point is there, an important point. Apart from that, you have 26 co-ownership concept. No need to apply co-ownership. First compute house property income as per what I told. At the end, you split to them. That's the only difference. Now, when co-owners are there, 2 lakhs limit is there. Na? Each co-owner wise, it is applicable separately. That's one point. Then we have 27 deemed ownership concept. Slightly that point I will touch in Setoff and Carry forward chapter. That's it. House property topic is over. We just finished it within 40 minutes. Now tell me, house property, you got clarity? You should see in this way house property. Not mugging up that property, this property. No need. First, always when you see the problem, can I claim NAV is equal to 0? Try to check that. Condition 1, condition 2. You can't claim. Then compute GAV. That's it. How to compute GAV? Step 1, step 2, step 3. Then compute it. Then MTP paid. Minus, you get NAV. Then minus 30%. Minus interest. Interest you should always compute in 2 parts. PCPI and then current year. One observation. Loan borrowed. Property completion date. Both are in the same year. No PCP. Loan borrowed is in the same year. Same financial. I borrowed loan on 1st April 2025. And my builder is super fast. He is using all Chinese machinery and all. Okay. He completed construction within 6 months. 30th September, building construction over. 3D printing and all he is using. So, building construction over by 30th September. Now tell me, date of borrowal of loan 1st April 2025. Construction completion date 30th September. PCP end date is before 31st March. 1st April, today to yesterday. You can't calculate, right? Able to understand? From today to yesterday, can I calculate? Will I pay interest from today to yesterday? Exactly. Able to understand? So, if borrowal date and construction date are in same year, PCP logic will not apply. Look at that. Okay, that's it. Okay, we'll take a break and then get back. Yes, now let's begin income from other sources revision. Income from other sources revision. In other sources, only one provision dealing with default tax regime is allowances received by MPs and MLS. Is generally exempt under 10 subsection 17, but in default tax regime that is not exempt. So in other sources, typically many provisions are not affected by default tax regime. Capital gains literally 0. Default tax regime has no impact on capital gains. Correct? No. Income from other sources. Now see, so in what are the incomes that are specifically taxable under other sources? Very simple. If it is not covered under earlier head of incomes, that is straight away covered under other sources. Now the most important income is what? Dividend. So if at all you are getting a dividend, Whether a company is getting, which is involved in investment activities, dividend trading activities, doesn't matter. Whether a normal individual is getting is, doesn't matter. Dividend income is always taxable under other sources. And dividend includes deemed dividend. Deemed dividend is defined under 2 subsection 22. In that, first and foremost amendment is clause number F is added. Okay, this is for the first time applicable for May 25 exams. This point is something I already told in capital gains, 46A buyback. Remember, in buyback we discussed one point. If a company is buying back the shares, domestic company buying back its shares on or after 1st October 2024, any amount the company gave on buyback, that amount received by the shareholder is straight away taxed as income from other sources as deemed dividend. Sir, what about the shares purchased by him in the company? That is treated as cost of acquisition in capital gains. Full value of consideration is taken as 0. It will be a capital loss which will be set off against only capital gains and carry forward to other years. And on that, there is a problem given in this book. You can easily understand. Refer capital gains revision and then see this problem. You will understand capital gains revision and other sources, both you cover. Now, so any sum paid, any sum paid by domestic company for purchase of its own shares on or after 1st October 2024, whatever the amount you are receiving is straight away treated as deemed dividend. It's straight away treated as, whatever amount you are receiving is straight away treated as deemed dividend. Getting it? Now, dividend includes deemed dividend. So what are they? Suppose company is giving any amount, company is distributing any asset to shareholders. How much is treated as deemed dividend? To the extent of accumulated profits. TEOAP means what? To the extent of accumulated profits. Whatever accumulated profits are there, up to that it is straight away treated as dividend. Now, sometimes company, instead of giving cash or asset, they will issue shares. For example, they are giving debentures, they are giving deposit certificate free of cost to shareholders. Preference, equity, doesn't matter. Market value of the security is treated as dividend. Up to how much? Accumulated profits of the company. Sir, preference shares, bonus shares we are giving, sir. That is also treated as dividend. But equity shareholders, if at all a company is giving bonus, it is not treated as dividend. To equity shareholders, there is simple logic. Even if the company is giving bonus, there is no accumulation of liability for the company if equity shares are given. But if preference shares are given, company liability increases. Preference shares can get tomorrow for sure that extra amount. Yes or no? That's it. Liquidation. On liquidation, here please add the word any distribution on liquidation. Here please strike off here the cash received. What is it? Cash received. Now, company, when the company is liquidating, on liquidation, they might distribute anything. Anything means what? Assets or cash, anything. Anything they may distribute. If asset is distributed, market value, please consider. If cash is distributed, cash received, you consider. Total market value plus cash received, total it. Up to accumulated profits of the company, tax it as deemed dividend. Tax it as deemed dividend. For example, here there is a link with section 46 to subsection 22 clause number C. In capital gains revision, I kept this pending. Getting it? Sir, I have purchased shares of the company by paying 10 crore rupees, sir. Now, the company distributed me 20 crores, sir, on liquidation. On liquidation, company distributed me how much? 20 crores, sir. I got some assets, I got some cash, I got total value 20 I got, sir. Company profits are approximately 8 crore were there. Accumulated profits are how much? Approximately 8 crore were there. Now, out of 20 up to 8 crore, I will straight away tax it as dividend. What about the remaining amount? 12 crore. This is treated as consideration under capital gains. In capital gains 40, they will tell you amount received, market value of the asset received minus 2 subsection 20C deemed dividend 8. The amount is difference is treated as consideration minus cost of acquisition how much? 10 crores, sir. So balance 2 crore is capital gain. Now here most important point, when the liquidation is announced, that is most important. Liquidation date is treated as transfer date. If the transfer date is before 23rd July, then indexation is available. If the liquidation date is on or after 23rd July, then indexation is not available. Remember that. Easy. So next, sir, company is reducing its capital, sir, and because of reduction they are distributing, sir, either cash or kind of whatever, everywhere cash kind, everything is covered. Getting it? So it is treated as dividend to the extent of accumulated profits before the reduction. Suppose, sir, I'm a shareholder in a closely held company. Closely held company is a company in which public is not substantially interested. Suppose in a company, if public has a substantial interest, then that's a widely held company. Deemed dividend provision will be applicable here for closely held company. Yes or no? Sir, there is a closely held company, sir. Instead of receiving it as dividend cash distribution, I am taking it as a loan. Even loan taken by you is treated as dividend. Is treated as dividend. Up to how much? Up to accumulated profits, provided the shareholder must be a key shareholder. Key shareholder means what? Holding 10% or more voting power. Holding 10% or more voting power. Remember, preference share is not considered as voting power. So if a preference shareholder is getting loan from the company, deemed dividend section will not be applied. If equity shareholder is getting a loan from the company, deemed dividend can be applied only if the equity shareholder is having 10% or more voting power. And remember, if at all the loan is given by a company whose business itself is giving loans, this provision will not apply. Able to understand? This provision will not apply. Further, if amount or loan or advance is given to shareholder for purchasing raw material from him tomorrow, later date, it's a trade advance. Trade advance is not covered under deemed dividend provisions. Able to understand? By the way, here reduction on capital, C and D, reduction on capital and liquidation distributions are there, right? If at all any amount is distributed to preference shareholders who are not having any participative rights, that is not treated as dividend. Some clarifications you see. Shares distributed to, any distribution under C, liquidation or reduction on capital to any shareholder not entitled to participate in surplus, that is not treated as dividend. Buyback before 30th September, not treated as dividend. Trade advances, not treated as dividend. Shares distributed by resulting company, getting it, that is not treated as dividend. What is accumulated profits? All profits of the company up to the date of distribution by liquidation or reduction or whatever reason, up to the date of giving the loan or advance or whatever. Able to understand? Next. Now remember, once you are getting dividend, to get this dividend, you might have incurred some expenditure, right? Whatever expenses you incurred, you can claim deduction. But maximum expenses that you can claim deduction in case of dividend income cannot exceed 20% of the dividend income. 99.99% of the cases, students will forget this provision. If dividend is there, expenditure is there, dividend 10 lakhs, sir, expenditure 3 lakhs incurred, sir, they will claim deduction straight away. 20% checkpoint you should apply whenever you are claiming deduction towards expenses for earning dividend income, getting it, whatever expenditure it is, doesn't matter. Maximum deduction cannot exceed 20% of the income. Further, you will not at all get deduction for any expenditure if at all dividend is in the form of buyback of shares. 222 clause F. Able to understand? Next. And remember, in 2 subsection 22 clause F, one more important observation is there. Here, accumulated profit logic is not there. 2 subsection 22 clause number F, accumulated profit is not there. Whatever amount you got in buyback, fully taxed as dividend. Able to understand? Next. Then there are many other incomes which are taxable under other sources. Casual incomes, winnings. Winnings, no, not a big complicated thing. So from winnings, no, you cannot claim any expenditure. No chapter 6A, basic exemption limit and all you can't. But remember, 87-year rebate can be claimed. 87-year rebate can be claimed even on winnings related tax component. Okay. Then, sir, I received compensation, sir, on compulsory acquisition. That compensation is already taxable under capital gains, sir. 45 subsection 5. As per that, we will compute. Now, that compensation is received late by me. For that, government is paying interest, sir. That interest amount is taxable in the year in which it is received only on cash basis. Now, how much deduction available? I spent so much, sir. That at all doesn't matter. Flat 50%. Sir, I did spend single rupee also. Doesn't matter. Flat 50%. Then, sir, I forfeited advance. In capital gains also we discussed. If forfeiture is on or before forfeiture is before 1st April 2024, reduce it from cost of acquisition and actual transfer of the capital asset later on. If forfeiture is on or after 1st April 2014, straight away tax it in other sources in the year in which it is forfeited. Then there are some incomes which are taxable only under IFOS or PGBP. If it is not taxable, and if PGBP is not applicable, this is not a big deal. Okay, I'm not discussing it here now. Sir, banks, they will invest in securities either because of SLR or non-SLR. What about that interest? That interest is always taxed under PGBP. Getting it? Next up, we have gift taxation, life insurance policy. I'll come back to it little while later. Okay. Next, amount received under life insurance and gift. In other sources, these are the 2 provisions which are major, bit complicated. Rest of the provisions are very easy. Residual income. Okay. Salary received by MPs, MLAs, straight away taxable under IFOS. Allowances received by them, exempted. By the way, remember, allowances received by them is exempted only under optional tax regime. It is not exempt under default tax regime. Sir, apart from this, sometimes we also receive family pension. Family members of the deceased individual might get pension from the husband's employer. Now this pension is called as what? Family pension. How much is family pension is fully taxable in other sources in the hands of the legal heir, but they can claim deduction for that. Okay, 1/3 of the pension amount or 15,000 rupees, whichever is lower, in case if you are going for optional tax regime, or suppose I'm declaring income under default tax regime, then 1/3 of the pension, 1/3 of the pension amount or 25,000 rupees, whichever is lower. So default tax regime link is one more is there here. Getting totally two links in other sources, default tax. One is MPs, MLAs, allowances. Another one is 25,000 family pension. Yes or no? However, family pension received under the following circumstances fully exempted: received by armed forces family members, received by an awardee of Paramveer Chakra, Veer Chakra, all that. Commuted pension received from LIC, that is also fully exempted. Easy or not? Now, sir, for getting other sources income, I am incurring so many expenses, sir. Can I claim deductions of whatever expenses I incurred? Yes, you can claim. For family pension, deduction is already specified. For interest on compensation, deduction is already specified. For dividend income, deduction is already specified. Sir, remaining incomes I have, sir. Lottery income, you can't claim any deduction. Sir, remaining incomes I have, sir. Whatever reasonable expenses you incur, repairs, maintenance, everything, that what and all, that and all you can claim. Only few conditions. It should not be personal. It should not be, if TDS is not deducted, 100% or 30% disallowance as usual will apply. Payments to related person, unreasonable amount, you will not get deduction. Payments in cash exceeding 10,000 or exceeding 35,000 to a transporter other than prescribed modes, deduction is not allowed. No deduction for winnings income. Easy or not? That's it. Then there are some exemptions under other sources incomes. Sir, I am getting post office savings interest, sir. Don't use the word bank here. Savings bank interest, we use the word generally, but it's not a bank. Post office savings interest income I'm getting, sir. How much is exempted? 3,500 rupees is exempted. Suppose post office interest is 20. Suppose I'm getting 25,000. 3,500 is exempt. 21,500 is only taxable under IFOS. That too under optional tax regime. In chapter 6A, 80 TTA up to 10,000 I can claim further deduction. Able to understand? That's it. So remaining all are easy. Interest on NRE account, not NRO. NRE account interest amount is fully exempted. If at all, because of disaster, government is giving you compensation, local authority giving you compensation, state government is giving you compensation, that is fully exempted. And scholarships received, fully exempted. Yeah, awards and rewards received in public interest like Bharat Ratna, Paramveer, Bharat Ratna, Padma Bhushan, Padma Vibhushan, Padma Shri, all these gallantry awards people, fully exempted. Able to understand? Now we are only left with two provisions. One is gift provision, another one life insurance policy provision. First, let me discuss gift provision, which is easy. Gift provision first we will cover. So see, gift also sometimes many students are doing mistakes only because structure they don't understand. Now you are getting a gift. First, straight away don't compare with 50,000 limit, all that. First decide from where, from whom you are getting the gift. Source. Gifts are two types: taxable source gift, exempted source gift. What are they? Exempted source gift. First decide source. Taxable source are exempted. If it is exempted source, straight away ignore it. Straight away ignore it. What are exempted sources? Received from relative is exempted. Suppose gift is received by a trust from an individual for the benefit of the relative of that individual, then trust is receiving gift, no, that is fully exempted. Gift received on the occasion of marriage, not marriage anniversary, not birthday, not Sashti Purti and all. Okay. Next, any property or amount received on will or inheritance, that is fully exempted. In contemplation of death of the payer, it is fully exempted. Gift received from local authority, gift received from fund, foundation, universities, gift received from trust or institution registered under income tax, charitable trust, we call it as fully exempted. Gift which is, if for the transferor, when he gifted you, it is not taxable for him under capital gains. For you, it is exempted. Able to understand? And gift received for COVID-19 treatment, now it is not that relevant. This provision is not that relevant, so I'm not covering it. Okay. Next, who is a relative? Relative means, you see, okay, 7 categories of people are called as relative. For me, my spouse is a relative. Spouse, brother or sister is a relative. Spouse, ascendants and descendants are also relative. Like spouse, ascendant means what? Parents, grandparents, great grandparents, children, grandchildren, great grandchildren. Descendant means yes or no. Now this is about my spouse and their relatives. They are also relative to me, my spouse side. Now from my side, my brother or sister is relative. Okay. And brother or sister of my parents, mother's brother or sister, father's brother or sister, they are also relative to me. Any linear ascendant and descendant, my parents, my grandparents, great grandparents, my children, grandchildren, great grandchildren, and spouses of all these people are also relatives to me. Able to understand? Now here one point, remember, gift relative definition will be applied from recipient perspective. You received from relative. That's it. Now, for example, no, my nephew is there, my sister's daughter, or my brother's son or daughter is there. I received from them the gift. They were not covered anywhere in the list. They are not covered anywhere in the list. For me, it is taxable. I gave a gift to them. I gave a gift to nephew. From my nephew point of view, I am a relative because I am his parents' brother or sister. Therefore, for her it is exempted. For my niece or nephew, it is exempted. Able to understand. So, gift definition shall be applied from recipient perspective, not from the giver's perspective. Able to understand. That's it. By the way, in this provision, gift is received by anybody, not necessary. This section 56 subsection to clause 10 is applicable for anybody. Are you getting it? Now, suppose if the gift is from exempted sources, in the problem they'll give you list of gifts. Exempted sources, keep it aside, ignore it. Remaining gifts are there, right? They are all taxable sources. Remaining gifts, no, categorize into 5 categories. Remaining gifts, divide them into 5 categories. How much is the money gift? From taxable source only, by the way. Keep all money gifts aside. Sir, I got movable property as gift, sir. Movable property means what? Car, TV, all that? No, only 8 type of movable properties are considered. 8 type of movable properties are considered. Shares and securities, jewelry, archaeological collection, drawing, painting, sculpture, any other work of art and bullion. Only 8 kind of assets are considered. Getting it? Now, have you received any of these 8 kind of assets? Yes, sir, I received, sir. Okay. Have you received them without consideration? Sir, I received some without, sir. Some inadequate, sir. So, split them. Inadequate cases, keep them separate. Without consideration cases, keep them separate. So, without consideration separate, inadequate consideration separate. Sir, I also got a gift of immovable property, sir. Without consideration, keep it separate. Inadequate consideration, keep it separate. Divide the gifts into 5 categories. Yes, sir, I divided, sir. Now, money. Total it. Total money received from taxable sources. Total it. Is it exceeding 50,000? Yes, fully taxable. If money is taxable, movable property is also taxable. No, there is no link. Now, sir, movable property, sir. I received some 3 gold rings, sir. Okay, without consideration, sir. All the 3 gold rings put together, what is the market value? Check out. 3 put together, aggregate, cash, aggregate, movable property, aggregate. Sir, exceeding 50,000, sir. Then entire market value is treated as taxable value. Sir, I purchased some gold ornaments, sir. Market value 10 lakhs, sir. But I paid only 7 lakhs, sir. 3 lakhs is inadequate portion. Okay, so aggregate value minus consideration paid is equal to how much in this example? 3 lakhs. Is it more than 5 lakh 50,000? Yes. Then that entire 3 lakhs gift portion is fully taxable. Remember, taxable amount is always gift portion only. In order to tax it, 50,000 limit we check. Able to understand? All of you? Sir, I received a ring, sir. Market value 40,000 without consideration. I purchased a gold chain, sir. Market value 1 lakh. I paid 60,000, sir. Here 40,000 benefit is there. Here 40 is there, sir. Can I totally then tax it? No. This is without consideration. You should tax it separately with 50,000 limit. Inadequate consideration has a separate limit. Sir, I am getting immovable property, sir. Immovable property gifting will be gift provision we apply each property wise, whereas movable property aggregate we apply. For immovable property wise we apply. Immovable property means what? Land, building or land and building. Okay, sir, I got immovable property without consideration, sir. Look at the stamp duty value. Stamp duty value means which date, sir? Without consideration means registration date. If consideration is there for getting immovable property, then look at the agreement stamp duty value, look at the registration date, see whether advance is there on the agreement, see whether advance is paid by other than cash. In such a case, STB on agreement date will apply. If it is without consideration, straight away registration date, because consideration itself is not there. So now, if STV of that property is exceeding 50,000, which is received as fully free of cost, yes, then entire STV is taxable value. Sir, I purchased removable property, sir, at less than stamp duty value. Then gift provision I can apply. Only one condition should be satisfied. Stamp duty value must be more than 110% of the consideration you paid. Sir, stamp duty value paid is more than 110%. Yes. Now calculate free portion. Is it more than 50,000? Yes. That free portion is taxable. That's why how they expressed it. Sir, I purchased removable property, sir. Some portion gift is there, sir. Pakka STV 1 crore, sir. I purchased it at 92 lakhs. 8 lakhs gift is there. Don't straight away compare it with 50 and then tax it. Now 8 lakhs, you purchased it at 92, right? Into 10%, how much? 9.2. Array, 10% variation not an issue in the property purchases. we will not tax it. If the variation is more than 10%, if it is variation is more than 10%, then the gift provision can be applied. Now, when you apply the gift provision, free portion is how much? Is it more than 50? Yes. Then entire that free portion is fully taxable. Yes or no? You understood this point? So indirectly, how the section is expressing this? I purchased a house, sir. I purchased removable property, sir, at a price less than stamp duty value. At a price less than stamp duty value. And the difference amount is more than 10%, sir. And the difference amount is moreover more than 50,000, sir. Then gift provision can be applied. Now, what is the free portion? STV minus actual is equal to free portion, fully taxable. Fully taxable. Re-listen once again slowly, you will understand the logic. Here, many students confuse if this adjustment comes in the question. Able to understand? Remember, gift provision attracts only if the asset received is a capital asset for the recipient. That's it. Entire gift provision is over. Now we are only left with one more provision, that is life insurance policy. That is life insurance policy maturity amount. Just 1 minute. Yes. Now suppose immovable property is there. For example, gift immovable property. Okay, simple example I'll tell you. Okay, suppose stamp duty value applicable, that may be agreement value or registration, whatever it is, depending upon the scenario, that is 1 crore, sir. Whereas actual consideration is 90 lakhs only I paid, sir. Now free portion is how much? 10 lakh. Many students compare it with 50,000, they will fully tax it. No, you should not straight away do that. If free portion 10 lakhs, right? Is it more than 10% of actual consideration? Yes, sir. Condition satisfied. Then is the free portion more than 50,000 also? Yes, sir. Is it more than 10% also? Yes, sir. Then entire 10 lakhs is taxable. Okay. Suppose, sir, I purchased it for 93 lakhs, sir. Free portion is how much? 7 lakhs, sir. Is it more than 10% of actual consideration? No. Free portion, though 7 lakhs is there, since it is less than 10% of actual consideration, nothing is taxable. Able to understand? Next. Amount received under life insurance policy. Amount received under insurance policy. See, insurance policy, if you're getting any amount, no, it is again divided into two types. Taxable maturity amounts, non-taxable maturity, exempted maturity amounts. Exemption is covered under 10 subsection 10D. Now exemption is covered under 1010D, whereas 1010D do not cover exemptions for the following. Keyman insurance policy maturity amount is always taxable. Okay, and if at all we have taken insurance policy on one fellow who is dependent on us, he is a disabled person. Okay, for his safety only we received insurance, but he died at first, and I received maturity amount. For me it is fully taxable. That is 80DD subsection 3, which we will once again cover in chapter 6A deductions. Getting it? Now, sir, I have an insurance policy, sir. I have insurance policy, which I purchased it on before 2003, sir. 1st April 2003, before I purchased it, sir. Now in 24-25, I am receiving maturity amount. Insurance policies maturities will be 40 years, 50 years duration. So this question will be there probably. I purchased insurance before 1/4/2003, sir. Suppose if the SS is receiving on death, suppose if the family members are receiving on death of the person, that is always exempt, irrespective of amount. That is always exempt. That's why term insurance policies, they are always exempt, because term insurance maturity amount is received only by legal heirs. In term insurance, maturity will not be there. Only legal heirs will get it. Remember, we are talking about the life insurance policies other than ULIP policies. ULIP policy taxation is not there in CA Inter. Now, coming to sir, life insurance policy maturity amount I am getting, sir. Maturity amount means what? Either sum assured you will get plus bonus also you will get. Whatever it is, both put together we call it as maturity amount. Remember, here they never said. Here, 1010 you see, sum received under life insurance policy, they say, though the section heading we use maturity, surrender value is also covered here. Suppose you purchased insurance policy, after 5 years you surrendered it and you are getting money. That is also covered under 10 subsection 10D scope. That is also covered under this discussion. And in ICA book it is clause number 13. Actually in ICA book it is given as clause number 12. So in ICA book it is printing mistake. Fine. Now, sir, I received some amount, sir, under insurance policy. What is the tax statement? Tax statement is dependent upon when you purchased the policy. Sir, I purchased policy before 1/4/2003, sir. Now you are getting some money, fully exempt, always. Always exempt. Sir, I purchased insurance policy between 1st April 2003 to 31st March 2012. 1st April 2003 to 31st March 2012. If this is the period in which I purchased this, it is exempt only if the premium does not exceed 20% of the sum assured. So you have taken the policy between that period, right? Every year how much premium you are paying, check out. Is it less than or equal to 20% of sum assured? Yes. Then maturity amount or surrender value, whatever you are receiving now, fully exempt. Sir, I received a policy on or after 2013. I received a policy on or after 2013. 10% of sum assured. Or else let us look at, sir, I purchased a policy on or after 2012. On or after 2012. Exemption is applicable only if the annual premium does not exceed 10%. Every year premium paid is not exceeding 10%. Yeah, straight away exempted. Suppose now disabled persons, from 1st April 2013, the percentage limit is increased to 50. Now, most confusing part of the section is for policies issued on or after 1st April 2023. For policies issued on or after 1st April 2023, the exemption is subject to two conditions. The exemption is subject to two conditions. Very simple. First condition, 10% criteria you apply. Disabled person, 15% criteria you apply. First condition. Second condition, if at all SSE has taken only one policy on or after, if at all SSE has taken on or after 1st April 2023, only one policy he purchased. That policy premium for any year does not exceed 5 lakh, and the annual premium also does not exceed 10% or 15% as the case may be. Premium does not exceed 10%, amount does not exceed 5 lakh in any year, then that related maturity amount or surrender value is fully exempt. This is very simple. Until 2023, before any insurance purchase, any insurance policy purchased, even though very good amount, good policies, commercial policies, high premium policies, income tax department is giving exemption irrespective of amount. But now high premium policies they want to tax it. That's why they kept a limit of 5 lakhs premium limit. They kept a 5 lakhs premium limit. What is this 5 lakhs premium limit? Suppose I purchased a policy on or after 2023 1st April. Annual premium shall not exceed 10%. That is one condition. 2. Amount of premium shall not exceed 5 lakh. Only if these two conditions are satisfied, maturity amount is exempted. Now, since if it is single policy 5 lakhs premium, SSE is what they started doing. So SSE what they might do, they will take multiple policies. Now, if at all SSE has taken multiple policies, it's okay, you take multiple also. For all the policies put together, how much premium you are paying? Is it exceeding 5 lakh? Yes. Yes or no? In any 1 year it is exceeding, that's enough. Then exemption is available only for those policies whose aggregate premium does not exceed 5 lakh. Okay, at the option of the SSE. Which insurance you want, which policy you want to claim exemption is your choice. But at your option, aggregate premium shall not exceed 5 lakh. Able to understand. Now, we have given ICA problems. ICA, in study material, IFOS problems were there. But anyhow, I have already uploaded previously when I made this particular amendments video in the previous, my old video is directly solved from ICA book. Getting it? So that video link I will show you on the YouTube. You just watch it if at all you have a doubt on this. Very neatly, very clearly explain this entire provision. Able to understand. Next. By the way, 5 lakhs premium you are considering, right? That should be considered excluding GST. You should not include GST and then see. In exam they will confuse you including GST. Exclude GST component and see. Is it less than 5 lakhs? Yes. Then exemption is there. Multiple policies put together premium is more than 5 lakhs. 6 lakhs you are paying. Up to 5 lakhs worth of premium related policies amount maturity only exempted. That's it. Easy or not? Entire life insurance policy is also over. Now, sir, I got amount. No, it is not exempt, sir. If it is not exempt, what is the tax treatment? It is taxable. How much you will tax it? How much I will tax it, sir? How much amount received? First identify. How much amount received? First identify. Minus, sir, whatever premiums I pay, no, that also I'm getting back in this. The premium when I pay, no, I did not get any deduction, sir, in income tax also. I did not get any deduction. I got 1 crore money, sir, now. I paid in the past 20 years, 25 lakhs premium, sir. I got 5 lakhs only deduction. 20 lakhs I did not get deduction at all in the past 20 years. 1 crore minus 20 lakh, the deduction which you did not get for the premium paid, reduce it. Then 80 lakhs only tax. Over. With this, entire income from other sources is also over within half an hour. Okay. If you do once again resolve the problems which we did in test your knowledge, past exam questions in our regular class, whatever, once again you just go and resolve it. I am telling you, you use this revision and once again solve it, you will master on the income tax. Clear? That's it. Heads of income is completely over. Basic concepts over. residential status over, heads of incomes over. Literally up to now, whatever we covered is having a weightage of 40 marks approximately. Minimum what? 40 marks out of 60. 60 is with choice. Okay, minimum I'm telling you, minimum 40 marks weightage we covered. Getting it? Now we still have chapter 6 deductions, return of income, TDS, TCS, alternate minimum tax. Okay, these provisions, advanced tax, if these provisions are also revised, entire income tax revision will be over. Clear? That's it. Now let's revise clubbing of income. Okay, remember clubbing is you will not get a direct question sometimes. You will get it as part of a total income question or as part of some other question. Sometimes clubbing and Setoff and Carry forward together, they will ask 6 marks question. That's the weightage. I always tell you, it's not the problem how many you solve, it's the clarity in the provision. So everywhere now when I'm discussing, I will give a simple example so that you will understand clubbing provision easy. Clubbing provision, actually if you look at the income tax original study material, income of other assessees included in the total income of the individual. This is what? Income of other assessees included in the total income of the individual. This is the chapter heading. Nothing but others are getting income, but that is tax in your hand. That is why it is called as what? Clubbing. Able to understand? Now, what are the sections that we have in clubbing? We have the following sections in clubbing. Okay, look at this. At the end of the chapter, I'm giving a diagram. So 60 club, what are the sections we have in clubbing? So we have totally 3 sections. We have totally 3 categories: 60, 61 to 63, then 64. In 64, we have various categories. 64 subsection 1, 64 subsection 1A. 1A is dealing with minor income, clubbing of minor income, minor children income. 1, it has again 5 subsections. Subsection 2, remuneration to spouse. Okay, then subsection 4, subsection 7, subsection 6. Okay, remuneration 7 only, I think it is 7 only. Subsection 4, subsection 7, gift to spouse, directly or indirectly. Then we have 6 and 8. This is gift to daughter-in-law. These are the provisions. Then we have another section called 64 subsection 2, conversion of self-acquired property into HUF property. That's it. These are the sections that we have in our syllabus in clubbing. Now, what are they? What is that section 60 is talking about? Very simple. Transfer of income without transfer of asset. What is it 60 is talking about? Transfer of income without transfer of asset. That income is taxable in the hands of the transferor. Straight away the income is taxable in the hands of the transferor. Very simple. I have shares in a company. I am eligible to receive dividend from the company. I told company, dear company, I have a security guard to his daughter who is studying in so and so. She need money. The dividend amount, don't pay me. Directly pay the dividend amount to the daughter of my security guard or my son. Okay, I mean, pay the dividend amount to my brother's son. Pay the dividend amount to my sister's daughter. Pay the dividend amount to my grandfather. Simple. I told the company, don't pay me dividend, pay the dividend to them. But who are the owner for the shares? I am the owner. What am I actually transferring? Am I transferring shares? No, I am only transferring income to them. That income is treated as application. That is treated as application of money. That income is taxable still in your hands only. You can't escape tax on that. That income is taxable in your hands only. So if I have an asset, on the asset I am getting some income. That income alone I am diverting to somebody. Still I am only treated as owner of the income, and that income is taxable in my hands only. That's it. That is section 60. Next, revocable transfer. Now if I only transfer income, department is taxing in my hands only. I got an idea. I will do one thing. I have a building, I have a land, I have some shares in a company. I transfer those properties to my friend, my brother's children, or to my wife only, or to my mother or father. Somebody I transferred property. But in that property transfer deed, I mentioned one condition. Whenever I want, I can take back that. Whenever I want, I can take back that. Getting it? This is called revocation power. What is this called as? Revocation power. This is called revocable transfer. Revocable means what? You transferred, but you can take it back. No, that is called revocable transfer. If at all you are transferring any asset with a condition of revocation of the asset or revocation of income, any of it, even part of it only you have a right to revoke, still the transfer is treated as revocable transfer. And even though the asset is in their name, even though income is they are only receiving, but power on that asset is ultimately with you, because you can revoke it back again. Income is taxable in the hands of the transferor only. Income is taxable in whose hands? Transferor only. Income arising on revocable transfer of asset. Income arising on revocable transfer of asset is taxable in the hands of transferor. Are you clear? Now, there is a section called 62. What that section says? If transfer is made by a trust that is irrevocable during beneficiary lifetime, or a transfer is not revocable during transferee lifetime. Very simple. I transferred. In the deed, there is a clause. I cannot get back the asset during their lifetime. In the transfer deed, clause is there. Condition is there. What condition? I can't get back the asset during lifetime. Their lifetime, I don't have any right on that asset. Then the asset is theirs. Income they are getting. Income is taxable in their hands only. It is not taxable in my hands, because the transfer which I made is not treated as revocable transfer, because I cannot revoke during the lifetime of the beneficiary. However, beneficiary died after 5 years. 6th year I am getting back my asset and my income. 6th year onwards, again it is taxable in my hands, because beneficiary is no more. Now I got back my asset. From now it is taxable in my hands only. Clear? Able to understand? That's it. So that is regarding revocable transfer. 61, 62, 63. Easy or not? Then 64. Now when you're discussing, no, here in 64 many students will have a doubt. Now 64 subsection 1, 1A. First you should compute as per 1. After computing as per 1 only, you should compute 1A, because section order is that only. Because minor income is taxed in whose hands? In the parent's hands, whose total income is higher. Subsection 2, if you see, remuneration in an entity where the spouse has substantial interest. There also one point is there. If both husband and wife are having substantial interest, then in whose hands clubbing will apply? First exclude this income. Calculate husband income separately, wife income separately. Whose income is higher? Add in their income. Yes or no? After adding this income, then minor income will be added. Are you getting it? That time I will check again. Father income higher, mother income higher. Accordingly 1A. Indirectly, in a same year, spouse income is subject to clubbing under clause 2. Minor income is also subject to clubbing in the 1A. Ignore those both. Compute father income, mother income separately without including spouse income, without including minor income, without including these two. Calculate father, mother, husband, wife income. Whose income is higher? In their income, spouse remuneration, tax it. Minor income also, tax it. Yes or no? Easy or not? Here's a confusion. Very rare this confusion comes. Clear or not? Yes or no, everybody? Yeah. Now what is remuneration to spouse? Very simple. Remuneration to spouse in the individual's entity. There is a company, there is a partnership firm, there is an LLB. In that entity, I have substantial interest. I have substantial interest. Substantial interest means what? Minimum 20% profit sharing ratio. If it is a company, I have 20% voting power minimum. Then it means I have substantial interest. In that company, my wife is working. She is getting salary. Per annum, she is getting 12 lakhs. Monthly, she is getting 1 lakh salary. Monthly 1 lakh, right? What is the total salary? 12 lakhs. Minus standard deduction 50,000 or 75,000, depending upon optional scam, depending upon tax regime, 50, 75, reduce it. Balance income is what? 11 lakh 50, 11 lakh 25, as the case may be. That income is taxable in the hands of the husband, because husband has ownership in the company. Because husband has ownership. Suppose wife is there. She is only having ownership in the company. She is only working in the company. Income is taxable for her only. But husband is having ownership, but wife is drawing money. Or wife is having ownership in the company, husband is drawing salary. Department assumes because your husband or wife is having ownership in the company, you are getting this money. Otherwise, you don't have that much talent and all. So this is completely a tax planning. We will tax that money in the hands of the spouse who has ownership in the company. You clear? So if one spouse is having substantial interest in one organization, in the same organization, other spouse is working, then other spouse, whatever remuneration she is getting, salary, whatever she is getting, first compute income from salary, tax it in the hands of the other spouse who has a substantial interest. But this clubbing do not apply. This clubbing will not apply. If the spouse is getting remuneration because of her qualification, because of her experience, skill and all, then clubbing will not apply. Are you clear? All of you. Now a question arises. Sir, if both husband and wife are having substantial, both of them are getting in remuneration from the entity, both of them are not having any talent, skill and all, purely tax manipulation purpose, they are getting some salary income. First compute husband, wife, husband income from salary, wife income from salary, compute as usual. First compute salary income, all that compute. Net income. Now, keep these two incomes aside. First, husband, wife, whatever income they are getting from the company, keep that aside. Other incomes, total it for them. Whose income is higher, check out. In their hands, club both the incomes. Now, once in a particular year, in the hands of one spouse, if the income is added, forever in the next year also, in the hands of same spouse, income will be added. Income will be taxed. Yes or no? Getting it? So, that's what all the points I've given. Once income is included in the hands of one spouse, the same will be applied in the subsequent year unless assessing officer deems it necessary to change. Are you clear? That's it. Then, income arising to spouse on asset transferred. Here I transferred an asset. Income is arising to spouse on asset transferred. It is not remuneration to spouse. Remuneration to spouse provision is over. Now what happened, I gifted one asset to my wife, or wife gifted to husband, whatever. Now on the gifted asset, it may be cash, it may be property, it may be house property, anything. Suppose if it is a house property gifted to spouse, 27 deemed ownership concept will apply. As per 27, it's not clubbing. You are only treated as owner. In your hands only house property income will be computed. Yes or no? Sir, it's not house, sir. Some other property. Or cash, sir. I gifted cash to my wife. Or I gifted some asset to my wife. And she is getting income on that. Income on transferred asset, gifted asset is taxable in the hands of the transferor. Are you getting the point? Now, suppose I gifted her one car. She is renting that car and getting every month 1 lakh profit. 12 months into 1 lakh profit will be taxable in my hands because the car is mine. 12 lakhs is taxable in my hands. But 12 lakhs amount she is only enjoying. You know what she did? That entire 12 lakhs she kept in bank. And now she is getting interest. She is getting dividend also. That income I didn't transfer. That income I didn't gift. That she is only earning on her own. That is not subject to clubbing. Income generated. What is it? Income generated from accretion of the transfer is not subject to clubbing. For example, I gave a land to wife. Wife is getting rental income. Then the rent is only subject to clubbing. But what she did, that rent again she invested in bank FD. That is not subject to clubbing. Are you clear? Everybody? That's it. Now, so when an asset is transferred from one spouse to another without consideration or inadequate consideration, then it is clubbed in the hands of the transferor. Clubbing will not apply if at all the asset is transferred to live separately. In a divorce related scenario, if at all both husband and wife are transferring any asset, on that any incomes they are getting, that is not subject to clubbing. Similar condition is there for house property in 27 also. If house property is transferred to wife in an agreement to live apart, or house property is transferred adequate consideration, deemed ownership concept will not apply in house property. We already covered in house property division topic. For house property, 27 will apply. Yes or no? That's it. Sometimes I gave cash to her, cash, or my wife gave me cash, or I gave cash to her, whoever it is. But what she did, she did not keep it as a deposit in bank. Suppose if I give a cash to her, she deposited in bank, interest she is getting, clubbed in my hands, correct? But she didn't deposit, she invested in a sole proprietary concern. Suppose she invested that money in partnership form. From partnership form, she is getting remuneration. That, interest on capital. That interest on capital is taxable in my hands. How much is taxable? How much is allowed to the firm? That much is only taxable. But she invested in sole proprietary business. She invested in sole proprietary. In that business, her capital is also there. Now she is getting profit. She is getting profit from the sole proprietary business. How much is subject to clubbing? Total business investment, how much identify? Numerator, how much is the value of the asset transferred? How much is the value of the asset transferred? Proportionate income. Proportionate is what? Value of the asset transferred. I gifted how much? Divided by business investment total how much? In that proportion, for that year, whatever profit is there, right? That is subject to clubbing. For example, total business amount, 10 lakhs she invested in the total business. But out of this, 5 lakhs is my gift. For 24-25 year, she made a profit of 5 lakhs. In this 5 lakhs, how much is treated as income from my gifted amount? 5 lakhs is my investment, right? Which is I gifted, right? 10 lakhs is total, right? For 10 lakhs profit, 5 lakhs she got. Now 5 lakhs investment, how much it is? 2.5 lakh is subject to clubbing. However, one condition. This 5 lakhs when you gave, 24-25 year you're talking about, right? This 5 lakhs when you gave, I will see first. If at all it is given on 1st April 2024 only, you can put in numerator like this. And subject to clubbing. On 1st April of the year, no. Or on the date business started. Suppose if the business is started this year only. On 1st day of the business, I will see how much your gifted money is there. Suppose, business is long back she started. I gifted her on 10th April 2024. And for 24-25, she made a profit of totally 5 lakhs in the TO. Total capital is 10 lakhs. As on 1st April, how much is gifted amount? I gifted on 10th April only. 1st April, I didn't give any gift. 1st April, 0. Clubbing will be 0. Clubbing will be 0. For a particular year, if at all in the business there is a profit, that profit proportionate investment is subject to clubbing only when the gifted amount is there from first day itself. If gifted amount is not there on the first day, clubbing will not apply. Clubbing will not apply if the gifted asset is not there on first. For example, 25-26, okay, 24-25 clubbing is 0. 25-26 position I will tell you. 25-26 she made a profit of 10 lakhs. 10 lakhs she made. And you know what? In 25-26, actually total capital is 10 lakhs, right? Last year. Plus last year profit how much? 5 lakh. Last year profit 5 lakhs. Total capital is how much? 15. 15 lakhs capital is there in the 25-26, and for that year she got 10 lakhs profit. How much is my gifted money? As on 1st April 2025, my 5 lakhs is there as it is. Yes or no? I gave 5 lakhs. That is there as usual. 5 lakhs is gifted. So 5 lakhs divided by 15 is equal to 3,33,333. This is subject to clubbing in the hands of transferor. Are you clear? Like this, there is a problem in MTP, RTP, previous exam questions or illustration, which we solved in our regular class already. Clear? 2 problems we solved on this. Confident or not? Okay, you also can solve this question in our question bank. It is there. You can download and then solve. So you can just download our website, Setoff for CMA. In that question bank, free resources will be there. Inside that P3A, inside that question bank will be there. You just download and then solve it. Clear? Easy. Then same logics will apply. Same logics will apply even if you are transferring to son's wife. But when you are transferring to son's wife, no. Suppose if you are transferring house property also, no. House property is also covered under 64 only. But suppose if I transfer house property, 27 will apply. Remaining assets, 64 will apply. For daughter-in-law, whether I transferred house property or whether I transferred normal asset, which section is applicable? 64 only applicable. Correct? Here in the above it is spouse, here it is son's spouse. That's the only difference. At the end of the day, income is taxable in the hands of the transferor. That's it. Last section in this chapter, 64 1A. 64 subsection 1A. Very simple. I am having minor children. They are getting income. It is straight away taxable in the hands of the parent. Which parent? Mother or father? Whose income is higher, check out. In their income, tax it. First time when you are clubbing only, you should check this point. Once it is clubbed in the hands of the mother, first time, because mother income is higher in that year. Second year, third year, fourth year, from until he became major, his income is taxable in the hands of the mother only. Yes or no? Once a minor income is clubbed in the hands of one of the parent, next assessment years also that minor child income is clubbed in the hands of the same parent until they attain majority. Whether children is minor or not, as on 31st March you should see. As on 31st March, 18 years not completed. That's it, minor. For that year, is the children drawing any income? Yes, sir. Club it in the hands of the parent. Now here, when you are clubbing, 1500 exemption available under optional tax regime. How much exemption is available? 1500 exemption is available under optional tax regime. Suppose if at all the parent is filing return of income under default tax regime, 10 subsection 32, 1500 exemption will not apply. This 1500 exemption is per minor child. Suppose if 3 minor children income is added, then 3 times into 1500 you will get, that too if it is only optional tax regime. Now, minor income is straight away taxable in the hands of the parent. Now, how this minor is getting this income? Anyway, it doesn't matter. He is getting income. That's it. That income is taxable in the hands of the parent. However, if minor is getting income by special skill, talent, getting it? Or if the minor is suffering from 80U disability, we will not apply clubbing. Then the income is taxable in the hands of minor only. He will have a PAN number. You will file IT return as a guardian. That's it. On behalf of minor, you will file IT return on minor PAN number only. As a guardian, you will file the return. That's it. Able to understand? All of you. Now, you will get one question. Minor, he participated in one chess competition. He got 10 crore money. He got prize money 10 crore. Okay. The 10 crore is subject to clubbing in the hands of the parent? No, because it's a special skill and talent. The 10 crore is taxable for minor only. And what he did, cleverly, that entire 10 crore he invested in a shares of a company. Now company is paying dividend to him. 1 crore dividend he got in 1 year. 1 crore dividend he got in 1 year. Same year 1 crore dividend also he got. That dividend income is taxable in the hands of the parent. Why? Sir, it's out of special talent and special skill. No. 10 crore money is out of special talent and skill. This dividend income, he did nothing. He just invested 10 crore, he got dividend income. Dividend income, for getting that dividend income, did he apply any skill and talent? Nothing. That is taxable. Very simple. Minor's active income, manual labor, skill, disability, when these are all there, the income is called as active income. If minor's active income is taxable in his hands only. Minor is getting passive income. He is doing nothing, but he's just getting income. Passive income is taxable in the hands of the parent. That's a simple rule. Minor's active income is taxable in the hands of the minor. Passive income is taxable in the hands of the parent. Sir, parent gave asset at free of cost. Actually, minor bought a house from me. Bought a car from me. He paid me money and bought the car. Still, on the car, he is getting rental income taxable in the hands of the parent. Are you clear? Suppose if at all minor is doing business with skill and talent, then that business income is not taxable in the hands of the parent. Simple. Minor getting income. Yeah. Which income? Active income means he is performing work. His skill, talent, disability. Passive income means interest, dividend, all this. These are passive. Passive incomes are taxable in the hands of the parent, whose total income is higher, before including minor's income. 64 subsection 1A. Able to understand? Now remember, in house property there is one point. House property transfer to minor child other than minor married daughter, parent is treated as deemed owner. 1500 exemption does not apply there. Able to understand? Suppose if the house property is transferred to minor married daughter, deemed ownership concept will not apply, but 64(1)(a) clubbing will apply. If minor married daughter house property is transferred, clubbing under 64(1)(a) will apply. With this, clubbing is over. 64 subsection 2 and all not that important, so I am not covering it. Okay. Now there is a difference in 61, revocable transfer in 64. Remember in 64 subsection 1 clause 2, if I transfer to my wife inadequate consideration, yes or no, I am treated as, for me it is taxable, that income is correct. Suppose no, I sold my wife. Sorry. I sold to my wife. Okay. Yes. I sold to my wife. Okay. I sold to my wife some asset. I took money adequately from her and I sold. Okay, come back. Yeah. Slip of tongue. Yeah. So I sold a car to my wife. She's earning some income. She paid me money and she purchased a car from me. Out of paying adequate, she purchased. But when I'm selling itself, I told her I will get back the asset whenever I want. It's a revocable transfer. If it is a revocable transfer under 61, consideration is there or not doesn't matter. I am treated as owner directly. In my hands only that income is taxable. Remember under 61, 62 to 63, even if adequate consideration is there, if revocation condition is there, it's a revocable transfer, straight away income is taxable in the hands of the transferor, whether consideration is adequate or not. Sir, I transfer it for inadequate consideration. Inadequate. Then 64 will apply. Clear all of you? Everyone? That's it. Then, so with this, clubbing is over. Okay. See, 26 minutes hardly. Clubbing is completed. Able to understand? Every point I touched. Everywhere example also I gave. Correct? That's it. Now set off and carry forward. Just a minute. Yes, let's begin set off and carry forward revision. Okay. In set off and carry forward, no, we have totally these many sections. 70 intra-head set off, 71 inter-head set off, 71B carry forward of house property loss, 72 carry forward of normal business loss, 32 subsection 2 carry forward of unabsorbed depreciation loss, and carry forward of unabsorbed capital expenditure on scientific research, carry forward of unabsorbed capital expenditure on family planning, all that similar treatment under 32. Okay, then we are going to discuss 73 carry forward of speculation loss, 73A carry forward of specified business loss related capital expenditure. Yes or no? Revenue expenditure for specified business, no, it's 8 years only always. Specified business related capital expenditure. Getting it? Actually, specified business, all types 80, I mean infinite only. Okay, revenue capital no need to bifurcate. Actually 70 specified business under 35 AD, they're mainly talking deduction about capital expenditure. Yeah. 73A, yes or no? Minus 74 capital losses, long-term capital or short-term capital loss. Then 74A, we have a loss from owning and maintaining race horses. Totally these are the sections. And finally there is a section called 80 which talks about due date for filing IT return, which talks about in order to carry forward the loss you must find the return of income within due date. These are the sections. Now suppose no, SSC is having multiple sources within same head of income. Suppose I have multiple houses. Now from few houses, no, I have a loss after reducing interest. From few houses I have a profit even after reducing interest. Remember, under optional tax regime only interest on self-occupied property can be claimed as deduction. For let out and deemed let out property, you can always claim interest deduction, no limitation on that. For self-occupied house only, you can claim deduction. You can claim deduction towards interest only in optional. Under default tax regime, you can't claim. No, very simple. Within a head of income, if I have multiple sources, like I have multiple businesses in PGBP, I have multiple capital gains income, capital losses. Very simple. Loss from one source, I can set off with income from another source. In the same head, within the same head I will set off. Income and loss I can set off. One source I have a loss, another source I have income, I can set off. But there are certain restrictions. Speculation business loss, you can set off only with speculation business income. If you have a speculation business and there is a loss from that, you can only set off with speculation business income. What is speculation activity? In PGBP, I have not revised it actually, but you can read that and then cover. In our PGBP discussion introduction, there is a speculation business means what? Hedging is not a speculation. Shares derivatives is not a speculation. Commodity derivative is not a speculation. These three are not treated as speculation. And a company whose principal activity is trading, whose principal activity itself is investing, loans and advances, for them also buying and selling of shares is not treated as speculation. Banks, it is not treated as speculation. Are you getting it? So for banks and all, speculation concept will not apply. For companies which are exclusively involved in investing business, for them speculation concept do not apply. And for other people, derivatives is not a speculation, commodity derivatives is not a speculation, hedging contracts is not a speculation, forward contract is not a speculation. That's it, over. Speculation concept also over. Speculation means what? Buying and selling of shares without delivery. I buy the share and sell without taking delivery. Nothing but intraday transactions. They are all intraday transactions. That's it. Now, speculation, if I have a loss, I can set up that, but only with speculation business profit. Suppose I have a speculation loss, but I have another business, normal manufacturing business, I have a profit there. I can't set up these two, because speculation loss I can set up only with the speculation gain. Suppose I have a specified business loss. Specified business means 14 specified businesses are there. Under PGBP, I have a loss from them. Incomes minus revenue expenditure minus capital expenditure, 100% reduction is equal to I have a loss. No problem. You can set off it only with another specified business. Only. Suppose I have a loss in 3-star hotel and I have a profit in hospital with 100 beds. Set off. Sir, actually 100 beds hospital is there, right? I am not claiming 35AD deduction, sir. It's a specified business only, but I am not claiming deduction under 35AD. Is that income still eligible to set off this loss? Yes. See, they are saying specified business loss you can set up only with specified business profit. They are not giving any condition like are you claiming deduction under 35AD? They are not at all asking that. If it is a specified business loss, set up only with specified business income. That's it. Are you clear? Next. Sir, I am having a long-term capital loss. Suppose under capital gain set of income, no, I sold shares, long-term shares, I got a loss. I sold land and building, short-term, I had a profit. Can I set off these two? They both are within the same source, no? Long-term capital loss, it can be set off only with long-term capital gain. Same like speculation and specified. Speculation business loss, specified business loss, they can be set up only with respective incomes. Long-term capital loss can be set up only with long-term capital gain. Same way, sir, I am owning and maintaining race horse. From that I have a loss. How to calculate loss from owning and maintaining race horse? How to calculate loss from that? Very simple. You know, loss is equal to, did you participate in any winning and won the money? Check out. Yeah, I won some money. And did you incur revenue expenditure for maintaining the race horses? Yes, I spent a lot of money in the full last 1 year. I spent so much on feeding the horses, all that. But in one race, I won money. So I won money, approximately 1 crore in the race. But feeding the horses and all, 2 crore I spent. 1 crore is loss. This is called as loss from owning and maintaining race horse. You know, these people who are owning and maintaining race horses, no, they incur revenue expenditure. That revenue expenditure will be used for calculating loss under other sources. Their income is what? Winning money. If at all they win something in the horse race, no, that winning we will consider. Winning we will consider only on gross basis. Winning minus that one. Sir, in this year, no winning, sir. Everything loss only. Only entire expenditure I spent on horse maintenance. Remember, for calculating loss, no, only revenue expenditure on maintaining the horse you should take. You should not take race horse loss. Horse races we participated and there I incurred loss. That is to be ignored always. That is to be ignored. I spent money on maintaining the horse. That you consider. Income from winning minus money maintained on horses is equal to balance. If still loss, then that is called as what? Loss from owning and maintaining. And that loss you can set off only with the same income from owning and maintaining race horses. Suppose, sir, in agriculture, no, if there is a profit, you are ignoring because agriculture income is exempted. If there is a loss, what about it? That is also ignored. If you are getting profit, we are ignoring because it's an exempted source. If you are getting loss also, it is to be ignored. Loss from exempted source shall be ignored. That's it. 70 section is over. Then 71, which is talking about inter-head adjustment, which is talking about Inter-head adjustment. What is inter-head adjustment? Very simple. Loss under one head of income can be adjusted with income under another head. See, right now, what I did, within the same head, I have some houses and all, I have businesses, I tried set off. By the way, tell me, I have a normal business loss. Can I set off with speculation business income? Restriction is for speculation loss. Normal business loss, no restriction. Yes or no? Is there a normal business loss discussion here? So I can set off normal business loss with any source of income within the same head of income. Can I set off short-term capital loss with long-term capital gain? Yes. Where is restriction here on short-term capital loss? Here restriction is there only for speculation loss, specified loss, long-term capital loss, loss from owning and maintaining resource. No restriction for other incomes. For other losses, I can set off with other incomes comfortably. Yes or no? No. Suppose I set off the loss. I still have a loss. I can set off with other heads of income. You see, I have given very clearly material here. You see here, only one point I've highlighted here, and house property point I've highlighted with a green background. Rest of the points you see, same white background. What does it mean, Under optional tax regime, under default tax regime, for normal business loss, speculation loss, specified loss, long-term capital loss, short-term capital loss, for all of them, the treatment is same. Whether it is optional tax regime or default tax regime, it doesn't matter. House property loss. If I have a loss under house property head, first set off with other house property incomes. You still have a loss, huh? Set off with other heads of income. Set off with other heads of income only under optional tax regime. You can set off with other heads of income only under optional tax. That too, how much you can set off? 2 lakh. Suppose, sir, I'm going with the default tax regime, sir, and I have a loss under house property. You can't set off. First of all, in default tax regime, you will get a loss under house property only for LOP, DLOP. You will not get loss for SOP. Why? SOP, you can't claim deduction at all. If NAV is equal to 0, you can't claim deduction towards interest under default tax regime. No deduction towards interest for SOP, UOP, where NAV is equal to 0. So loss is not at all possible in default tax regime for self-occupied house, unoccupied house. Loss is possible only for let out property, DLOP, where interest on borrowed loan is more than net annual value. Net annual value minus 30% deduction. Then still you give interest on loan. If the resultant figure is negative, then that's a loss from house property. Now that loss, if you still have, even after set off with other heads, note, by the way, in default tax regime, you can't set off with other heads. But in optional tax regime, you can set off with other heads of income. Yes or no? And I told you, under optional tax regime, still I have a house property loss, sir. What I can do? You can carry forward for 8 years. After setting off with other heads up to 2 lakh rupee, I can still carry forward for how many years? 8 years. Under default tax regime, ICA book contains a mistake. I am telling you once again, it's a mistake. Don't again ask me below comment saying that, sir, why it is not, it is given in ICA book, it is not carry for. No, it's a mistake. That's it. And I spoke in the regular class, I showed in the regular class, I opened act and showed it's a clear-cut mistake. Yes or no? In the ICA book, they said house property loss cannot be carry forwarded, which is actually a blunder mistake. Getting it? You can carry forward. This point is given in ICA book, which is wrong. Very simple. Under default tax regime, house property loss you can't carry forward. Why? Under default tax regime, which loss you can't carry forward? That loss which you cannot claim deduction. In default tax regime, if you can't claim, you can't carry forward. If you can claim means you can carry forward. If you can claim means you can obviously carry forward. Yes or no? Restriction of not carry forward is there for what? Disallowed losses, disallowed expenses, unabsorbed depreciation and all, you can't carry forward further. For those kind only it is there. Yes or no? So under default tax regime, if I have a let out property, deemed let out property, default tax regime, and I have a loss from that let out or deemed let out property, I will first set off with other heads. No, set off with other heads is not permitted. You can carry forward. If you cannot carry forward, then why deduction they will give? Deduction for LOP, DLOP is unlimited, no? Under default tax regime, they will give deduction, no? If they are giving deduction, then why they are giving deduction without carry forward, right? Fundamental question. So you can still carry forward. In ICA book, it is wrongly given. In ICA book, it is wrongly given. In one of the MTP, it is wrongly given. Actual provision is you can carry forward. In exam, if the same question comes, what to do? You write an answer in such a way, point rate. Write not carry forward. Below write alternative answer. As per the provisions of the law, it can be carry forwarded. But in the ICA study material, it was given not carry forwarded. You just write that. That's enough. Are you getting it? 99.99% ICA will give right answer only. ICA will go for right answer only. Means it can be carry forwarded. Able to understand. So, house property loss. Can I claim deduction for LOP, DLOP interest? Yes. If there is a loss, can you carry forward in default tax regime? Yes, you can carry forward. Sir, what about self-occupied property? Array for self-occupied, unoccupied, where NAV is equal to 0, you can't claim interest deduction itself. When you can't claim interest deduction itself, how come you carry forward? There is no question of carry forward for self-occupied, unoccupied. Sir, what about optional tax regime? Optional tax regime, self-occupied, unoccupied, interest you can claim deduction. Loss is there. Set off with other heads of income up to 2 lakhs. Still loss is there. Carry forward for 8 years. Sir, let out and DLOP, sir. I have claimed interest, sir. I have still loss. Set off with other heads of income. Maximum 2 lakhs only. Balance loss. Carry forward. That's it. I spoke about set off, self-occupied, unoccupied, let out, deemed let out. Both under optional tax regime, default tax regime. I spoke about set off. I spoke about carry forward. Clear? Next, sir, I have unabsorbed normal depreciation loss. Sorry, normal loss. Immediately, whenever PGBP loss information, suppose no, in the question they spoke about business loss. Suppose you are computing PGBP income in the current year, you got a loss. Immediately, what you should do, suppose you got a loss of 10 lakhs. You got a loss of 10 lakhs under PGBP. Add back depreciation. Add back depreciation. How much depreciation? For example, 15 lakhs is the depreciation. Now business income is profit. Before depreciation you have a profit. After depreciation you have a loss, which means this entire loss is because of depreciation. This entire 10 lakhs is treated as depreciation loss. This entire loss is treated as depreciation loss. You can carry forward for infinite number of years. No restriction on that. Are you getting it? No restriction. You can carry forward infinite number of years. Depreciation loss, we call it as. It is nothing but loss due to capital expenditure. Similarly, if at all, very simple, compute business loss. First compute income from PGBP as usual. Claim depreciation, claim additional depreciation, optional tax regime. Suppose if it is default tax regime, claim normal depreciation only. Don't claim additional. Okay. Claim scientific research expenditure, capital expenditure, family planning capital expenditure. Every deduction you claim as usual. No compromise at all. You got a loss. How much? 10 lakhs. You got a loss of how much? 10 lakhs. Now add back depreciation. Sir, depreciation is 7 lakhs, sir. Now add back capital expenditure on scientific research, which is some 3 lakhs. Now add back capital expenditure on family planning. Now you see, when you are adding back, it became only 0, which means because of depreciation you don't have a loss. Okay, I mean you have a loss. Actually you have a loss. Yes or no? Now add back family planning on capital expenditure 2 lakh. Oh, if at all you didn't claim all these capital expenditure, you have a profit of 2 lakh. After claiming deduction, you have a loss. After claiming all these deductions, you have a loss. Now, what do I call it as, 5 lakhs is depreciation loss. This 5 I will give 2, no, first I will give priority to depreciation, still 5 lakhs. So, 2 minus 7 lakhs depreciation, but 2 lakhs only I will claim. So, my business profit, my revenue profit is equal to, my revenue profit is only 2 lakhs. Actually, before claiming this, whatever profit is there, that is revenue profit after reducing revenue expenses. After reducing revenue expenses. Now I am reducing capital expenditure related deduction. Now I am reducing what? Capital expenditure. One of the capital expenditure deduction is what? Depreciation. Another capital expenditure deduction is what? Scientific research. Another one is what? Family planning. Now 5 lakhs is depreciation loss. 3 lakhs is scientific research capital expenditure loss. 2 lakhs is family planning related capital expenditure. These 3 losses, you can carry forward infinite. You can carry forward infinite. No restriction on that. Able to understand. Very simple. You have a business loss, some amount. This is not fully your business loss. This includes some revenue loss as well as capital expenditure related losses. Find out capital expenditure related losses how much. Are you getting it? Now for this business loss, no, add back capital expenditure deductions you claimed. What are the capital expenditure related deductions? Depreciation, scientific research, family planning. If there is a profit, means from business revenue activity you have a profit. You don't have a loss. The loss is completely because of capital expenditure. Suppose after adding back also you still have a loss business, then that is exactly called as business loss. That business loss, what you can do? You can set off with business loss. You can set off with other heads of incomes. Happily you can set up business loss with other heads of income except salary. Whether optional tax regime or default tax regime, same provision except sorry, not this is actually depreciation loss. Okay, normal business loss you can set off against any head of income except salary. Sir, what about depreciation related loss? That also you can set off with any head of income except salary. Sir, depreciation has two parts. Additional depreciation loss is there. I am telling you, this breakup you will not find anywhere. In the ICA book is not there. Anywhere also you will not find. This clarity is very important for you. Yes or no? Because set off and carry forward, if an exclusive question comes, they will twist here only. I have additional depreciation also in. Yeah, that additional depreciation loss you can set off with any head of income except salary. See, first you will always set off with PGBP. If you don't have PGBP profit, brought forward depreciation, if you don't have PGBP, then you will set off with other heads except salary. Under default tax regime, additional depreciation, if at all anything is there brought forward, you cannot set off with other heads, because additional depreciation shall be added to opening WTV. Additional depreciation shall be added back to opening WTV. Yes or no? 115 BAC, it will be added to opening WTV. That's it. Now, you know, after still, you know, set off with other heads and all, still have a additional depreciation loss under optional tax regime, carry forward. Still have a normal depreciation loss under optional tax regime, carry forward. Business loss, carry forward 8 years. How many years you will carry forward? 8 years. Okay, suppose normal business loss I can carry forward for 8 years under optional tax, under default tax. Okay, what about additional depreciation loss? Happily carry forward under optional tax, but default tax you can't carry forward. It will be added to WTV, block of asset will be added. Normal depreciation loss, carry forward. That's why you see here in house property, additional depreciation, specified business loss. Only for these three, the provision, the treatment of loss is different in optional tax and default tax. Now, sir, I have a specified business loss. Sir, you can carry forward any number of years, but under optional tax regime, you don't get any deduction at all. Yes or no? Therefore, the brought forward specified business loss shall be ignored and cannot be carried forwarded further. Yes or no? Sir, I have a speculation loss. Sir, I have a speculation loss. What about speculation loss? Array, you can only set up with speculation income. If you don't have speculation income, only, you know, you can only set up with speculation income. You can only set up with speculation gains. You can't set up with other heads also. So, if at all any loss is there, carry forward for 4 years. Carry forward for 4 years. Correct? Sir, I have a specified business loss. What about this? You can set up only with specified business profit. Sir, this specified business, no, it's a specified business, but it is not eligible to claim deduction, sir. If they are not claiming 3580 deduction, it doesn't matter. You can set up with specified business income, not an issue. So no, loss under specified business after claiming 3580 deduction, if there is a loss, you can set up with another specified business profit, even though the later is not eligible for deduction. In optional tax regime, sorry, in default tax regime, specified business itself, they don't get a deduction. Yes or no? By the way, in default tax regime, specified businesses will not get deduction under 3580 for capital expenditure. Revenue expenditure and all they can still claim. Yes or no? Sir, long-term capital loss I have. You can set up only with long-term capital gain in both the regimes. Short-term capital loss I have. I can set up with long-term capital gain or short-term capital gain. Sir, you still have a short-term capital loss. Can I set up with other heads? No. Capital gain set off income itself is untouchable. And you can set off same. Owning and maintaining risk, same source I can set off. You can't set off with other source also. Loss from exempted, ignore. Now, still I have a capital loss, sir. What shall I do? Carry forward 8 years. Loss from owning and maintaining, carry forward for 4 years. Note number 5, nothing but computation of loss. That's it. Clear. So, loss from specified business can be set up only with specified business income, even though the later is not eligible for deduction. Doesn't matter. Easy or not. All of you. Now, under PGBP, what should be the order of set off? First to know, calculate current year income minus current year depreciation minus current year capital expenditure on scientific, current year capital expenditure on. First calculate net income under PGBP current year after reducing all expenses, revenue expenses, capital expenses, everything. Still you have a profit. Then brought forward business loss is there, brought forward depreciation loss is there, brought forward family planning, scientific research, capital expenditure are there. Now which one first I should set off? First set off brought forward business loss, because it can only be set off for 8 years. Then you set off unabsorbed depreciation, then you set off capital expenditure on scientific, then you set off capital expenditure on family planning. If you still have a profit, you can use that profit for set off from other heads. That's it. Clear? Now here, if you remember, there is a section called 41 subsection 5. That section says you have 41 redeemed profits, 41 subsection 1 remission of trading liability, 41 subsection 2 sale of asset used for scientific, 41 subsection 2 balancing charge, power sector balancing charge, 41 subsection 3 sale of asset used for scientific research, 41 subsection 4 recovery of bad debts. In all these incomes, if you have a brought forward business loss, but 8 years over, it's expired, actually expired that loss, but that loss can be set off against 41 incomes. If at all you have any brought forward business loss which is already expired, normal business loss expired already, you can set off with 41 deemed profits incomes. That's it. Set off and carry forward is over. Finally, section 80. What this section says, remember, once in a particular head of income, after you set off the loss, with other heads of income, if you still have a profit, if you still have a loss, you can carry forward, right? But here, one condition. If you want to carry forward business loss under 72, speculation loss, specified business loss, capital losses, loss from owning and maintaining race horses, getting it? You can carry forward only if the return of income is filed within due date. And if you are filing return of income with a loss, it is called as a loss return. That's why here the word is used is return of loss. You may call it as return of income, or you may call it as return of loss. At the end of the day, that loss is there. If you file that within due date, what is the due date? 31st July for non-audit cases, 31st October for audit cases. If audit is applicable for SSC under income tax or some other law, doesn't matter. Audit is there, 31st October. No audit, 31st July. Within that date, if you file IT return, then only you can carry forward 72, 73, 73A, 74, 74A losses. Unabsorbed depreciation not covered in the list. House property loss is also not covered in the list. That's it. Clear? Mainly this aggregation 68, 69, these are all unexplained incomes discovered now. Unexplained cash credit, unexplained investment, unexplained expenditure, amount repaid or borrowed on hundi. Getting it? All these are treated as income of the SSE in the respective year, and they are taxable at flat 60%, 60 plus 25% surcharge. Effectively 78% tax will come, including education cess, all that. Black money taxation provision. Yeah. That's it. Set off and carry forward of losses is over. Remember, set off and carry forward of losses I discussed extensively, discussing all peculiar issues. House property loss, if it comes, how to do. Self-occupied case, how to do. In optional default, everything. Yes or no? Entire set off and carry forward just in 4 pages. That too with a lot of clarity. Clear? Set off and carry forward is over. Confident, everybody? That's it. Yes, let's discuss Chapter 6A deductions and deductions under 10AA. Deductions under 10AA. First I will cover 10AA deduction. Remember, under Chapter 6A, you have a section, you have a heading called heading C. Related to that, we have 3 sections: 80QQB, 80RRB, 80JJAA. These 3 deductions and 10AA deduction, you can claim only if the return of income is filed within due date. You can claim these 4 sections related deductions only when CA certificate is obtained. Audit is compulsory. That is first condition. Are you clear? Now, 10AA. What is this section 10AA? At the end of Chapter 6A deductions, you will find. Remember, 10AA deduction and Chapter 6A deductions, both shall be reduced only from gross total income. When you are computing 10AA deduction, what is 10AA deduction? 10AA is for special economic zones, deduction for special economic zone towards export profit. What is export profit? Very simple. you know, SEZ will be there. In the exam, they will give you SEZ related problems. Sometimes, you know, in exam, they will give you total company turnover and their turnover in domestic tariff area they will give. Total turnover of the company they will give, domestic tariff area turnover they will give. SEZ turnover you should find out. How much is the total turnover of the SEZ you should find out carefully. Now in the turnover, SEZ has exported also. SEZ has exported. Find out export turnover in the problem given of the only SEZ. Remember, by mistake you may take total turnover of the company or DTA. Sometimes they'll give you total turnover, DTA, domestic tariff area. Balancing figure will be SEZ. That they will not give you directly sometimes. So SEZ total turnover, export turnover how much? You know, what is the profit of SEZ for that year? Find out. That result is what? We call it as export profit. We call it as what? Export profit of the SEZ. Okay, SEZ has an export profit. What is the consequence of that? That is that whatever export profit is there, first taxable under PGBP. As usual, PGBP is taxable, gross total income. Under chapter 6A plus 10AA, you can claim 10AA reduction from gross total income. How much you can claim? For first 5 years of the business, 100% of the export profit, whatever is there, claim deduction under 10AA from gross total income. Next 5 years, claim 50%. That next 5 years, claim 50% profit subject to investment in special economic zone reinvestment reserve. The amount deductible, you see here I have given star mark here. The amount deductible must be credited to special economic zone reinvestment reserve for utilization in the utilization. How many years you should transfer like this? Next 5 years. Actually utilization must be for in the next 3 years. Utilization must be within 3 years. For what? You must purchase new plant and machinery. You must purchase plant and machinery within 3 years from the special economic zone reinvestment reserve. Very simple. You started SEZ operation. You started SEZ operation. By the way, when you started by 31st March 2020, the unit must be operated between assessment year 2006-7 and 2021. Assessment year means what? Due date is 31st March 2020. Sometimes no, you might have got approval by March 2020 only, but you started operations before March 21, enough. You are also eligible. If you start operations by 31st March 2020 or approval you got before 2020 but started operations by March 2021, then you are eligible for 10AA benefit. If you are eligible for 10AA benefit, what you can do? From first year to 5th year of 5 financial years, 5 previous years, you can claim 100% of the export profit as deduction. How to calculate export profit? Just now I told. Year 6 onwards to year 10, 50% of the export profit flat deduction from gross total income. Then 11th to 15th year, 50% of export profit flat deduction subject to how much amount you transfer to special economic zone. So amount invested there or 50% of profit, whichever is lower only you can claim deduction. The amount invested in special economic zone, you must spend it for, the amount invested in special economic zone reinvestment reserve, you must use it for investing in plant and machinery within 3 years from the date of transfer. If you fail to invest, whatever amount left in that account is fully retaxable again. Yes or no? To the extent deduction claimed. Next. And remember, deduction shall not exceed. By the way, you must transfer, right? You must transfer to special economic zone. That's it. Correct? That's it. Now, one more condition. You know, export turnover numerator, you are applying numerator formula, right? You apply numerator, right? Denominator, my total turnover 10 crore. You know, export turnover is 5 crore actually. Turnover to export is 5. But you know, I received in India. I collected foreign currency only 3 crore. I collected foreign currency only how much you know? 3 crore. By due date for filing IT return. By due date for filing IT return. You see, receipt of export turnover within 6 months actually. They say not due date, actually within 6 months. Generally that is 6 months is nothing but due date for filing IT return. That's how it will come. Yes or no? But anyhow, 6 months only interpret. The proceeds from export must be received in foreign exchange within 6 months. Sometimes RBI might give a further extension. If extension is given, then extended period. Whatever export, suppose no 24-25 year, my SEZ sold 10 crore worth of goods. In that 5 crore is exports only. But you know, I collected within 30th September of the assessment year. Within 30th September of the assessment year, 3 crore only I collected. How much I collected? 3 crore. Then numerator 3 crore only we should apply. For remaining 2 crore worth of exports, you don't get any benefit because you didn't collect in foreign currency. You couldn't collect in convertible foreign currency. Able to understand? Okay, that's it. That's it. Then we have export turnover should not include freight charges, telecommunication, insurance expenses related to delivery of goods outside India, foreign exchange expenses for services rendered in case of computer software. So these charges will not be. The above expenses shall be excluded from both turnover as well as total turnover when calculating, as they relate to delivery outside India. Freight charges in India, no, up to shipping port, they may be considered. Whatever the amount you are recovering from the seller for freight charges, no, the freight charges is 2 types: up to delivering to the ship location, from ship to foreigner, that particular location. That ship abroad freight charges only not included in turnover. Remember, first of all, that is not a turnover. But why are we considering it as turnover? Because we are reimbursing from buyer. We are getting it from importer. That's it. Major provision is over. Easy or not? All of you? And by the way, 10A deduction you will get only when you are filing income tax under optional tax regime. If at all you are filing under 115 BAC, you will not get a 10AA benefit, and deduction is only towards export profit, that too generated from SEZ, which started operation on or before 31st March 2020. That's it. 10AA over. Easy or not? All of you? Next. Now I will go back to ATC. What are all chapter 6A deductions we have? ATC it will start with, and it will go up to ATU. All chapter 6A deductions, you can claim deduction under optional tax regime. But under default tax regime, no deduction. ATC to ATU not allowed under default tax regime. However, ATCCD subsection 2, contribution, employer contribution to national pension scheme, central government pension scheme, getting it? Atal pension yojana allowed. ATCCH2, central government contribution to Agnipath scheme. ATJJA, 30% of additional employee cost incurred by SSE who is liable for tax audit. These 3 sections alone you can claim under chapter 6A as well. Remaining all other deductions you can't claim. Remember, there are 3 more sections set. One more rule is there. ATQQB, RRB, JJA. These 3 sections are together referred when you need to file return of income within due date. For that purpose, these 3 sections are referred. These 3 sections are referred when under default tax regime you can claim only these 3. Remaining you can't claim. That's it. Remaining all other points, nothing is there. Remember, under ATIC there is a section of return of income must be on or before due date for all these sections. In that orange letter, whatever highlighted, no, that is only there for in our syllabus. Remaining all chapter 6A deductions you can claim whether you file return within due date or after due date, but to provide it, remember, only under optional tax regime. Under default tax regime you can't claim deduction under chapter 6A. You can claim only ATCCD subsection 2, ATCCH subsection 2, ATRRB. ATJJAA. That's it. Yes or no? So ATJJAA, CCD2, CCH2. Only these 3 sections you can claim deduction under default tax regime. Clear all of you? Now ATC. Here you will get deduction for investments. Not maximum deduction under this section is 1,50,000. And remember, all sections, no deduction under default tax regime. Remember this point always. Now what deductions? You just have to read only highlighted points. I've highlighted with a light gray background. You see light gray background. Only those gray background one only. You just have to read it. Able to understand? Now maximum deduction is what? Suppose, sir, I paid LIC premium, sir. Life insurance policy I took. For whom? No, myself, spouse, children, sir. Children dependent, major, minor, nothing. Getting it? Only 3. Myself, my spouse, children. To them I paid life insurance policy related premium. Can I claim deduction? Yes. How much I can claim? Depending upon the policy issue date. Depending upon the policy issued at 20%, 10%. In case of disabled person, 15%. If the policy issued is on or after 2023, for others 10%. The amount is maximum. This is the maximum percentage of sum issued. Actual amount paid, how much you see? Maximum percentage applicable, you see, whichever is lower, that much amount you can claim deduction under 80C. Now here one condition is there. The policy must be retained for 2 years. If the policy is terminated within 2 years, surrendered within 2 years, whatever deduction you claimed earlier will be re-taxable as income. Understood? Next, you can claim deduction for statutory provident fund. You can claim deduction for recognized provident fund. You can claim deduction even for PPF, public provident fund. Whatever deduction, whatever, whether you paid on your name, spouse name, children name, in case of HF, members name, maximum 1,50,000 is allowed as deduction. I made a contribution under Sukanya Samriddhi scheme in the name of my girl child. Getting it? Whatever amount I have contributed, fully I can claim it as deduction. And same way from Sukanya Samriddhi scheme, and in future I can withdraw money. Whatever I withdraw, fully exempted. Clear or not? I invested in National Savings Certificate, fully deduction. You can claim deduction under 80C. I paid tuition fee in India for full-time education to Indian. In India, I paid tuition fee for my children. Getting it? Only children. If I pay tuition fee for myself and my spouse, no deduction. For children tuition fee, if I pay 80C deduction. Yes or no? Then, suppose relating to house property, principal repayment. What is it? Principal repayment of loan on house property you will get. Remember, interest repayment you will get deduction under 24. That too only if it is optional tax regime in case of self-occupied, unoccupied property. In case of let out property, default tax, optional tax, in both the cases you will get. Yes or no? Principal repayment 80C you will get only under optional tax regime. Default tax regime you can't claim. Yes or no? Yes. Principal repayment, provided you are repaying to these people. You cannot borrow loan from unorganized sector, friends, relatives. That loan is not covered here. Stamp duty cost you can claim, whatever you pay at the time of purchase. Registration fee, other transfer expenses you incurred at the time of purchase, like brokerage commission, you can claim. What you cannot claim? Membership fee you can't claim. Expenses incurred for repairs and renovation you can't claim. Interest expenditure you can't claim. Now for house property you are claiming deduction for principal, stamp duty cost, all that, right? Condition: 5 years you should not sell that house. If at all you sold the house subsequently within 5 years from the end of the year in which you claimed 80C deduction, whatever deduction you claimed in the past 5 years will be re-taxable in the 6th year. Sorry, re-taxable in the year in which you sold. Sorry, 6th year if you sell, no problem. Within 5 years if you sell, whatever deductions you claimed in 2 years, 3 years, 4 years, 5 years will be re-taxable. Clear? Next, investment in 5-year term deposit with a bank. Investment in 5-year post office in a scheme with the central government. 5-year term deposit you invested, bank or post office, doesn't matter, fully you can claim deduction. You are paying contribution to national pension system. You are paying contribution to national pension. Immediately when the student see contribution to NPS, no, he will think of 80CCD. Remember, first see which tire number they said. Tire number 2 they said, then 80C. Tire number 1 they spoke, then 80CCD section will apply. 80C will not apply. 80C, contribution to national pension scheme, second time. This deduction can be claimed only if it is a government employee, and deduction is applicable only if the contribution is to 80CCD Tier 2 account, NPS Tier 2 account. Tier 1 account contribution is covered under 80CCD. That's it. Are you clear, all of you? 80C is over. Then we have another section called 80CCC. What is 80CCC says? Contribution to pension fund of LIC. Whatever contribution you are making to pension fund of LIC, up to 1,50,000 you can claim it as deduction. Now there is another section called 80CCD. What that section says, you know, contribution to national pension scheme or contribution to Atal Pension Yojana. Contribution to national pension scheme, contribution to Atal Pension Yojana. Getting it? This contribution, no, this contribution, no, this section we will cover and then we'll wind up now. Then again we'll continue in the next session. Getting it? 80CCD, contribution to national pension scheme. You see, you know, in this 80CCD, deduction is given in 2 parts. deduction for employer contribution, which is under 80CCD, where you will get under optional tax regime as well as default tax regime both. Then you will get deduction for SSC contribution, my personal contribution. I will claim deduction only under optional tax regime. Now what is the maximum deduction? Here there is an amendment. This default tax regime is there, right? This is amendment for the first time applicable for May 25 exams. For the first time applicable for May 25 exams. Deduction up to how much? 14% of salary. Deduction up to how much? 14%. By the way, employer contribution, sir. Your employer, in your name, he paid to pension yojana, national pension. Yes, sir, he paid, sir. How much he paid? First tax under income from salary. Then whatever amount he paid, right? Under 80CCD subsection 2, claim deduction. How much you will claim? How much ever amount he paid? No, how much ever amount he paid, full tax it. Up to 14% of salary, you can claim deduction in case your employer is a government. Sir, my employer is private, sir. Then 10% of salary I can claim deduction for his contribution. For his contribution, which is treated as income in my salaries, whatever amount he contributed, now I can claim deduction up to 10% of salary under 80CCD subsection 2. Sir, I'm going for default tax regime. Then 14% of salary deduction. This is an amendment. Then 14% of salary. Understood or not? Everybody. Sir, okay. Not only my company, sir. I also paid out of my pocket. What about that? You paid. You are an employee in the company, right? You paid, right? Whatever amount you paid, in the problem they will give you percentage and all. Never believe that percentage. How much they paid? 20%, 10%, 15%, something they'll give. First convert that into money. Suppose the amount paid came 1,80,000. First identify the money in the problem. First identify number. How much amount convert? They may say 10% of salary, 15% of basic salary, 25% of basic plus DS. Something they will tell. Calculate, identify what they told. Apply the percentage of what they contributed. Get amount first. Get amount first. 1B, allocate 50,000. Under subsection 1B, allocate 50,000. Do in the same way problem. Allocate under 1B how much? 50. Sir, 50,000 allocated, sir. Balancing figure how much is there? 1,30,000 is there. Allocated here. This 1,30,000 is restricted to 10% of salary. If it is an employee contribution, as an employee I contributed to national pension scheme. How much amount contributed? First figure out, calculate the amount first. You see, identify the total amount first. Then allocate under 1B 50. Balancing figure allocate for subsection 1. Why? You know, subsection 1 is covered under 80CCE overall limit. There is a section called 80CCE. What this section says, you know, 80CCE, deduction under 80C, 80CCC, 80CCD subsection 1 only. Yes or no? You know, all these three put together, maximum deduction is again restricted to 1,50,000. Now, in this 80CCE purview, 80CCD subsection 2 not covered, 1B is not covered. That's why if at all you are contributing any amount, first allocate to 50 because it is not covered in overall limit. Suppose if I allocate entire 1.8 here, no, already 80C 1.5 lakh utilized already. You know, if I allocate 1,80,000 here itself under 1B, if I do not allocate, I will lose 50,000 benefit. Yes or no? Sir, I'm a self-employed. My company and all contribution, nothing is there. My own contribution only is there. That time higher deduction up to 20% of gross total income. So first allocate 1B 50. You still have extra amount you contributed. That amount you can claim deduction under subsection 1. But maximum deduction cannot exceed 20% of gross total income. Very simple. Employer contribution. First add it in income from salary. How much ever amount, how much ever. That's it. 80CCD subsection 2. Government employer. 14% of salary deduction. Private sector employer. Optional tax regime. 10% of salary. Default tax regime. 14% of salary. Yes or no? 80C employee contribution. First allocate under 1B 50,000. Balancing figure allocate under 1 but restricted to 10% of salary. I am a self-employed person. 1B allocate 50,000. Balance amount restricted to 20% of gross total income. Sir, what is salary? Basic plus DA terms of employment. Remember, commission and all is not there. Commission and all is not there as a percentage. Only basic plus DA. Are you clear? Now, You are contributing to national pension system, right? Sometimes you can withdraw later. Sometimes you can withdraw. Suppose no, you are withdrawing by closing the scheme. You are withdrawing by closing or opting out. You are just closing. You are permanently closing the scheme and you are withdrawing. 60% of the amount is exempted flat. Only 40% is taxable. Sir, I'm not closing, sir. I'm only withdrawing part of the amount. Oh, part of the amount you withdraw, na? Amount withdrawn how much? Minus exemption how much? Till date you contributed how much identify? Employee contribution, SSC contribution how much you identify? Only your contribution till date in the past 5 years through 2 years whatever multiplied by 25%. That much is exempted in case of partial withdrawal. Are you clear? So that is withdrawal. You know, suppose no, if at all amount is withdrawn because of the death of the original account holder, then nothing is taxable. Or suppose I withdrawn amount, sir, I invested for purchasing another annuity, sir, then also nothing is taxable. Clear? That's it. 80CCD over 80CCE. 80CCE section says the maximum deduction under 80C, triple C, CCD subsection 1 shall not exceed 1,50,000. Yes or no? Then under 1B and subsection 2, you can claim additional deduction that is not subject to 80CCE overall limit. That's it. Clear all of you? That's it. We'll continue the next session remaining topics. Okay. So we completed in the previous session up to 80CCD, right? Now 80CCH. 80CCH is regarding what? Contribution to Agniveer Corpus Fund under Agnipath scheme. Who will contribute? Central government will contribute, and the person who enrolled in that scheme, Agniveer, he will contribute. The relationship is employer and employee. Central government contribution is treated as salary in the hands of the Agniveer first, in the income from salary. Whatever amount central government contributed, first we will tax it, correct? In the hands of the employee under income from salary. And whatever contribution is there, that can be claimed as deduction under 80CCH, correct? First the contribution of central government will be included in salary. Then deduction will be allowed for the same under 80CCH subsection 2. Remember, this subsection 2 is eligible for both the regimes, whether you are going for optional tax regime or default tax regime. Then coming to 80CCH 1, Agniveer personal contribution, that will be directly allowed as deduction under 80CCH subsection 1, but you will not get this deduction under default tax regime. Personal contribution, no deduction under default tax regime. Once again I am repeating, 80C to 80U, no deductions under default tax regime. Only these three, 80CCD subsection 2, CCH subsection 2, AJAA, only these three sections you will get deductions under chapter 6A or even 10AA for that matter. Getting it? In this entire chapter, what are all the sections we are discussing? Only these three you will get deduction under default tax regime. That's it. Correct? Similarly, from Agnipath, this Agniveer Corpus Fund, tomorrow, once he withdraw, he can withdraw the money, right? Any payment from the Corpus Fund to the Agniveer, to the person enrolled under the scheme, whatever the amount he is withdrawing, fully exempted. That's it. Then coming to 80D, deduction in respect of medical premium. Deduction in respect of medical premium. You see, this deduction will be given in two categories. The deduction will be given in two categories. 80D, the deduction is in two categories. By the way, 80D is for what purpose? Mediclaim or medical premium or contribution to central government health scheme. Either buying a medical insurance policy from a approved insurer or central government health scheme. Under 80D, you will get deduction for what category? You will get a deduction for medical premium paid. For whom? There are two categories. SSC, the contribution, the medical payment, medical premium amount paid, you will get deduction under two categories. First category, SSC himself, spouse and dependent children. Dependent children, they can be major or minor, doesn't matter. Children definition means major or minor, anybody. Yes or no? Only if they say minor, then minor children we will use the word. 64(1)A, clubbing provisions, they specifically use the word minor children. Getting it? Then second category 2 is for what? I can also pay medical premium for my parents. How much is the maximum reduction? Simple, 25,000 for category 1, 25,000 for category 2 also. Many students misinterpret. For parents 25,000. No, it's not for parents 25,000. If the category persons, any of them is a senior citizen, then 50,000 limit is applicable. Many think that category 2 parents, no, it is 50,000. No, it's never wrong. Suppose if any of this person, SSE or spouse, between them, any one person, if at all, is a senior citizen, then 50,000 limit applicable for category 1. Obviously, if the SSE is a senior citizen, parents are obviously senior citizen, 50,000. Now, in this section, there is a thumb rule. What is the thumb rule? Maximum deduction. How much will be the maximum deduction in this section? Maximum answer. I gave you a thumb rule. Maximum deduction. In exam, this is like a checkpoint. Maximum, how much you will get? You see the problem. SSC age, spouse age, how much you see? Both are not senior citizens. Then 25 limit applicable. Parents, mother and father, both the age. Parents means more specifically for whom we have taken insurance policy. Their age you should see. Sometimes, no, you might be taking insurance policy only on the father, but not on the mother. Or you may be not taking on father, but on the mother. Mother age is 59, father age is 62. But you took policy on whom? Mother only. Now, mother is not a senior citizen. Yes or no? The automatically, what is the limit applicable? 25,000. Are you getting it? If medical policy is taken on the any person whose age is 60 or above, between parents, suppose you took both of them, any one of them having senior citizen, then automatically 50 limit applicable. Are you getting it? Okay. By the way, one more category, one more point. If any of them are senior citizen, that's enough actually. Right now I told one logic, right? If mother only is senior citizen, yeah, we need not apply. If any of them are senior citizen, because they can claim medical expenditure also. They can claim medical expenditure deduction. Suppose, no, if any of the parent, one of the parent does not have a policy, 50 limit is applicable automatically. Yeah. So thumb rule as usual, what we discussed in a regular class, the same rule will apply. SSC spouse, are they both normal citizens? Yes. Then 25 limit. Parents, any of them senior citizen, any one of them? Yes. Then automatically 50 limit will apply. Suppose SSC normal citizen, spouse SSC, parents, any one of them are senior, then 50. So maximum deduction will be 75. SSC is also senior, parents are also senior, then automatically maximum deduction under this section will be 1 lakh. This is the maximum deduction under this section, 80D limit. This is the maximum deduction under 80D. Now, suppose the policy, insurance policy is taken by HUF. For HUF, maximum reduction is 25. If any member of the HUF is senior citizen, one person also, then automatically the limit is extended to 50. Now, further, remember, this is the provision, correct? Huh? This is the provision. Now, for what you will get deduction here? You will get deduction, whether 25, 25, 50, all that is for medical insurance premium. It must be paid in other than cash. 1. You can also claim deduction for preventive health checkup expenses. Preventive health checkup expenses, which can be incurred in cash or other than cash. Any way you can incur. Preventive health checkup alone, you can incur in any way. How much you can spend? Under category 2, maximum deduction 5,000. Under category 1, maximum deduction 5,000. Again, towards preventive health checkup, whether you claim under category 1 or category 2, put together, maximum deduction will be 5,000. Again, I told, right? Section limit 25, 25. 25, 50, 50, 50. This 5,000 is within that only. Here first medical expenditure for each category, myself, my family, how much I spent. Maximum 5,000 I can claim deduction. For my parents, maximum I can claim 5,000 deduction. Again, both of us put together, towards preventive health checkup, maximum we can claim 5,000. Is this a separate limit, extra limit beyond the 25, 25, 25, 50, 50, 50? No, it is within the same limit. Category limit is same. Within this category limit only, you can claim this 5,000 deduction. Are you getting it? We have even solved problems in our class. Test your knowledge questions everywhere. Yes or no? In ICA book itself, we have illustrations TYG. That is best, more than enough. Next. Then third expenditure. You will get deduction for medical expenditure, not medical premium. Remember, medical expenditure on senior citizen. Either it might be SSE or it might be parents. Anybody it can be. But this is a medical expenditure you are incurring. Why you will incur medical expenditure? You will have insurance policy. No. Here, the person for whom medical expenditure is spent, no, he doesn't have a insurance policy. Medical insurance policy is not there. That's why we are spending out of pocket medical expenditure. Can that also be claimed as a deduction? Yes. Maximum how much you can claim? 50,000. this must be spent in other than cash. Remember, you need a proof. If you spend in cash, there is no proof. So other than cash only, you must spend medical expenditure. That can also be claimed as deduction up to how much? 50,000. Remember, this expenditure is eligible only if it is spent for a senior citizen who do not have a medical insurance policy. Further, this expenditure limit is within category 1 and category 2, within the category limit only. What is the category limit? Normal citizen 25, category 1. Seniors, parents, normal citizen 25,000. SSC, normal citizen, parent senior 50. SSC senior, parent senior 50, 50. That's it, over. 8AD section is over technically. Sometimes you might be. So that is what here we have given. Medical insurance premium paid other than cash. Medical insurance other than cash. Here you see category 1, self spouse. Here parents. Parents may be dependent or independent, doesn't matter. But children must be dependent. So what is it? Normal citizen, senior citizen. Preventive health checkup also can be claimed as a deduction up to 5,000 for both the categories put together. Yes or no? But again, this will be within overall limit. Shall be within the overall limit. Medical expenditure on a senior citizen who do not have a medical policy other than cash shall be within the overall limit. Maximum how much? 50,000. That's it, over. Easy or not? HUFs also. Medical premium 25. If any member is a senior citizen, 50. Medical expenditure for senior citizen, 50,000. Preventive health checkup expenses for HUF, the section is silent on it. That's it. Clear? Next. So sometimes we might be paying medical insurance premium one time for 5 years validity or maybe 4 years validity. In such a case, you can't claim deduction for the entire premium in single year. You have to claim proportionately. You have to claim proportionately. Very simple. For example, I paid in 24-25 medical premium. In which month you pay doesn't matter. 24-25. The payment date comes under 24-25. How much I paid? 1 lakh premium I paid. And this policy is valid up to for 5 years. This policy is valid for 5 years. Very simple. 24-25 divided by, just identify 5 years, right? For example, I took a policy on, 1st March 2025 I took this policy. 5 years means 28th February 2030. Correct? 6, 7, 8, 9, 10. Yeah, correct. 2030. Now, how many years are involved here? Identify. 24-25 is involved. 29-30 is also involved. 24-25, 24-25, 26, 27, 28, 29. 6 years are involved. Be careful. See, my policy validity is what? 5 years only. But how many previous years are involved? 6 years. Remember. Able to understand? Now, what is the deduction? 1 divided by number of previous years. The year in which lump sum payment is paid plus the subsequent years during which policy remains in force. Years means what for us in income tax? Financial year, April to March. So actually you took policy on 1st March 2025 and the policy is applicable up to 28th February 2030. 5 years only validity. But how many financial years are involved in this? I see 6 financial years involved. So 1 divided by 6 you will claim it. Are you getting the point? Policy is 5 years only, but I will claim deduction for 6 years. But by the way, total deduction is always same. Suppose I spent 1,20,000 policy premium. By 6 is equal to every month 20. How much I am claiming in 6 years? Put together 120 only. So denominator 6 or 5 is not a big deal, because at the end of the day, maximum deduction cannot exceed amount paid. Denominator, many students confuse. Getting it? Many students confuse in the denominator. The denominator is not 1 divided by 5 years policy, then 5 they will put. That's wrong. You should put how many years involved. So that's why you should see date on which it started, date on which it expired. Starting date, it comes under which year? End date comes under which year? In between, how many years are involved? Financial years. That's how you should calculate. Able to understand. All of you. That's it. So with that, 80D is completed. Confident everybody? Then coming to 80, 80U, 80DD, 80DDB. These are the deductions with respect to disability and diseases. There is a section called 80DDB. Here, that section is eligible only for residents. The SSC must be resident individual or resident HUF. That's a deduction can be claimed for, expenditure on treatment of specified disease or ailment. Expenditure on treatment of specified disease or ailment. You must spend money. How much you spent, that much only you can claim deduction. Now, on whom you should spend? On the SSC himself or their dependent. Dependent means what? In the next page I have given you, see. Dependent means what? Meaning of dependent, the same definition is applicable for 80DD, 80DD also. Dependent. Dependent means what? Spouse, children, parents, brother, sister, who is dependent on the SSC. All of them should be dependent on me. All of them should be dependent. Only then I can claim deduction for their disease treatment. If they are not dependent on me, I cannot claim deduction. Now deduction here is for what? Medical expenditure on dependence treatment, who is suffering from some specified disease or ailment. 80DDB section gives deduction. How much you will get? Normal citizen, suppose the person for whom you are incurring this disease expenditure is a normal, then maximum 40. You see, I have clearly used the word max word, whereas in 80D I used the word flat. Getting it? 80DD expenditure is irrelevant, you will get a flat deduction, whereas here you will have to lower of actual or 40. Senior citizen, then lower of actual or actually here it is 1 lakh, printing mistake. Okay, here it is 1 lakh. So maximum how much it is? 1 lakh. That's it. Now suppose this is regarding what? Treatment expenditure incurred for specified disease or ailment of individual plus dependent. Everybody put together 80DDB only. However, suppose if the individual is suffering from disability, SSC himself is suffering from disability, he can claim 80U deduction. Individual himself is suffering from disability. Now for disability, doctor has to give a certificate. In that certificate, disability percentage will be given. If the disability is 80% or more, you will get a flat 1,25,000 deduction. Flat 1,25,000 deduction. No questions asked. Flat 1,25,000 deduction. How much you are spending? Have you taken insurance policy? How are you? That and all irrelevant. Flat 1,25,000. Suppose disability percentage is less than 80, then it's called as a normal disability. Then how much reduction? 75. Sir, I am not suffering. My dependent is suffering. Then can I claim deduction? I am only maintaining him. I am only incurring all the expenses and all. My dependent is dependent on me. Yes or no? Then what about this? Then 80DD you can claim deduction. Normal disability of the dependent 75. Severe disability flat 125. This is per dependent. All dependents put together. This is section limit. This is a section limit. You can suppose there are 4 dependents on me. All 4 of them are suffering from disability. I cannot claim 4 multiplied by 75, 4 multiplied by 1. No, you can't claim. This is a section limit. Are you clear? Sometimes we will take insurance policy. Individual will take a insurance policy for dependence safety. If something happened to me, he must survive. For that reason, I will take insurance policy. But unfortunately, he died earlier. Dependent died earlier. I received the maturity amount. That is fully taxable under income from other sources. If the individual received maturity amount from the insurance policy taken for the purpose of benefit of dependent, where the dependent is predeceased the individual, he died before, he predeceased the individual, then the amount received by the individual is fully taxable under income from other sources. Are you clear? So deemed income, if the dependent with disability predeceases the SSE who took the policy and the amount received is tried to be treated as income, yes or no? However, if the dependent with disability, he is receiving annuity or lump sum before their death, getting it, and discontinued, that deemed income, if the dependent himself is receiving the maturity amount, that is, this income taxation will not apply, deemed taxation will not apply. And further, you have 80DD, 80U, right? Suppose I am claiming, suppose my brother is having disability, he is dependent on me. Since he is a dependent on me, I am claiming in my income tax return 80DD deduction showing my brother name. Getting it? Because he is suffering from disability, I claim a deduction. Now my brother is also filing IT return. He is again claiming 80U because he is having disability, right? No. If at all I am claiming 80DD in his name, he cannot claim again 80U. In other words, if at all he is claiming 80U on his name, I cannot claim 80DD on his name. For the same person, 2 different persons cannot claim deduction. That's it. 80DD, 80DDB, 80U, all the 3 sections over. Easy or not? Yes or no? Next, 80DDB, one condition is there. In 80DDB, you see conditions under 80DD, conditions under 80DDB. 80DDB is for what? Treatment for medical expenditure. There one condition is there. Suppose I spend medical treatment expenditure 1 lakh, but actually 80,000, insurance company reimbursed me. How much I actually spent? 20 only you will get deduction, because lower of actual amount to spend, lower of actual amount to spend or maximum amount, correct? Actual amount to spend means what? Out of your pocket how much you incurred, that's it. You may pay 1 lakh, but medical insurance company reimbursed 80,000 to you. So how much you spent actually? 20. That's it. That's what the point says. Over. Clear? Then 80D series over, 80C series is over. Now 80E series. 80E series is completely for interest. Deduction for interest. 80E interest on education loan. 80EE interest on house property loan. 80EEA again house property loan. 80EEB vehicle loan, electric vehicle related interest. Yes or no? Now education loan, higher education, it must be for higher education, where it may be in India or outside India. What you can claim? Interest expenditure on education loan you can claim. How many years you can claim? 8 years you can claim. Loan should be taken from whom? Either a financial institution or approved charitable trust you can take. Higher education means what? After 12th standard, whatever you study, 13th standard onwards, that is straight away treated as what? Higher education. For whom I can claim deduction? Individual is pursuing higher education, he can claim. Relative is pursuing higher education. Relative means what? Spouse, children, or the student for whom I am taking a responsibility, guardian. Yes or no? For them or for myself, if I took education loan, interest amount paid, I can claim it as deduction. How much you can claim? No limit on that. Over. 80E. Simple or not? Then we have deduction for interest for new home buyers. I used the word very clearly. New home buyers under 80EE, 2 sections are there. Getting it? 80EE is dealing with the old financial year 16-17. Suppose you got a loan which is sanctioned during 16-17. Loan was sanctioned in 16-17 financial year, 1st April 2016 to 31st March 2017. In that year the loan was sanctioned, and value of the house shall not exceed 50 and loan sanctioned amount shall not exceed 35, and at the time when the house is purchased, you don't have any other. On the date on which you are getting the loan sanctioned, right, you don't have another house, you don't have any house, which means this loan is sanctioned for the house which you are going to buy for the first time. That's why I named it as what? New home buyers. For them only they will get deduction. What they will get deduction? They will get up to maximum deduction. How much? 50,000 per financial year until loan is repaid. For what? 50,000, okay, deduction. For what? Interest amount. You will get deduction towards interest on loan taken. You will get a deduction for interest on loan taken. Very simple. Okay, 16-17 year. Interest on housing loan taken. See, interest on loan taken, no. Here one point is no deduction is allowed for the same under 24B. Then only you will get deduction. If you claim interest deduction under 24 house property, you can't claim here. So simple. Suppose I am SOP, UOP. NAV is equal to 0. Yes or no? Maximum deduction under house property, how much I can claim under optional tax regime? 2 lakhs. Yes or no? Suppose I spend 2.5 lakh loan. 2.5 lakh interest is I have. Up to 2 lakhs I will claim there only, because I can set off with other heads of income also. Yes or no? Remaining extra interest, if at all per annum I incurred, that extra interest I can claim under 80E. 80EE. Conditions: 16-17 loan must be sanctioned. Loan amount should not be more than 35. Value of the property should not be 50 lakhs. Remember, value of the property means not STV, simple value. Whereas in 80EEA, stamp duty value they specifically gave. Able to understand, all of you? Sir, suppose SSC is choosing a let out property, sir. SSC is going for a let out property. Now entire interest amount you can claim under house property itself happily. But remember, if it is a let out property, entire interest, even though you are claiming, if at all there is a loss, you can only set off with other heads only up to 2 lakh. Suppose if at all you are having higher loss because of interest amount, then claim interest amount up to the loss that can be set off. Extra interest claim here, 80 better. Yes or no? That's it. Sir, SS is following a default tax regime, sir. For SOP, UOP where NAV is equal to 0, you can't claim deduction at all there. 80E also you don't get any deduction because default tax regime. Suppose, sir, SS is an optional tax regime. Let out default tax regime, default tax regime, let out property. Entire interest amount claim under house property head only. Because you can carry forward the loss at least. Yes or no? Because 80E is not there for default tax regime. That's it. Similar logics will apply for 80EA. In 80EA, that is also for deduction towards interest. But later, initially this section was open only for 1 year, but later instead of extending this section, government brought a new section. What? loan must be sanctioned in the 3 years period, 1st April 2019 to 31st March 2022. Now we have another interest 80 EEB. There it is 2023. Here it is 4 years. Here it is 3 years. Here it is 1 year. Loan sanctioned date must be which date? In 80 EE 1617. In 80 EEA 2019 to 2022. 80 EEB electric purpose 2019 to 2023. Able to understand? Now, stamp duty value shall not exceed 45 lakhs under 80 EA. And you should not have any house as on the date of sanctioning the loan. Means this is also for the first time buyers. So once again the section is reintroduced in 2019 year. Getting it? This time maximum deduction for interest is how much? 1,50,000. Whatever logic I told, SOP, UOP, DLOP, everything is exactly here same. Just that here it is 50,000, here it is 1,50,000. So you should apply beneficial treatment, which we already covered in our regular class with some illustrations and all. Clear all of you? That's it. By the way, who is eligible? 80 EE individual. 80 A also individual. Suppose you are already claiming 80 E, means you already have one house. So you can't claim again 80 EA. Able to understand. That's it. Next. Here DLOP, all that points have given clearly. Okay. Next. Electric loan. Electric vehicle loan. Any individual who have taken a loan for purchasing electric vehicle, deduction is available for interest payable. Now how much reduction? 1,50,000 towards interest. When the loan must be sanctioned between 2019 to 2023, interest claimed is allowed as, should not be allowed under other heads. Suppose I bought electric vehicle for my business purpose. It is added block of asset. If I am paying interest on that loan, I will claim under 36. That time I will not get deduction under 80 EEB. So indirectly, which SSC is, if an electric car is purchased for not for business purpose, then only 80 EEB is indirectly eligible. That too under optional tax regime. Suppose if the SSC is going for default tax regime, you can't claim 80 EEB. That's it. Yes or no? Next. Then we have 80G donations. One of the most confusing section for many. So we made a simplest table. Simplest way to calculate. How to calculate answer under 80G. 90% of the cases students do wrong in 80G. Very simple. In 80G, donations, this is actually nothing but deduction towards donations. Deduction towards donations. What donations? Whatever donations you pay, these donations are divided into 4 categories. These donations are divided into 4 categories. Category 4 is having 5 kinds of donations. Category 3 is having 2 donations. Category 2 is having 1 donation. Now, how you should claim deduction? Simple. First, in the problem, they'll give you donations list. Donation paid to charitable trust, donation paid to government, donation paid to Olympic Association, donation paid to Prime Minister National Relief Fund. Some donations names and they'll give. You should remember which donation comes under which category. How to remember that? I'll cover it. Okay. Now, very simple. Suppose you saw the problem. You found some 10 or 15 donation list. First group it. How many of them comes under category 1? For example, under category 1, 5 lakhs worth came. Under category 1, 5 lakhs worth of amount donations came. Some 3-4 donations were there. Total put together 5 lakhs. By the way, donation exceeding 2,000 rupees can be considered only if it is paid by other than cash. Suppose if at all donation amount to somebody is more than 2,000 in cash, we will not consider. We will not consider. Then again, there are some 3 more donations where total donation value is 2 lakhs only, and all the donation comes under what? Category 2. Then I have paid another donation. I have paid some other donations. 3 or 4 more donations were there. Total put together 2 lakhs only, and they come under category 3. Then balance number of donations are there. Out of 15-20 donations, I removed 1, 2, 3 category. Now balance is put together approximately 2,50,000 is there. First, this is what given in the problem only. I am just dividing them into 4 categories. Okay, fine. Now what should I do? Calculate donation, calculate deduction. How much reduction? 5 lakhs. First category, 100% of amount paid. I paid amount 5 lakhs. So answer is 5 lakhs. Second category, 50% of amount paid. 2 lakhs I paid. So answer is 1 lakh. Third category, fourth category. You cannot straight away calculate 100% of amount paid. We didn't use that word. We said 100% of qualifying amount. Here we said 50% of qualifying amount. Qualifying amount means what? Amount paid or 10% of adjusted total income, whichever is lower. Oh, which means category 3 maximum amount that covers under 3. Here in our example 4,50,000 is the total. Category 3 and 4 put together, how much is there? 4,50,000. How much is qualified? How much is eligible? Amount paid is not eligible. Amount paid or 10% of adjusted total income, whichever is lower, only that much is eligible. For example, adjusted total income we calculated. What is adjusted total income? Very simple. Calculate gross total income minus chapter 6. First, no, capital gains and all you reduce. Special capital gains, special 111A, 112, 112A. Lottery's point is not considered here. Getting it? Lottery need not be reduced. Then deductions under chapter 6A except ATG, because some students know when they're reducing ATG, when they're reducing chapter 6, they reduce category 1, category 2 here. Never do that. ATG itself, don't touch it. But remaining all the deductions are there, right? 80C, 80CCC, all that, reduce it. Now you will get this one. Suppose this value is 30 lakh only. Adjusted total income, how much? 30. Into 10% means what? 3 lakh. Oh, category 4, category 5 put together, amount paid is 4.5, 10% of adjusted total income 3 lakhs, whichever is lower. Only qualifying amount is how much? 3 lakh only. Category 3 and 4 put together, how much department will consider? 3 lakhs only they will consider. But you paid how much? 450. So how I will allocate? Category 3, no, full I will allocate. Because 3 lakhs I can consider. Category 3 is only 2 lakhs, right? 2 lakhs I will consider. Remaining out of 3 lakhs, 2 lakhs is allocated for category 3. Still I have 1 lakh only. 2 lakh 50 I paid, but I will consider how much? I will consider how much? Here 2 lakhs I will consider, correct? Here I will consider 1 lakh. Okay, now maximum qualifying amount is 3 lakhs. The qualifying amount we allocated for category 3, category 2 based on amount paid. Here amount paid 2 lakhs. We are eligible for 3 lakhs qualifying amount. So 2 lakhs fully allocated. Category 4 amount paid 250. But we are only having 1 lakh limit. Therefore 1 lakh is allocated. Now very simple. Apply percentage logic. 100% of qualifying amount. 2 lakhs into 100%. 2 lakhs is the deduction. 50% of qualifying amount. 1 lakh into 50. 50%. 50,000. So what is the total answer? 5 lakh plus 1 lakh. 6 plus 2. 8 lakh 50,000. This is the answer. Now here one point you should remember. At the beginning of chapter 6A, I missed this point. Total deductions under chapter 6A plus 10AA cannot exceed your normal incomes. Total deductions under chapter 6A plus exemption deduction under 10AA both put together cannot exceed your gross total income, which consists of normal incomes. If my gross total income, normal income portion is only 5 lakh, my total chapter 6A deduction 10 lakh, 10A deduction 3 lakh, total 13 lakh is there, but my normal income 5 lakhs, I cannot claim more than 5 lakh. That's it. Able to understand. Next, remember donations in kind. Sometimes in exam they'll give you donation given kind, market value they'll give you, ignore. Yes or no? Deduction is not allowed if at all donation is paid in cash exceeding 2,000. Now in exam they'll give you list of donations. We should identify what will come under category 1, what will come under category 2, what will come under category 3, what will come under category 4. If at all you have a doubt, once again repeat the video. Getting it? Fine. So what all comes under category 2? Simple. Prime Minister Drought Relief Fund, National Relief Fund, CARES Fund, they all come under category 1. Prime Minister Drought Relief Fund comes under category 2. Category 2 means what? Directly 50% deduction, amount paid into 50. Category 3, you will get donation 100%, but subject to qualifying amount. What amounts? Donation paid to government for family planning purpose. For promoting family planning, I pay to government for family planning. Suppose no, I pay to government only for some charitable purpose other than family planning. Other than family planning comes under category 4. By the way, to whom I am paying? Donation paying to government and local authority. Here also donation paid to government and local authority. If it is family planning, category 3. If it is somebody else, if it is something else purpose, category 4. That's it. Then, sir, donation paid by a company to sports association, sports association institutions for sports related donation comes under category 3, and that amount is eligible only if it is paid by company. Only for company SSC they can claim. Yes or no? Then what are all items comes under category 4? These items. Suppose I am donating directly for charitable trust, category 4. I am paying for housing, accommodation, town planning, that authorities, town planning, urban planning, all that authorities, category 4. I am paying for promoting minorities interest, category 4. I am paying for renovation, repairs of temples, mosque, gurudwara, church, archaeological place, artistic importance, yes or no, place of worships. So if I am paying any donation to them, category 4. So what are category 4? Charitable trust, government for charitable purpose, other than family planning, then housing development, city development, town development for them, then for promoting minorities interest, then for renovation, reconstruction, or all that, repairs of mosque, temple, gurudwara, all religious places, archaeological places, all that, category 4. Category 3, what are all? Sports related by company, yes or no, then government for family planning, then prime minister drought relief fund, all these comes under 2, 3, 4 category. You can easily, you remember 2, 3, 4, then remaining all other donations comes under category 1. So in category 1, what to be remembered, highlighted with only red color, only this you remember, that's it. State government fund for medical relief, for army fund, CM relief fund, governor's relief fund, national sports fund, national culture fund. Remember, national sports fund is different. Contribution to any authority set up for promotion of sports, that is different. That is category 3, which is subject to qualifying limit. Swachh Bharat Kosh, Clean Ganga fund, PM Cares fund, all these comes under category 1. That's it. ATG over. Easy or not? All of you clear? Then ATGG. What is 80GG? This is okay. 80GG, I'll come back to it later. Let me cover donations only. Okay, 80G is dealing with donations, right? 80GGA is also dealing with donations, but here donations are for scientific research, social research, rural development. Able to understand? Or you are donating to public sector companies for eligible projects, or you are contributing to rural development fund, national urban poverty eradication fund. Sometimes some students know national urban poverty eradication fund, the moment they see, they think category 1 of 80G, they blindly think category 1 of 80G, but at the end of the day your answer will be same only, because 80GGA, contribution to national urban, 100% reduction. Category 1, even if you interpret 80G, no, you will get 100% reduction. So generally, whether you write the section number 80G or 80GGA for these points, no, the answer will be correct only. But if at all you think, will it come under category 1 or will it come under 80GGA, if at all you are unable to decide, don't write section, you claim deduction happily. 2, 3, 4 you remember. Any other donation automatically comes under category 1. Suppose you saw national urban poverty eradication, rural development fund you saw. Suppose you are unable to recollect 80GGA, 80G category 1, you are unable to remember. Don't mention section, you claim deduction, you get the same answer. Are you getting the point? Yes. However, social research, scientific research, obviously 80GGA. By the way, this entire 80GGA deduction is eligible only for the SSE who do not have PGBP income. Suppose if the SSE has a PGBP income, all these deductions can be claimed by him under 35 itself. Here also, amount exceeding 2000, no, if at all paid in cash, you don't get deduction. 48 modes you are paying, electronic money transfer, account pay check, account pay draft, you will get. Bearer check, crossed check, cash, you will not get deduction. Over. Easy or not? All of you? Easy? Then donations to political party electoral trust, donation paid by Indian companies, you can claim deduction under 80GGB. How? You should pay donation completely other than cash. Even 1 rupee you paid in cash, you will not get deduction for that. Donation includes one more point here, very important point. Suppose a company is there, they are spending some advertisement expenditure in a political party, brochure, newspaper, like that. Under 37 PGBP section 2B, it is disallowed, and the same amount is treated as donation to them, and under 80GGB the company can claim it as deduction, because donation definition to political party under Companies Act includes advertisement expenditure also. So that's why under income tax 80GGA you can claim deduction for actual donation paid plus advertisement expenditure incurred in political party. Both are treated as donations paid by the company to political party. Remember, only Indian companies allowed, foreign companies not allowed, government companies prohibited for giving donation. Then, sir, what about 80GGC? Here many interpret it as other than company. No, wrong. It's not other than company. MCQ very important. Only four categories are covered: individual, HUF, AOP, BOI. Yes or no? Okay. You see here, firms are not covered. Getting it? 80GGC is not available for AJP and local authorities. Actually, firms also you can claim. Not an issue. Just 1 minute, I will see that word. Whether firm is exclusively covered or not, I will see, because in 80GGC specifically the section limit is given. Just a minute. Yes, this is Act. Yeah, except local authority and artificial judicial person only. So firm is covered. Getting it? So though I have not given the list, firm is covered. That's why I say 80 GGC is not available for AJP and local authority. Getting it? Don't write the word other than company. Sometimes in MCQ they'll give you 80 GGC reduction is available for whom? Companies, Indian companies. B, government companies. C, local authority and AJP. Sorry, I mean C, any person other than local authority and AJP. Yes or no? Any person other than D, any other than company they'll give you. Many students will write other than company if at all the word is there. So other than AJP and local authority, firm is also eligible. Simple, other than AJP and local authority. So the interpretation is correct only. Able to understand. Next, deduction is for what? If at all you are donating to a registered political party or registered electoral trust. That's it. Clear or not? Easy or not? Then 80 GG, rent paid. Deduction for rent paid. Suppose no, if the SSC is incurring rental expenditure. If the SSC is incurring rental expenditure. Why is he incurring? He is staying in some other city. He is staying in a city where he does not have a own house. He does not have a own house there. He, his family member, his spouse, none of them are having a own house. So he is staying in a city for the purpose of business, for the purpose of employment, or some reason he is staying in some other city. There he is staying in a rented house. So there rent paid is allowed as deduction. How much? Rent paid minus 10% of adjusted total income. Adjusted total income means what? Same definition which is given under 80G. Gross total income minus chapter 6 deductions. My other than 80GG minus capital gains 111A, 112A, 112, reduce it. You will get adjusted in the 10%. Up to 10% rent paid expenditure, rent paid up to 10%, you will not get any deduction. Beyond 10%, if at all you are paying rent, no, that extra rent amount will be given as deduction. Or 25% of adjusted total income, maximum deduction 5,000 per month. Are you clear? Then suppose no, if the SSC is receiving HRA, he can't claim deduction. Remember here they're saying they're talking receiving HRA. Claiming exemption or not doesn't matter. Yes or no? Next, no deduction if the SSC or spouse or children or HUF having a own house in the same city. Yes or no? And SSC if at all claiming SOP, DLOP, not UOP. UOP I'm not covering. Why? Because UOP means what? I am staying in different city. My house, I have a own house in another city, but it was not occupied. Yes or no? Then only it is called as UOP. Suppose if at all you are claiming optional tax regime, NAV is equal to 0 towards UOP reason, still you can claim 80 GG deduction. Suppose you are claiming SOP or you are showing DLOP because of SOP nature. Yes or no? When you say SOP, you are staying in your own house, right? Why are you paying rent? You will not get deduction. Able to understand. 80 GG over. Clear, confident? Everybody? Then 80 JJA, I'll come back to it. First 80 okay, QQB RRB also I'll come back to it. 80 TTA TTB. 80 TTA TTB is for what? Deduction towards interest. Deduction towards interest income. 80 TTA deals with the savings interest. Yes or no? Suppose no, SSC is getting savings interest from bank, post office. Whatever interest first you get, no, tax it under income from other sources. However, when you are getting post office savings interest, 10 subsection 15 up to 3,500 rupees exempt. Suppose no, I am getting savings, bank interest 7,000, say post office savings interest 7,500 I am getting. Under other sources, how much is taxable? 14,500. Sorry, 14,000 is only taxable. Income from other sources, how much is taxable? 14. Houser, bank interest fully taxable. Post office 7,500 I am getting, no, 3,500 is exempted. 3,500 is exempted. 4. Oh, 11,000. How much is taxable totally? 11,000 is taxable under income from other sources. So now IFOS 11,000. Okay. My gross total income is also 11,000 only. I don't have any other income. You can claim again 80 TTA deduction up to 10,000. Already 11,000 is taxed. So up to 10 only. Suppose no, in other sources, no, savings interest taxed amount is 8,000 only. Then 80 TTA also 8,000. So the deduction cannot exceed tax amount or 10,000, whichever is lower. Yes or no? Next, now here savings deposit, individual and HUF. You can be a resident and non-resident, doesn't matter. Yes or no? Income shall be first included in IFOS. Able to understand. Then what is 80 TTB? This is introduced later on for senior citizen purpose. The two, resident senior citizen. Suppose if the resident senior citizen is getting interest income, fixed deposit interest, savings interest, doesn't matter. The moment you see senior citizen, you should remember 80 TTP also. And the moment you see senior citizen, resident, interest income is there. Automatically 80 TTP adjustment you must do in the exam. In exam, they will not tell you 80 TTA TTP clue. They will say interest income clue. That interest income means what? You should claim 80 TTA, 80 TTP under optional tax regime. Default tax regime, no deduction at all. Yes or no? Now, first senior citizen, whatever interest is getting, no, first tax it, IFOS. Savings interest, up to, savings interest, whatever income you get, first tax it. Post office savings interest, 3/5 you give exemption, balance amount tax it in IFOS. Fixed deposit interest, fully tax it. Gross total income minus, you can claim deduction under 80 TTB up to 50,000 rupees, or interest income taxed under other sources, whichever is lower. That's it. Easy or not? All of you. That's why I have given post office interest, all that is also correct. Next. So next, 80 QQB, RRB, JJAA. These three are income based deductions. No, sorry. These three are heading C deductions. 80 QQB heading C plus income based. 80 TTA TTB is not heading C but income based. 80 JJAA is heading C but expense based. Able to understand? So three sections we have heading C related. In chapter 6 deductions, no, heading C is there. 80 JJAA, QQB, RRB. Now many students confuse in QQB calculation part. Very simple. QQB, RRB, both of them is for what? You are getting royalty income. First taxed under PGPP. You are getting royalty income. First taxed under PGPP. For example, no. For example, suppose 80 QQB is dealing with royalty on books other than textbooks. 80 RRB is dealing with royalty on patents. Okay. Now, what 80 QQB says? Suppose you are getting a royalty income. You are getting every year lump sum money, irrespective of sales. No link with the sales. You get a lump sum fixed amount. You published one book. One publishing house, they told you they will give you fixed amount. You will get only fixed amount 5 lakhs yearly. So, I got 5 lakhs. PGBP income is how much? 5 lakhs. How much is the PGBP income? 5 lakhs. Getting it? I don't have any expenditure, nothing. Now, under 80 QQB, I can claim deduction for this lump sum royalty. How much I can claim? Actual amount how much? 5 lakhs. Maximum deduction 3 lakhs, whichever is lower. That's it. So, 80 QQB answer is how much? 3 lakh. Are you getting it? Sometimes you will get royalty income as a percentage of books, as a percentage of books sold. For example, the company, they are giving me as a percentage of books. They are giving me as a percentage of books. How much they paid me? 2,80,000 rupees they paid me. How much they paid me? 2,80,000. The same problem, I think similar number only there in the problem also. Okay, 2,80,000 they are paying me. At what percentage? 18%. At what percentage? How much they are paying? 18. As a percentage of sale, 18%, they are paying me 2,80,000. Okay, fine. Do tax under PGBP. PGBP, how much it is? 2,80,000. And you know what? I spent 40,000 rupees expenses already for getting that income. So how much is my net income included under PGBP? 2,40,000. Now, for this proportionate royalty which you get as a percentage, you will get a deduction. How much you will get deduction under IIT QQB? Up to 15% of sales only. 15% royalty only you will get deduction. Okay. 2,80,000, 2,80,000 is equal for 18. How much is for 15? 2 lakh. 2,80,000 is for 18. 18. A calculator, do it, no? 2 lakh. Okay, 2,35,000 for the sake I will keep. Okay, 2,35,000 I will keep. For example, for the sake of convenience, 2,35,000 is equal to 15% royalty. 18% is equal to 2,80,000. For convenience sake, 15% royalty is 2,35,000. Yes or no? Up to 15% royalty only you will get deduction. How much you will get deduction? 2,35,000. But you know what? This amount is you are getting from abroad. For example, see, suppose if this amount is you are getting in India, no problem. 2,35,000. How much reduction you can claim? Already 40,000 rupees is you claimed, no, expenditure related deduction towards royalty. Already you claimed 40,000 reduction. That 40,000 eliminated. Balance 1,95,000 is the maximum deduction. Further, suppose, no, sir, I am getting this 2,35,000 from abroad, sir. Okay, from abroad. The royalty for me is paid by a foreign company, foreign entity, they are paying me. Then there is one condition. Within 6 months from the 31st March, end of the financial year, from the end of the relevant year, within 6 months, how much you received in India? That much only is considered. See, 15% only maximum. But you know what? I received in India 2,10,000 only. Within 6 months from the end of the financial year, I received only 2,10,000. Then 2,10,000 minus 40,000. Then 2,10,000 minus 40,000. 1,70,000 only I can claim deduction. If at all you are getting royalty percentage income from abroad, how much reduction eligible is linked with how much is collected in India in foreign currency, convertible foreign currency. Within 6 months from the end of the financial year, how much is brought in India, only that much is eligible for deduction. Able to understand. First, always calculate 15%. This is the maximum deduction. Then again, maximum deduction is restricted to how much is brought in India. Again, from that eligible deduction amount, already deduction you claimed in PGBP, reduce it. See, if you do not claim any PGBP, you will get full deduction. Since you are claiming already towards royalty expenditure, some amount you are claiming already. So deduction cannot be extra. So deduction here will be adjusted, whatever deduction. That's why here matter is also given. You see, royalty. So deduction other than lump sum royalty. Suppose I am getting deduction is equal to royalty income before expenditure, calculate first. Not exceeding 15% of the value. So before expenditure, how much is the royalty income up to 15% calculate. If any expenditure is claimed under PGBP, the same shall be reduced from deduction eligible under 80 QQB. From 80 QQB deduction, reduce that. 80 QQB deduction, how much? Income earned outside India, if at all, must be brought into India within 6 months. Yes, and only that much is income eligible. So first deduction. Deduction means what? 15%. Then reduce that money to how much is brought in India. That much deduction you can claim. But again, if PGBP deduction is claimed, that you should adjust it. Balance amount only you can claim it as deduction. Look at that once again problem, you will understand. That's it. Clear all of you? Sir, I am getting royalty for patents. There is no proportionate patent income. Only lump sum. Maximum deduction is lower of amount received or 3 lakhs. That's it. Over. 80 QQB, RRB, both are over. Able to understand. Next. 80 JJAA. 80 JJAA. What is this 80 JJAA is about? 80 JJAA is talking about employee cost, additional employee cost. What deduction you will get? You will get 30% of additional employee cost. Very simple. Sir, in my business I recruited employees, sir. I am paying salaries to them. I can claim deduction under PGBP for salary. 37th deduction I can anyhow claim. In addition to that, to promote employment opportunities, to encourage more and more employers, generators, so no, 80 JJAA section is brought. What this section is saying, you claim PGBP happily, no problem. How much you claim with no salary cost? In that salary cost, 30% you can claim additionally under 80 JJAA for 3 years. For how many years you can claim? 3 years. 3 years, if at all you are incurring additional employee cost, 3 years, if you are incurring additional employee cost, you can claim. Every year you can claim. By the way, for additional employee you can claim 3 years. Second year, suppose I started my business year 1, this year. I recruited employees. Whatever salary paid to them, this year how much I paid into 30%. Next year how much I paid to them into 30%. Third year how much I paid to them into 30%. Next year again I hired some more people. 2, 3, 4. Third year I hired again some more people. 3, 4, 5. Like that will go. Now, deduction is calculated at 30% of additional employee cost. Additional employee cost means what? Employee cost incurred in that year. Employee cost incurred in that year towards additional employees. Towards additional employees, how much employment cost I incurred? Who is an additional employee? Who is an additional employee? This is the question. Additional employee means what? In case of new business, no, amount paid to new employees during the year. I started business this year only. Everybody I recruited is a additional employee. All of them, whatever salary I paid, that is called as what? Additional employee cost. Sir, I am an existing business already. Last year, 31st March, I have 150 employees in my. Last year I have 150 employees. This year, no, 50 employees left. 70 employees joined. 50 employees left. 70 employees joined. Now, totally 170 it became this year. Only 20 will be considered as additional employees. Only 20 will be considered as additional employees because already you have 150. Now you have only 170 as a whole. Don't say 70 people I hired, sir. 70 you hired. 50 you did replacement. That is not new employee you hired. It's a replacement. So extra how many you hired? 20. Only that 20 is eligible for additional employee definition. only that 20 will come under additional employee. In case of existing business, additional employee cost will be 0 if no increase in total employees or amount is paid in cash. If at all you are paying salary in cash, no, you will not get 80 JJAA deduction. You will get 80 JJAA deduction only if you pay other than cash, even 1 rupee also. Able to understand? Fine. Now, again, who is an additional employee? Simple, an employee employed during the year. This year we recruited him, yes or no? And due to which there is a total increase in number of employees compared to last day of the previous year. Sir, this year I hired 70 employees, but out of 70, only 20 employees are additionally recruited. 50 employees, no, they left 50 recruited, replacement only. Able to understand? Again, the following people are not counted in additional employee number. Now I have 20, no, extra. 20 out of 20 I can't count again. From this 20, I should eliminate people. Employee whose emoluments are more than 25,000. Whose emoluments? Emolument means what? Monetary salary plus non-monetary perquisites all put together. Emoluments, but excluding provident fund contribution, pension fund contribution, gratuity, leave encashment, that and all you should not consider. Yes or no? Provident fund, for his future related anything you pay, that is not considered. Present, how much you are paying for him? Present, what benefit he is getting? Monetary, non-monetary, allowances, perquisites, everything you consider. Total emoluments, if at all it is more than 25, he is not considered under additional employee. Suppose, you know, out of this 20, you know, 4 employees, you know, they are drawing 30,000 per month. Eliminated. Okay, then employee for whom entire contribution is paid by government under pension plan. Government is taking care of his welfare, future welfare. You know, all that. For example, Prime Minister Rozgar Yojana, for example, it is not there in the ICA book, I'm just giving you. Okay, under that scheme I recruited employees. Under PM Rozgar Yojana I recruited these employees. Getting it? They will not be considered in additional employee definition. Like that I have 5 employees during the year. Like that I have 5 employees during the year. Sir, there are some employees who are not participating in RPF. There are 5 employees who are not participating. 2 employees who are not participating. Sir, I recruited employees, sir. They were employed for less than 240 days in this year. In this year, they were employed for less than 240. Employed means what? They worked. It's not working days. On which date they joined? They were there up to 31st March also. From the date of joining to 31st March, what is the gap? Less than 240 days. Don't count them like that. Like that, for example, 2 employees were there. So 9 plus 14, 13. 20 minus 13 is equal to only 7 employees are treated as additional employees in this year. To them, how much salary you paid this year? Multiplied by 30% you can claim deduction. Multiplied by 30% you can claim this year deduction. To these 7 employees, next year also you will pay salary for, right? 7 into salary paid into 12 months into 30%. Third year also you pay some salary amount, right? 30% of the salary paid in the third years. For these 7 employees you will get deduction. Further, now 2 employees I reduced here. 2 employees I reduced, saying that they were employed for less than 240 in this year. Next year they will be considered as 2. Next year means year 2, these 2 employees will be considered. For them you can claim deduction for year 2, 3, 4. In second year, how much you paid salary into 30%. Third year, how much you paid salary into 30%. Fourth year, how much you paid salary into 30%. Very simple. An employee who is employed for less than 240, he is also additional employee. But for this year, he can't claim. You can't claim any deduction for them. From second, third, fourth year onwards, you can claim deduction towards them. Are you clear? Employee employed for less than 240 days is not an additional employee. Now, the 240 days logic is treated as 150 in case of footwear, leather and apparel industry. Getting it? For footwear, apparel and other industry, it is not 240 days logic, 150 days only. If at all they are employed for less than 150, then only we will exclude them from the additional employee limit. But remember, these employees will be counted in the next year onwards. Yes or no? Employees satisfying 240, 150 condition in the succeeding year will qualify for deduction from the tier for 3 years. Easy or not? Yes or no? Now here audit report is compulsory. 1 month prior to the due date, by 30th September audit report is compulsory. This business should not be formed up by reconstruction or splitting up of existing. It must be a newly started business. The business should not be acquired from another. Simple. It must be a newly started business. Okay, you started the business, you didn't acquire from somebody, then you are eligible for 80 JJAA deduction. Clear or not? How much you can claim? 80 JJAA, 30% of additional employee cost. Additional employee cost means what? Salary paid during this year to the employees. Which employees? Those employees who are newly hired. All newly hired? No. Newly hired, because of them, total number of employees compared to last year of the last day should increase. Only that increased recently recruited employees, you should take them into account. Salary paid this year, how much? Into 30%. Next year salary paid to them into 30%. Third year salary paid to them into 30%. Now additional employee does not include employee drawing more than 25,000, employee not participating RPF, employee whose pension plan is taken care by government, employee who is employed for less than 240 days, less than 150 days. But this fourth category, temporary exclusion in this year, but they will again be considered in the next year. Able to understand? All of you? That's it. Entire chapter 6A deductions and 10A deduction both are over. Confident? We completed within 1 hour 20 minutes. Chapter 6A. 1 hour 20 minutes or 1 hour 10 minutes or 1 hour 15 minutes. See the quality. Yes or no? Each and every point we covered. In fact, in a regular class, we discussed much more in depth with so many illustrations. Correct? That's it. Confident now? Able to recollect everything? That's it. Further, one more clarification I want to give. What is the weightage of TDS? 6 marks. The weightage is how many? 6 marks. TDS advanced tax put together 6 marks. But unfortunate thing is, many students spend lot of time on TDS, TCS advanced tax and they go and do the mistakes in exam. TDS, TCS advanced tax, how much time this takes for reading and retaining and understanding thoroughly? That much time is what taken by PGBP also. Okay? Only if you are perfect 100% in PGBP and other heads of income, come and touch this chapter. One important disclaimer. So if at all you didn't understand that and then only focus on this, integrated questions you can't answer. Integrated questions you can't answer. Even in PGBP, when I'm discussing section 40, subsection A, 1 clause 1 year disallowance, I told you how TDS provision is linked there. Yes or no? So, if at all you're directly coming into TDS chapter and then watching, you're doing a big mistake. Because in TDS, the success rate is very low. Even though you remember the section, all that, in exam, it should strike rightly, that section. How there's so many sections: 192, 192A, 193, 194, 194A, 194B, 194BA, 194BB, 195, 194C, 194CDEF, 194D, 194DA, 194EFG, 194G, 194H, 194I, 194IA, 194IB, 194IJKL, 194J, 194K, 194LA, 194M, 194N, MNOP, 194P, 194Q, PQ, 194R is there. I'm telling you, R is there. R, yes, not there. T, 194T, partnership forms is there. 194U, V, W, X, Y, Z, not there. That's it. So these many sections were there only on 192, 194. Apart from this, you have 201. Okay, 201 subsection 1, yes or no? 1C, you have provisions of TCS. 206, yes or no? 201 only. I mean 206 only. 206C, yes. 206C. Subsection 1, 1C, 1F, 1G, like that were there. TCS provisions. So many were there. So many amounts. So many percentages were there. So first I'm giving a disclaimer to you before you continue watching this. Okay, so risk is very high to produce an accurate answer. So that's why don't blindly run behind the TDS chapter. In 3/4 strategy, I keep it under 1/4. But let me be clear. You revise it thrice, 3 times this TDS provision. Listen to this marathon at least 3 times the TDS topic. I bet you will get full out of full. Clear? That's it. Yeah. Let's begin TDS, TCS and then advanced tax. We'll continue the discussion. You know, in the very first chapter, we would have understood that income is earned in the previous year and tax is always paid in the assessment year, right? Income is earned in the previous year and on that you have to pay the tax and file IT return in the assessment year. In fact, assessment year means what? The year in which your income is assessed. Your income is assessed in which year? Assessment year. So your income is assessed in 26-27 income. 26-27, right? Your income is assessed. Which year income is assessed? Previous year income is assessed. That's why previous year word. So from assessment year context only the previous year word is derived. So in this year, we assess your income for IT return and tax payment purpose belonging to your previous year. So this is what generally you would have understood. Yes or no? Previous year we earn income, but in assessment year you pay the tax and you file the return. But department don't want to wait up to assessment year. What if you became insolvent? Yes or no? What if you became insolvent? So the department want to collect tax from the SSC on his incomes within the previous year itself without even waiting for assessment year. The department wanted to collect tax within the previous year itself. Accordingly, TDS, TCS advance tax provisions were released. These provisions ensure the tax is collected from the SSC in advance before assessment year begins. These provisions will ensure the tax belonging to the SSC will be collected either in the form of TDS, TCS or in the form of advance tax before the assessment year begins. Are you clear? Now, for example, I am an auditor. A company paid me audit fee. I have only one client. Let us assume I have only one client. I am getting from the company total fees of 30 lakhs I am getting. Only one client I have, 30 lakhs fee I am getting. And that company, 3 lakhs they deducted from me already. When I asked them, they paid me only 27 lakh my fee. I asked them, why are you deducting 3 lakhs, sir? I am not taking that money. In your name only I am paying challan to department. In your name only, that 3 lakh rupee I am depositing with the department. That your own money. Why are you depositing there? That's a tax liability. Why are you depositing? Why are you deducting that? It's a TDS provision. Fine. Okay, I agree. So the company paid on my name only 3 lakhs deposit there. I don't have any other money, and finally I received only 27 lakh in my hands. Now, when you see, let us assume, okay, fine. This is what the transaction actually. I don't have any other income. Now tell me, what is my income by the way? 30 lakh. Maybe I receive 27 only in my bank account, but my income is what? 30. And let us assume I'm liable to pay tax at 30%. I'm liable to pay tax at 30%. How much is the tax liability for me? 9 lakh. Let us assume the 9 lakhs is without cess everything. I'm not adding all that. Okay. Actually, you should add cess all that. Let's not add it for the sake of convenience. 9 lakhs is my tax. Now, assessment year came. Department is asking me, pay me 9 lakhs. How much you will pay? Sir, already 3 lakhs paid by me. Already 3 lakhs paid by me. How did you pay? I didn't pay. The person who paid me, he cut my tax already. And he paid in my name to you. Check it. Go and check the account. Okay, department agree. Yes, sir, we received, sir. From so-and-so company, on your name, they deposited at so-and-so month. They deposited. So 3 lakhs of your tax liability is already paid. Balance, you have 6 lakh liability. Balance, you have 6 lakhs liability. Even this amount you have to pay in the previous year itself. This amount also you have to pay in the previous year itself. How you have to pay? You have to pay in the form of advance tax. You have to pay in the form of advance tax. What will happen if I don't pay this? Interest is levied. If at all I don't pay, interest. Oh, advance tax means I thought optional. You are asking me to pay tax in advance. That's what I thought. Now, if I don't pay advance tax, what will happen? I will collect interest from you for late payment of advance tax. I will collect interest from you for late payment of advance tax. Able to understand? Now, this is how advance tax and TDS link. Are you getting it? Now, what do you mean by TDS? What do you mean by advance tax? This is what we are going to understand in this chapter. Clear? Now look at. See, TDS provisions are basically applicable for pay year. Who are they? Pay year. Okay, TDS provision is applicable for the person who is paying the money. For the person who is paying the money means for him, what is this money? What is this payment? Expenditure. What is this for him? Expenditure. It's nothing but for the payment, payer. Whereas to whom we are paying, we call him as payee. Are you clear? Now, TDS provisions are basically applicable to payer. They are not applicable for payee. However, we have another provision called TCS. TCS provision is applicable for payee. TCS provisions are applicable for payee. Yes or no? Whereas payer has to pay the tax to payee. Nothing but payee will collect Yes or no? Whenever I say pay, in Tamil word pay means devil, no? Yes or no? Yeah. So, then pay, Tamil, correct, no? Yeah. Pay has to collect. So, pay has to collect TCS, tax from payer. Okay, they have to collect tax from payer, correct? Pay means recipient. Fine. Collector, nothing but the person who is collecting the money. Who will collect the money in a transaction? Service provider, seller. Who will collect? Seller. General, who will collect money? Seller. From the buyer. So seller will collect TCS from the buyer in addition to the sale consideration. That's TCS mechanism. Whereas TDS mechanism, buyer, while paying the money to the seller, will cut some amount of tax and then pay the balance amount. Just like that, right now I showed one example, auditor. There, auditor is the seller who is selling services. Yes or no? Client is the buyer who is buying the auditor services. Okay, TDS is applicable for the TDS provisions are applicable for the buyer. Nothing but whoever is incurring expenditure. TCS provisions are applicable for seller. That's it. Whereas in TCS, no, they are predominantly dealing with goods. They're predominantly dealing with goods. TDS services are predominantly dealing with services. They're dealing with services. Clear until now? Next. You know, let us discuss one by one section how TDS mechanism operates, because in TDS, you know, the main important, one of the important topic is administrative mechanism of TDS, which many students ignore. So that mechanism briefly I'll tell you. You know, there is a company called Tata Consultancy Services. No, let's not take TCS. Again, you will confuse that TCS with this TCS, okay? Reliance Industries Limited. Let's take the example of Reliance Industries Limited. You know, Reliance Industries has 5 lakh employees. Now tell me, for the department, now all these employees are getting salary from Reliance. Is it better for the department to collect and monitor 5 lakh employees so that whether these 5 lakh employees are paying tax liability correctly or not? Is it better, or directly I will tell the company that responsibility? I will tell the company that responsibility. Hey, you are having 5 lakh employees. I don't know what you will do. All these 5 lakh employees tax liability I should get. Whether you deduct and get me or you will make sure they will pay, that is your choice. No. 192. It is your responsibility. What is it? It is your responsibility. You are paying salary to your 5 lakh employees, no? You know how much you will pay every year, right? Every year you pay how much? For example, no, I am one of the employee. Reliance Industries is employer. Employee 1, E1 is one of the employee. He is getting 12 lakhs. 12 lakhs is a taxable income for him. Okay, let us assume 12 lakhs is taxable. On this, 1.2 lakh is the tax liability for him. What is the tax liability? 1.2 lakh. I will tell the Reliance company, that employee, one employee is there, right, with you. He is having 1.2 lakh yearly tax liability. From him, every month collect 10,000 rupees. From him, every month you deduct 10,000 rupees. It's like his salary is what? 12 lakh, right? So company is paying every month 1 lakh per month salary to bank account of employee 1. Bank account of employee 1, the company is paying, right? Out of this 1 lakh, the company will collect 10,000, will deduct 10,000. Only balance 90,000 will be paid to the employee. This 10,000, like this 10,000 from one employee, from 5 lakh employees we are collecting tax. From 5 lakh employees, while paying amount, no, while paying salary to them, no, every month, I will not pay full salary. I will deduct some tax. Okay, 10,000 tax I will deduct. Every employee depends. Some employees monthly 1 lakh, some employees only 5,000, some employees it can be 8,000. Like that, from 5 lakh employees, I deduct every month. TDS from each employee, and then, you know, lump sum. Only April month, only April 25 month, how much TDS is collected? You know, 2,000 crore TDS collected. How much is collected? 2,000 crore TDS is collected. This entire 2,000 crore rupees is the TDS deducted by me from the salaries paid to employees. Correct? This 2,000 crore. But this 2,000 crore belong to how many employees? 5 lakh employees. But I will pay to the department. There is a section called 192. I will put 192 section number on a challan, and I will add this 2,000 crore. I will transfer money to the department 2,000 crore because it's not my money. I just deducted and then pay to the department. Over. April month over. Again May, same 2,000 crore. June, like that, same 2,000 crore. You know, every month I will pay 2,000 crore to the department. Now department is getting from Reliance company, every month we are getting 2,000 crore TDS towards salaries, TDS towards their employees. How many employees? 5 lakh. Department don't have that data. This 2,000 crore they need to distribute, no? They need to allocate to each employee input ledger, income tax input ledger. Because like, otherwise what will happen tomorrow when the employee filing IT return, no, his income is 12 lakhs only. He will pay, sir, my tax is 1.2. Sir, already my boss paid, no. Department, how the department will get the data? I have to file quarterly statement. What I have to file? Quarterly. First of all, every month I am deducting TDS, right, from employee. Every month I am deducting TDS from employee, right? 2,000 crore. By when I should pay this TDS? By next month, 7th. April month, I will pay to the department TDS money. Whatever TDS I deducted, I will pay to the department by 7th of next month. May, 7th of June, June related TDS, 7th of July, like that. Every month the TDS amount is deposited by me by next month 7th date. So any month, any other month on or before 7 days from the end of the month of deduction. Suppose if it is March month TDS, by what date you should pay? 30th April. March month TDS alone, you have an option to pay by 30th April of the next year. But rest all other months you have to pay by next month 7th. Are you clear? Now remember, only paying it will not sufficient. You should tell department 2,000 crores is belonging to whom? You should tell the department. You need to give a statement of deductee details. Am I right? You should give the department, see, I am the deductor. How much I deducted every month? 2,000 crore, 2,000 crore, 2,000 crore I deducted. This 2,000 crore, totally in a year, 24,000 crore. In a quarter, 6,000 crore. In a month, 2,000 crore. Belongs to whom? 5 lakh deductees. It belongs to whom? 5 lakh deductees. Department, you should give this information, right? How do you give that information? By furnishing statement of TDS. How do you give that information? By furnishing statement of TDS. Like, look at statement of TDS you have to furnish to the department. If you understand this mechanism, remaining provisions, nothing. This mechanism is what most important. So if you furnish statement of TDS, that's enough. What statement of TDS will look like, you know? Part 1, part 2, part 3. Statement of TDS will have 3 parts. Part 1, company information will be there. Who am I? Reliance, deductor, I am the deductor, all that. Part 2, challan number 1, 2,000 crore I paid. Challan number 2, 2,000 crore I paid. Challan number 3, 2,000 crore I paid. This is April month, this is May month, this is June month. Now, this challan number 1 belongs to how many employees? 5 lakh. 1, 2, 3, 4, like that 5 lakh. Challan number 2 also belongs to 5 lakh. Okay, 1, 2, 3, 4, like that 5 lakh. Then again, challan number 3 belongs to how many? 1, 2, 3, 4, 5 lakh. So this 2,000 crore, I will split to each and every employee. 10,000, 10,000, 10,000, 10,000. Total it 2,000 crore. Challan number 1 breakup, 5 lakh employees. Tax amount I will fill there. If I total, that total will match with challan total. Do you understand? Like that, quarterly I should file a return. Like that, what I should do? Quarterly I should file. Only after I file this statement, department can allocate my 2,000 crore which I paid to each and every employee correctly. So that tomorrow when they file IT return, this amount which I deducted, no, 10,000 each from them, it will be reflected for them and they will pay only balance tax if at all pending. Are you clear? Now here, deductor, he has 2 responsibilities. 1, while paying the amount, I should check whether I have TDS provision applicable or not. If I have a TDS provision applicable, I should deduct the TDS and then pay balance amount. Once I deduct the TDS, I have 2 responsibilities. 1, remit. Remit to the department by next month, 7th. For March month, next month, 30. Not only remitting, quarterly, I should file statement of TDS. I should file statement of TDS. TDS written we call it as ETDS written we call it as. You know what? Quarterly you should file, right? What is the due date? What is the due date quarterly? Suppose TDS amount deducted, TDS amount you have to pay by next month 7th. That we understood. TDS written due date is what? You have to file quarterly, right? Yes or no? Am I right? Quarter 1, 2, 3, 4. Yes or no? Quarter 1 means what? April to June, 30th September, 31st December, 31st March. First quarter, 1 month time exactly. Once the quarter is over, 1 month time. First quarter June 30, 1 month means 31st July. Second quarter 31st October. Third quarter 31st January. Fourth quarter 2 months time you have. Fourth quarter you have 2 months time. Because no, March month challan you see, challan time only 1 month is there. Return filing should be extra time, no? That's it. Able to understand? So 31st May he has to file the TDS return. Until now clear. If you do not file on time, what will happen? If you do not file on time the ETDS return, here you make a note, 234E, late filing fee will apply. What is applicable? 234E, late filing fee will be applicable. How much? 200 rupees per day. How much is applicable? 200 rupees per day. And you know what is the maximum fee? Number of days. For example, 100 days you delayed. 100 days you delayed. 100 into 200, 20,000 rupees. But suppose TDS return I am filing, no. In that my TDS amount is 10,000 only, total TDS. 3-4 deductees only were there. Total TDS per entire quarter put together itself is just 10,000 rupees. TDS, I deducted TDS. Not Reliance, not a big company like Reliance. I'm a very small seller. Okay. For me, the total TDS for 3 quarters put together is just 10,000. But I filed belatedly the return. 100 days I filed late. 20,000 penalty they are asking fee. Arey sir, my tax itself is 10,000 sir, but you are asking me 20,000 fine. Then late filing fee is restricted to maximum tax amount. Are you clear? Fine. This is for what? When you are filing the return belatedly. Am I right? What if you are paying the tax late? You are deducting the tax late or you are remitting the tax late. Interest is applicable. Interest is applicable for late deduction 1%. Interest is applicable for late remittance 1.5%. Interest is applicable at 1% for late deduction, and for remittance, late remittance, interest is applicable at 1.5%. Now I will finish that point also. Then administrative mechanism will be over, administrative provisions will be over. Then we need to start actual TDS sections one after one. Are you clear? Until now you understood basically. Now look at 201.1 late deduction. Just a minute. Deductible. Just a minute. I'm just opening that. Yeah. Yeah, here it is there. Look at interest for late deduction ma. I'm first talking about what? Interest for late deduction. How much interest ma you fail to deduct? See, you have a time to deduct. You will have a time limit for deducting also. Means by when you fine, look at. See, generally when you are paying any amount, no. TDS is to be deducted by whom? Payer. Correct? Payer has to deduct the TDS. While paying the amount, from the amount paid, TDS has to be deducted. When he should deduct? Generally at the time of payment. Generally. I'll tell you, there is one more concept is there. At the time of payment. Suppose I'm paying TDS on 30th April. Sorry, I'm paying amount to the buyer. I'm paying amount to the service provider. Okay, on 30th April. 30th April I should deduct the TDS. When I should deduct the TDS? 30th April. That is the date on which you have to deduct. Suppose I didn't deduct. I deducted TDS on 5th May. I deducted TDS on 5th May. You know what? TDS deposit 7th of next month is the right. If you deduct in current month, you have to pay by next month 7th date. If you deduct on 30th April, you should pay by 7th May. You deducted itself on 5th May, you should pay by 7th June. Are you getting it? Now, when do I say late remittance? Sir, I deducted in May month, sir. 7th June if I pay on time remittance. Do you agree? If I pay after 7th June, that's late remittance. Correct? For late remittance TDS, interest is applicable. For late deduction also interest is applicable. Suppose I paid money to the service provider. Service provider is I paid money at when 30th April I paid money. I forgot to deduct TDS. Immediately on 5th May, I called him, sir, I forgot to deduct, sir. Please send me 10,000 back. He sent me 10,000 back. Now I deducted on 5th May. Still, that's a late deduction. How many months late deduction? 2 months. Month means part of a month is also considered. 30th April you should deduct. You didn't deduct. April month delay, late. May 5th you deducted. Again that's a late. 2 months is involved here. Able to understand? For 2 months, 1% per month or part of a month is interest is applicable. From which date to which date? From the date on which TDS is deductible. In our example, 30th April is deductible till the date of deduction, 5th May. Now, here how many months are involved? 2 months are involved. Therefore, for 2 months interest is applicable. Are you clear? Suppose TDS amount is just 10,000 rupees. Just TDS amount is what? 10,000 rupees. Okay? Date of deductible is 30th April ma. Date of deduction is 5th May ma. And you know what? Remittance is when remittance is on. Now actually 5th May they deducted, no. Technically they should remit by 7th June, but they remitted on 10th June. They remitted on 10th June. Yes or no? Now for late deduction 1% per month. For late remittance 1.5%. TDS amount is, let us assume 10,000 rupees only. Now how the interest is calculated? Late deduction. Here 2 months are involved. Therefore 10,000 multiplied by 1% multiplied by 2 by 12. Am I right? No. Because here 1% is per month only. No need to put by 12 again. How many months delay? 2 months. So how much it is? 200 rupees. Am I right? Are you clear? Now tell me. Here how many months late remittance is there? How many months late remittance is there? By the way, tell me. Date of deduction, actual date of deduction 5th May. Due date is what? 7th June 25. If at all you pay by this date, there is no late remittance. But SSC got missed. Again, he paid on 10th June. Now tell me, how many months delay is there? Technically speaking, 1 month delay. But late remittance means what? Here, look at this. From the date on which TDS is, here you see, from the date of deduction, from date what you should, generally when we remit late, due date onwards we calculate. After due date only delay started, right? From due date onwards we have to calculate interest, am I right? But here we calculate from deduction date itself. Tell me, in this case, deduction date is what? 5th May. Remittance date is what? 10th June. How many months involved? 2 months. Yes or no? Multiplied by 1.5% multiplied by 10,000 is equal to 300 rupees. Total interest. This section is 201 1A. This is what the section 201 1A is. Total interest is 500. But if you observe technically, 30th April only you paid. 10th June 30th April you are supposed to deduct. 10th June if you remit also, overall period involved is 2 months only. But department will not consider like that. This is how they consider. Do you understand? So when you are remitting late, first point you should remember, TDS will not be computed. Interest will not be computed from due date of remittance. Interest will be computed from date of actual deduction onwards. TDS late remittance, interest is calculated from actual deduction date onwards. So for late deduction you are having interest, late remittance also you are having interest. For late remittance, how many months involved? Check it out. 2 months involved. Then for 2 months you have 2. Number of months involved. That's it. Are you clear? So this knowledge is enough regarding administrative mechanism. Okay, 201 1A I covered, due dates for TDS return I covered, TDS statements I covered, quarterly return window file, and late filing fee point also I covered, interest on late payment of TDS, late deduction of TDS I covered. This is entire administrative mechanism, main provisions. Clear? That's it. So this is TDS mechanism. How it works, you understand? Now I told no, every month for employees 2,000 crore I'm collecting. No, not only employees. As a Reliance company, every month I'll be paying to so many other people. Legal fees I'll be paying, professional fee I'm paying, contractors I'll be paying so many, I'll be paying interest on loans to so many people, I'll be paying so many expenses. For all types of expenses, mostly TDS provisions are attracted. You open Reliance company P&L account, you open debit side of the P&L account, almost every payment TDS section is there. For example, first debit side of the P&L account, what will be there? Purchases 194Q. For purchases, what is there? Purchase of goods 194Q. Then 2, direct remuneration 194J. Then printing and stationery 194C. Then you see salaries, employee benefit 192. Legal and professional fee 194J. You pay repairs and maintenance 194C. Anything you take in the debit side of the P&L, there is a TDS section applicable on that. Means if a company, for a business people, there are so many TDS provisions that are there for every type of payment I am making. Suppose for this building I am paying rent 194I. Understood? So everything I am paying for example, air conditioners contract is there. I'm paying 194C is applicable. For every type of payment, I'm paying salary to my staff, 192 is applicable. I'm paying fees to my auditor, 194J is applicable. I'm paying interest on borrowed loan to my friends, 194A is applicable. Every type of payment I pay, almost TDS gets attracted. Able to understand? So which means every month a company has to deduct TDS for various payments under various sections. But when you are paying challan, no, you should pay section wise challan. You should pay challan to government section wise. Now that many challans if at all there, each challan wise breakup of deductees you should show. TDS return, that's how you have to file. Again, here if you see TDS return, here if you see the TDS return, just a minute. If you see here TDS statement, oh yo, so many forms were there, 24Q, 27Q, 26Q, what are they? 27Q, 24Q is the form applicable for employees. If I am collecting TDS from employees and then paying to department, I have to file a quarterly statement, no? 24Q form is applicable. If at all it is not employee, 27Q is applicable. Are you clear? Then 26 not that important. So now to the employees, no. To the employees I am paying, no, TDS. Quarterly I am filing, no. And I should come back and tell him, no, last 3 months TDS I paid to the department. You know, this is the proof. I need to give them the proof that I deposited also, because that's my responsibility. I will give them form 16. What I will give them? Form 16 I will give them. Are you clear? Form 16 will be given on a yearly basis. Employees we will give form 16 on a yearly basis. Now remaining payments will be there, other than salary. There I will give them form 16A. Deductions under 192, 194P. Both are salary head of income related one. For the recipient, no, the incomes which I am deducting, no, the income which I am paying, no, to the recipient 192, 194P means they are taxable for salaries. If at all I am deducting TDS under other sections, then form 16A is applicable. That's it. This is how TDS mechanism operates. Are you clear? Everyone? Just a minute. Then immediately now we'll start the sections. Now let's begin the first TDS section, that is 192. Okay, I'm now going to discuss 3 TDS sections here, guys. 192, 192A, 194P. 192, 192A, 194P. The reason why I am discussing is, in all these 3 sections, they are related to the amount you pay, right, to the other person is employee. Here the employer, there the employee. For the recipient, the amount paid is taxable under salary head of income. And here TDS is to be deducted at the time of payment. There are some sections where TDS has to be deducted at the time of credit or at the time of payment, whichever is earlier. Credit means what? You know, in my books of accounts, if I recognize the expenditure, that's enough. That's called time of credit. And time of payment means actually on which date I am paying him. For example, no, on 31st March, in my books of accounts, TDS salary, I recognized outstanding expenditure. It's a credit. TDS will not be deductible on that date. When you are paying the salary, sir, I pay salary on 5th of next month, sir. That time you should deduct the TDS. If that day you didn't deduct, then that's a late deduction. Able to understand? Suppose you are liable to deduct TDS on credit time, and credit time you didn't deduct the TDS, then that's a late deduction. Are you clear? Now 192. What is this 192? Who is applicable? Employer. From the payment made to employee. Clear? Now remember 192, 192A, 194P, I mean 194P, no, let me not take it. 194BB, 194BA. Okay? You know, these sections, no, 194B, 194B, 194BB, 194BA. In all these 5 sections, recipient can be non-resident. Recipient can be non-resident. I will tell you certain section combinations throughout this chapter. Okay, in these cases recipient can be non-resident. Now how TDS under 192 will work? Very simple. You know, very simple. You know, you are an employer, right? Your other person is employee, right? Annual, how much is income from salary you can easily identify. Correct? As an employer, I can very much easily guess how much income my employee is earning in a year. Income from salary, I will predict. And let us assume 1,20,000 rupees is the tax amount employee has to bear totally. And I will divide it with 12 months. Every month 10,000 I will collect. This concept is called as averaging or average rate. We also call it as what? Average rate we can call. In 192, the TDS is deducted at what rate? The TDS is deducted at what rate? Average rate of tax, they will say. What is the rate? Average rate. What is the rate? Average rate. There is no specific number. How do I get the average rate? Very simple. Average rate, for example, my employee tax amount is 1.2 lakh. His total income in the year is 10 lakh. Average rate is 12%. Another employee, his income is 60,000. I mean, his tax is 60,000. His income is 8 lakhs. Some percentage I will get. That's the average rate. So for each employee, average rate will vary. Instead of that, the best way to calculate TDS is what? Estimate is total income. Estimate is tax liability by 12. Every month that much you should deduct. That's it. Able to understand? Now further, when you're deducting TDS on employee, ask him whether he has any other income or not. Ask him. If at all he says, sir, I have a house property loss, sir, I have a self-occupied property, house property loss. Ask him which regime. If at all he didn't tell about regime, no, I assume it's a default tax regime. If at all he tells about regime, I will consider that regime. Are you clear? If at all he didn't mention about his regime, I assume by default what regime? Default tax regime. That's why it's called default. The tax regime which is applicable by default. Are you clear? So now employee, he will say, sir, you are paying me salary 12 lakhs. But remember, wait, I have tuition fee for my son. I'm paying tuition fee. I'm paying LIC premium. I'm paying medical premium for my family. I'm paying so many other deductions. Oh, you have deductions, huh? Give me the proof. What proofs a company has to collect? For HRA. Suppose company is paying HRA to him and he want to claim HRA exemption. Exemption he can claim only when he pay rent. If at all he is not paying rent, he can't claim exemption. Details of owner I want. Name, address, PAN number of the landlord. If rent paid is more than 1 lakh per annum. Then suppose you are having LTC. You want to claim LTC benefit because I gave you LTC. You want to claim benefit. Give me evidence of travel expenditure. You want to claim interest on house property loan deduction. Give me the banker, lender details I want. If you want to claim chapter 6A, I want investment proofs. Employee must submit evidence for claims and deductions. Only when he submit evidence for claims and deductions, I will consider and I will compute his estimated total income accordingly, and I will compute tax liability and deduct it equal in the 12 months period. Are you clear? This is 192. Till date 192 was never tested because it's impractical to test also. Are you clear? 192A, next important section. 192A. Remember, in salary set of income, I told you RPF withdrawal. Sir, I'm an employee. I'm withdrawing from RPF. After 5 years, if I withdraw, fully exempt. If it is exempted, TDS question will not arise. Suppose I'm withdrawing within 5 years. Suppose I'm withdrawing within 5 years. For me, it is taxable, right? Now TDS mechanism will apply. Employer is now paying me TDS amount withdrawn by me, which is taxable. Since it's a taxable withdrawal, company has to deduct TDS at what rate? 10% on the taxable portion of the premature withdrawal. Taxable portion means what? Employer contribution, interest on employer contribution, interest on employee contribution. You withdraw the amount, 4 amounts will be there. Employer contribution, interest on that, interest on this. 4 amounts will be there. Employee contribution is not income. I paid, I'm getting it back. That's not income. Remaining 3 amounts, TDS will be deducted at 10%. That too, when the TDS will be deducted. TDS will be deducted if the aggregate payment is 50,000 rupees or more in a financial year. In a financial year, if the amount withdrawn from RPF, is 50,000 or more, TDS will be deducted. Now, when it should be deducted? At the time of payment. Are you clear? 192A is over. By the way, no TDS if the withdrawal is basically exempted. If at all withdrawal is exempted, no, TDS mechanism will not apply at all. Clear? Hello? Then 194P. Then we have 194P, which is also a TD pension related one. MNOP. Yeah, here it is there. 194P. You can come to page number 178 in our book. Okay. 194P. What is this? TDS on pension. TDS on pension for, I told you in the very beginning chapter, specified senior citizen. Specified senior citizen means what? His age is 75 years or more and must also be resident individual. Now what is this scenario here? Simple. I'm a specified senior 75 years and above guy, and I have one bank account with State Bank of India. Earlier I worked with one company and then retired. That company is paying me pension every month. That pension I get in that bank account, State Bank of India. And from that State Bank also I'm having some interest on fixed deposit. Do I have any other income? No other income I have. Yes or no? If I don't have any other income, and if I'm getting pension, and if I'm also getting interest amount from that bank, whether I get that or not, leave it. Interest I'm getting or not from that, I should not have income from any other bank. And if I give a declaration in writing to the State Bank of India, dear State Bank of India, with you I have a bank account, right? In that I'm getting pension, right? From you I'm getting some savings interest, FD interest, right? Except that I don't have any other income. If I give a declaration to State Bank of India, what State Bank of India will do, you know, they know how much amount I'm getting. Pension I'm getting monthly 50,000, 6 lakhs per annum minus standard deduction 75,000. If I intimate default tax regime, standard deduction 75,000 they will reduce, and balance it is 5,25,000 taxable plus interest income 1,75,000. Total 7 lakhs is my tax. So 7 lakhs is my income. Into they will apply slab limits, all that as per the regime, and then compute the tax. That tax they will deduct from my income, and then they will pay to the department fully. Full tax they will pay to the department. And guess what? What is the benefit I have here? I don't have to file IT return. The benefit I have is I don't have to file IT return. This is to help old age people who are receiving pension, who are receiving interest in only one bank account. They don't have any other income. So for them, this 194P mechanism is applicable. Are you clear? Banks have to educate old age people, and then they have to say that, sir, we will take care of your return filing, everything, sir. You just have to tell whether do you have any other income. So the banker, the person, senior citizen, no, he must give a declaration that they are not earning any other income except pension, except interest credited with the specified bank. What is a specified bank? It's a bank where my pension is getting credited, and it is a bank where in the same bank I'm having interest amount also. I don't have any other interest, any other income. Then only this is called as a specified bank. So the bank where my pension is coming and crediting. If it is State Bank of India, State Bank. If it is ICICI Bank, ICICI Bank. Able to understand? That's 194P. Easy or not? Now what is the rate of TDS? Array, here rate is not there. I have to compute total tax liability for you. I told you, right? Just like how slab rates and all we compute total tax. That's my applicable rate plus cess, depending upon the tax regime. Now, by the way, this 194P does not apply if at all your taxable income is not exceeding basic exemption limit. That's it. Obviously, if there is no, if your income is less than basic exemption, there is no TDS at all. There is no tax at all. So automatically 194P will not attract. That's it. 194P is over. 2A, P, 3 sections over. Easy or not? That's it. Yes, guys. Let's continue. Next section, combination. Just now we completed one combination, 192, 192A, 194P, where for the recipients the amount paid is taxable under salaries head of income. Am I right? Now we are going to discuss about one more section, combination. 193, 194A, 194, 194K. These two, they were dividends. These two related to interest. By the way, at the end of the day, payer is a company. Let us assume generally payer is a company or some other individual who is paying interest on borrowed loan, or who is paying dividend on amount invested. That's it. 193, interest on securities. What is it? Interest on securities. You know, right? Companies will issue bonds, companies will issue securities, debentures, all that, right? Now on those debentures, on those bonds, company will pay periodically interest, no? On that interest, the company has to deduct TDS under 193. Second one, 194A. 194A is what? A company borrowed public deposit. Yes or no? On that the company is paying interest. 194A is applicable. Or a bank is there. You have a FD with the bank. 194A is applicable. I borrowed a loan from my friend. I'm paying interest to him. 194A is applicable. Able to understand? Interest on borrowed loan. The loan can be in the form of public deposit. The loan can be in the form of a loan from a bank or FI. The loan can be in the form of a deposit from a customer. Anything it can be. Then 194, TDS on dividends, including deemed dividend. 194K, TDS on dividend paid to unit holders. TDS on dividend paid to unit holders. That's it. Now, first I will focus on 193. It's very simple, guys. 193. Yeah, look at 193. What is 193? It's an interest on securities. Who issue the securities? Government, non-government, company, whoever it is. Partnership firm, they won't issue securities. Individual won't issue securities, obviously. Yes or no? Then who is payer? Every person paying interest on securities. Who is paying? Resident. Remember, we have TDS sections only if they are resident. If at all recipient is a non-resident, TDS provisions we don't have, except salaries winnings. Except salary winnings provision, recipient, if it is a non-resident, we don't have a TDS mechanism itself. Okay, in our syllabus. In CA final, we have non-resident international taxation. There we will have the discussion. Clear? Now, payee. Who is the payee? Any resident. How much TDS? 10%. When? Amendment. Finance Act 2025 amendment. Okay. If aggregate amount is exceeding 10,000 during the previous year. If the aggregate amount is exceeding 10,000 during the previous year. Simple. I'm paying interest on debentures to my debenture holder. How much you're paying? 15,000 I'm paying per annum. That's it. 10%, 1,500 deduct. When you should deduct? Earlier of time of credit or time of payment. Remember, in all these 4 sections, the answer is time of credit or time of payment. What is the time of payment? Whichever is earlier. Whereas 192, 192A, 194P, only time of payment. Now look at. So credit. Understood? However, even though you are paying interest on securities, there are some circumstances where you don't have to deduct TDS. Okay, what are the circumstances where you don't have to deduct the TDS? You know, interest payable on securities owned by LIC, GIC and their subsidiaries or insurance companies. Simple. If at all I'm paying interest on security to insurance company, like in my company, insurance company bought debentures, to them I'm paying interest. No need to deduct TDS. LIC, GIC and their subsidiaries and any other insurance company, private insurers. If at all I'm paying interest on securities to insurance companies, I don't have to deduct TDS. Are you clear? Next up, if at all government is paying interest on securities, central government, state government is paying interest on securities. Alright, it's a government security. Then government is paying interest to you on securities. No need to deduct TDS. However, for 3 types of government securities, TDS still gets attracted if per annum payment is more than 10,000. Now look at 8% taxable bonds, 7.7% taxable bonds, floating rate bonds. Here name itself says taxable, so don't need to worry. If at all government is paying interest on taxable bonds, yes or no, they have to deduct TDS. Apart from taxable, floating rate savings bonds were there. If government is paying interest on floating rate savings bonds, on that if at all the annual interest, per annum interest is exceeding 10,000 rupees, TDS will attract. Are you clear? Now tell me, when I say 10,000 crossing, even here also 192A, 50,000 or more, right? You will deduct TDS on the extra amount or you will deduct TDS on the entire amount? On the entire amount. TDS limits are threshold limits. TDS limits are threshold limits, except 2 sections. 194Q, 194N. Cash withdrawals, 194Q for purchase of goods. In these 2 cases, it is slab limit. Rest all other TDS sections, it's a threshold limit. Threshold means what? If that amount crossed, no, on entire amount TDS rate will be applied. Able to understand? And TDS rate, no, we will always apply. The amounts were there, right? They're always per annum. These amounts are always to be counted per annum, not per incident, not per payment. Per annum we should consider. Understood everyone? Next look at. Next further, if at all interest is paid on national development bonds, no TDS. Interest is paid on national savings certificates, no TDS. Debentures issued by any authority or public sector company or corporate society. If a public sector company is paying interest on debentures, no TDS at all. Further, if debentures are paid, if at all interest is paid on notified bonds. What are notified bonds? PFC, Power Finance Corporation bonds, IRFC, Indian Railway Financial Corporation bonds, which are also listed under 54 EC. On that, if at all government is paying or any authority is paying or a public sector company is paying interest, then that is not liable for TDS. Debentures issued by any institution, authority, public sector company or corporate society as notified. Only these 2 were notified. If a public sector company is issuing debentures, these 2 bonds or debentures are issuing like these 2 schemes, then no TDS on that. Easy or not? So 193, simple. I'm paying interest on securities more than 10,000 a year. That's it. TDS will be applicable. Recipient, individual, company, firm, doesn't matter. Government securities, no need to deduct TDS. Yes or no? Except taxable bonds, floating rate bonds. National development bonds, no TDS. NSE bonds, no TDS. IRFC bonds, no TDS. Power Financial Corporation bonds, no TDS. That's it. 193 over, easy or not? Hello. Next 194. 194A ma. Next one is 194. Again, biggest amendment. 194A, biggest amendment. Just a minute. So 194A. As per 194A, here you are paying interest on. Here also you are paying interest, but it is not interest on security ma. Then which means what interest? It may be interest on deposits accepted by me. It may be interest on deposits, public deposits accepted by a company. It may be interest on deposits accepted by a bank, or it may be interest on loan taken by me. Simple. All interest expenditure other than interest on securities is coming under 194A. What is the threshold limit under 194A? By the way, what is the TDS rate? 10%. What is the TDS rate? 10%. Now, what is the threshold limit? Generally, the threshold limit is how much more? 10,000. If at all I'm paying any interest, no, per annum 10,000 crossed. That's it. I have to deduct TDS. Able to understand? I have to deduct TDS. Remember one point. All the TDS provisions are applicable only when the SSE is a businessman. Yes or no? Tell me, who will pay salary to whom? Business people only will pay salary. Any person, business people only will pay salary. Others, they will not pay salary, right? Generally, TDS provisions will not attract for personal expenses. Except one section, 194M, one section is there. Only their personal expenditure is also covered for TDS. If at all amount is paid for personal purposes, generally TDS mechanism will not apply. Remember that point. So TDS mechanism is applicable only for which SSEs? Business SSEs. Now here, before I discuss this, there is one section combination I want to discuss, which I already discussed at 40 subsection A 1A. 194A, 194C, 194H, I, J, R. In these five sections, this is interest other than interest on securities. C, contractors. H, commissioner brokerage. I, rent. J, professional fee, non-compete fee, technical fee, royalty, direct remuneration. R, perquisite. Perquisite in business ma. It's not salaried perquisite. It's a perquisite in PGBP ma. Okay, I'll discuss that. In these six sections, these six sections apply to every person other than individual and HUF. Other than individual and HUF. Only if the payer is anybody other than individual, other than HUF, then only these six sections are applicable. However, individual and HUF also, these sections are attracted if turnover in preceding financial year is more than 1 crore. If it is business, if it is profession, turnover not, gross receipts in preceding financial year is 50 lakh, then such a business individual, such a business HUF, they are also liable for these six sections. Otherwise, they are not liable for these six sections. Are you clear? Hello? Yes or no? So that's the limit. That's the limit. So if turnover in the preceding year is exceeding 1 crore, only then these six sections get attracted. If at all turnover in the last year is less than 1 crore for me, this year I have turnover 10, 20, 30 crore. Doesn't matter. Able to understand? These six sections will not apply to me, which means I don't have to worry about TDS on interest. I don't have to worry about TDS on interest. Now look at. So who is the payer? Who is the payer? Any person other than individual and HUF. Second, it may be individual and HUF where turnover is exceeding 1 crore in the preceding financial year, or gross receipts from profession is exceeding 50 lakh in the preceding financial year. To whom you are paying? Obviously resident. Obviously resident. We have only resident deductees. How much is the TDS? 10%. What is the rate of TDS? 10%. Until now, no change. Now look at the amendments. Any other payment you are paying, 10,000. This is also no amendment. Any interest you are paying per annum, 10,000 crossed, TDS 10% will attract. However, if the payer, look at, if the payer interest is paid by bank and cooperative bank, if at all interest is paid by banks, cooperative banks, nothing but banks, then per annum interest amount is 50. Earlier in your previous attempt, no, Jan attempt until Jan 26 attempt, no, it was 40,000. It was 40. Now increase it to 50. Are you clear? Suppose, no, I'm paying an interest. I'm a bank. I'm paying an interest to the SSE, to the recipient, to the depositor. If the depositor is a senior citizen, not a specified senior citizen, guys, be careful, senior citizen, 60 years or more, resident below. If the recipient is a resident and 60 years and above, 1 lakh. Earlier, no, this limit is 40k, this limit is 50k. Now the limit has been increased to 50k, 1 lakh. So do not even try to remember old limits. Are you clear? You will confuse. Simple. I'm paying interest to a depositor who is a normal citizen. If at all yearly interest crosses 40,000, simple, I paid 45,000, 4,500 TDS. Sir, I'm paying interest to a senior citizen. 1 lakh is a threshold limit. Per annum, if it is 1 lakh crossed, then TDS on the entire interest of 10% will be applicable. Are you clear? Same is the logic. If at all a post office is paying interest. If a post office is paying interest, simple. 50,000 threshold limit. Senior citizen, 1 lakh threshold limit. Earlier also for post office 40-50 limit is there, but now it is increased to 50 and then 1 lakh. Everyone? Yes or no? That's it. Now remember, there is no TDS. There is no TDS on interest on savings deposit with a banking company. When you are paying to banks, no. Sorry. If at all a deposit holder has a savings deposit with my bank and I'm paying interest on savings deposit, that amount is 50,000. No TDS. Savings interest is not liable for TDS, which means these amounts are only for which interest, ma? Time deposit. Time deposit means what? Interest on fixed deposit, interest on recurring deposit, RD. Both will constitute and both are liable for TDS. Further, no TDS on interest paid or credited by a firm to partners. Arey sir, you said TDS is applicable for firm to partners. A separate section is there for that. If a partnership firm is paying interest to partner, is TDS attracted? Yes, 194T is attracted. Are you clear? Further, this is the one point I bet many will not have clarity on this. Okay, I made this very simple and clear. Sir, TDS is not applicable on interest paid by cooperative societies. TDS is not applicable on interest paid by cooperative societies subject to some conditions. Very simple. Now, by the way, tell me, suppose I'm a cooperative society and I don't have a turnover. I don't have a turnover exceeding 50 crore. I don't have a turnover exceeding 50, means I'm a small cooperative society. I'm paying interest to member, no TDS. I'm paying interest to another society, no TDS. Interest paid by primary agriculture credit society, primary credit society, cooperative land mortgage bank, cooperative land development bank, no TDS. Interest paid by, savings interest paid by cooperative bank, no TDS. Do you understand? Sir, I am a cooperative society where turnover is exceeding 50 crore. Where turnover is exceeding 50 crore, you have to deduct TDS. If interest is exceeding 50,000 rupees per annum, and if at all you are paying it to somebody who is a senior citizen, 1 lakh if at all it is exceeding, you should deduct TDS. At what rate? 10%. Is cooperative society liable for TDS? Simple. Look at the turnover in the last year. More than 50 crore? That's it. 50,000, 1 lakh threshold limit. Is it less than 50 crore? Not exceeding 50 crore? No need to deduct TDS on interest paid to members, interest paid to society, interest paid by agriculture society, land development bank, land mortgage bank, interest paid on savings. No need to pay TDS. Are you clear? This is the point where many will have a confusion. Clear? Next. No TDS on interest paid by central government under this act. For example, you filed IT return, you have a refund. Department is paying you interest on IT refund. Interest on IT refund is taxable under income from other sources. No TDS at all. Clear? Next. No TDS on interest on zero coupon bonds. Why? We don't pay interest at all. Issue price 200 rupees. Maturity value 1200 rupees. After 10 years. Yes or no? So issue 200 rupees I got. I'm not paying interest first of all. Again at the time of maturity, I'm paying 1200 to him. For him capital gains attracted. Yes or no? So this is not treated as interest. Therefore no TDS on interest on zero coupon bonds. That's it. So take away summary point. TDS at 10% apply even if interest is credited or paid more than 10,000 by others. If at all interest is paid by banking companies, then 50,000 threshold. If the recipient is senior citizen, 1 lakh is the threshold. Correct? For individuals and HUFs, no, TDS will be attracted only if the turnover is exceeding in the previous year 1 crore. Business professional associates 50 lakh. Next. Now again, there is one more point regarding core banking solution point. What is a core banking solution? Now I have a time deposit with a bank. I have a time deposit with a bank. Now branch wise, do you count this 50,000 1 lakh kilometer? Bank wise will you count? Suppose no, I am a bank, I have 10,000 branches across India. State Bank of India has 23,000 branches across India. Okay, now in Chennai itself, State Bank of India has 100 branches. Now I cleverly what I did, you know, I have 1 crore money. If I keep 1 crore with one bank, you know, per annum interest is 7 lakhs they're paying me. 10% TDS 70,000 will attract to me. What I decided, you know, with every bank 2 lakhs I will deposit. State Bank of India, I went to 50 branches, 2 lakh I deposited. Now each branch is paying me 14,000 interest only per annum. Very cleverly I thought of escaping, but you know, State Bank of India has a core banking solution. Total bank put together, they paid me 7 lakhs. They got the data. They deduct TDS on me. That's it. So a bank, if core banking solution is there, aggregate amount of interest paid by them will be looked into. If at all there is no core banking solution, branch wise we will look into. That's it. 194A is completed. Easy or not? Major 193, 194A is only time taking. 194 TDS on dividends. 194K TDS on income from units. Both are dead easy. Look at 194. 194 now. 194. What is this section? TDS on dividends. TDS on dividends. Who has dividend will be paid by whom? Companies. So obviously who should deduct TDS on dividend? You know, nature of payment. What is 194? Nature of payment is dividend, including preference dividend, including deemed dividend, including interim dividend, whatever name you call dividend. That's it. What is it? Dividend. That's it. Now, to whom you are paying? Resident shareholder. How much TDS? 10%. What is the rate? When TDS has to be deducted? Sir, if the shareholder is an individual, then 10,000 per financial year is the limit. This is a new limit which is inserted. Which is a new limit which is inserted. Yes or no? That too, the amount must be paid by other than cash. If a company paying dividend to individual SSE by any mode other than cash exceeding 10,000 in a year, then on the entire amount 10% TDS will attract. This is a new amendment, 10,000. Sir, I'm paying to somebody else, sir, not individual. A firm is a shareholder, LLP is a shareholder, company is a shareholder, sir. No threshold. Even if you are paying 1,000 rupees to them, TDS at 10% will be attracted. Are you clear? Hello? Further, no TDS on dividends paid to. No TDS on dividends paid to shareholders who is holding nothing but who is having shareholders. Nothing but who are these shareholders? Basically, LIC is the shareholder, GIC is the shareholder, subsidiaries of GIC or any other insurer is the shareholder. You know, LIC is the biggest investor. LIC brand value 2 crores. LIC brand value 2 crores. Biggest investor in all the stock market, big companies, LIC will invest. LIC has investment in TCS, 20,000 crore worth of investment. In Reliance, some 40,000 crore worth of investment. You take any blue chip company, name it, LIC will have a share in that. 5% shareholding, 10% shareholding, LIC will have. So that's the level at which LIC controls in India. If LIC is entering into any company means that company share price will go up. That's how it will be. Fine. So if at all dividend is paid to LIC, dividend is paid to GIC, dividend is paid to subsidiaries of LIC, GIC, no TDS will attract. Are you clear? That is 194. Then we have 194K. You know, I'll derive some common conclusions later. Okay. 194K. First we'll discuss all the 4 sections. K. What is this? Income in respect of mutual fund. Okay. Of course, other than capital gains. Capital gains is not considered. It's only dividend in nature. Now I have SIP. You might have heard of SIPs. Yes or no? I purchased mutual fund units. Now they're paying me dividend every year. On that dividend, TDS will attract it again 10%. What is the threshold limit? Again 10,000 in a financial year, which is also Finance Act 2025 amendment. Earlier this limit used to be 5,000, but now they made it 10,000. Are you clear? Earlier of time of credit or time of payment. If you observe, the common point in these 4 sections is rate of TDS is 10%. The common point in these 4 sections is 190, 193, 194, 194A, 194K. In all these sections, rate of TDS is 10%. For this, threshold limit is what? 10,000. For this, 194, threshold limit is what? 10,000 for individual, 0 for others. And 194A, threshold is 10,000. If it is payer is any other person. Payer is a banking company, 50,000. 1 lakh if the payer is a banking company and recipient is a senior citizen. 194K, 10%, 10,000 only threshold. Everywhere common is 10,000. Rate of TDS is also common. Are you clear? Just observe that. Understood? In all these sections, one more common element is there. TDS to be deducted on date of credit, date of payment, whichever is earlier. That's it. 4 sections, 3 sections, 7 sections over. Understood? That's it. 2 minutes, we'll immediately go for next combination. Understood until now? Yes, yes, continue. Next section combination. Guys, next section combinations. Commission combination. Okay, what are the commission sections? 194D, 194G, 194H. 3 commission sections. 1, 194D, insurance agent commission. 194G, lottery agent commission. Any other commission or brokerage. Able to understand? In all these sections, the TDS rate right now is just 2%. This is the biggest amendment. The TDS rate is what? Just 2%. Okay. Now look at 194D, guys. 194D. What is 194D? Any person responsible for paying insurance commission. This person is paying commission on insurance business. Who is receiving the insurance commission? Agent. Agent could be a bank. Agent could be, a mutual fund company. Agent could be a normal insurance agent, individual, anybody. Payer is who is paying the commission? Insurance company is generally paying the commission, or another agent is paying the commission. Insurance company, they'll have an agent and sub-agents. Okay. Insurance company will pay commission to main agent. Again, main agent will pay commission to sub-agent. Insurance company, Tata AIG, agent, Axis Bank. Sub-agent, employee, one of the employee will be there probably. So through sub-agent, then customer, end customer, or insurance, Axis Bank agent, and then end customer directly. Anyway, now if at all commission is paid by one person on insurance business to another person, 194D gets attracted. What is the threshold limit? Aggregate amount if at all exceeding 20,000. In all these 3 sections, 20,000 is the threshold limit common. In all these 3 sections, what is the threshold limit common? 20. Old limit was 15,000. Old limits was 15,000. Now they made it 20,000. Suppose if the insurance commission paid per annum exceeding 20 on the entire amount, 2% TDS will apply. 2% TDS will apply if the recipient, whoever is receiving, if at all is a resident non-corporate, nothing but an individual, HUF, partnership firm, all that. Suppose if the recipient is, if the payee is a domestic company, rate of TDS is 10%. Only in 194D, company 10% logic is there. 194G, it is not there. 194H, it is not there. Able to understand? Now look at. What is the rate of TDS? 2%. If the SSE, if the recipient to whom I am paying commission is a non-corporate and resident person. If the person whom I am paying is a domestic company, 10%. Threshold limit 20,000. Next, 194G. 194G. Here who is paying? Its amount paid commission, remuneration on sale of lottery tickets. So the person is selling lottery tickets on my behalf and I am paying him remuneration for that. I am paying commission on that. Whether you call commission, whether you call remuneration, whether you call profit share, doesn't matter. Getting it? You are paying amount to a lottery agent who is distributing your lottery tickets. Now, what is the threshold limit in a year? 20,000. And what is the rate of TDS? 2%. That's it. Over. In all these 3 sections, TDS will be deducted at the time of credit, at the time of payment, whichever is earlier. Next, 194H, any other commission or brokerage. But remember, the moment when you see 194H, 6 sections combination, they are applicable for every person other than individual and HUF. Suppose if the payer is an individual or HUF, 194H attracts only if the business turnover in the last year exceeding 1 crore. In case of professional gross receipts exceeding 50 lakh. Look at what is the rate of TDS? 2%. Again, threshold limit is 20,000 or more. Are you clear? Easy. That's it. Yes or no? That's it. Then 194H does not include professional services. 194H does not apply on advertising payments. 194H does not apply for BSNL, MSNL when they are paying to public telephone booths. That and all outdated now, not required. Main provision 2%, threshold limit 20,000. Lottery 2%, threshold limit 20,000. Even on insurance commission 2%, threshold limit 20,000. But if the recipient insurance commission agent is a company, domestic company, 10% TDS. But threshold limit is common, 10,000 in a year. Easy or not? One more section combination is over. Right now we completed 10 TDS sections. 192, 192A, 194P, 193, 194, 194A, 194K. Yes or no? Then 194D, G, H. 10 sections we completed. Easy. Until now understood? Yes, guys. Next section combination. 194B, 194BB, 194BA. Okay. Next section combination is 194B, 194BB, 194BA. Okay. 194B. I think it's horse races or lottery. Yeah? Winnings. That's what. Winnings from lottery. Alla correct? Lottery. Whereas this is horse races or any other race. 194BA. Online games. Correct? In all these three sections, common rate of TDS 30%. Common rate of TDS is 30%. 194B, 194BB. The common threshold limit is 10,000 rupees. Am I right? Look at the new book. So 194B. 1 minute. Yeah, that's it. Now, in this, the biggest amendment is what you know? Earlier, 10,000 used to be per annum. But now 10,000 used to be now per transaction. This is the biggest amendment in these two sections. This is per transaction. Best example, I went to casino in Goa. Okay, I played one casino game. 20,000 lost. Leave it. Second game I played. 20,000 I won. On that 20,000 I won. 10,000 per transaction. More than that I won. 6,000 TDS they'll collect. Sir, wait, 20,000. Last 20,000 both set off. No, not permitted. Transaction wise, you won, pay TDS. You lost, you go and beg. Yes or no? Government is not bothered. Per transaction, if at all more than 10,000 per transaction, more than 10,000 you won, straight away 30% TDS has to be deducted. Yes or no? Now in 194B, 194BB, per transaction, in a single transaction 10,000. What is the rate of TDS? 30%. Simple. Am I right? Now, sir, online games. What is the rate of TDS? 30% only. But what is the threshold limit? No threshold limit is given. Here in online game, if at all you are paying any money on net winning, what is it? Net winning, or more, I think actually it called as net withdrawal. What is it also called as? Withdrawal amount. On the withdrawal amount, 30% TDS will apply. Sir, how do I calculate? For example, no, I have an account with Rummy, online Rummy platform. For example, I'm not encouraging in any way that one, and don't even do that. You do CA, you can earn better money. Yes or no? So look at online Rummy. First, no, I first paid 5,000 rupees to start games, to play games. I lost 1,000 rupees. Amount is debited. Second game I played, 4,000 credited. I won. Again, third game, 7,000 I lost. Okay. Now again, the fund balance is what? Net is 2,000 right now. Again, third game I played 5,000, and now I realized, oh no, let me not play, let me withdraw the money. Now, if you want to set, if you see the ledger, 9 plus 14, 14 minus 8, 6,000 rupees is the balance available, and now I withdraw on the 6,000. Into 30% will be debited. Are you clear? You can't withdraw entire 6,000, only 30%. Sorry. I'm sorry. 5,000 is not the winning. That is opening balance which I added. 9,000 is the winning. 8,000 is the loss. Total net winning is on 1,000 rupees only 30% TDS will be applied. Are you clear? Only suppose no, if at all I didn't withdraw, then as on 31st March they will say net winning how much. Net winning as on 31st March they will say, and 30% they will deduct. Suppose I'm withdrawing. When you're withdrawing, no, is there any winning portion they will see? If winning portion is there, then they will again cut the TDS. Able to understand. That's it. So that's how this section operates. For example, no, in all these three sections, one common point is there. In one of the MCQ in September 25 attempt or May 25 attempt, this MCQ was tested. For example, winning is in kind. Winning is non-monetary. Suppose you won a car. Okay, one bumper offer is there. You won a car. You bought a TV at some Vijay sales, for example. You bought a TV. Lucky dip was there. And luckily your name was selected, and you were getting one Maruti Baleno car, for example. Let's assume the car price is 10 lakh. How will you collect TDS? Sir, take tires and give me the car. No, right? So how will you collect? How will they collect TDS? If the entire winning is in kind, TDS have to pay. 10 lakhs is the value of the car. How much TDS have to pay? I should pay 3 lakhs directly to the department by challan, and that challan I should go and give it to the, you know, the person who is announced the winning to me. Yes or no? The shopkeeper. Then once the proof of challan payment is received by him, then he will let the car used. by me. Then only he will release the winning. Are you clear? Now that's what even here also it is given. You see here, if cash portion is insufficient to cover TDS, or cash is not at all there in the TDS, only kind, the payer must ensure tax is paid before release of winnings through challan. Are you clear? That's it. So this is what entire 194B, 194BB, 194BA mechanism, how it operates. Rate of TDS 30,000. 194B, 194BB, except online games, per transaction 10,000. If it crossed entire amount, 30% TDS. Online games, net winning 30%. If at all you are not withdrawing at the time of 31st March, 30% on the net winning portion. Are you clear? Even the net winning is only taxable under income from other sources. In case of online games, net winning is only taxable under income from other sources. Easy or not? Yes or no? Further, one important point. One more important point. It's actually TDS on online games, right? Okay. Yeah, correct only. It's only net winnings, ma. It's only net winnings, correct only. Remaining. In remaining, no, if at all casino I'm playing, they're maintaining one ledger. For example, for casino, winnings they are crediting, losses they are debiting. Debit you ignore. On the winnings, only winnings amount into 30%. Are you clear? Simple, ma. Now it is per transaction 10,000 crossed. Whereas online winning, there is no per transaction limit. Total net winning in the year only they will be considered, which is something better, relief. Clear? Maybe government is encouraging online games to discourage cash. Fine. So this is 194B series. Are you clear? Another 3 more sections we completed till now. 13 sections we completed in TDS. Are you clear? Now next we'll discuss 194I series. IA, IB. Okay, and LA. 4 sections. That 4 if at all we complete, 17 sections will be over. Next one. Next combination, guys. Next section combinations. Biggest amendment again here. 194I, biggest amendment. 194IA, 194IB. No, let me rewrite the order. 194IB, these two are rent related sections. 194IA, this is immovable property transaction. This is 194LA, this is also immovable property transaction. In this amendment is there. In this amendment is there. In this amendment is there. By the way, 194IB no amendment, ma. 194I amendment is there. 194LA amendment is there. What is this section? 194LA. In all these sections, okay, commonly the TDS is at the time of credit, at the time of payment, whichever is earlier. But LA alone is there, right? It is generally at the time of payment. Fine. Anyhow, so time of credit, time of payment, that is not that important also in exam. That they will not test generally. Look at the remain. This is what? TDS on rent. This is also TDS on rent. This is TDS on purchase of immovable property. This is TDS on compulsory acquisition of immovable property. Now, what is the rate of TDS? Now look at. So first I will cover IA and LA. Okay, first I will cover IA and LA. Look at 194IA. Sir, I am purchasing immovable property. Okay, you are purchasing immovable property, you are a buyer. Oh, seller is, you are paying money to the seller, right? Yes, I am paying money to the seller. Now, other than agricultural land, which agricultural land again? Rural land. Suppose I am purchasing immovable property and does not include rural agricultural land, okay? Urban land you are purchasing or house property you are purchasing, anything that you are purchasing, which is a capital asset immovable property. And if at all the consideration, if the consideration is less than 50 lakh, no TDS. Or if stamp duty value is less than 50 lakhs, then also no TDS. Suppose either consideration or stamp duty value, anyone is exceeding 50 lakh, anyone is exceeding 50 lakhs, automatically TDS at what rate is applicable? 1%. Now the first point, sir, SDV is there, right? What is the SDV? Which date I should take? Transfer date you should take. Registration date you should take here. There is no such concept called agreement to all that. Which rate you should take? Transfer rate you should take. Straight away you should take transfer date SDV. That much they will not test also, don't worry. Now, what is the rate of TDS? 1%. 1% of the consideration or SDV, whichever is higher. For example, actual consideration is 49 lakh. Stamp duty value is 51 lakh. 51 lakh. So automatically TDS is attracted because stamp duty value is more than 50. Now whichever is higher means 51. So 51 lakh into 1% is equal to how much, ma'am? 51,000 TDS will be attracted. Now when the TDS has to be at the time of credit or at the time of payment. In my books, when I show outstanding transaction or at the time when I'm actually paying, whichever is earlier. Hello, able to understand? Now for example, no, there are multiple sellers, there are multiple buyers, but it's only one land. Still land value only we should see. It's not seller point of view, it's not buyer point of view, it's the transaction value which is seen. Are you clear? So that's 194 IA. By the way, here you are paying amount for purchase of immovable property. Suppose if government is purchasing immovable property under compulsory acquisition, then this section IA will not attract. Which section is applicable? LA will attract. Which section is applicable? LA will attract. As per LA. As per LA, earlier no, threshold limit is what, 2.5 lakh, but now the threshold limit is 5 lakh. Amendment again. Threshold limit right now is what, ma? 5 lakh. Finance Act 2025 amendment. What is the rate of TDS? 10%. So any person, generally government undertaking, if at all they are buying immovable property, how are they buying? By coercion. That's what compulsory acquisition. Yes or no? They are buying under compulsory acquisition a house property, land, immovable, that's it. Anything, whatever it is. Yes or no? Except urban agricultural land here. Urban agricultural land, rural agricultural land, both are not covered. Why? Compulsory acquisition of urban agricultural land is exempt under 10 clause 37. Compulsory acquisition of urban agricultural land is exempt under 10 clause 37. Capital gains exemptions, you will see that. 10 clause 37, 54B 10 clause 37. Last 2 years SSE must use the land for agricultural purpose, either SSE or their parents. That point you would have seen, no? Exactly. No TDS on compensation paid for acquisition of agricultural land in India, whether it is rural or urban, it doesn't matter. But remember, if I am buying urban agricultural land, normally I am buying 194 IA gets attracted. If government is compulsorily acquiring agricultural land, no TDS at all. Any other property they are acquiring on compulsory acquisition, yes, TDS gets attracted. At what rate? 10% is the rate of TDS, which is unfair completely. That too, if the amount is exceeding 5 lakh rupee, if the amount is exceeding 5 lakh rupee, on the entire amount TDS gets attracted. Are you clear? Whereas IA, 50 lakh limit is there. Once 50 lakh is crossed, on the entire amount 1% TDS will be attracted. Are you clear? Yes or no? 10% is very huge amount, guys. So IA, LA, both are over. Clear? Now IA, IB, sorry, 194I, 194IB. Okay. Now 194I. Who is 194I? A payer, ma? Same. Just like we have seen in 194A, we have seen in 194H. Same. Any person other than individual and HUF. Suppose if it is individual or HUF, business SSE, turnover exceeding 1 crore. Professional exercise, turnover exceeding 50 lakh in last year, then only 194I will be attracted. Further, 194I, you are paying rent. What you are paying? Rent. Rent on what? You are paying rent on immovable property, or you are paying rent on machinery, or you are paying rent on furniture. You are paying rent on either immovable property or machinery or furniture. Suppose I am a mining company, I am hiring JCB machines, cranes, procliners, I'm hiring that. I have to pay a TDS on that. All these are machineries, so I have to pay rent on that. So if at all I'm paying rent on immovable property, rent on plant and machinery, rent on furniture, 194I gets attracted. Now what is the rate of TDS? Rate of TDS 2% in case if the renting is related to plant and machinery, and 10% TDS if at all furniture and immovable property were there. If at all furniture and immovable property you are renting, then 10% is the rate of TDS. Many students will wrongly calculate 2% for furniture also. No, furniture and immovable property 10% rate of TDS, whereas plant and machinery 2%. Further, remember threshold limit. What is the last year provision? 2,40,000 per annum. In the recent JAN exam that is tested in MCQ. Sorry, descriptive paper only. Yeah, MCQ it got tested. MCQ it got tested. Parking lot rent. In the recent JAN exam, 2,40,000 per annum is the threshold limit. But now per month threshold limit 50,000. If at all per month rent is, per month or part of a month rent, in a month you are paying more than 50,000 rent. That's it. On the entire amount, 10% TDS is applicable if it is an immovable property or furniture. On the entire amount, 2% TDS is applicable if it is a plant and machinery. Sir, I am taking from one company, I'm taking from one company, plant and machinery. I'm also taking one house on rent from them, sir. 50-50 separately should be seen. No, combine and then see. Are you clear? If both put together 50,000 crossed, suppose no, I'm paying 50,000 for plant and machinery. I'm paying 50,000 for furniture. I'm paying on rent. I'm paying rent on furniture 50. Both put together 1 lakh, section attracted. Now, how much TDS? On plant and machinery, 2%. On furniture, 10% I will apply the rate of TDS. Are you clear? Yes or no? Next, 194 IB. You know what? 194 IB is the section which is applicable for individuals and HUFs who are not covered above. Individual and HUF who is not covered. Which individuals are not covered in 194 I? An individual whose business turnover is less than 1 crore in the last year. An individual or HUF whose professional reserves are less than 50 lakh in last year. 194I will not attract for you, but IA is applicable. IB is applicable as per this. Again, threshold limit is what? Per month rent exceeding 50,000. Per month rent is exceeding 50,000. You should deduct directly 2% TDS. Directly you should deduct 2%. And remember, in 194 IB, only immovable property is covered. Furniture renting is not covered. Machinery renting is not covered. Only immovable property renting is covered. Hello. Until now, what is the rate of TDS under IB? 2%. When you should deduct the TDS? When the monthly rent is exceeding 50,000. You know, that is the threshold limit. When you will deduct, you know, not every month. You will deduct one time at the end of the year. You will deduct when, ma? At the end of the year. Last month of tenancy, look at the time of deduction. Time of deduction. You know, earlier of credit or payment, time of credit or time of payment of rent for last month of the financial year. March month rent you are paying, no? That time you will deduct. Or suppose, no, December month itself you are vacating. December month itself you are vacating. Then last month of tenancy, December month you should deduct the TDS. For example, look at, you know, there is a company, I am paying rent monthly, how much ma? 1 lakh rupee with a landlord. I took a rent for my house property only. Residential purpose only, I took it on rent. 1 lakh I am paying. 194 IB is applicable. And you know what? I'm a salaried employee. I'm not having a business at all. I'm just a salaried employee, where I don't have business. Still, 194 IB gets attracted. Now, 1 lakh I'm paying, you know, for 12 months, March month. Total, how much I'm paying? 12 lakh. Into, what is the rate of TDS? 2%, where the amount of TDS will be 24. March month 1 lakh I will pay, right? From that 24k I will reduce and balance amount I will pay to owner. This 24k I will remit to the department through one challan directly. Okay, here no, I don't have to file TDS return. I don't have to pay challan separately and then file a return separately. You know, there are 3 sections. 194 IB, 194 IA and 194 M. In these 3 sections, no, TAN number is not required. There is one more concept I'm telling you guys, 203A, TAN number. Generally, whenever you are deducting TDS or whenever you are collecting TCS, you should have a TAN number. Tax deduction collection account number. Okay? Tax deduction and collection account number. TAN number is mandatory. If at all you have to deduct TDS, if at all you have to collect TCS. Now, if at all I am deducting TDS under these 3 sections, TAN number is not required. You know, these are rare, very rare I will do it. Understood? So for that reason, TAN number is not required. And remember, these 3 sections are applicable whether you are a business SSC or non-business SSC, doesn't matter. Even you are a salaried employee, you are a senior citizen, you are whoever it is you might be. These 3 sections get attracted if those section conditions are attracted. Are you clear? TAN number is not required. That's it. Up to that alone is sufficient. Understood? Now look at. So do you understand this point? All of you? Further, you remember we have a section called 206AA, higher rate of TDS. What is it? Higher rate of TDS. 2 times the rate. 2 times the rate given in the section. TDS rate given in the section or 20%, whichever is higher. Okay. 2%, I mean, whatever the rate, TDS section rate or 20%, whichever is higher. Yes or no? So what is this? When this is applicable? If the recipient, I'm paying money, no? I'm asking him PAN number, sir, I have to deduct TDS and pay, sir. Please give me PAN number. He's saying, no, I don't want TDS. I will not give PAN number. Do whatever you want. Okay, I'll do one thing. I will deduct extra. I will deduct extra. How much I will deduct? 20%. Suppose, no, I'm a salaried employee paying rent. How much rent I'm paying, ma? 12 lakh I am paying. Understood? And I asked the owner, give me the PAN number. He is not giving me. Instead of 2%, I will deduct 20%. How much it will be? 2.4 lakh. Sir, March month rent I am paying only 1 lakh, sir. Now TDS 2.4. How should I? If at all you have to deduct at 20% rate and March month rent is not sufficient, then deduct only 1 lakh. Are you clear? That is what 194 IB talks about. Go and check IB. TDS will be deducted during the last month of tenancy. If at all landlord does not furnish, if at all the lessor does not give you PAN number, then deduct TDS at 20%. However, the TDS amount shall not exceed rent amount of the March month or rent amount of the last month of tenancy, as the case may be. That's it. 194 IB is also completed. Understood or not? Yes or no? Everywhere crystal clear, I'm telling you. If at all any of you are feeling little fast, please rewind it, please revise it. You will understand whatever I told. Just observe, then observe the book. You will get crystal clear clarity. Every dot I'm closing almost. Okay, but see, again, I can't discuss the section in depth. Already itself more than 1 hour it crossed, more than 1.5 hours it crossed almost. TDS section discussion itself. Until now, understood? Yes or no? That's it. Now we completed 4 more sections right now. 4 more combinations, which means 21 sections we completed almost. This one also put together 17, huh? Already 17 before only it came. No. This one is put together 17 sections. 17 sections we completed almost. Clear? That's it. Yes, let's continue the remaining sections. We completed almost 17 sections. Okay. Now we'll continue the remaining sections of the TDS. Now, if you observe, like just a minute. Yeah, clear? Yeah, we have in our entire classes, if you see, even our classes also, we have the shortest duration in all the course CA Inter entire both put together is 700 hours. Each group is 350 hours only. 3-4 charge if you apply 590 hours only, both the groups put together. We could achieve that only because we literally do not discuss anything in the class. Right now you saw the marathon. I hardly speak general stuff. That kind of productivity we maintain. And all our team, me or my other team members are also same level of expertise on the subject. You see me, like PGBP, 3 hours, 3.5 hours I spent. They see the kind of clarity we are able to give within the 3.5 hours. Every topic, every point we told almost. That is happening only because of the background work that we do. When doing material, you could see the material, you could understand that. Every subject, this is how we did. Where we decided, today we know very well in online, students cannot focus on so many hours. We have to bring the coaching hours to less duration. For that, what we need to do? We need to work a lot in the background. Let's work. Let's make wonderful materials. Let's make wonderful question banks and let us reduce coaching duration. Our coaching duration is 60% of market duration. If market average you take, if they spend 200 hours on subject, we take 120 hours only that subject. Yet, I bet we give more content than what they give. We give more content than what they give. Because you take any class anywhere, you will find a lot of time wastage in the class. Lots of other stuff, discussion, all that. See, that's inevitable. We have a strict policy. We always have, whenever we have our team discussion, we all uniformly agree one point. Let's not waste student time in the class. You want to motivate student, you want to tell about your life story, YouTube is there, you tell there. I also do the same. YouTube is there, I will tell whatever I want to speak, I'll speak there. Let me not discuss all my knowledge in the class. I'll talk on the YouTube. Subject, wonderfully you deliver. We give 100% concept, we give TYK, we give illustrations, we give MRP, MTP questions, RTP questions, past exam questions, MCQs. That much we discuss in this hours, shortest duration. It's only because we mentally fixed student has to experience the best in the shortest time possible. That's it. And that's why that ground level we have a lot of goodwill. Because what we tell, we deliver. You know what, even for May exams, any other academy you see, they are starting the classes or they are in between the classes. We delivered already. May 26 classes we already delivered. Maybe in FM and audit, some 3 chapters were pending. That also is over almost. Understood? Everybody else, by the time when they start work, we deliver it. So that's the kind of discipline that we maintain in our academy, in terms of class, in terms of material, in terms of everything. Only one vision. In the entire South India, last year we had total 17,000 students enrolled. Be it a book buyer, be it a course buyer, 17,000 students. But I want in 2026, 25,000 to 30,000 students should be using Shrestha resources directly after enrolling. It may be a book. Passively, indirectly, almost I can say 30-40,000 students will be using our resources. Indirectly, marathon, all that, if I count 80,000, 90,000 students will come easily. If at all I count marathon resources, all that. But I only count those who buy the book or those who buy the class. Any of it. So this students is approximately 17,000 students we have. Now we want to make an impact of 25 to 30,000 students we should have. And for that, we should give the best class, best books, or whatever resources, best guidance. At the end, they should pass. Ultimately, whenever we are discussing any topic, you can see this in my marathon itself. You can understand that. When I discuss anything, okay, students came, marathon, I have to cover, I'll leave it. No, that's not my attitude. They should understand. When they go and look at the question paper, they should always remember me. That's how I think of. Very simple. I want to make an impact. If I do not think like this, I will also take casually. You can say full day I'm able to take, right? That's only because of the motivation which I have, the vision which I have. Because everybody, when they're writing exam, when they after listen to my marathon, when they're writing in the exam, no, they should thank me. They should feel, bah, thank God I trusted the right person. If that feeling is there in the student at the end of the exam, after completing the exam, that's what a blessing for us. Obviously, our money will grow, our business will grow, our credibility will grow. All that, of course, they motivate us. But that alone cannot motivate us. What else motivates us? Beyond all this, that non-monetary satisfaction is there, right? Where the student, when they think of us, they'll have a respect towards us. That is what drives us the most. Of course, only respect will not be sufficient. Money is also required. Yes or no? So both. The objective is both. I'm openly agreeing. Any business people, objective is both. But only one if you expect, you can't survive in the business. Any one only if you focus on, you can't survive in the business. You have to focus on both. Give the best product, charge the best. No problem. That's it. We are able to give at that price all this quality contents with the free PDF, all that, because of the economies of scale. Because of the scale at which we do the business. So that's the reason we're able to provide at that price. Honestly, I tell you, because I know entire how market, everybody, how everywhere it works. You get the content top notch at Shrestha. The content, the book, everything you get top notch at Shrestha. On a scale of 10, if at all you rate us 9 or 9 or 10, if at all, definitely you go and try experience at other classes. You will definitely rate them 5 or 6 only if you compare with us. That's a benchmark which we created. And everywhere, that you see, we don't have any marketing team. We don't have any. We have only 5 employees. Non-teaching is only 5 employees, 6 employees. Everything with packing division, everything put together. Then teaching team, we have a team of 10 to 11 we have. That's it. We don't have any other. With this limited team, without marketing, we are able to do at this scale only because of one thing. This kind of ethics that we follow. You know what? I won't hire students. You'll never see me posting hiring students required. Never. I can easily pay 20,000 to each student because I'm already paying more than 35-40,000 to our staff. Minimum for anybody, minimum 35-40. There are some who are where I pay 60-70,000 also. Students I can get at 20K. But what happens if I hire student? Their life gets spoiled. When they see at an early age 20,000 per month, they stop focusing on their studies. And after 2-3 years working with me, where it's an academic work here, it's not an articles work, it's not a TDS, TCS, a GST, all that. For example, one student is saying all TDS related to provisions, all that. That learning you get only in audit form. So if at all I hire a student who, there are thousands of students who ask me, sir, I want to work in your academy, material work you give me, just to pay me 10,000. No, that's my policy. Because you may work right now. I'm paying you better money than anybody else in the market. You will love it. You will say that I'm very good. But after 5 years, when you go for interview, or when you want to clear CA and want to go for interview, you will think of unnecessarily I worked there. You may not even curse me because it's your decision. You may not curse me, but your inability will be proven after 3-4 years. Don't get tempted for all these jobs. Your aim is to become a CA. Your aim is to become CMA. Become that first. You can get 70-80,000 easily there. And once you enter into corporate, once you prove your skills, down the line 10 years down the line, vision, 1.5-2 crore you will earn. Down the line 10 years, that's the scale you can grow. My friend is there, 9th year or 10th year after he qualified. He's getting somewhere around 1.5 crore. In one company, he works below CFO. Later, he'll go to a CFO level, maybe after 2-3 years. His package will be 3 crore. There are many of my friends who are also there, where they are earning only 50-60 lakhs. Opportunities are there for everybody equally. It's how you work. So if you want to scale up at that level, you want to get an exposure at that level, you should only work in that dimension. You should not think about working here, working there, unless your family position is really not supportive. Okay, so as a policy, what we have is, I will not hire students at all. You will not see me any CA student working with Resta, because if at all is a student, I'll not take it. That's my rule, because he's asking 15,000 only, but still that's not my policy to take. This is the ethics which I follow. The reason, you have to live a wonderful life later, because if you work here, no academic works and all, you will not have a growth here. You will not have a growth. Yes or no? People will give growth only to who bring business. You want to become a teacher here, there again I have a different terms there. So different terms, I'll definitely, all wonderful growth you'll get, but that I will not tell you that easily. It's not that easy. You see me, right? That much hard work you have to do. So hard it is. Okay, you want to be number one in the industry, you have to work extreme hard. You want to be number one here, you have to work harder than everybody else. Simple logic. So the ladder is decided by how much amount of work you do. That's it. So don't get tempted for 10,000, 20,000 salaries if you really does not need it. If at all at your home they are saying you, no, our financial position is not supporting, you have to work. Try to convince your parents, Appa, you take a loan, some amount, somebody you take loan. Once I clear CA, 2 months salary I can repay the loan. That's how you have to think. You should never work for 10-15,000, because you're all doing CA course, you're all doing CMA course. Your earning capacity is more than 60-70,000 per month. The faster you finish, the faster your family responsibilities you can take up. You can clear all your debts at your home. Okay, that's it. This mantra you remember. Next. Which sections, ma? 17 sections are over, right? Now let's go back. 192 over, 192A over, 193 over, 194, 194A over, B, BB, BA over, 194C is there. I will keep it pending. 194C I'll come back at last, because that section I generally discuss at last. D over, DA over, no, 194 DA not over. Now let's discuss 194 DA. What is this 194 DA? I have an insurance policy with an insurance company. They are releasing money to me. Maybe maturity amount, or maybe in between surrender value. Anything it could be. A policy holder getting amount from insurance company on a release. They're releasing the money to me. And if that amount is more than 1 lakh, what is the threshold limit? 1 lakh, correct? Am I right? Yeah, if it is 1 lakh, 2% is the rate of TDS. What is the rate of TDS, ma? 2%. The moment it crosses 1 lakh, what is the rate of TDS? 2%. Straight away 2%. However, if the amount withdrawn from the insurance company, is exempt under 10 clause 10D. If the amount withdrawn is exempt under 10 clause 10D, then that amount is no TDS. If the exempted amount is being received, no TDS. Hello, everyone. Further, what is the rate of TDS? 2% on which amount? Not the amount withdrawn. On the taxable portion of withdrawal amount. What is it? Taxable portion. See, threshold limit 1 lakh we should check for withdrawal amount. You withdraw more than 1 lakh. Amount released is more than 1 lakh. Section attracts. How much TDS? 2%. On what? Taxable portion. On what, ma? Taxable portion. TDS itself will not apply if at all the amount released on insurance policy is exempt under 1010D. What are exempted policies? Under other sources, insurance taxation is there. Insurance policy withdrawal, maturity amount, insurance maturity amount taxation is there. There it is covered already. Able to understand? It is already covered under other sources, 1010D. Very simple. Every year I am paying premium, not exceeding 10%. Now maturity amount I received, fully exempt. Every year I'm paying premium for a policy which is taken by me before 1st April 2012, before 20%. I have taken a policy before 1st April 2003, no percentage. If the policy is taken on or after 1st April 2003 and per annum premium is not exceeding 20%, then that's an exempted insurance policy. Whatever maturity amount I'm receiving is fully exempt. If I'm taking policy on or after 1st April 2012, 10% of sum assured is the annual premium that you have to pay. If annual premium is not exceeding 10% and maturity amount whatever you are receiving is fully exempt. So if at all insurance maturity amount is exempt under 1010D, 194DA will not apply. If the maturity amount is 1010D, exemption does not apply, then TDS section will attract. That too, TDS when you should deduct only when the amount of withdrawal amount released is exceeding 1 lakh. That too, TDS is deducted on what amount? Taxable portion. What is the TDS is deducted on? Taxable portion. Sir, how much is taxable portion? Under other sources it is covered. Able to understand? That's 194DA. Clear? Next. So 194DA over. 194E not there. 194F, G completed, H completed, I completed. 194J is pending. Okay. 194C, 194J generally I discuss at last. 194C, 194J I will discuss at last. K is over, LA is over, M. Okay, no problem. M also we can cover, not an issue. Okay. No. M also let me not cover because M also 194CJM, that's a combination actually. Okay. M 194N I will cover now. Okay. N and Q I will cover now. N, Q, R, T. 4 more sections I will cover right now. What are the sections? 194N, 194Q, 194R, 194T. What is the link between these sections? No link at all. All this in all the previous, everywhere I discussed the combos. This also one combo where there is no link with any section for this combo. Understood? Remaining all other sections have a link with each other. A similarity is there. But here in these 4 sections, no similarity at all. For example, this is a TDS on cash withdrawal. This is a TDS on purchase of goods. This is a TDS on perquisite provided by in the course of business. This is a TDS on interest paid to partners. See, no link at all. Yes or no? What is the rate of TDS? 194N. Rate of TDS is 2%. What is it? 2% or 5% depends on the case. 194Q 0.1%, 194R 10%, 194T 10%. Okay, fine. Maybe in these 2 sections rate alone common. Clear? That's it. Now look at 194N. Can I go with it? So by the way, 194DM, just once I'll summarize. Taxable amount received under insurance policy. Which insurance policy? Life insurance. See, you don't get amount received. You don't get amount in medical policy. You don't get amount in accident insurance policy. You get amount in only in life insurance policy. And what is the rate of TDS? 2%. When this section gets attracted, if the taxable amount withdrawn is exceeding 1 lakh or more, yes or no? That too, 2% on the income portion only it will be computed. Only on income portion TDS will be computed. What is income portion? Under 56. We have in other sources 56 subsection 2 clause 13 I guess. Yeah, clause 13. Under that particular clause it is there. In other sources it will be covered. There you can see that. Next. No TDS if the amount received is exempt under 1010D. If it is an exempted insurance policy where the maturity amount is exempted, no TDS at all. Next. Now, what is the section that I thought? 194N. Correct? N. Look at 194N. What is this 194N? TDS on cash withdrawal. You can withdraw cash only with a bank or a post office. The bank can be a normal bank or a cooperative bank. Yes or no? When you should withdraw? Very simple. If at all I am withdrawing above 1 crore, up to 1 crore if you withdraw with a bank, up to 1 crore if you withdraw with a bank, no TDS at all. Above 1 crore, only above 1 crore if you are withdrawing, no 2%. That's a threshold limit. Sorry, that's a slab limit. I told you 194M, 194N, 194Q. No, 194N, 194Q. These 2 sections, the TDS mechanism operates like a slab limit. Are you clear? Sir, I am withdrawing cash, sir. I am withdrawing cash. I comes under others. Yeah, who is withdrawing cash? Either a society is withdrawing cash or others. Suppose I am an individual. I come under other category. So, if I withdraw cash up to 1 crore, no TDS. Above 1 crore, extra amount, 2% TDS is there. Above 1 crore, the TDS is how much more? 2%. That too when You are filing ITRs in the last 3 years. Any 1 year at least you file ITR, no problem. Happy if you are proving. Suppose no, all the 3 years last ITRs, no, you didn't file. You are not a filer. You are not an IT return filer. When you are withdrawing cash, no, banker will ask you. You go and try, they'll ask you, sir, have you filed ITR in the last 3 years? Sir, all the 3 years I didn't file, sir. At least 1 year you filed, sir. No, sir, all the 3 years I didn't file. Then up to 20 lakhs, no TDS, sir. But the moment if the withdrawal is crossing 20 lakh, up to 1 crore, it is 2%. And if you are withdrawing in that case above 1 crore, then it is 5%. Are you clear? Many a times this provision is tested in CA final itself. In Inter also it will be tested frequently. Clear? That's it. Look at once again. General threshold limit is what? 1 crore. If at all you are a regular filer of income tax return. Only above 1 crore if at all amount you are withdrawing, on the extra amount only 2% TDS will apply. Correct? For example, I am withdrawing 1.5 crore. Only 50 lakhs multiplied by 2%. How much is the TDS, ma? 1 lakh. Suppose I am not a regular filer, means last 3 years no return filed. Now this 1.5 crore will be split into 3 parts. 20 lakh, 80 lakh, 50 lakh. Why 20, 80, 50? First 20 lakh, 0. Next 80 lakh, 2%. Next above 1 crore, above 1 crore. See, this is up to 20. This is 20 lakh to 1 crore. This is more than 1 crore. This 1.5 crore I will split. This I will deduct TDS at 2%. 0, 1.6 lakh, 2.5 lakh. Total TDS how much, ma? 4.1 lakh. Easy or not? Suppose if the person withdrawing is a cooperative society. This is when if the person withdrawing is a company, individual, partnership firm, LLP, AOP, BOI. If the SSC who is withdrawing the money is a cooperative society, wherever 1 crore word is there, put 3 crore over. Wherever 1 crore word is there, put 3 crore. Look at this. If it is a cooperative society, 1, I will put 3. Here, 20 lakh to 3 crore. Above 3 crore. Percentages, everything is exactly same. So look at for normal SSCs. If the withdrawal person is a society, wherever 1 is there, put 3. 0 to 1. Normally 0 to 1. Regular filer, 0 to 1. No TDS. Above 1, 2 crore. If it is a society, 0 to 3 crore. No TDS. Above 3 crore, TDS. Sir, society did not file IT return in the last 3 years at all, sir. Then up to 20, 0. 20 lakh to 3 crore, 2%. Above 3 crore, 5%. Same logic. Able to understand? Easy or not? Now again, last 3 years, no, any 1 year you file IT return within due date, that's enough. All the 3 years you didn't file IT return at all, or you didn't file within due date in the all the last 3 years, automatically 194N gets attracted. Able to understand? Higher rate of TDS gets attracted. However, by the way, amount of withdrawal only at the time of payment. Only at the time of withdrawal only TDS will be deducted by the bank. Yes or no? Now, if at all the person withdrawing is a government, the person withdrawing is a bank, the person withdrawing is a correspondent, bank correspondence, if the person withdrawing is a ATM operator, if the person withdrawing is any other person notified by the government, no TDS under 194N. Easy. Yes or no? Next. So now one section 194N is completed. Easy or not? Then 194Q, one of the biggest amendment happened here. Actually, in this section it was not amended. There is a section called 206C subsection 1H. There is a section called 206C 1H. This is a TCS section on sale of goods. More than 50 lakh per annum. This section got removed now. This section got removed now. Okay, for May exams it is not there. Fine. What is this 194Q is all about? So MNOPQ, yeah, look at. What is this section? What are you paying under this section? You are paying for purchase of goods. How much you are paying per annum? Exceeding 50 lakhs in a year. Remember, this section also operates with a slab limit. This section also operates with a slab limit. Up to 50 lakh, no TDS. Beyond 50 lakh, extra amount is there, right? 0.1% of the sum paid. How much TDS you will deduct? 0.1% of the extra amount. Sir, I am purchasing from one vendor. I am purchasing from one vendor 1 crore, sir. Only on 50 lakh, 0.1% is equal to 5,000 rupees. I will deduct TDS. How much TDS I will deduct? Very nominal, 0.1. Suppose the seller, no, from whom I am purchasing the goods, he is not giving me PAN number. Then higher rate of TDS, which is 5% will apply, not 20%. Generally, if the other person do not furnish PAN number, 206A says 20% rate of TDS, higher rate of TDS. But here alone it is 5. Are you clear? Now look at next. Now, who is the person who is deducting TDS here? Buyer. Who is deducting here, ma? Buyer. Whose turnover? Now tell me, look at here. Here, deductor must be the person in the last financial year, his turnover should be exceeding 10 crore. Then only 194Q gets attracted. 194Q is attracted only if my last year turnover is exceeding 10 crore. Otherwise, this section is not attracted. Able to understand. Further, most important condition. Sir, I am purchasing goods. I am purchasing for more than 50 lakh. And I ask TDS from the seller. Instead of that, seller, he didn't allow me first TDS. And he is asking me TCS. And he is saying, hello, mister, forget about TDS. For me, TCS is applicable. I should collect TCS from you. I am selling goods, no? TCS section is saying me to collect TCS from you. You are saying TDS again. What is this? Seller is coming and arguing. Same transaction, TDS 194Q is applicable. 206G is applicable. Some TCS provision is applicable. If TCS provisions are attracted on the same transaction, TCS will apply. Which section will apply? TCS will apply. This section is not applicable if TCS under 206C is applicable. 206C. In this 206C, 1 subsection 1, 1F, 1C, 1G is there. Now 1F is or 1H is also there, but that 1H is removed. That's what you see. 206C 1H is removed. Are you clear? 206C 1H, subsection 1H is removed. Earlier, no, there used to be one complication here. Now happily removed. No need to worry. Simple. Sir, I am purchasing goods more than 50 lakh. Extra amount 0.1% you deduct. Suppose he says TCS is applicable on the transaction, then you withdraw. He will deduct TDS. Happy. Suppose for him TCS is not applicable on that. You are purchasing for more than 50 lakh. Extra amount whatever is there on the goods purchase, you must deduct TDS. By the way, 194Q is attracted for you only. Last year turnover is more than 10 crore. That's it. With this 194Q is also completed. Understood or not? Next section 194R. Am I right? 194R. So what is 194R? You know, for example, I'm having a distributorship. I'm a distributor. I'm a sole proprietor and acting as a distributor for Hindustan Unilever, one cosmetic. Okay, shampoo bottles. One shampoo which they manufacture, I'm a distributor. This year, I sold 5 crore worth of shampoos. Hindustan Unilever recognized my effort. They gave me 10 lakhs worth of car as a gift. Tell me, what is this here? It's a perquisite in my business. Under charging section 28 of PGBP, perquisite received by me during the course of business or profession is fully taxable under PGBP. Are you clear? Suppose I'm a doctor, a patient came, yes or no? For example, like we operated, the surgery was successful. Now the patient rewarded me 10 lakhs gift. That's a perquisite which I'm getting out of my profession. If at all I'm getting any gift or perquisite out of my business or profession, then the other person who is paying me this should deduct TDS. What rate he should deduct TDS? 10% of the aggregate value of perquisite. That too, if the perquisite value exceeds 20,000 in a financial year. If the perquisite given by me, Hindustan Unilever, I'm giving 10 lakhs worth of car, right? I should deduct TDS at 20% from the amount of perquisite that I am giving. If the perquisite is in kind, no, if at all the benefit is given in kind, no, I need to ensure that the recipient of the benefit should pay the tax by challan. Show me the challan as a proof. Then I will release the benefit if it is kind benefit. Are you clear? Yes or no? By the way, 194R is applicable under 6 section combination will come. 194R is applicable for which SSC? Any SSC other than individual and HUF. Suppose if you are an individual and HUF, you are giving perquisite, you are giving a benefit. If your last year turnover is more than 1 crore, this section is applicable. Or gross receipts in the last year profession is exceeding 50 lakh, then only this section is applicable. Like this, totally 6 sections have this kind of condition. ACHIJR. ACHIJR. Are you clear? That's it. Put in ChatGPT, it will give you some code. Okay, easy way to remember. That's it. So, when you should deduct the TDS? Before we give the benefit. Simple. At the time of credit, nothing but. Clear? This is 194R. Then we have one more section. Okay, 194T. What is 194T? Sorry, I told interest to partner. I'm sorry. Any amount paid by partnership firm to partner. What is this? Any amount paid by partnership firm to partner. 194T is applicable on TDS on remuneration to partner. Though in the heading I said remuneration, you see the actual salary, remuneration, commission, bonus, interest paid by firm to partner. Because he is a partner, he is getting this. If he is not a partner, he won't get this. Simple logic. That kind of payment. Because he is a partner, he'll get some money, right? What is that money? Remuneration, interest. If at all a firm is paying any remuneration or interest, very complication is there here, I will tell you. Interest, aggregate amount paid is more than 20,000, straight away 10% TDS will apply, whether the partner is a resident or non-resident. The firm can be a partnership firm or LLP. Biggest twist, you know. Suppose if a firm is paying remuneration to non-working partner, firm is paying remuneration to non-working partner, PGBP we saw. Will the firm get deduction? No. Is the taxable for partner? But the section is silent on this. Even if you are paying remuneration to non-working partner, you should deduct TDS. Sir, I'm paying interest to partner at 20% per annum, sir. 5 lakhs interest I'm paying, which is 20% per annum interest on capital. You know, the capital is 25 lakhs, sir. One partner gave a capital 25 lakh. I'm paying 20%, 5 lakhs interest per annum. On entire 5 lakhs, you should deduct TDS. On entire 5 lakhs, you should deduct. But actually, firm will get deduction only 12%. For partner also, how much is taxable in his? 12%. 3 lakhs only taxable for him. For me also 3 lakhs only deduction I will get. Still, it doesn't matter. TDS is deducted on payment made. That is what this section actually. On this, the CBDT has to give a notification basically. Okay. If they do not give notification, the section is very vague. This was a newly introduced section. CBDT has to give a notification, but now they won't give also. Why? New act came. No. In the new act corresponding section, what they mentioned, we need to see. Able to understand? That's it. This is one more mistake which they made. Now here you see, I mentioned that point clearly. In ICA book, nowhere you will find all this. 40B disallowances are irrelevant. Here, the amount paid is the criteria. That's it. 4 sections combination is completed. We are now still left with 3 more sections. That's it. What are the 3 more sections we are left with? C, J, M. That's it. Once these 3 completed, TDS is over. Then immediately TCS. Then advanced tax. That's it. Last 3 more sections that are left in TDS. Last 3 more sections that are left in TDS. Till now, how many sections we completed? 21. Now 3 more sections we have in the TDS. With me, which means total TDS sections we have in syllabus is 24. Apart from the TCS, we have 4 or 5 sections we have TCS. So where it will be 29. Apart from that, administrative sections will be some 3 or 4 minimum will be there. Actually, it's 10 were there, but not required 3 or 4. Which means 32, 33. Apart from that, advanced tax sections will be there, which will be some 7 or 8. Only one chapter, TDS, TCS, advanced tax put together, close to 40 sections. See the complexity. The weightage is 6 to 8 marks. The weightage is 6 to 8 marks. That's the reason I kept this under 1/4 category. Understood? When I'm making 3/4 and 1/4 analysis, I look at the complexity of the chapter. And accordingly, I kept it under 1/4. If this time, if you want to master on TDS, TCS, advanced tax, you have to spend at least 10 to 15 hours after the class. 10 to 15 hours after the class, you should spend the time. That 10 to 15 hours is enough to revise PGBP, which is a 15 marks compulsory question. So that's how I calculate weightage. Clear? But MCQs can come. For that reason, at least watch this marathon thrice and 4 times and then go back and then practice that. At least MCQs you can solve. Okay? Next. Look at last 3 sections, 194C, 194J, 194M. First I will cover 194J. 194J, again biggest amendment. What amendment? By the way, in 194J, what is the rate of TDS? 2% one scenario, 10% another scenario. Okay, what is the rate of TDS? By the way, under 194J, what are the payments covered? You know, in 194J, biggest twist is what, you know? 194J is applicable for whom again? It is applicable for any person other than individual and HUF. First point, correct? Now, individual and HUF, it is applicable only if business turnover is more than 1 crore, profession receipts are more than 50 lakh. And what are the payments covered under 194J? 5 types of payments are covered. What are they? fees for professional service, fees for technical service, royalty, non-compete fee, director remuneration. Further, if at all the payer is a individual and HUF, if the payer is individual and HUF, turnover more than 1 crore, receipts more than 50 lakhs, then two payments only applicable for them. Fees for professional service, fees for technical service. Sir, individual is paying royalty, sir. Individual is paying non-compete fee, sir. Individual paying direct remuneration concept will not apply. Yes or no? Sir, I'm an individual, sir. I'm paying royalty. I'm an individual, sir. I'm paying non-compete fee. Will 194J attracts? No. No, straight away no. Because no, that's a loophole in the section. In Jan 25 attempt, they have asked this question. In MCQ or theory question, they have asked this question. Okay. Suppose an individual paying royalty. They give the data. Individual paid royalty. Last year turnover more than 1 crore. Many students will straight away apply 194J. Wrong. Because in 194J, if the payer is individual or HUF, only two payments were covered for them. Fees for professional service, fees for technical service. Sir, the payer is anybody else, then 5 payments are covered. What is the threshold limit? The threshold limit is 50K, 50K, 50,000, 50,000, 0. Earlier the threshold limit is 30,000 per annum. Right now the threshold limit is 50,000 per annum. Even, sir, what about individual HUF? For them also the same, 50K, 50K threshold limit. Are you clear? Sir, I'm a company. I hired one CA. To him I'm paying 50,000 professional service. To him I'm paying royalty also 50,000. Both put together 1 lakh I'm paying. Should I deduct TDS? No. No. Because fees for professional service separate 50,000 is there. Fees for royalty separate 50,000 is there. So these are the limits which we need to apply separately. You should not combine the limit and then see for a particular person. For each payee, for each recipient, you should apply this limit separately. Are you clear? Director remuneration. I'm paying to director 20,000 only, sir. Should I deduct TDS? Yes. How much TDS you should deduct? Now look at TDS you deduct. Professional service 10% TDS. Technical service 2% TDS. Royalty 10%. Non-compete fee 10%. Director remuneration 10%. This is the TDS. However, if at all the royalty is paid for, if the royalty is paid for cinemas, if at all royalty is paid by an exhibitor to producer, exhibitor to distributor for exhibition of cinematographic films, 2% TDS. Royalty on cinemas, related royalty. Royalty who will pay to whom? Movie theater owner will pay to distributor, or movie theater owner will pay to producer, or distributor will pay to producer. Royalty on cinematographic film, that is called share. Some share of the ticket no will go to the producer. Yes or no? That's it. So that's royalty. On that royalty, what is it? What is the TDS? 2%. Further, I'm paying some technical service or professional service or something. Okay, I'm paying that fees. But recipient is who, you know? A person engaged in business of call center. If the recipient is engaged in the business of call center, then again TDS is 2%. Then again the TDS is 2%. Are you clear? That call center point is not that important. Leave it. This point you understood, everybody. This point you understood, everybody. Further, 194J will not attract. 194J will not attract on personal expenditure. It is not applicable on personal expenditure. For example, sir, what do you mean by professional service, sir? Professional service. Professions means what? Notified professions. Legal, medical, accountancy. Yes or no? Company secretary, information technology, interior designer, film artist, sports persons. All that were covered. Sports persons are also covered under 194J. So if at all you are paying any fees to them, professional fee, 194J gets attracted. Suppose, I paid, for example, I underwent a surgery with a doctor. Medical, no. I paid 5 lakhs bypass surgery. Let us assume. Yes or no? One SSC paid 5 lakh rupee to the doctor for bypass surgery. Payment 5 lakh, more than 50. 194J gets attracted. No, it's a personal expenditure. It doesn't matter. Personal expenditure, TDS provision under 194J will not attract. Everyone understood or not? Now, in that section, you will have definitions for 194. What is professional service? What is technical service? All that definitions and meanings were there, ma. Look at that. In the book, we have crystal clearly given. Any person, all 5 types of payment. FTBS, FTS, NCF, royalty, DR. Individuals in HUF, only 2 types of payments. Fees for professional, fees for technical. Remember this, okay? Look at who is the payer, individual. Look at what is the payment they made. Look at what is the section. Apply the combination carefully. Now, what is the threshold limit? All types of payments, 50,000, 50,000, 50,000, 50,000 separately. However, for direct termination, no threshold. What is the rate of TDS? 10. But for technical services and cinematography film, 2%. Further, if the pay means the person whom we are paying, no royalty we are paying him. Technical service we are paying him. Non-compete we are paying him. If at all they are engaged in business of call center, don't deduct TDS at 10%, direct only at 2%. That's it. Personal expenses, TDS, if at all any payment made exclusively for personal purpose, no TDS at all. For example, in the Jan 25 or some exam, no, they asked this question. Now, a CA is making payment to one CA who is teaching his son classes. Okay. Now, TDS applicable. He is also chartered accountant. He is teaching for his son. Okay. Now, he paid 1 lakh rupee. Now, payment of coaching fee for my son is a personal expenditure, not a business expenditure. Therefore, no TDS. That's it. That's how level the questions can be asked for. 194J over. Easy or not? Hello? Then now, 194C. Then now, 194C. 194C. What is this section? 194C. TDS on contracts. Yeah, 194C. TDS on payment to contractors or subcontractors. You know what? This section I call it as a residuary section. Basically, we can call this section as a residuary section. Sir, I made one payment. There is no other section that is applicable to me. You have to be very careful. Is 194C attracted? Check it carefully. I'm making payment for repairs and maintenance. It's called work. I'm making payment for AC maintenance. It's called work. I'm making payment for, some service, job work service, where I supply the material. He has to just do painting and then send me back. Work. It will come under work. Here, TDS is applicable on service, contract of work. Here, TDS is applicable on contract of work. Don't say works contract. Works contract is different. Contract of work is different. Contract for work. Works contract means GST law you have. That's a different. Works contract is covered here. Technically speaking, that is also covered here. Construction contract also covered here. TDS for carrying out a work. Understood? For example, I want to construct a building. I buy all the materials, cement, bricks, everything I'll buy. All plastering, everything, ceiling, everything I'll buy. I hired one construction builder. And I told him, please construct me the building and give me. For that, he's charging a fees for constructing the building. I have to pay whatever amount I'm paying, 194C gets attracted. I hired one, I had a contract with one transporter, where I told him early morning you have to pick up all my employees and then drop at my office at the company IT park. So I had a contract with some 5 big bus operators. Every operator will supply 10 buses to me, 50 buses. What is the duty? I will give address of each and every employee. So in that route, bus has to come. So 50 buses I'm running. Let us assume one supplier is there. Transportation of passengers. Okay. I am paying bulk amount for transportation of passengers. Or I'm paying freight charges to one transporter for carriage of goods. Look at the works contract definition. What are all covered here? Carriage of goods or passenger. Catering. Manufacturing or supplying a product. You are manufacturing or supplying a product based on customer specification using the material supplied by the customer. For example, you see goat notes you are using, right? Entire PDF I will send to the vendor. Okay? Vendor only will buy the paper. He will only buy the cover page. He will only print. He will only bind it. He will only pack it and then send me. Here, did I supply any material? Zero. I didn't supply any material. I supplied PDF. That's a different thing. Material means raw material. Sir, material you only supplied. No, material means what? Raw material. Did I supply any raw material here? No. 194C will not apply. Suppose I supplied paper. I supplied entire binding material, everything. Yes or no? Material entire I supplied. But I don't have printer. Printing alone, you do it and then send me. Now for that printing, he is charging me. Able to understand? For the printing he is charging me. That's a work. That is liable for TDS. Suppose you go to a tailor. He only bought the cloth. For example, you go to some showroom. They only buy the cloth, they take measurements from you, they stitch it and then give it to you. It's a sale of product. It's not a work. You give the cloth, you tell the measurements, you tell the specifications, everything, and then they just stitch it and then give it to you. Work. 194C is applicable on what? Work. If they're carrying out any work only, it does not involve sale of product, then only 194C applies. If at all it's a sale of product, 194C will not attract. 194Q will attract, or TCS provisions will attract. Understood? That's it. Or if at all you are doing broadcasting or telecasting, including production of program, for example, I want to run an ad in the TV. For that, no, I contacted one ad agency. I told them, sir, I want an ad. Okay, first you should design the ad. I will tell what specifications I want in the ad. They need to design the ad. They should contact with the television operator, broadcast radio operators, all that. And after they design the ad, they need to telecast also. Here, they are not just telecasting or broadcasting. They are designing the ad and then telecasting and broadcasting. Work is involved here. TDS under 194C attracts. Simple. If I'm just giving you one duty, in that some work you need to carry out and then do it, then that's the work. If there is no work involved, I will design the ad. I will design entire, I will design the ad, I will produce the ad, I will actress, everything I will hire, and I finally made the ad. I went and gave the CD or pen drive to the TV operator. Sir, just pub, at so and so time slot, no, you play this in the advertisement. Here there is no work carried out by the TV operator. This does not involve any work. Therefore, no TDS under 194C. Are you clear? So 194C, do you understand? So for example, no, you are manufacturing. Suppose you are manufacturing and supplying a product based on customer specification using materials purchased from others. Customer did not supply any material. He just ordered me books. Shrestha books he ordered me to print. I buy raw material everywhere else. I just take his PDF and then print it. That's a sale of goods. 194Q will apply. So when I am paying for books payment no for them, 194Q I should check. Able to understand. 194Q gets attracted only when my last year turnover is more than 10 crore. That's it. Clear everybody? Next. Then if at all you are making payment for professional services also, 194C will not attract. Now 194C, when it will attract, we understood. What nature of payment covered, we understood. What are all covered? Advertising is covered. Supply of labor for carrying out work. You're just supplying manpower. You're supplying labor for carrying out. You see ATM guards, no, all of them will wear some common uniform, blue color. Now that ATM guards, who supplied them? One vendor will be there, who will hire maids, all that. And whichever company, you see shopping mall, everybody wear uniforms. They are not employed by shopping mall directly. They were employed by contractor. Able to understand? Shopping mall will pay monthly some amount to the contractor for supply of manpower. So that is liable for 194C. Now it's a meaning of work. 194C. The amount is for work. Carrying out work by the contractor or subcontractor. Now when TDS gets attracted, simple, TDS gets attracted if single payment exceeds 30. Suppose no, single payment is 20,000 only, but in the full year I paid multiple times where aggregate payment is exceeding 1 lakh. If aggregate payment is exceeding 1 lakh, then on the entire amount you should deduct TDS. What rate? 1% TDS if the contractor is individual or HUF. If the contractor is a firm, company, AOP, BOI, the rate of TDS is 2%. 1% if the contractor is individual or HUF. 2% if the contractor is anybody else. Tell me, when we should deduct the TDS? Single payment is exceeding 30,000 for carrying out work, or multiple payments you made in the year, all put together 1 lakh cross, then also this section is applicable. That time what you will do, for example, 20K I paid first month, second month 20K, third month 20K, fourth month 20K, fifth month 20K, all put together 1 lakh only. Each payment is not exceeding 30, no TDS. All put together only just 1 lakh, no TDS. Next time I am paying one more 20 in the 6th month. 6th month I am paying maintenance charge of another 20. 194C gets attracted. Till now how much you paid, ma? 1.2 lakh. Into what is the rate of TDS? 1%, 1,200 if the contractor is individual. 2% if the contractor is not individual and HF, 2,400. From this amount you deduct that 1,200. From this amount you will deduct the 2,400 and pay the balance amount. That's it. 194C over. Do you understand? Now the last section, 194M. The last section is what? 194M. Here, what are you making payment, you know? You are paying for work only, or you are paying for professional fee or technical fee, or you are paying, or you may be paying for royalty, you may be paying for non-compete fee. Mainly here it is what is covered is professional fee only covered. Mainly here what is covered, ma? Professional fee is only covered. 194M. Third one, you are paying commission or brokerage. Sir, for works contract 94C is there. For P 194C. For professional fee 194J is there. For commission or brokerage 194H is there. Then why 194M is talking about these three amounts again? Because 194C, 194J, 194H are not applicable to individual and HUF whose turnover is less than or equal to 1 crore, whose gross receipts are less than or equal to 50 lakh. For them it is not applicable. That too, these sections do not apply for personal expenses. 194C is not applicable for personal expense. 194J is not applicable for personal expense. 194H is also not applicable for personal related commission. A marriage broker fixed a marriage, and this guy is getting a dowry of 2 crore. That marriage broker condition 1% of the dowry commission. That's how it looks. That's how they operate. That's how they operate. Now tell me, here it's a marriage related work. TDS section will not apply under 194C. Are you getting it? Sorry, 194H will not attract there. Commission and brokerage. Understood? So personal expenses 194C, JH will not attract. Sorry sir, it's a business expenditure only. But my turnover last year is less than 1 crore. Last year my professional receipts are less than 50 lakh. Automatically these three sections again was not attracted. But I am paying work amount, you know, professional fee or commission or brokerage. Huge amount I am paying. How much, you know? More than 50 lakh. How much I'm paying? More than 50 lakh I'm paying. Very huge amount, or a high value transaction, guys. So department found, no, there must be TDS mechanism there also. So they brought 194M. Accordingly, as per 194M, what is the rate of TDS? Just 2%. What is it? 2% you should deduct. When? If the aggregate payment in a year to an individual, to a person, if the recipient can be anybody, total payment made in that year is exceeding 50 lakh. Sir, to the same person I'm paying work money, sir. I'm paying professional fee, sir. Same person I'm paying commission, sir. All the three put together, you should see 50 lakh limit. It's not contract fee 50 lakh. It's not professional fee 50 lakh separate. It's not commissioner brokerage 50 lakh separate. All the three put together to a single person you are paying. All the three put together more than 50 lakh you are paying. TDS at 2% you have to deduct. On which amount? Is it slab limit or threshold limit? Threshold. Threshold means entire amount you have to deduct TDS. On the entire amount you have to deduct. Remember, there are only two sections where slab operation will be there. 194N cash withdrawal, 194Q purchase of goods. Only these two sections slab mechanism works. Rest all other TDS mechanism, TDS sections, 24 TDS sections were there. Except these two, remaining 22 TDS sections that are there in our CA Inter syllabus. Threshold limit. Threshold means what? In the section one amount they will tell. If the amount crossed, on the entire amount it is. Threshold. Threshold we call it as. Threshold means what? That is the level up to which I will not apply the law. Once it crosses, I will apply the law fully. That's called threshold limit. Are you clear? That's it. So this is 194M. Look at 194M. So if you are paying, suppose I'm paying to doctor a surgery related fee, where surgery cost, hospital bill entirely 70 lakhs it came. I should deduct TDS under 194M. Sir, it's a personal expenditure. No, you will not have a TAN number, TDS written, all that. Not required. For IA, IP, M, for these three sections, TAN number is not required. For these three sections, no, TAN number is not required. Now look at 194M. Payment for works contract, payment of professional fee, payment of commission or brokerage. So now you are paying all these three, but you are not covered under CHJ, or you are making payment for personal purpose, and the amount exceeding is 50 lakh in a year. Therefore, the TDS is what rate? 2%. Yes or no? Suppose no, if at all already CHJ is applicable on that payment, then this section will not apply. This section will apply for which payment? Those payments which are covered under CHJ, but CHJ section will not apply there. That time M possibility is there, and TAN number provisions do not apply here. You don't have to have a TAN number. Remember, any section under TDS chapter, TCS chapter, if you have to liable for TDS and TCS, you must have a TAN number. Without TAN number, you should not deduct. That's the most important, because using TAN number only you file TDS statement. Using TAN number only you will pay TDS challans, all that. But that TAN number requirement do not apply for 194M, 194IA, 194IB sections. You see the combinations, how many combinations we have? Able to understand? That's it. 194M is also over. With this, TDS sections are over. Clear? Let's begin TCS ma. Let's begin TCS provisions. Major amendments were there again in TCS. Main amendments were there again. Under this rate of TCS, timber related rate of TCS has been changed. Okay. Then TCS under 206C1F, sale of motor vehicle and notified goods were there, right? Notified goods, now they notified. Then 1G, LRS overseas tour package, that was again changed. And the same thing is copied in the new Income Tax Act, and that was again changed. And you know what? 206C1G, overseas tour package and liberalized remittances scheme. This was amended in 23 first. It was amended in 2024 Finance Act number 1. It was amended in 2024 Finance Act number 2. It was amended in 2025 Finance Act. Now in Finance Act 2026 also it was amended. This is the only section I saw past 3 years regularly they are amending it. They themselves does not have clarity on this. So they are amending every time. Now look at simple sections ma, not a big deal. Now first 206C1 subsection 1. What is this? Suppose I'm a seller. TCS provisions are applicable for sellers ma. TDS provisions are applicable for buyers and service receivers. TCS provisions are applicable for service providers and sellers. Nothing but sellers. Sir, I am selling the following goods. Specified goods I am selling. What are the goods I am selling? Liquor, tendu leaves, timber, any other forest to produce. Timber or any forest to produce. Okay. And so here, other than tendu leaves ma. If it is tendu leaves, this rate is applicable. Understand that. Okay. Then scrap. Then minerals. If at all I am selling these products. Minerals means which minerals again? Coal, lignite, iron ore. Only these 3 minerals if at all I am selling. Or if I am selling scrap, timber, tendu leaves and alcoholic liquor, or if I am selling any forest to produce. What is forest to produce? You can refer ICS study material for meaning. Not required, leave it. You don't have to worry. What is the rate of TCS? Liquor 1%, scrap minerals 1%, timber 2%, whereas tendu leaves 5%. I have never seen all this in my life. Okay, fine. Anyhow, liquor is there, right? Don't think that when you go and buy in the liquor shop they'll collect TCS. Not that one. Look at who is the seller. Seller should be who? Who is the seller? Same. We have seen 6 sections. TCS sections under 206C1 and 1F. Seller means the following person, any person other than individual. In case of individual and HUF, turnover exceeding 1 crore, gross is exceeding 50 lakhs. Then only TCS section under 1F will apply. What is 1F? We have not yet seen. 1F we have not yet seen. Yes or no? Who is a buyer? Buyer is a person. If at all you are buying for personal consumption. Able to understand? If you are buying for personal consumption. Suppose so many people who buy alcohol, personal consumption, TCS will not attract. Clear? Then, if the buyer is a public sector company, buyer is a government or high commission or embassy or consulate, if they are buying timber, tendu leaves, all that forest produce, TCS will not apply. Clear? Hello? Next, look at 206C1C. 206C1C. In the recent exam, this was tested as a 2 marks MCQ. In the recent Jan exam, it was tested. Now, what is this? You are paying, you are a seller. You are allotting a parking lot. You are allotting a parking lot or a toll plaza or a mine or quarry. You are allotting mine. See, mineral is different, mine is different. So, I am a seller, I am a government where I am allotting parking lot to somebody, or I am allotting toll plaza to somebody, I am allotting a mine or quarry to somebody. What is the rate of TDS? Sorry, what is the rate of TCS? 2%. However, if the person who is auctioning toll plaza, if at all he is a public sector undertaking, if the customer is PSU, no TCS. If the customer is PSU, no TCS. Yes or no? Now look at here, at the time of receipt is there, right? at the time of receipt or at the time of debit, whichever is earlier. Debit is also there here, just add that word at the time of receiving the money or at the time of debit in my books. See, TDS, no, payment and credit. TDS, buyer will pay, right? For buyer it's an expenditure, right? For the buyer, he will credit the liability, no? So date of credit, date of payment. Whereas for seller, he has to receive it, no? Debit or receipt, whichever is earlier. Understood or not? Now look at next, third one, 1F. What is this 1F is about? You are selling motor vehicle or you are selling notified goods. You are selling motor vehicles, ma. Sale of motor vehicles for consideration exceeding 10 lakh. Consideration exceeding 10 lakh. What is 10 lakh? X showroom price, ma. What is that? X showroom price. On road price is different. X showroom price is different. X showroom price is the price which is inclusive of GST. And one important point I'll tell you. TCS provisions, you consider on the sale value, right? Sale value means excluding GST or including GST? Including GST. TDS, excluding GST. When you're paying rent, GST is there in that. GST you keep aside. On the rent amount only TDS has to be applied. If at all you are paying any amount on which TDS provisions attract, excluding GST you should deduct. Whereas TCS, invoice value, TCS will be counted. TCS is counted on the invoice value, inclusive of GST. Hello, everyone? Yes. Now, sir, I'm selling motor vehicle or I'm selling notified goods, sir. If at all the sale value, invoice value is exceeding 10 lakh rupee, invoice value is exceeding 10 lakh rupee, 1% TCS I have to collect. How much I have to collect? 1%. Now, notified goods, they notified, ma. Now they notified. What are the goods notified? Watch. There are many brands, Rolex, all that brands, you know, Patek Philippe. There are so many international brand watches where the watch cost is 10 crore, 20 crore like that. TCS is applicable. Art pieces, boats, helicopter, sunglasses, bags, handbags, Dio, Louis Vuitton, all this were there, na? Shoes, sportswear, equipment, home theater system, horse, for horse racing in a racing club or horse for polo. Whatever it is, you are selling horses, you are selling all this, you are selling collectibles like coins, handbags, all this. If at all per article, it is counted per article exceeding 10 lakh, TCS at 1% will apply. What is the TCS? 1% will apply at TCS, because these are all coming under luxury goods. These are all luxury goods. And car also, if the ex-showroom price is more than 10 lakh, two-wheeler or four-wheeler, it doesn't matter. TCS at what rate applicable? 1%. Understood, everybody? Hello, everyone? The next 206C1G. This is one section where every student again confuses. Now look at this section. 206C1G. Hello, everyone? Are you clear? 206C1G. What is this 206C1G is about? This section talks about two types of sales. This section is talking about two types of sales. One, sale of OTP, overseas tour package. You are selling overseas tour package, or you are a authorized dealer. You are a authorized dealer selling foreign currency under liberalized remittance scheme. You are selling what, Arma? What you are selling actually there? Foreign currency under LRS, liberalized remittance scheme you are selling. One fellow is selling overseas tour package, another one is selling LRS, or it's maybe single person overseas tour package or LRS. Single. But OTP, separate limits applicable. LRS, separate limits are applicable. Are you clear? Now, sir, I'm a seller of overseas tour package. Biggest amendment here. Earlier it is up to 7 lakhs, all that is there. Now, sir, I'm selling overseas tour package, sir. Up to 10 lakhs. The package cost up to 10 lakhs. Earlier it was 7 lakhs, ma'am. Please be clear. If at all I'm selling a tour package where the cost of tour package is up to 10 lakhs, straight away flat 5% TCS. Flat 5%. I open Make My Trip. I want to make a overseas tour package. I want to go Maldives, for example. 2 lakhs is the package cost. 2 lakhs plus, how much is the percentage? 5%. 10,000 they will collect from me. Straight away they will collect from me 10, because no, I am buying Make My Trip overseas tour package. You can just find open Make My Trip, you will find holiday packages. 5% they will collect if at all the cost of foreign travel is up to 10 lakh. Suppose if the traveling is more than 10 lakh in a year, this is per annum limits. In the entire year up to 10 lakhs, 5%. If at all your overseas tour package overall cost is crossing 10 lakh, then 20%. On the extra amount, 20%. Are you clear? These will operate as a slabs. Understood OTP? Overseas tour package understood, which means is there any zero TDS on OTP? No. Even from starting 1000 rupees, if it is a overseas tour package, 5% TCS will be collected. Straight away, 5% TCS will be collected. Understood or not? Next, suppose I am remitting under LRS money ma. Here it is not about tour ma. I am remitting money. Why are you remitting money? Abroad my son is studying, or abroad my relative is having a medical issue, or abroad my friend is there where he is asking me some money to lend. I am lending him. Whatever the reason, I have to send money abroad. How I will send? Through authorized dealer. Under what scheme I will send the money? Remittances scheme, liberalized remittances scheme of RBI. I am sending the money. Okay, fine. What is the TCS rate applicable on that? For what purpose you are sending it? Sir, I am sending it for education or medical purpose, sir. I am sending it for education or medical, sir. If that is the case, on up to 10 lakh rupee, what is it? Up to 10 lakh rupee, 0%. Up to 10 lakh rupee, what ma? 0. Beyond 10 lakh rupee, 5%. What is beyond 10 lakh rupee? 5. Old limit is 7 lakhs ma. New limit is 10 and 10. Sir, you know what? I'm sending money for education of my son. This money is not mine also. I borrowed a loan from a bank. I borrowed that money as a loan. Out of the loan I'm sending, sir. If the amount is remitted for education out of borrowed money, 0% TCS. Earlier it was 0.5%. It was earlier how much ma? 0.5%. Finance Act 2025 amendment. How much is the amount if you are remitting under LRS? You are sending. I took a bank loan 40 lakhs for my son's education abroad, and this 40 lakhs I have to pay. My son has to pay fees abroad. He has to pay fees abroad. Okay, so 40 lakhs I have taken from him and then sending him abroad ma, out of the loan. What is the rate of TCS? 0. The dealer should not ask me TCS if at all I am remitting out of the loan. I should prove that it is out of the loan, then he will not collect any TCS. Suppose I am sending out of my pocket, then up to 10 lakhs 0. Beyond 10 lakhs 5%. Easy. Sir, I am remitting for some other purpose, sir. Not medical or not education, sir. Some other purpose I am remitting, sir. Up to straight away 20%. Up to first 10 lakhs is how much ma? For some other purpose. Up to 10 lakhs how much ma? 0. Beyond 10 lakhs how much ma straight away? 20%. Until now clear? Now biggest logic. Suppose no, sir, here by beyond 10 lakh it is what rate ma? 20%. Here up to 10 lakh it is 5. Am I rate of OTP? Now look at, sir, I am a seller. Sorry, I am a person. I bought OTP package and I'm also sending money for my son's education purpose outside India. Now here I bought 10 lakhs package already. Now I'm sending money beyond 10 lakhs to my son. Yes or no? I'm sending money again. Now here 10 lakhs is there, right? Are there separate limits? That is the question. For OTP, this is separate. For entire this, first 10 lakhs is separate. You see here, first 10 lakhs, 0. First 10 lakhs, 0. Under LRS, no, first 10 lakhs. Are you sending for education? Are you sending for medical? Are you sending for other purpose? I won't question. First 10 lakhs under LRS, 0 TCS. Sir, beyond 10 lakhs I'm sending. Then I will ask you the purpose. Education, medical, other purpose. Sir, you said education, medical, then 5%. Other purpose you said 20%. You are remitting out of education loan, 0. Clear? Sir, I am sending money for purchasing a tour package, sir. Then up to 10 lakhs, flat 5. Beyond 10 lakhs, it is flat 20%. Are you clear? So again tell me, which means for education and medical separate 10 lakhs, for others separate 10 lakhs limit. Is that correct? No. Under LRS 10 lakhs. Under LRS you are remitting 10 lakhs, 0. Beyond 10 lakhs you are remitting purpose I want. For what purpose? Education and medical, 5%. Other purpose, 20%. Remittance out of education loan, 0%. Now, for OTP, separate 10 lakhs limit again. First 10 lakh, 5%. Next 10 lakh, 20%. Over. Easy, all of you. TCS provision understood or not? Now, next. There are some clarifications, ma. Okay. That's it. I mean, these are not required. 2061, no. If at all you are buying timber, 10 leaves, all that. If at all you are using, if at all you are a resident buyer and you are using the goods for power consumption and not for trading, you are using it for manufacturing and power generation, not for trading, then no TCS will be attracted. If at all you are buying timber, 10 leaves, forest to produce, all that, no, that for further manufacturing you bought, or for power generation you bought, not for trading purpose, then again no TCS will be collected by seller. That's it. Rest main theme of the provision I completed, ma. Theme of the provision I completed. Here, no, I have CBDT circulars, remittances in foreign exchange. That circular only I told. First 10 lakhs, the next 10 lakhs, that entire discussion I told. No, that's nothing but this circular only. Are you clear? Now, what else is biggest amendment? In TCS, no, in TDS, no, earlier we have two more sections. 206 AB in TDS provision. 206 CCA in TCS provision. Up to Jan 26 attempt, these sections used to be there. Now they were removed. What are the sections, you know? If at all you are not a regular filer of IT return, this year you have to deduct TDS at a higher rate. This year you have to collect a TCS at a higher rate. Suppose from whom I have to collect TCS, he is not a regular filer. From whom, while paying amount, I should deduct TDS. If the payee or if the seller, if the buyer is not a regular filer, we have to deduct more TDS, we have to collect more TCS. That sections they deleted. 206C1H, seller of goods should collect TCS. That section also got deleted. Understood, everybody? Those two sections were deleted. And next, further, higher rate of TCS if at all buyer is not giving PAN number. If buyer is not giving me PAN number, I should collect no seller. As a seller, TCS I should collect no. If at all he is not giving PAN number, then 2 times the rate I will collect. Then how much I will collect? 2 times the rate or 5%. Max rate cannot exceed 20. By the way, here 206C1H max 1, I said no, this section itself is removed. By mistake it was still there. Please strike off. This section is removed now. Okay, 206C1H got removed now. Whereas TDS, sir, you know, I'm a person paying the money to another person and he is not giving PAN number for deducting TDS, then rate given in the section or 20%, whichever is higher. For TCS, higher rate of TCS, what is the logic? 2 times the rate or 5%, whichever is higher, but cannot exceed 20. 206A, rate given in the section or 20%, whichever is higher. That's it. Easy. But for 194Q, maximum TDS 5%. That's it. So with this, TDS, TCS is completely done. Clear? Now, let's discuss advanced tax provisions, ma. Advanced tax provisions, section 207 to 215. These are the main sections dealing with advanced tax. Even 216, 217, 218 also advanced tax related, but mainly up to 215. First of all, advanced tax get attracted only when the tax payable is exceeding. Only when the tax payable exceeding 10,000. At the very first chapter I told, tax payable is different, gross tax liability is different. Okay, if the tax payable for the SSC is exceeding 10,000, advanced tax attracted. However, a senior citizen who is not having PGBP income, no advanced tax obligation attracts. If you are a senior citizen and no PGBP income, advanced tax will not be attracted. This is one exemption. Are you clear? Now, what do you mean by tax payable? Simple. First, to know, I'm an SSC. I myself, I'm the SSC. I will first compute gross tax liability. How will I compute gross tax liability? Basic tax, add surcharge, subtotal, less relief or rebate as applicable, then again subtotal, add 4% cess. Then what you get is gross tax liability. Hello? From that, for example, my gross tax liability is 1,50,000 ma. Minus, you know, during this year, no, my expected TDS is going to be 50,000. What is my TDS is going to be? TDS or TCS is going to be 50,000. Then what is my balance amount? 1 lakh. What is my balance tax payable ma? 1 lakh. Now this, since the balance tax payable is more than 10,000, obviously advance tax is attracted. Am I right or not? Now let us assume in exam what they will give you, they will not give you all this. They will give you SSC, no, he has filed IT return. He is now filing IT return. They will give you SSC total income. They will give you SSC total income, they will give you. And in the exam, they will give you TDS data, they will give you. Now, based on the total income, you should find out gross tax liability. Let us assume gross tax liability of the SSC. Let us assume gross tax liability of the SSC right now, whatever I told, 1,50,000. Let us assume in the exam, TDS information given is what, ma? 50,000. Therefore, balance tax payable is how much, ma? 1 lakh. Since it is more than 10,000, obviously advance tax provision is applicable. If advance tax is provision applicable, you have to pay as per section 211. Advance tax you have to pay in 4 installments. You have to pay in 4 installments. I'm directly computing the problem and exam provision. Both I'm discussing simultaneously. Okay, how you should solve, I'm telling you. In exam they'll give you total income, they'll give you TDS. Now what is the balance tax payable based on that? 1 lakh. Since it is more than 10,000, advance tax applicable. Since advance tax is applicable, he has to pay advance tax in 4 installments. What are the installments? 15th June, 15th September, 15th December, 15th March. These are the 4 installments. June 15, September 15, December 15, March 15. Same dates. These are not example dates. These are original dates as per the law. 15th June, first installment due date. 15th September, 15th December, 15th March. These are installment due dates. Okay. By these dates, what you should have done? 15% of tax payable you should have paid. 45% of tax payable you should clear. 75% of tax payable you should clear. 100% of tax payable you should clear. Accordingly, how much you should have cleared? In our example, tax payable is what? 1 lakh. So 15,000 is the first installment. Second installment 45,000. Third installment 75. By fourth installment you must have paid how much? 1 lakh. Which means maybe the actual amount what I will pay is 30k. First installment I'll pay 50. Second installment 30. So that 45 cumulatively it will come. Third installment again I'll pay 30. So that cumulatively it will be 75. Fourth installment 25k I should pay. Cumulatively 1 lakh. But guess what? In exam they'll give you how much he paid also. In exam they'll give you how much he paid. How much he paid, 10k first installment he paid. Second installment also another 10,000 paid. Every time he's paying in 10,000. 4 installments, 4 times 10 he paid. Now tell me, first installment how much he paid? 10,000. Second installment how much he paid? 10. Cumulatively how much he paid? 20. Cumulatively you should take. Third installment cumulatively how much he paid? Fourth installment cumulatively how much he paid? 40. Now is there a shortfall? Is there a shortfall? Yes. Here, how much is the shortfall? This minus this. How much is the shortfall? 5,000. And here it is 25,000. Here it is 45,000. Here it is 60,000. Now there is a section called 234C. There is a section called 234C. Hello, wait. This is 10,000 every month he paid. Every time 10 he paid. First time 10 he paid. Second time 10 plus 10 20. Third time 10 plus 10 plus 10 30. Fourth time. Listen carefully. Okay, next look at. So 234C. Now there is a shortfall. How did I calculate shortfall? This minus this, this minus this, this minus this, this minus this. Am I right? Now how should I calculate interest? For first installment shortfall, 3 months interest. Second installment shortfall, 3 months interest. Third installment shortfall, 3 months interest. Last installment shortfall, only 1 month interest you should calculate. Now what is the interest per month? 1%, 1%, 1%, 1%. Do you understand? Hello everybody. Now what is the interest amount? What is the interest amount? Shortfall multiplied by number of months multiplied by 1%. Now that's it. Can I do this? Yes or no? Is equal to 1500? No, 150. How much it is? 150. Here it is 750. Here it is 1350. Am I right? Yes or no? Here it is 600. Hello? Yes or no? Now what is the total interest? 600, 1350, 750, 150. How much is the total interest? 2,008. That's it. This is 234C interest. What is this actually called as? 234C. 234C interest is an interest calculated on short payment of advance tax. Hello? Now let's interpret what exactly. You know, SSC total income, some amount they gave. When I computed the tax, his gross tax liability, how much I'm getting? 1,50,000. From that, SSC already paid in the form of TDS, TCS relief, all that 50,000. AMT credit, everything you should reduce. AMT credit, everything. Then he still have to pay department how much? 1 lakh as per the data. But guess what? He paid totally how much? 40. How he paid? First time 10,000. Second time 10k he paid, making it 20. Third time he paid another 10, making it 30. Fourth time he paid another 10, making it 40. But as per 211 section, as per section 211, you should have paid 15, make it 45, make it 75 by third installment due date, make it 100% by last installment due date. This is how you have to cumulatively ensure. But you cumulatively paid this much only. Therefore, there is a shortfall. Now, under 234C, you will calculate interest only up to March. You will calculate interest only up to March. When the due date starts? June. June to March, how many months? 10 months. 3, 3, 3, 1. 10 months. So, as per 234C, I calculated interest for 10 months. Sir, it's 3 months, no? Look at, these are cumulative shortfalls. Now on 5,000, 3 months I calculated. This 5,000 shortfall is covered here also. On this again 3,000. This 5,000 shortfall is covered, so 3,000. On this 5,000 shortfall covered here 1 month. This 5,000 shortfall cumulatively appeared everywhere. Therefore 10 months we got the interest. That's why we apply cumulative logic. Able to understand. So there is another way which we can compute. There is another way which we can compute, but this is the best way accepted presentation in the institute study material suggest answer, which is logically very good. Because no, here I'm not calculating. For example, no, here SSC paid how much installment? Second installment 30 only he paid. Here second installment how much he paid? 10 only he paid. Originally speaking, 30 minus 10 how much? 20 shortfall. On 20 shortfall, 7 months interest you calculate. If you calculate like this or like that also every time, you get the same answer. But instead of doing every shortfall, how much shortfall, and 7 months, first month shortfall, 10 months interest, second month shortfall, 7 months interest, third month shortfall, 4 months interest, fourth month shortfall, 1 month interest. Instead of doing like that, respective installment wise, we did cumulatively, and then 3331 logic we applied. Able to understand. If you want, you just apply 10 7 10 7 4 1 logic, you will get the same answer. For example, okay, right now itself I will prove it. Very simple, 2 minutes. Okay, now look at first installment, how much you should pay, ma? 15. But the SSC paid how much? 10. Second installment you should pay 30, but SSC paid only 10. Third installment you should pay 30 only. SSC paid only 10. Fourth installment you should pay 25. SSC paid 10. How? Look at it. 15, first installment 15k, second installment 30, third installment 30, fourth installment 25. That's how cumulatively this is how it will come. Am I right? Yes or no? Now look at how much is the shortfall here? How much is the shortfall here? 5,000, 20,000, 20,000, 15,000. And tell me, I should calculate interest up to March, right? This is June month shortfall, right? Up to March you didn't clear that. Up to March you didn't clear that. Next installment you paid short only. Where did you clear? You didn't settle that. 5,000 shortfall as it is continued, in between he repaid. He didn't repay. Yes or no? So 10 months the shortfall continued up to March at 1%. This shortfall is continued for 7 months up to 1%. This shortfall is continued for 4 months into 1%. This shortfall continued for 1%, 1 month into 1%. Tell me, 5,000. This is, 500. Correct, huh? This is 1,000. This is 800. Whereas this is 150. Hello? Now what is the total? 2,000. That's what we got, right? You understood the logic? Anyway, you can compute, but you compute at this logic. You compute this logic, which is best. Here you are cumulatively calculating. So 3331. Here you are calculating separately for every installment shortfall till March, which is accepted presentation. This presentation is accepted. If you understand this, 234C is over. Clear? Next, sir, up to March, fine, sir. 1 lakh liability, 40,000 only he paid, still 60 not paid. Up to March you calculated interest, it is fine. But the SSC is filing return of income in July. SSC is filing return of income in July. July is the due date for filing IT return. Okay. Let us assume SSC also filed the return in July month only. Exactly in July month he filed. Guess what? He paid the tax July month only. Full tax he paid. But up to March only you calculated interest. What about April, May, June, July? 234B. What is the section applicable? 234B is applicable. As per 234B, 1st April of the assessment year. As on 1st April of the assessment year, again find out what is the shortfall. Very simple. As on 1st April. By the way, what is the gross tax liability, ma? 1,50,000. What is the TDS of the SSC? 50. What is the tax payable? Up to 31st March, advance tax paid is just 40. Yes or no? What is the shortfall? This is the shortfall for the purpose of 234B. On this, you have to calculate 1% interest per month. Per month, 1% until you pay this amount, or until you pay this amount, or until completion of assessment. They tell you something called completion of assessment, whichever is earlier. Let us assume SSC filed the return in July month and paid tax also. This entire 60,000 he cleared. In July itself he cleared. Then April, May, June, July, part of a month also should consider, which means how many months? 4 months. So 60,000 into 1%, 600 into 4 months, 2,400. This is called 234B interest. Over. Are you clear? Do you understand 234B logic correctly? Now under 234C, under 234B, one exception is there. For example, no, first installment you paid how much, ma? How much, ma? 15,000 you are supposed to pay. Basically you are supposed to pay, yeah, 15,000, 45,000, and this is 75,000. This is 1 lakh. Yes or no? You are supposed to pay these amounts, right? Suppose no, here 10,000 you paid, no. Instead of that, if at all by chance, if you pay 12,000, no. Shortfall how much you? But interest will not apply. Here 20 you paid, no. Suppose cumulatively you paid 36,000. Cumulatively you paid 36. That time shortfall will be 9,000. Am I right? 45 minus 36 is equal to 9. In first installment and second installment, what the provision says, you know, he has to pay 1545 basically. However, he paid 12 and 36 at least. He paid cumulatively 12 or 36. He estimate advance tax means you have to pay in the same previous year. No, my income, how do I know? Without knowing income, I have to estimate and then pay. I cannot definitely pay accurate amount. If I pay over amount, for me interest loss. If I pay under amount, they are collecting from me interest. I went and told department, how can anybody accurately pay? Definitely shortfall will be there, na? Obviously shortfall will be there. Department understood the reason. So what they mentioned, you know, if at all you pay at least 12%, if not 15. If you pay at least 36%, if not 45. Even though there is a shortfall here, because of 12 and 36 you paid, there is a shortfall, because as per advance tax rule 1545 you should pay, but you paid 12 and 36. 1545 you have to pay, but you paid still 12 and 36. There is a shortfall of 3, there is a shortfall of 9 minimum. Maximum shortfall is this much only. If that is the case, I will give exemption. No interest I will calculate. For these 2 installments I will not calculate, but 3rd installment, 4th installment I will not permit you. Year already 9 months completed. You should predict accurately your income. But for first installment and second installment, year just beginning. 6 months not yet completed. I can't estimate my advance tax liability accurately. Am I right or not? Therefore, 12%, 36% logic is given. You know what is 12, 13 logic? 12%, 36%, what is the logic, you know? See, simple. You paid 13 rupees. First 15 rupees you have to pay, but you paid 13. Second installment you have to pay main, you should make it 45, but you paid 39. Technically, there is a shortfall here. There is a shortfall of 6. On this 3%, will you calculate interest? No. Because no, here you paid more than or equal to 12. Here you paid more than or equal to 36. No interest is applicable. What is the logic behind 12 and 36? Very simple. How much you have to pay? 15. How much if you pay interest exemption will come? 12. by 15 is equal to 20%. Now look at 45 you must pay by second installment. How much you paid? 36 by 45 is equal to 20%, is equal to 9 by 25, 9 by 45, 3 by 15, 9 by 45, both are 20. What do you mean by that? If at all you are deviating by 20% of advance tax estimated amount, I will give you permission, no problem, because you can't estimate 100% accuracy. 20% deviation I'll permit you, no problem. That's the logic. Able to understand? That too, this deviation is permitted only for first installment and second installment shortfall. Third, fourth installment shortfall, no permitted, no permission. Understood or not? Further, under 234B also, under 234B also, one exemption is there. What you know? Gross tax liability is what ma? 1,50,000 minus TDS and all is what ma? 50. How much is the tax payable? 1 lakh. Suppose no, you paid advance tax 95,000. You paid advance tax 95. Let us assume 95 he paid. 5,000 only shortfall. For 234B calculation, how much is the shortfall? 5,000. But guess what? More than 90% of tax payable he paid here. More than 90% of tax payable he paid honestly. Even though there is a shortfall, don't calculate 234B interest. Don't calculate 234B interest. Understood or not? C is different, B is different. B is from 1st April I'm talking about. C will come up to 31st March. 234C is up to 31st March. 90% logic is linked only with 234B. It is not linked with 234C. 234C is what? 45, 15, 45, 75, 100. Paid cumulatively take. Shortfall you take. Apply 333. 1111% over. That is 234C. I am talking about 234B. On 1st April, I need to find shortfall, right? On 1st April, how much shortfall I have? 5,000. How much advance tax I paid? 95,000, which is more than 90% of the tax payable. 234B is also exempted here. Able to understand? But here, 234C will attract. As per 234C logic. You should say as per 234C logic. Don't merge these two, please. Because 234C is up to interest up to 31st March of the previous year. 234B interest is calculated from 1st April of the assessment year. Are you clear? That's the difference between these two. And only when you understand 234B, 234C thoroughly, updated return concept you can understand to some extent. In updated return, the concept is not about updated return. That's not a big deal. Additional income tax. 140B calculation is there. That is where more complication is there. Clear? Now I will bring one more topic. 234C, 234B. I need to compute tax payable, right? For that I need to first compute gross tax liability, right? Under 234C, I should compute based on returned income. I should compute gross tax liability based on return of income. In return of income, how much I showed? Based on that gross tax I should calculate. Based on that tax I should calculate. And that tax is called as returned tax. Whereas in 234B, no, I should calculate gross tax liability based on assessed tax. What is it? Based on assessed tax. What is assessed tax? In assessment order you will find assessed tax. What is returned tax? In IT return you will file returned tax. But in exam, in both the cases, we consider returned tax only. In exam we consider return tax. Return tax is what? Nothing but I told you at the beginning of this problem, total income information they will give you. That information only. This point, if at all you are unable to understand at this level, leave it. This point, leave it. Not required. In exam they'll give you total income, they'll give you TDS data. Based on that you can compute gross tax liability. Based on that you can compute tax payable. You know how to split installments. You know advance tax actual payment details they'll give you. Sometimes payment details they'll not give you. Means advance tax paid is 0. Calculate shortfall, calculate interest. 1st April again calculate shortfall afresh and then you calculate interest. Up to 234B interest is calculated up to the date of payment of the shortfall or completion of the assessment, whichever is earlier. 234C interest on shortfall is calculated only up to March. Understood or not? 234B, 234C, 211, 207, 208, all that is completed. One last clarification. Advance tax provisions are not applicable for senior citizen who does not have business income or profession income. I'm a senior citizen. I don't have PGBB head of income. No advance tax. No matter how much tax I have. Advance tax provision itself does not apply. If advance tax is not applicable, do you think 234B, 234C will be applicable? No. Are you clear? Now further, if at all SSE opting for presumptive taxation under 44 AD, 44 ADA, first 3 installments does not apply, only 4th installment. That 4th installment you didn't pay properly, only for 4th installment shortfall 1%, 1 month only 234C interest is applicable. 234B as usual. SSE having 44 AE business, no excuse. All 4 installments 234B as usual apply. Now advance tax in case of casual and capital gains income, that's little more advanced concept, not that important, okay, but theoretically it is important. In advance tax, no, in one of the exams I think they have asked this theory question. In advance tax they have asked one theory question. 4th point you can see, unexpected incomes, advance tax provisions on unexpected incomes, okay, unexpected incomes. So capital gains, winnings, newly started business, dividend income, okay, these are unexpected incomes. That point you read later and then understand. This is enough from marathon exam point of view, mainly marathon point of view. Clear? That's it. Advance tax provision is over. Confident everyone? That's it. Let's begin one more chapter, that is total income and AMT. Actually in this there is only one page. This chapter you see, it's only one page, but of course I have given in 2 pages. Second page also one more point is given, how total income has to be solved. I told, right, we get first question in the income taxes, total income, 15 marks question. Now how to solve the total income question, that's what we are going to learn in this chapter. Typically speaking, all the provisions we understood except TDS and return of income is not yet discussed by this time, because TDS and return of income you should cover after total income chapter. Better, the best thing is cover after total income. So first we finish total income AMT and solve all the problems, then we'll go back to return of income and then TDS TCS advanced tax topics. Are you clear? That's it. Now, and if at all we finish this chapter and problems all that, whatever the scenario it may be, you will be able to attempt entire income tax 50 plus marks. In income tax 50 plus marks you can attempt. TDS and return of income is not yet over. Both put together 10 marks weightage. If that is also completed, minimum 60-65 marks you can attempt. Only from taxation. Entire syllabus we covered. Nothing we ignored. Yes or no? Only one provision in salaries chapter, that too dealing with one big formula which takes time, which is time consuming. That alone I told I'll discuss directly on the YouTube at free of cost, okay. That's it. And relief provision also I kept pending in salary, which I will discuss after this AMT discussion. Once these problems are solved, then I'll go back to relief discussion and then solve that as well. Are you clear? Next up. Fine. Now look at, let's begin the concept of alternate minimum tax. Let's begin the concept of alternate minimum tax, which is given under 115 JC. Remember, for corporates, a similar concept is there, MAT provisions, minimum alternate tax. For individuals, HUFs, all these AJPs and all, AOP, BOI, instead of using the same word, they use the word AMT, just to have a differentiation. Are you clear? Alternate minimum tax, and for companies it is minimum alternate tax. Okay. What is this AMT provision intention is all about? If at all, SSE is having, if the SSE is having investment based, income based deductions like 80 QQB, 80 RRB or 80 JJAA. Even 80 JJAA is also important here. Look at it. 80 QQB, JJA, RRB. Income, heading C deductions. Actually, what are they saying? Heading C. If at all SSE is claiming Chapter 6A heading C deductions, or if the SSE is claiming 10AA deduction, or if the SSE is claiming 35 AD deduction, any of these 3 criteria must be satisfied. If the SSE is claiming Chapter 6A heading C deduction, or SSE is claiming 10AA or 35 AD, if at all SSE is claiming these 3 deductions or any one of these deduction, and then AMT provisions will apply. What is it? AMT provisions will apply. Further, AMT point will apply only under optional tax regime. If at all SSE is paying directly, if the SSE is computing income directly under default tax regime, most of these deductions he will not claim. Only 80 JJAA he will be claiming in default tax regime. If at all SS is going with default tax regime, QQB, RRB, 10AA, 35AD is not applicable to him. But JJAA is something you claim under optional and default. Am I right? Fine. But the provision, AMT provision is applicable only under optional tax regime. It will not apply under default tax regime. Are you clear? Now, what is the, okay, we understood now applicability concept. What is the whole context of AMT? Like why, what exactly department trying to do with AMT provision? See, suppose look at, I am running a 5-star hotel. My revenue receipts are 10 crore. My revenue expenditure as per 30 to 37 deductions, if I calculate depreciation, not 3580 deduction, if I don't calculate 3580, I happily claim depreciation. Yes or no? If I calculate all revenue expenses, deductions and depreciation, 5 crore, and my income would have been 5 crore, and I should have paid tax at some 30%, or if it is a company, partnership from 30%, individual slab rates, like that I should have been paid. But luckily, in the same year, I have invested 50 crore in capital expenditure. For example, hotel construction cost building. That entire 50 crore I claim deduction. Therefore, my PGB income became loss. It became loss. That too we call it as specified business loss, which will be carried forward under section 73A for infinite number of years. Am I right? Fine. This is a situation. Literally, is the SSC paying any tax? No. Which is why the benefit of 35AD, all this is given. But somewhere, department, I don't know who recommended this concept. Somewhere they are not happy with these kind of SSCs. Array, they are having very good turnover. In any business also, capital expenditure is common, and we are giving deduction like this. At least no, this is too much. Deduction is too much. Okay, but it's okay. We promised them. Let's. But department, one person would have recommended. The commission, some commission would have been there. Tax commission, advisory commission would be there. They're not somewhere not happy with this. Why should we, that's a 5-star hotel, they had lot of funds, they had lot of backing, big companies are backing it. Okay, why should we give this deduction? Okay, fine, we promise a deduction, let's give. But let us collect some tax from them alternative way. This is what their idea. Let us collect some tax from them alternatively. Okay, and that's when alternate minimum tax provisions has been introduced. What are they saying? Hello mister, okay, in this case, what is your actual business loss, ma? What is your business loss? 45 crore. Yes or no? Let's do one thing, ma. 3580, if at all deduction is not there, add back. If at all 3580 deduction is not there, add back. Minus, if at all this deduction you are not claiming, you will get depreciation, right? Okay, I will reduce it, ma. Are you clear? I will reduce it. Now, what is your adjusted total income? What is your adjusted total income? In this case, it becomes 0. Oh, even if I adjust all this also, his income is coming 0. That means even otherwise also his income is 0 only. If at all he didn't claim the deduction, if at all he did not claim the deduction, under 35AD also, if you go with normal provisions also, his income is coming 0. Otherwise also you don't have to pay any tax. Let me apply the same logic to another hotel. Let me apply a similar logic to another hotel. Now, there is another hotel in the same city which is also claiming 3580 deduction, what is actually their PGBP receipts, PGBP, income, which PGBP income, okay, before claiming 3580, before claiming depreciation, before claiming 3580, their PGBP income is 20 crore minus 3580, they won't get depreciation, because most of the assets they are claiming 100% deduction, so they don't get any depreciation. Machinery, furniture, building, everything is eligible for deduction. Now for them, 30 crore is there, building cost only. During the year, only capital expenditure is building. Last year furniture and all we bought, they claim a deduction already last year also. Now this year only 30 crore, one more, some renovation and all they did, some big construction and all they did. Are you clear? Now again, what is the PGB, specified business loss? 10. Now again, to the same logic I want to apply to him. What I wanted to apply? What is your business loss? Minus 10 crore. If at all 3580 deduction is not there, I will add back. You would have claimed a depreciation of 3 lakh, no? Am I right? Yes or no? 30. Now I will see how much is your income here. So 30 add back. Okay. Array, if at all 3580 deduction you didn't claim, and you go just like anybody else with a normal method of depreciation, your income would have been 17 crore. Your income would have been 17 crore. Tell me, normally if it is other people, they're all paying. They all are paying how much tax on this? 30%, 5.4 crore tax they are paying. Tell me, I give you benefit, no? Yes or no? By giving you 35A deduction, I gave you benefit, no? But look, government, I am also suffering so much. Okay, and you are taking benefit in the name of capital expenditure, which we promised. We only promised it. Okay, 35A deduction will give you because to promote tourism in the country, to promote all big businesses of national importance, we gave you. But understand, from department point of view, we also want to collect some tax from everybody. Look, if at all I didn't give you this deduction, you should have been paying 5.5 crore tax to me. But guess what? Now I'm not asking you that much. I will do one thing. You know, on this, just pay me 18.5%, not even 30. Don't even pay 30. Just pay me, better option, 18.5% tax. How much it is? 18.5%, 17 crore. 17 crore into 18.5% is equal to, just pay me 3.145. What is it? 3.145 crore. Are you clear? I'm asking him to pay 3.145 crore. Are you clear? By the way, if at all regular provisions, if I apply, if at all we apply regular provisions, what is your income? Is 0. Negative means 0. If at all I apply AMT provision, your income is coming 17. I'm not asking like others 30%, 25% surcharge, all the big amounts I am not asking. I am asking only 18.5%. Since it is 17 crore, apply 25% surcharge or 37% surcharge, as the case may be. Here, no, 37% surcharge will apply. Are you clear? Look at here again, 37% surcharge. 5.4 crore plus 37% is equal to 7.4 crore plus cess again 4%. Okay, cess you leave it. Here also, you know, so 17 crore. You know what is 17 into 18.5? 3.145 plus 35 or 37, 37%. Just 4.3 crore. Look once again analysis. See, if at all department did not give you this deduction, you would have just claimed depreciation like anybody else, where your profit would have been 17 crore, where you are already 30% flat rate, or you are already in the 30% slab rate. Yes or no? So 5.4 crore tax will come, 37%, 7.5 crore tax liability will come for you. But what I'm asking, no, I will not break my promise. But let us come to some medium conclusion, some other third conclusion. Let us take, pay me at a lower rate, 18.5, just 4.3 crore tax to me. Now tell me, if at all I go with normal provisions of the law, with 35 AD, all as usual optional tax regime, my tax is 0. But now I'm paying 4.3. Now immediately SSC shouted at me, hello sir, then you gave, why, what is the purpose of giving this deduction, 35 AD? Tell me, if I am paying tax, what's the hell? Why are you giving the deduction? Then what I told you, know, don't worry, Kanna. AMT credit. I'm bringing a concept called AMT credit. Right now, whatever you're paying, 4.3 crore. What is your regular income tax? 0. My income is loss. I don't have to pay any tax. Basically, I was happy. But suddenly you came and told me I have to pay 4.3 crore in the name of something called AMT tax. Are you clear? No, wait, don't worry. You're paying me. But don't worry. I will give it to you like a credit. How you get input tax credit in GST? This credit also I'll give you. Just like input tax credit in GST, this amount I'll give you back. Don't worry. I'm not collecting it. Temporarily park that money with me. Temporarily keep that money with income tax department. Okay, how much you paid? 4.3 crore. How much AMT tax you paid here? 4.3 crore minus what is your regular income tax. For example, if at all you compute the same SSC, I'm telling him, if you compute income generally by applying all the sections, oh, you are getting loss, no? So which means there is no tax, which means your regular tax is what? 0. How much AMT tax is paid during the year in excess of regular tax? 4.3 crore. How much is? 4.3 crore. I will treat it as AMT credit for you. You know, I will give you, look, I'll give you one passbook. Okay, actually in reality passbook won't be there. I'm just giving you for a story purpose. Okay, so I'm telling to the SSC, I'll give you one passbook that you paid with me 4.3 crore, even though you don't have a tax liability, even though you really don't have a tax liability, you paid to me 4.3 crore. Then SSC, what will I do with this? Then I started explaining the SSC. What, tell me, do you buy, like I asked him, tell me this year this year I'm convincing SSC. I have to tell him the logic, no? I'm telling him, see, this year, if at all you go by normal logic, your income is negative and you pay tax 0. And you're upset with me because I am collecting tax in the name of AMT. Yes or no? Tell me, every year, I'm asking him this question. Next year, your business income will be same or similar? Pakka, my business income will increase. I'm asking him. He said, my income will increase. Will increase? Okay, fine, very good. At least, if not increase, this 20 crore you will get income, no pakka? And then I asked him, will you spend this 30 crore again in the next year? I asked him, why will I spend? Already spent all capital expenditure. Now I started newly. Okay, I newly started the business. I will not spend. Okay, then I'll do once. Then I'll explain you one point here. Next year, how much would be your income as usual? As usual, you are saying PGBP income 20 crore. You won't have any 35 AD. Yes or no? Next year, because you, how much you will spend every year? Capital expenditure. Once or twice only you will spend. Every year you will not spend. This is your income under PGBP. Yes or no? Now this itself is your total income. How much it is? 20. Now in that next year, are you claiming 35 AD? No. Are you clear? Are you claiming 35 AD in the next year? Yes, as he said, no, why will I claim? Only this year I claimed. Are you claiming 10 AA? That's not applicable to me. So, okay, so you're not claiming anything, right? Next year, AMT will not apply. Fine. AMT will not apply. Do you agree, SSC? SSC also agreed. Now tell me, what is the tax you pay on this? 30% I will pay. What you will pay? 30% I will pay. 6 crore plus 37% surcharge. How much it is? 6 crore into 37% surcharge. Yes or no? 2.22. How much tax will come in the next year? 8.22. Okay, next year you will not leave. No, you will collect. No. I will leave you next year. You paid me right now 4.3 crore AMT, right? Happily set off that 4.3 crore. You set off this, okay, and pay the balance amount, okay. Then SSC is happy to pay AMT. Are you clear? SSC, I'm collecting from you. You're crying, saying, why the hell I gave this 35 AD deduction? All that you shouted at me, but without reading the provision fully. Look at the last line of the provision. AMT credit is there. Okay, whatever tax that you are paying, see, because of AMT, what is happening? Because of AMT, in the year in which you claimed 35 AD, 10 AA, all these deductions in the year, you are claiming those deductions. Normally, if you compute the tax, your tax is lower. But if this deduction is not there, if I add back and then compute AMT, you are paying higher tax. So what is AMT? You know, if at all the tax liability under AMT is more than your normal income tax liability, then AMT is what you have to pay. Minimum tax that you have to pay by cash. Minimum tax that you have to pay by, cash monetarily. This is what the meaning. Now, whatever minimum tax you paid over and above regular tax, I call it as AMT credit, and I will carry forward for 15 years. I will carry forward it for 15 years. What I will do with the credit? Don't worry. You will not get every year deduction. Wait. Yes or no? There will be so many years in your future, 15 years, where you will not have 35 AD, 10 year deductions. In those years, your income is higher. Normal income is higher. That time, your regular tax itself is higher. Set off this amount with that tax. Set off that amount with that tax. Now, here there is a twist. Fine. Next year, no. In the next year, no. This is the next year computation, right? I will slightly change it. Okay. Next year, what is my PGBP income? 20 crore. Next year, my PGBP income is how much? 20 crore. And in the same year, I again claimed 35 AD. I bought some 3-4 crore worth of furniture, all that again. Okay. Let us assume 4 crore deduction is claiming. How much is his normal tax? Okay. Or else I will take one more example. Okay. Let us assume he is claiming 10 crore reduction in the next year again. How much is claiming? 10 crore reduction next year again. How much is the balance income? 10 crore. How much is the balance income? 10 crore. No. Let me take even more better number for making you understand. Next year, he is claiming 15 crore 35 AD deduction. How much is his balance income? 5 crore. Are you clear? This is his total income in the next year. As per normal provisions of income tax law, 1.5 crore plus 25% surcharge. What is it? Since it is only 5 crore, 25% surcharge. 1.5 plus 25%. How much is your income tax will come? 1.875. Are you clear? Now again, when he is filing the IT return, department again came back. Hello, Mr. You claimed again 835 AD. Again in this year, I will check AMT applicability. I will check AMT. Now, what is the total income you declared? 5 crore plus How much is the deduction you claimed? 15 crore. Minus depreciation. How much? 1.5. Let us assume 10%. If at all you didn't claim this, no, depreciation of 10% you would have got on the furniture. Now what is the ATI? Adjusted total income I call. Okay, I am calling it as adjusted total income. Why? His total income is originally 8.5 only, whereas now I am adjusting all this. Yes or no? So I am calling it as what? Adjusted total income. How much it is? 20 minus 1.5 is equal to again 18.5 crore. 18.5 crore adjusted total income. Now again I will calculate 18.5% AMT. What is it? 18.5% AMT. Wow, 3.42 crore. Are you getting it? 3.42 crore plus since total income is more than 5 crore, 37% surcharge. So 37% surcharge. Yes or no? 3.422 plus 37% is equal to 4.69 crore you are paying. Wow. Raised second year also. Again SSE was upset. Last year you collected, I have zero tax logically, but you collected 4.3 crore from me saying AMT credit all that future I can set off. Again second year came. Again you are asking me 4.7. My normal tax is 1.8 only. What is my normal tax? What is my regular tax? 1. I will round off to 9. 1.9. Okay, I will round up to 1.9 in the second year. And in the same second year, what is my AMT tax? 4.7. Look again, if at all you have to pay normally 1.9 only is coming, but AMT logic 4.7. I want you to pay AMT minimum. This is the tax you have to pay. Okay, now how much you paid? Yes, you know, again crying only, paid 4.7 crore, just like last year 4.3 crore how we paid, now 4.7. Now totally in his AMT 9 crore balance is there. AMT how much is there? 9. Wrong. Okay, by the way, last year 4.3 paid AMT, this year 4.7 paid. Last year AMT paid how much? 4.3. Yes or no? 4.3. Regular tax is 0. So how much is AMT credit? AMT credit. See, regularly you have to pay 0, but now you are paying because of AMT only 4.3 crore. Because of AMT extra tax, how much you are paying? 4.3. This entire amount I will give you as credit. Now this year in the second year, okay, now AMT credit ma, AMT ledger, opening value how much ma? 4.3 crore. Are you clear? How much it is opening value? 4.3 crore. Now in the second year, look at, you know, AMT how much you are paying now? 4.7 crore. Minus, if at all AMT is not there, you would have been anyhow paying 1.9. no, extra you are paying how much because of AMT? 2.8 crore extra you are paying only because of AMT. Am I right? Then I'll do one thing. This 2.8 crore also I'll add it to AMT. Then again SSE. What is the point of you collecting, adding in ledger? When will I use? Hello, mister, you have 15 years time. Tell me, will you spend every year capital expenditure? Will you claim every year 35 ADA? Is it possible first of all for anybody in the universe? No sir, not possible. Fine. Now third year came. SSE was waiting when the opportunity he will get. Third year came. In the third year, his again income is, this time his business also performed. 30 crore he got profit from PGPP. 30 crore he got. But luckily in that year he don't have any business income. I mean, he don't have any deduction under 35 AD, deduction under QQB, RRB, JJA, nothing is there. He don't have any deduction. Now this itself is the total income. On this, what is the tax rate? 30% is equal to how much? 9 crore plus 37%. Are you clear? 9 crore into 9 crore plus 37% is equal to, wow, his tax liability is coming 12.33 crore. See, everywhere I'm not using the SESMA. Okay, cess also you should calculate every time, but I don't want to make it complicated. That's why I'm explaining the concept. 12.33 crore came. Now department again came to collect the tax. 12.33 crore they're asking. SSE immediately showed his AMT credit passbook. What he showed? Hello, mister, last 2 years you collected from me tax even though I don't have liability. Okay, and you told me that time you gave me credit. This year tell me, by the way, this year AMT liability is how much? 0. This year AMT liability how much? 0. Now, how much extra normal tax I'm paying beyond AMT? How much extra normal tax I'm paying beyond AMT? 12.33 entirely paying normal tax only. Entire normal tax. Within this, is there any AMT minimum amount like that? Nothing. Are you clear? Is there any amount of this tax that I should anyhow has to pay as per AMT? AMT tax this year 0. So therefore, entire amount is extra that you are paying, right? Now earlier AMT credit is there na? How much is the AMT credit? 7.1 is there, right? Set off 7.1 crore, happily set off. Balance amount 5.2. Now pay by challan and then file the return, happy. Now SSC is happy. Are you clear? Now suppose, no, in the same example a slight modification I'll do. Okay, suppose AMT tax is also coming 5 crore. AMT tax is coming, let us assume AMT tax is coming 8 crore in this year. In this year also SSC is getting 8 crore AMT tax, whereas normal tax 12.3. Let us assume like that. Normal tax is 12.3. Let us assume that. Tell me, until now based on the story, you should have understood one point. If any amount comes under AMT, you should pay it to the department for sure. In the year 1, AMT whatever comes, that much he paid. In the second year, AMT whatever is that much he paid. Are you clear? In this year, 8 crore AMT is coming. Actually, his regular tax is what? 12.33. Yes or no? 12.33. If I set off 7.1, only 5.2 is what balance he has to pay. No, I will not give this much set off. You know, out of 12, minimum 8 crore is something that I have to at any cost collect as per 115 JC. As per 115 JC, whatever AMT is there, right? To that extent, for sure I should collect tax. If at all you are paying extra tax, happy. But to the extent of AMT, for sure you have to pay by challan. Sir, but my tax is 12.3, no? Now 8 crore minimum I have to pay at any cost. So I can't set off like this and pay balance amount. No, my dear, you can't pay like that. Okay, you have to minimum pay how much? 8 crore by challan. Okay, sir, I'll pay you. What to do? 8 crore I'll pay. Now, what about my normal income tax is higher? No, that 4.33 you can happily set off. That 4.33 you can happily set off. You know what? AMT credit can be set up only with regular income tax. AMT credit can be set up only with regular income tax. Remember in GST we have this point. Input tax of the SSC cannot be used to pay input tax under reverse charge. You remember this logic? If at all SSC is liable to pay tax under reverse charge, what is reverse charge tax? Nothing but input tax only. Yes or no? What is reverse charge? Reverse charge means what? I bought goods from somebody or I bought service from somebody. Generally, I will pay full consideration to the supplier and he will pay to the department. Yes or no? But in a reverse charge, I will only pay taxable value. Input tax, whatever is there in the bill, I will only pay by cash to the department. Now, input tax I have to pay, right? Now, I already have some input tax in my electronic credit ledger. Now, can I set up this with, how do you, input tax is used to pay output tax. Not, input tax is not used to pay another input tax. Exactly. AMT is not used to pay AMT. AMT credit that you have is not used for AMT. AMT credit you should use it for regular tax extra that you are paying. In any year, if at all you are paying regular tax beyond AMT, that extra tax you are paying no regular, AMT credit you have set off. Are you clear? Now let me sum up the story. What they are trying to tell. No, what they are trying to tell here. Look at from this book. Entire provision is over. Entire provision I covered. Just 1 or 2 small conditions are missing. Okay, that alone now I will cover. Now, first of all, AMT provision is applicable only a person who is paying tax under default tax regime. Suppose a person paying tax under default tax regime, he is not eligible to claim AMT. He is not, first of all, AMT concept will not apply to him. Okay, now look at first point. This provision, AMT provision does not apply. Second point, if the SSC is declaring income under default tax regime. First one, non-applicability. You know, I call it as exemption for AMT or non-applicability of AMT. AMT is not applicable if the SSC is declaring income under default tax regime. Are you clear? Now, when it is applicable indirectly, suppose I am claiming optional. I am paying tax under optional. To everyone it is applicable? No. Any person who claimed deduction under Chapter 6A heading C. In our syllabus, how many deductions we have? These 3 deductions only we have in our syllabus. AT, JJA, QQB, RRB. Remaining heading C deductions we don't have in our syllabus. But heading C, if at all you are claiming, for all of them, AMT provision is applicable. Or a person who is claiming deduction under 10AA. Or a person who is claiming deduction under 35 AD. So, a person claiming deduction under these 3 sections, for him, AMT provisions will apply. AMT will apply. That doesn't mean AMT tax you have to pay for sure. AMT will apply. Now, what should I check? You know, I should now compute. What I should compute, you know? Adjusted total income. The moment AMT is computed, the moment AMT applicable, the moment 115JC is applicable, I should adjust my total income again, add back the reduction, claim depreciation if at all I am eligible for. Now, what is the total income as per normal provisions? Look at, add back deductions claimed if any under 10AA, deduction claimed under 35AD, deduction claimed under 80JJAA. Look at deduction claimed under 80JJAA RRB. And again, when you are adding back 35AD related to that capital expenditure, depreciation now you can claim, right? Yes or no? Because no, when you claimed 35AD, you will get 100%. Now when you are claiming reduction, no, you are eligible for at least depreciation, additional depreciation, all that you are eligible. Reduce it. Then what you will get, final figure is called as adjusted total income. And if this adjusted total income is exceeding 20 lakh, if this adjusted total income is crossing 20 lakh, compute AMT tax. Suppose no, I did this answer and this answer is coming less than or equal to 20 lakh. Then I will stop the problem there itself, AMT related. I will not even worry about AMT tax, because department don't want to collect from small people here. They want to only collect from big fish. Okay, so if the adjusted total income, even after adjusting deductions, all that, no, if at all your adjusted total income is not exceeding 20 lakh, then no problem. Are you clear? Suppose if it crossed 20, that's it, AMT is applicable. Now when AMT is applicable, how much is the AMT tax? Whatever adjusted, for example, here my answer is 30 lakh. Here my answer is 30 lakh. Then AMT is equal to 18.5% of 35 lakh plus surcharge. If at all this is more than 50 lakh, 10%. If it is more than 1 crore, 15%. If it is more than 2 crore, 25%. If this is more than 5 crore, 37%. Am I right? Yes or no? Plus surcharge plus cess. Are you clear? Now one important observation. Here, what am I taking here? Total income I'm taking. I'm not taking PGB income. Remember, total income I'm taking. Yes or no? Now this total income could include, remember, this total income could include lottery winning, long-term capital gain 112A, 112, short-term capital gain 111A. Are you getting it? Anything it could include. That doesn't matter under AMT. You know, in this, no, entire long-term capital gain, everything is there, which means in the adjusted total income also long-term capital gain, everything is there. Am I right? I am not bothered about it. Straight away the tax rate is 18.5. Generally, when I compute total income, when I have to compute tax liability, I split the total income into two parts, specials and normals, and apply rates respectively. But when I'm computing AMT, I will not apply like that logic. Directly ATI multiplied by AMT tax rate, which is 18.5%. That's why I gave here one note point. Special incomes, if any, are also taxable at 18.5% only under AMT provisions. Easy. Now, how much is the tax liability? Look at how much is the tax liability. For example, if regular income tax payable means what? Normally, if AMT does not apply, adjusted total income does not apply, you computed total income as per general law and you computed tax. That is called regular income tax payable for a particular previous year as per normal provision. If it is less than AMT, wow, if at all normal tax is 0 or normal tax is less than AMT, then department will not leave you. Adjusted total income will be deemed to be your total income and AMT tax will be payable through challan. Whatever AMT amount is there, pay. That's it. Already TDS advance tax you paid a set off. Pay balance amount. Are you clear? Now whatever the AMT that you are paying, no, beyond regular income tax, that can be taken as AMT credit. Look at AMT credit. What is it? AMT credit is excess of AMT paid over the regular income tax payable under the provisions for that year. So therefore AMT credit is equal to AMT minus normal tax, yes or no, is equal to AMT credit. Am I right? Next, now what you can do, this AMT you can carry forward for set off up to maximum of 15 assessment years. That tax credit you can set off against regular income tax payable in the later years, provided that regular income tax shall be in excess of AMT for that year. Which means if at all in the next year minimum tax AMT is coming and your regular tax coming, then minimum tax AMT 3 crore you can't set off, 7 crore you can set off. Are you clear? So that is an amount equal to AMT in every year must be paid by challan only. In other words, AMT credit cannot be set off with AMT liability in the later years. Are you clear? That's why I told the entire story. Now, by the way, clarifications. Sir, in 1 year, no, next year, no, in my next year, no, AMT credit I have, sir, brought forward. Next year, I computed regular tax, sir. But in next year, no, I am not liable for AMT because adjusted total income does not exceed 20, sir. Now, which means my AMT liability is 0, sir. My normal tax liability is so much, sir. Still, can I apply Setoff? Happily, you can apply AMT tax credit allowable even if in the next year adjusted total income is not exceeding 20 lakh. Means next year AMT tax is literally 0. Entire amount of tax is regular. Then you can set off happily. Are you clear? Tax credit allowable to set up even if the SSC does not claim deduction in the next years. Next year I didn't claim any deduction, sir. Okay, I didn't. AMT provision itself it does not apply, sir. Entire tax is regular tax only. Still can I set off my AMT credit? Yes, man. If that is not the case, people will kill us. Are you clear? That's it. And further, suppose no, this year you opted optional tax regime and next year you are going for default tax regime. That time AMT logic will not apply. AMT credit, look at a person who is paying under DTR under 115 BSc would not be eligible to claim AMT credit. If at all, see next year also going optional happily. This is optional related, that is optional related, then I will permit set off. Next year if you go default tax regime, which is the biggest benefit I am giving you, AMT credit and all will lapse. Are you clear? Okay, this point once again we get in the initial basic concepts chapter. All these points were there in basic concepts itself. Majority of these points were there in basic concepts, but there you won't understand anything if I start discussing in the very first chapter. Now you are in a position to understand better. Am I right? That's it. With this, the concept of AMT is completely over. We did one problem technically speaking here. We did one entire how AMT mechanism works with it. Are you clear? Now we'll go back to test your knowledge questions and illustrations, and there you will understand even more better clarity. If at all any of you are having 1% doubt in this topic, don't worry. Again, we are solving in the upcoming so many 3-4 problems are there on AMT. Don't worry. Big comprehensive problems are there. Once we solve that, you will understand better. Now then in the same chapter there is one more concept, how to solve total income problem. This you should not mug up now. First we'll solve all the problems, then we'll come back and then check this. So that's when you would digest this entirely. Clear? That's it. We'll take a break and get back and then continue solving the problems directly. Confident? Yeah. Yes. Now let's discuss the revision of residential status. Okay. Now, by the way, in the residential status, we are going to discuss about section 5 to section 9. Basically, there is a section called section number 9. We never discuss this. Okay. So, and nobody knows what is section 8. Actually, section 8 is nothing but dividend section. Section 8 talks about dividend. What this section says, you know, under section 2, subsection 22, any dividend declared. 222, A, B, C, D, E, 5 clauses we have. There is some that you will understand in other sources. Okay. So, whatever dividend declared is taxable in the year in which it is declared, and it has another subsection. 8 itself has another subsection which also says that interim dividend is taxable in the year in which it is made available. So technically this section is something that is not dealing with residential status, whereas remaining 4 sections are dealing with residential status. Section number 1, by the way, income tax law section number 1, what is the title of this act? 2 talks about definitions, 3 talks about previous year definition, 4 is charging section. Okay, whereas now 5 talks about scope of total income, 6 actually talks about residential status of various SSCs, 7 talks about what do you mean by deemed to be received, in India. Okay, and section 9 talks about what do you mean by deemed to accrue or arise in India, arise in India. So these are the sections that we have in our syllabus. Okay, now let us discuss one by one. Before I actually discuss about residential status of any SSC, first let us discuss why this residential status is important. Okay, now so section 5, what is the section 5 talks about? Scope of total income. In any country, you see, income is taxable. In any country you take, there are 2 principles based upon which income is taxed. One is source principle, another one is called as receipt principle. Okay, what source principle says? If income accrued or deemed to accrue in India, if income is accrued or deemed to accrued in India, It is taxable for everybody. Able to understand? It is taxable. Now, you know, actually, before I even discuss this, basically, a person from income tax point of view is categorized into two categories. A person is divided into two categories. One we call them as resident, and another one is called as non-resident. Again, these residents are again broadly classified into two more subtypes. Okay, this subtypes is applicable for individual and HUF. Okay, this subtype is not applicable for other SSEs. Generally, for all SSEs, the SSEs are either resident or non-resident. That's it. A company can be either resident or non-resident. A partnership firm can be resident or non-resident. Society, a resident or non-resident. Able to understand? Whereas individuals and HUF, there are two more possibilities: resident and ordinarily resident, resident not ordinarily resident. Okay, resident and ordinarily resident, resident not ordinarily resident. And third category in case of individual is non-resident. Now, what do you mean by resident and ordinarily resident? What do you mean by resident not ordinarily resident? And what do you mean by non-resident? You know, in a simplest way, I'll tell you, resident and ordinary resident means what? Resident means current year is resident. Whatever the year we are checking is a resident. Even in the past also is resident. In the past also is resident. We will call him as he is resident and also ordinarily resident. Resident but not ordinary resident. What do you mean by that? He is resident in current year but not resident in previous years. Non-resident, he is not a resident at all in current year. Now, when a person becomes ordinary resident, when a person becomes not ordinary resident, and when a person becomes a non-resident, we will discuss a little while later under section 6. Now, why we need to discuss this kind of classification? Remember, now which means ultimately there are three categories: resident, ordinary resident, resident but not ordinary resident, and non-resident. Why we need to discuss these three kinds of classification? Why bifurcation is required? And by the way, remember, this middle category is applicable only for individual and HUF. Middle category is applicable only for individual and HUF, whereas first category is applicable for all SSEs. Last category is applicable for all SSEs. Correct? All SSEs means what again? Individual, HUF and others also. Last category, others, individual and HUF and others also. Whereas middle category is applicable only for individuals and HUF. Now, what is the under income tax law? What is the taxation principle? Which incomes are taxable for them? See, a person may be getting income from India, or a person can be getting income outside India. Able to understand? Now again, residential status is something different from citizenship. You may not be Indian citizen, but you are settled in India and earning income in India. Possibility? Yes or no? Or you may be an Indian citizen but settled outside India. For example, Priyanka Chopra, Indian citizen and settled outside India. Able to understand? Or there can be some actors who are there who are actually born and brought up outside and were settled in India. For example, Deepika Padukone, she is actually a foreign country citizen but settled in India. Able to understand? Fine. Anyhow, so citizenship is by birth. Citizenship comes of any country by birth in that country. Residential status is every year varying. Your residential status can be varying every year. Okay, so in India, under income tax law, you may be resident in 1 year, you may be a non-resident in another year. So we don't know. Able to understand? Whereas citizenship is always constant. Generally, citizenship is always constant. You can get citizenship by birth in a country. In some countries, you can also become a citizen of that country by some specific procedure also. Okay, fine. Now. So which means a person can have incomes across India as well as outside India. Now, which incomes are liable to pay tax? Which incomes are liable for income tax in India? This is the question. Now, first one, receipt principle. What is this? First one, receipt principle. What do you mean by receipt principle? Income received or deemed to be received in India. Okay, received in India. Or else I will just write like this: income received in India. Whenever I say received, it includes deemed to be received in India. If at all it is received in India, whether you are a resident Indian, whether you are a non-resident, Indian citizen, foreign citizen, I don't look at all that. You are receiving that income in India. In all the cases, it is taxable. Are you clear? Suppose no, received is not in India. Suppose you didn't receive the income in India. Then I will see where is the source of income. Then I will see what? Where is the source of income? What do you mean by source of income? Where income is accrued or deemed to accrue. Where the income is accrued or deemed to accrue. If accrual is in India, then also in all the cases it is taxable. In all the cases it is taxable. Suppose no. Indirectly from these 2 points you can conclude one thing. If receipt is not in India and if source is not in India, it is not taxable. That's what we can conclude based on these 2 principles. But there is a third principle and fourth principle also there. Okay, what is this? Suppose no, income received outside India, and source is also outside India. Receipt is outside, source is outside. See, remember, source means accrual. Or deemed to be accrue. Accrue or deemed to be accrue. Both called as source. Source is outside. Receipt is also outside. Now what about that? First I will see, suppose both are outside. Then I will see one question. Okay. Is it from business or profession controlled? Is it business or profession controlled or set up from India? I will see this. If business or profession is controlled or set up from India, I will see. Second principle, other sources. Second principle is any other source. Other sources means any other source. Are you clear? Now first I will talk about any other source. Okay, any other source. Now one more thing I wanted to highlight. For resident and ordinary resident, global income is taxable in India. Remember, for resident and ordinary resident, what is taxable? Global. Therefore, whether source is outside or inside or doesn't matter, any other source doesn't matter, global income is taxable. Yes or no? Now, for a non-resident, no. I'm talking about the third column. For a non-resident, no. Income is taxable only in 2 cases. Receipt must be in India or source must be in India. If both are outside, not at all taxable. So, not taxable. I will put it in red color. What is it? Non-taxable. Even for RNOR. An income is taxable only if receipt in India, taxable. Or if source is in India, taxable. If both are outside, not taxable. The answer is what? Not taxable. Now both of outside also, not taxable. Wrong. Okay. Suppose here alone one small exception is there, taxable. Okay. Now, if at all, business or profession is outside, profession is also outside only. Okay. You received also outside only, but that business you are controlling from India, that profession you are set up from India. For example, you are a CA office, you opened a CA office in India. You opened another branch office outside India. That's a profession set up outside India from India. That has a professional identity from India. That's called profession set up from India. Okay. Or if a decision related to business outside India is taken in India, then that's a business, even though business is outside, even though receipt is outside, that's a business controlled from India. In case of business or profession controlled from India, for all types of residents it is taxable. For non-resident it is not taxable. Remember, for non-resident, simple rule: source is in India, taxable. Receipt in India, taxable. Both are outside, not at all taxable. Sir, it's a business controlled from India, profession set up in India, doesn't matter, not taxable. Clear? Any other source, same logic, not at all taxable. So from this entire table I can derive one thing. For a resident and ordinary resident, global income is taxable. For resident but not ordinary resident and non-resident, for a resident but not ordinary and non-resident, incomes are taxable when source is in India. Incomes are taxable only when receipt is in India. Correct? When source is in India, taxable. Receipt in India, taxable. If both are outside, not at all taxable. However, one small exception. For RNOR, if at all business is outside or profession is outside, receipt is also outside. But if it is from control from India or if it is set up from India, again it is taxable. That's it. The same thing is what we have even given in our book. Also. What is it? 30. Yes, you can see here. There is a page number 30 in our book. Come back to the page number 30. You see here. Okay, now here I have given conclusion, summary, entire summary I have given. What is the summary? For an ROR, global income is taxable. Whereas for RNOR and NR, generally taxable only if either source or receipt is in India. Further, for RNOR, even if source and receipt are outside, but it is from business controlled from or set up from India, is taxable. Business controlled from or profession set up from. You can write the word profession there. Able to understand. So this is the table which I discussed right now. Clear? Now on this there is a problem. Okay, you can do a problems which are there in our question bank also. Just apply this blind logic. Sometimes in exam, no, they will give you in exam, for example they'll give you an exam, broad observations I'm telling you. Okay, foreign company dividend declared, foreign company dividend accrual is outside, but if at all 50% of the dividend is directly received in India, 50% of the dividend is received in India, then 50% only taxable for RNOR and NR. Okay, whereas for ROR 100% taxable. Correct? Because for ROR, source doesn't matter, receipt doesn't matter, global income is taxable by default. I'm talking about by default. See again here, sir, how come global income is taxable? In other country also that income can be taxed in other country also, right? He has to pay double time tax. There are double taxation avoidance agreements that are there. You will understand it in CMA final, you will understand it in CA final. Okay, in CA final you have double taxation related topics. Basic rules I'm talking here. Okay, next, another one, dividend from Indian company. You know what? 50% only received in India. How much it is? 50% only received in India. But you see, receipt may be 50% in India, but source is India. For everybody 100% taxable. For everybody 100% taxable. For everybody 100%. So in exam they'll give you, this is 10,000. Okay, how much you will write? For ROR, how much you will write here? You know, 10,000 you will write. For RNOR 5,000. For NR 5,000. Indian company 20,000. Okay, in all the cases 20K, 20K, 20K. Correct? Third kind of adjustment, there is a business. Okay, some business is there which is outside India or profession outside India. Received is also outside only. Received is also outside only, but it is controlled from India. Profession is set up from India or business is controlled from India, and this amount they gave, let us assume 1 lakh. They gave 1 lakh. Remember, entire source outside, receipt is also outside, but it is only controlled from India. For non-resident it is 0 taxable. For RNOR, entire 1 lakh taxable. For resident also ROR, entire 1 lakh is taxable. Are you clear? Suppose in the problem someone says out of 1 lakh 20,000 is only received in India. 20,000 received. Then for non-resident also the answer will be 20. That's it. Broadly these adjustments only will be there. Okay, they will give you source. They will give you how much is received also. If source is in India, how much received in India doesn't matter. If source is outside India, how much is received in India does matter. Important. If both are outside, check whether it is from business or profession controlled or set up from India. If that is the case, ROR 100% taxable. Otherwise for non-resident it is not taxable. Easy. With this section 5 is completed. Okay, now this is the very reason why I have to know how much income, what income is taxable. If I have to know this, I must know scope of total income, section 5 concept. Only if I know section 5 concept, then there is a point in learning section number 6. Now let us understand section number 6, residential status of various SSCs. Residential status of various SSCs. Now you see in that, the first one is residential status of individuals. The first one is what? Residential status of individual. But before I discuss individuals, before I discuss residential status of individual, first let me discuss about other SSCs. Now, what is the residential status of company? What is residential status of a company? How to decide whether a company is a resident or not? Check out, is it Indian company? Is it Indian company? Yes sir, Indian company sir. It's registered in Companies Act sir. Then that's an Indian company. Always a resident. Indian company is always resident. Sir, it's not Indian company sir. Some other company sir. It's not Indian company. It is not registered in the Companies Act sir. It's a foreign company sir. What about this? Is it a resident or not? A foreign company can become a resident if poem in India. If poem in India, then it's a resident. If poem is outside India, then it's a non-resident. That's it. If poem is in India, it's a resident. If poem is outside India, it's a non-resident. Sir, what is poem, sir? Place of effective management. POEM. Place of effective management. If place of effective management is in India, then it's a then it's a resident. If place of effective management is outside India, then it's a non-resident. This POEM principle has to be seen for which company? Only for other than Indian companies. For Indian company, POEM and all I don't bother. Even though it's an Indian company, all board meetings are happening outside India. Doesn't matter. It's an Indian company registered under Companies Act. Always it's a resident. That's it. This is residential status for companies. Then what is the residential status of LLP, partnership firm, society, AOP, BOI, local authority? In all these cases, what is the residential status? Very simple. Very simple. One criteria. There is a criteria called control and management. There is a criteria called control and management for all SSCs. Remember, I am not yet talking about LLP. I am not yet talking about individual. Whereas I just now spoke about a company and just now spoke about LLP, firm, society, local authority, every other else. Just that individual is kept pending, HUF is kept pending. Rest all other I discussed. Correct? Now look at control and management. Where is it? If it is partly or wholly means even part of control and management is in India, full of control and management in India, then it's a resident. It's a resident. Sir, control and management is fully outside India. Fully outside India. Then the firm, LLP, society, local authority, they become by default non-resident. Simple. Sir, AOP, BOI, sir. Sir, this is an SSC. There is an SSC, sir. Not individual, not HUF, sir. Not a company also. How to decide residential status? Control and management where? Partly in India at least. Fully in India, lucky. Partly in India, resident. 100% outside India, then only it's a non-resident. 100% of control and management outside it, then it's a non-resident. That's it. Now let us discuss about residential status of individual. This is most important. Okay, residential status of individual. Residential status of individual. Okay, individual. Residential status of individual. And remember, I told you for individuals and HUF, residential status can be three types: ROR, RNOR, NR. Okay, now you know, an individual, basically how the structure I will tell you. Okay, for an individual and HUF, no, first we should decide are they resident or non-resident by default. First we should decide are they resident or non-resident. Okay, this we call it as basic residential status. First I call it as what? Basic residential status. Suppose if they are non-resident, no more confusion, non-resident, over. Suppose an individual or HUF became a resident. Suppose an individual or HUF became a resident, then I should decide are they ordinary resident, not ordinary resident. Are they ordinary resident, not ordinary resident? First I should decide whether an individual HUF or resident or not. Okay, in the test, no, in the testing process, no, either they become a resident or they become a non-resident. If they become a non-resident, no more questions, they are non-residents. If they become a resident in our first testing method, if they become a resident, then I should go for further testing. Then I will decide whether they are ordinarily resident or not ordinarily resident. Why should I decide like between these two, sir? Because for ordinary resident, global income is taxable. For not ordinary resident, received in India, accrued in India only taxable. Or business or profession controlled from India only taxable. Correct? Business or profession controlled from India, only that is taxable. Hello? Clear everyone? Just a minute. Yeah. Perfect, right? Now let us understand how to decide this basic residential status for individuals only. HUF I am not touching right now. How to decide basic residential status for individuals? Look at carefully. For individuals, how to decide basic residential status? There are three categories. Through which an individual can become a resident. There are three categories: category 1, category 2, category 3. There are three categories through which an individual can become a resident. What are these three categories? First category, they spoke about basic conditions. Second category, I will name it as, I am naming this, okay, this is not the name given in the act, okay, I am naming it. I will call them as special resident. I will call them as special resident. 120 day plus 15 lakh logic. Just a keyword, okay? 120 day plus 15 lakh logic. 120 day plus 15 lakh logic. There is another logic I want to tell here, okay? Indian citizen or Indian origin visiting India. Indian citizen or Indian origin visiting India. So second category, I call him as what? Special resident. He's a resident only, but I'm just calling it a special resident. That's it. Because no, you may become a resident. You may become a resident through category 1. You may become a resident through category 2. You may also become a resident through category 3. If you are becoming resident through category 1, you are simply called as a resident. If you are becoming resident through category 2, you are also called as resident only. Category 3 also you are resident only. In all these 3 cases, any one case applicable to you, you are a resident only. Okay. Now, category 3, I call them as deemed resident. I call them as what? Deemed resident. There is a section called 6(1)(a). There is a section called section 6 subsection 1(a). Okay. Now let us discuss one by one. Okay. Now if you see here how the testing logic will apply. First I will apply category 1. If at all category 1 basic condition satisfied, I will not check category 2, category 3. Category 1 failed, sir. Category 1 failed, sir. You cannot say non-resident. You cannot straight away say non-resident. Check category 2. Category 2 also failed, sir. Then check category 3. Are you clear? Category 3 also failed, sir. 1 failed, 2 failed, 3 failed. Then he is a non-resident. Sir, 1 only failed, sir. 2 satisfied, sir. No need to check category 3. No need to check category 3. So 1 failed, 2 failed. Then check category 3. All the 3 failed, non-resident. I hope you understood category 1, 2, 3. So in category 1, 2, 3, any one scenario only will be applicable. Okay. If a person becomes resident because of any of these 3 categories, we will classify him as a resident. Then we should go for additional conditions checking. But here there is a twist. If a person becomes resident through category 1, then only additional conditions logic I will apply. Additional conditions logic and I will check RORA, RNORA. Are you clear? So, if a person satisfy basic conditions, category 1 he became a resident, then only I will go for additional conditions ROR, RNOR logic. Suppose a person failed basic conditions. He may satisfy category 2. He may satisfy category 3. Any of it or both of it doesn't matter. Okay. He will always, if at all a person becomes resident through category 2. If a person becomes resident through category 3, he is always RNOR. He is always RNOR. Straight away conclusion. Now, when should I check additional conditions? Only when basic conditions route. Only if a person becomes resident through basic conditions route. If a person becomes resident through the basic conditions route, then I will go for additional conditions checking to know he is an ordinary resident or not. Able to understand? Now, like sir, what are basic conditions? What is special resident? What is deemed resident? And once again I will sum up at last. Okay. Now, basic conditions. What basic condition? I will call them as B1 and B2. There are 2 basic conditions. I will call them as B1 or B2. And between these 2 conditions, any one only enough. Any one condition is enough. First I am talking about category 1. Residential status. Okay. In that 2 conditions are given. If any of these conditions satisfied by individual, an individual satisfy any of this condition, he is a resident. Now B1. What is B1? He is in India, sir. He is in India for 182 days or more. He is in India for 182 days or more. When, sir? In relevant previous year. What is relevant previous year? Relevant previous year nothing but in your exam they are asking for previous year 24-25, assessment year 25-26, then relevant year is 24-25. If they are asking you for 23-24 residential status determination, then relevant previous year is 23-24. Suppose if they are asking you For assessment year 25-26 residential status, then relevant previous year is 24-25. That's the main. Now, since in our exam 24-25 only we check, in 24-25, is he in India? Is he in India for 180 days or more? 182 days or more. Check out. Yes, he is in India, sir. He is a resident. Sir, what do you mean by in India? What do you mean by in India? Very simple. The date on which he entered in India, that day is counted as part of 182. And one day he'll be leaving, some date he'll be leaving, that date is also counted. On that date, he may be there only 1 hour in India. For example, on 1st January, night 11 o'clock he landed in India. Still, 1st January is treated as part of 182. Okay? He left India on 28th February. For example, 28th February he left, he took the flight. Morning 1 o'clock he took flight. 1 hour only is in India. Doesn't matter. That is counted as 1 day. Are you getting the point? That's it. So he is in India 182 days. Sir, how he should 182 days means what? Continuously? No necessity. He came India and left. 10 days total he stayed. Then again he came again after 10 days. Another 20 days he stayed. 10 plus 20, 30. Like this, how many days he stayed in India? Totally you count. Like that, if at all 182 days or in India is there. If at all 182 days is coming. That's it. B1 satisfied. He is a resident. He is a resident. Suppose if B1 failed, sir, he is not in India 182. He is not in India for 182 days. Then you should check B2. Then you should check B2. Now what B2 sections, B2 condition says, is he there for 60 days or more? Is he there for 60 days or more in relevant previous year? Is he there in 60 days or more? Check out. 60 days, easily he'll be there. Not only that, plus and 365 days or more. 365 days or more in past 4 years. In past 4 years. 365 days or more in past 4 years is there in India. Then also he will become a resident. So, sir, he is there in India in the relevant year 60 days or more, sir. Relevant year means what in our problem? 24, 25. Past 4 years means what? 23, 24, 22, 23, 21, 20, 20, 21. Correct? So 23, 24, 22, 23, 21, 22 and 20, 21. In these 4 years, how many days is there? Check out. Minimum 365 days is there. In the current year is there for 60 days. Then automatically B2 condition is satisfied. Then automatically B2 condition is satisfied. Are you clear? Now here there is a twist. Condition B2 we should not check. Condition B2 we should not check for 3 categories of SSC. Condition B2 we should not check for 3 categories of SSCs. What are they? What are the, okay, 3 categories of SSCs. For 3 types of SSCs, for 3 types of, in fact, I will say 3 categories of individuals, because we are talking about individuals, right? So 3 types of individuals, we will not apply B2. Indirectly, we will apply B1 to them. If B1 satisfied, he is a resident. If B1 not satisfied, category 1 will not apply. I will go to category 2 check. If category 2 also not satisfied, then I'll go for category 3 check. That's how the logic applies. Okay. Now, in category 1, 2 criteria they have given. B1 criteria, B2 criteria. If B1 satisfied, no need to check B2. B1 not satisfied, then check B2. Yes or no? B2 is what? 60 or more in the current year, relevant year. 365 or more in the last 4 years. Correct? Now, this B2 will not apply. B2 criteria will not apply to 3 categories of individuals. Actually, in the act, what they will say, here 60 is there, right? They say 182 days logic. They say 182 days in current year. Automatically B1 gets satisfied. Able to understand? Indirectly, 60 days logic plus 365 days logic will not apply to 3 types of individuals. Who are they? First one, an individual, an Indian citizen. First of all, Indian citizen leaving India. What is it? Leaving India. No. Only that you should not interpret. Leaving India for employment. For the purpose of employment is leaving India. Employment means what? Either for doing a job in some foreign company or for the purpose of business outside India. For some money making purpose, earning purpose is leaving India. Only for him B1, B2 will not apply. Only for him B2 condition will not apply. Are you clear? Suppose a woman or a man, she or he married somebody abroad. and left India because of the marriage, not for earning purpose, this exception will not apply. This exception will not apply because the exception is applicable only for whom? Indian citizen leaving India for employment. Clear? Next, second, Indian citizen leaving India. What is it? Leaving India as a crew member, on Indian ship, okay, as a crew member. I mean, the main theme is here, as a crew member. That's enough. As a crew member. If at all you are working as a crew member, for you also B2 condition we will not check. Okay. 3. Actually they call it as foreign bound ship. They actually call it as what? Foreign bound ship. Okay. There is something called eligible voyage concept and all. We'll discuss that later. Not that important. Okay. Not that complicated. Then condition 3. Indian citizen here or POI. You may call them as IO or POI. Person of Indian origin, POIO. Person of Indian origin or simply IO, Indian origin. Indian citizen, Indian origin. They are not leaving, they are visiting. They are visiting India only as a visitor, not for permanent settlement. They are visiting India. What is meant by visiting India? They visit, they stay some days and they again go back. Okay, for these categories of people also, these 3 types of individual, B2 we will not check. In other words, for these 3 individuals we will check only B1. 182 days or more in India, yes, resident, category 1. 182 days or more in the relevant year, they didn't satisfy, non-resident, wrong. You should not say non-resident directly. Yes or no? Because you need to check if category 1 condition is not satisfied, you need to go for category 2, category 3. Are you clear? So basic conditions, there are 2 basic conditions. Any one only is enough. Basic condition 1, 182 days or more in India, resident. 60 days or more in India and 365 days or more in India, then also is a resident. B2, 60 days or more logic. That logic we should not apply for 3 types of individual. Who are they? Indian citizen leaving India for employment, Indian citizen leaving India as a crew member in a foreign bound ship, or Indian citizen or a person of Indian origin who settled outside but visiting India. For these 3 categories, B2 we will not apply. Are you clear? 60 days logic will not apply. Which means these 3 people can become resident in category 1 only by satisfying condition B1 condition. If they were in India for 182 or more, then only they will be resident as per category 1. Suppose in exam question they gave some Indian citizen or Indian origin or something, they gave visiting or leaving or something, they gave 182 logic, they didn't satisfy. 60 days logic is applicable to them, but they didn't satisfy. Category 1 close, not applicable. Now you cannot straight away say non-resident. Category 2 you should check. Now what is category 2? Special resident. What is category 2? Special resident. Now what do you mean by special resident? Suppose if category 1 failed, B1, B2 both are failed. Now I will check residential status through category 2. What is this category 2? You know, this category 2 is applicable for whom? You know, Indian citizen or Indian origin. Category 2 is applicable for whom? Indian citizen or Indian origin. Okay, they are visiting India. They are what? Visiting India. They are visiting India. How many days? You know, more than or equal to 120 days in relevant previous year. They are visiting in India for more than or equal to 120 days in India and more than or equal to 365 days in last 4 years. More than or equal to 365 days in last 4 years they are in India. Okay, last 4 years more than or equal to 365 days. Are you clear? Okay, in the last 4 years, 120 days or more in the current year, more than or equal to 4 years. Remember, actually a person who is Indian citizen visiting India, for him B2 will not apply, 60 days logic will not apply, but you can check 120 days logic. You can still check what logic? 120 days logic and 365 days or more in last 4 years. And there is one more condition, and most important condition in this. Okay, and income from Indian sources. What is it? income from Indian sources. Actually what they say, you know, total income other than foreign source, they say. They say what actually? Total income other than foreign source. Indirectly, income from Indian source. Remember, they're asking source, not receipt. Where are you receiving doesn't matter. Where is the source only matter. Are you getting it? So actually, let me use that word only for a better clarity. Total income other than foreign, total income, total income other than foreign source. Look at once again, total income other than foreign source. Okay, total income other than foreign source exceeding, what is it? Exceeding 15 lakh. Exceeding 15 lakh in that relevant previous year, in that year only. In that year, if the total income is exceeding 15 lakh, that to which total income, which income other than foreign source, nothing but which source? Indian source. Array, you are having Indian source so much income, you are there 120 days in India in this year and 365 days or more in the last 4 years, I will treat you as a resident. I will treat you as a resident. Basically 60 days logic 365 does not apply. But if you have a total income in India, Indian source income more than or equal to 15 lakh, Indian source income more than or equal to 15 lakh, and you are having 120 days in India, this year you stayed, I won't even check 182 logic, you are there for 120 days or more in India, that's it, you are a resident. By the way, I will have to check this 120 logic, 365 logic only after if I fail 182 days logic. Yes or no? If at all I satisfy 182 days logic, even I became a resident, should I come back? Should I come to this? I will not check this. I will come special residential status logic only when I fail category 1. Hello? Yes or no? That's it. So, an Indian citizen, Indian origin, visiting in India, first check 182 days logic. 182 days logic you check. He satisfied basic condition. Happily go with additional conditions. Sir, he didn't satisfy basic conditions at all, sir. B1, B2, nothing is satisfied, sir. Now come and check 120 days logic in the relevant year and 365 in the last 4 year. And third condition, total income other than foreign source is more than 15 lakh, exceeding 15 lakh. Are you clear? Now, sir, what do you mean by other than foreign source? Other than foreign source means what? Other than foreign source means what? Very simple, yeah. Foreign source means what? Accrual is outside. Accrual is outside in India. Remember, I'm only talking about source. I'm not talking about receipt. Accrual is outside India. Are you clear? Now, you know, we remember in section 5, scope of total income, we found one point. Business or profession controlled from India. Remember? Set up from India. Basically, this business is outside India. Basically, this business is outside India. Correct? Source is basically outside, right? But for the purpose of checking 15 lakhs purpose, for the purpose of checking 15 lakhs income, for the purpose of checking 15 lakhs only, I am not talking about taxability. By the way, here I am talking taxability or residential status. Residential status. For the purpose of checking this 15 lakh, this business is there, right? This business is outside, right? Profession is outside, right? Yes or no? But it is controlled from India, no? Since it is controlled from India or set up from India, no? This is treated as Indian source. This is treated as Indian source. Only for the purpose of checking 15 lakhs. Remember, not for the purpose of taxability. Hello? Only for the purpose of checking 15 lakhs threshold. Not for the purpose of checking taxability. Remember, taxability is different. Residential status determination is different. Are you clear? Now, so foreign source means what? Accrual is not in India. Accrual is outside India. That is foreign source. Technically, business or profession outside India, it's a foreign source. But since it is controlled from India, since it is set up from India, for the very limited purpose of 15 lakhs rupees checking, this is treated as Indian source. Checking purpose only Indian source. Taxability purpose, it is foreign source only. Okay, that's it. So this is the condition. This is the logic. Now in exam, they'll give you. In exam, they'll give you. For example, I have a problem, I guess so. Okay, just 1 minute. Yes, once I will solve one question on this. Okay, I will solve one question. This is actually my upcoming new question bank for May 26 attempt purpose. But residential status, whether it is May 26 or Jan attempt, doesn't matter. Okay, December attempt or June 26 CMA, Jan 26 CA Inter, May 26 CA Inter, doesn't matter. Residential status chapter syllabus is same. Okay, one question I'm solving. Okay, now look at, there is a question here. What are they saying? Miss Sarika, she is an Indian citizen. She is in employment with a overseas company located in UAE. Okay. This one question, if you understand, category 1, category 2 application you understood. You don't have to solve any other question. Okay. She is settled in UAE. Correct? She is not liable to tax in UAE. Ayyo, she is not liable to tax in UAE. Yeah. Okay, fine, no problem. Okay, I think let us not solve this question. Okay, we'll solve it, no problem. We'll solve it, no problem. She is not liable for tax in UAE. Okay, fine. During the year 25-26, she comes to India for how many days? 121 days. She was in India for 50 days, 100 days, 76 and 145 days in the last 4 years. How many? 145 plus 100 plus 76 plus 50, 371 days. Correct? 371 days she is there in India for past 4 years. Correct? Okay, respectively in 21, 22, 23, 24, 25. That's it. Okay, last 4 years. Because here we are doing from 25-26 angle. For your exam you will be doing in 24-25 angle. That's it. That's the only difference. Okay, next, her annual income for the current previous year. In this question, previous year is 25-26. What is it? Salary accrued or arise and how much? 15 lakh. Okay, where it is accrued? UAE. What is this source? Foreign source. Hello. Okay, by the way, before that, first what we know? Determine residential status and total income of Sarika for this year. What would be your answer if income arising or received in UAE from business setup in India is 10 lakhs instead of 5 lakh? In continuation to the point, what will your answer if Sarika comes to India for 45 days instead of 145 days? Okay, fine, we'll see that. Okay, first we need to decide residential status and then we need to compute total income. Okay, now next, UAE foreign source. Hello. Then income accrued arise in India. Array, they said in India. Indian source. Income deemed to accrue or arise in Indian source. Income arising and received in UAE. And a business is set up in India. Basically, this is a foreign source only. But for 15 lakhs checking purpose, for 15 lakh checking purpose, for that purpose alone, I will call it as Indian source. For checking alone, not total income computation purpose. Income purpose I will not. Taxability purpose I will not consider that as Indian source. Only for 15 lakhs limit checking purpose I will consider it as Indian source. LIC premium paid by check. Oh, this is a payment, ma. This is a deduction, ma. This is a deduction. Fine. Now, first I will check. Category 1 I will check. Okay. Category 1, B1. 182 days or more in the current previous year. Correct? 182 days or more in the current previous year. 182. She stayed only for B1 failed. B2. 60 days or more. She stayed 365 or more. 371. She stayed B2 satisfied? No? We should not apply B2. Why? She is an Indian citizen, settled outside, now visiting India. She is only visiting India. She settled outside, ma. She is not settled in India. Indian citizen visiting only. She is only visiting. That's it. Yes or no? She settled outside. So she is in employment outside already. Means she is settled outside. Now she is visiting India. Third exception for B2. B2 we will not apply. Okay. B1 not satisfied. B2 we should not check. Therefore, as per category 1, she is not a resident. See my words carefully. I am not saying as per category 1 she is a non-resident. No, I am not saying she is a non-resident. I am saying she is not a resident. There is a difference between not a resident and non-resident. Non-resident means answer. Not a resident means still I am continuing discussion. Are you clear? Oh, category 1 failed. Now I will check category 2. Now I will check what? Category 2. As per category 2. As per category 2. There are, what are the things we need to check? First one, is she Indian citizen or Indian origin? Yes, Indian citizen. Is she visiting in India? Yes, she is visiting India. Is she stayed in India for 120 days or more? Yes, she stayed for 121 days. Is she stayed for 365 or more? Yes, she stayed for 371 days. And how much is Indian source total income? How much is Indian source total income? Okay, let me compute Indian source total income. Very simple. Just now we thought this is foreign source. No. Yes or no? Income deemed to accrue. Yes, Indian source. Deemed to accrue in India. Indian source. Income from UAE. Business in UAE. Set up from India. We understood that it is also Indian source. Yes or no? For the purpose of checking 15 lakhs, Indian source. Now, total Indian source income is how much? 9 lakh. Minus 1 lakh deduction. Minus 1 lakh chapter 6A deduction. then what you will get is 8 lakhs. Oh, total income in India. Total income other than foreign sources. Total income other than foreign source, how much? 8 lakhs. Tell me, second category as per our discussion. Second category as per our discussion. Look at second category as per our discussion. What is second category as per our discussion? Indian citizen, Indian origin, visiting India. 120 days or more in the relevant TO. 365 days or more in the last 4 years. And total income other than foreign sources exceeding 15 lakhs. Then only she'll be a resident. Then only she'll be a resident. Now here, if you observe here, her total income is just 8 lakhs. Which means 15 lakh logic she failed. She's there for 120 or more. She's there for 365 or more. 15 lakh logic she failed. Deemed resident is there na category 3. There also 15 lakh logic only is there. There also what logic is there? 15 lakh logic. If 15 lakh logic is failed, category 2 category 3 also failed. If 15 lakh logic is failed, category 2 failed, category 3 also failed. She is a non-resident. What is she? She is a non-resident. Just a minute. Did we do any total mistake? Arey, that's what I'm asking. No, what are you doing then? 9 7 Okay, you should have told no. You should have told no. Okay. 2 plus 7 plus 5. How much it is? 9 plus 5, 14. 14 minus 1, 13. Even it is less than 15. No, it's okay. Anyhow, 15 lakh logic failed. You should have told no when I did a computation mistake. Okay, fine. So, 2 plus 7 plus 5 Indian sources I'm adding minus Indian related deduction. Total deduction, LIC deduction, ATC deduction. Total income is coming 13. Even then, 15 lakh logic failed. Category 2, 15 lakh logic failed. Category 3 also has a 15 lakh logic. In category 3, 2 conditions are there. In that, one of the most important conditions is 15 lakh logic. There also it is failed. Category 1 failed, 182 days logic. Category 2, 120 logic she satisfied. 365 logic she satisfied. 15 lakh logic she failed. You know, category 3, deemed resident logic there. Actually, as per deemed resident, no, she should not be taxed outside India. Here, she is staying in UAE, not liable for tax. And 15 lakh logic should be satisfied. But 15 lakh logic she failed. Therefore, she is a non-resident. Therefore, she is a non-resident. Therefore, she is a non-resident. She is a non-resident. Now, we need to compute her total income taxable. Remember, sir, we already computed, no, 13 lakhs is the answer. No, this total income is for checking purpose. Okay, now we need to compute. Now she is a non-resident, remember. Now, at the beginning of the class, we understood, right? For a non-resident, what incomes are taxable? Source must be in India or receipt must be in India. Sir, both are outside, sir. It's from business or profession controlled or setup, still not taxable. Other sources, still not taxable. Yes or no? For non-resident, she is a non-resident. What are taxable? Sir, salary accrued or erased in UAE, foreign source, not taxable. India, erased in India, taxable. Deemed to accrue, taxable. Sir, income arising in UAE, but it is set up from India, not taxable. Sir, immediately, sir, here why we didn't consider, whereas here why we considered this? The logic is, for the purpose of checking 15 lakh, even though it is outside, but it is set up from India, right? It is included since business is controlled from India, even though such income is accrued and outside India. For the purpose of 15 lakh limit check, this is treated as Indian source. This is treated as Indian source. In fact, this is not treated as foreign source. This is not treated as foreign source. But for the purpose of taxability, original logic will apply. Indian source or foreign source. Original logic, section 5 logic will apply. That's it. Over. Category 2 over. Are you clear? Now, category 3. Now we will see category 3. Category 3. Suppose, category 1, she became a resident. I will not check category 2, category 3. Suppose category 1 failed. Just now we saw category 2 we checked. Sir, category 2 also failed, sir. Then immediately in the same problem, I checked category 3 also. Correct? I checked category 3. You see here, in this problem, I checked category 3 also. Next, I'm even keeping some exceptional question word. Exceptional means what, Okay, in the next item, this question bank, they'll have exceptional word. Exceptional means that question is something tricky. What is the tricky point here? Here 5 lakhs is there, here 5 lakhs is not there. Okay, all category 1, category 2, category 3 categories we checked. Even then she is a non-resident here. Are you clear? That's how this problem worked out. Okay, next. Now look at, so this is the question. Now category 2 also she failed. Now category 3 we should check. By the way, if category 2 she is satisfied, category 2 when she can satisfy, when any SSC can satisfy, they must be individual, they must be Indian citizen or Indian origin, they are visiting India, and they are visiting for how many days in India? 120 days or more in current year, and 365 or more in last 4 years, and total income other than foreign source must exceed 15 lakh. Clear? Yes or no? That's it. Now category 3. Sir, category 2 also failed, sir. Now category 3 you check. Category 3 talks about deemed resident. Category 3 talks about deemed resident. When a person will become a deemed resident? Very simple. Category 3 says, first condition, he should not be taxable outside India. Outside he should not be taxable. He is not liable for outside India to any income tax. His income is not liable for tax outside India because of his country, domicile, whatever the reason. I don't bother. He need not pay income tax. He don't have to pay income tax at all outside India. He's exempted from tax. He's exempted from tax. That's it. Literally, he's not paying any income tax in any country. And what you know? He's Indian citizen. What is he? He's Indian citizen. Sir, is he visiting or leaving? Doesn't matter. He's just an Indian citizen. He may not be visiting also. He may not be visiting India one day also. It doesn't matter. He's visiting or non-visiting how many days? Deemed resident. No days information is required. Days information doesn't. It's irrelevant for deemed resident topic. Deemed means what? You're not actually saying in India. We assume that you're India. Deemed means what? Assumed to be a resident. Resident, general dictionary meaning resident means what? You're residing there. 120 days hormones, you're residing there, right? 365 hormones, you are residing there, right? 182 means also you are residing. So you are residing, right? Deemed resident, he need not reside in India. He need not reside in India. Still we call him resident. Still we call him resident. That's why we are treating it as deemed resident. Sir, when did I reside in India? That's why I'm not saying you resident. I'm saying you deemed resident. Deemed means what? I assume resided in India. Why you will assume resided in India? Because you are an Indian citizen. You don't have any tax outside India, and you have total income other than foreign source. You have total income other than foreign source, which means Indian source is exceeding 15 lakh. If at all you have Indian source exceeding 15 lakh, you are a resident. You are deemed to be resident. Are you have 15 lakh plus income in India. You don't visit India. I don't bother also. You don't have to pay tax anywhere outside, right? First condition, you should not pay tax outside. First condition, you should not pay tax outside. Second condition, you should be Indian citizen. Third condition, your Indian source income should exceed, total income should exceed 15 lakh. Then I will assume you are resident. Now in this question just now we solved, yes or no? What we solved, Indian source income is just 13 lakhs. Okay. And you see 182 days logic, he didn't satisfy category 1. In category 1, B2 will not apply to him because he is an Indian citizen settled abroad. So it is not applicable. He is just a visitor to India. Correct? He left employment. He left for the purpose of employment long back. So we will not apply B2. Then category 2 visa, 120 days logic, 365 logic, 15 lakhs logic visa, 15 lakhs logic he caught. He failed. So category 2 does not apply. Category 3, he is a resident Indian citizen. Yes. He is an Indian citizen. Yes. Yes or no? Second condition, he should not be liable to pay tax. Not liable for tax in UAE. Oh, satisfied. Third condition, his total income from Indian source should exceed 15 lakh, but it's only 13 lakh. Therefore, category 3 also failed. Therefore, he is a non-resident. Are you clear? Now, first part of the answer is over. Correct? He is a non-resident, and we computed total income. Computed total income, how much it is? Only 8 lakhs. Okay. Then next one. Second question. What would be your answer? If income arising and received in UAE from business is there, set up, that is India is 10 lakhs. Oh, this number is not 5, this is 10. So 10 means 13 becomes 18. Oh, exceeding 15 lakh. Exceeding 15 lakh. Directly as per category 2. Directly as per category 2. He will be a resident. He will be a resident. Now immediately the question comes, since he is a resident, is he ordinary resident or not ordinary resident? At the beginning itself I told, category 2, category 3 SSCs, category 2, category 3 individuals will always be RNOR. For RNOR, which incomes are taxable? RNOR, which incomes are taxable? The first discussion, residence status beginning I discussed, source in India taxable, receipt in India taxable, both outside. but from business control from India, profession control from India, again taxable. Yes or no? Which means this 10 lakhs becomes taxable in case you are an RNOR. Yes or no? So here how much is taxable in the second scenario? Second scenario, automatically taxable income. Total income would be 18 lakh. Total income would be 18. Total income for Indian source calculation purpose also 18 lakh only. Taxability also 18 lakh only here. Why? For RNOR, even though business outside, receipt outside, if it is controlled from India, we will treat it as Indian source for RNOR and tax it. That's it. Are you clear? Next, they are asking one more question. Third question. What are they asking? In continuation to the point, what would be your answer if Sarika comes to India only 45 days? Oh, 45 days. Second criteria failed. Second category failed. 120 only. Second category. First logic 120. Indian origin or Indian citizen visiting India 120 or more, 365 or more, 15 lakhs or more. Correct? Category 2 failed. But category 3 she caught again. Category 3, 18 lakhs she has Indian source income. Yes or no? And she is not liable for tax outside. Whether she is residing in India doesn't matter. She is a deemed resident. And deemed resident is RNOR. And if she is an RNOR, the answer of total income is as it is step number 2 answer. Question number 2 answer only. Question number 3 total income answer. That's it. Able to understand? So third one you see. So the answer would be same as computed in point number 2 above. That's it. With this individual residential status is almost over. Not yet over. Almost over. Now look at. So individual residential status, if you see. So individual residential status. Now just now we saw category 1, category 2, category 3. If a person becomes category 1 is talking about basic conditions. Category 1 is talking about B1, B2. B2 has 3 exceptions. Correct? Category 2 talks about 120 logic, 365 logic, 15 lakh logic exceeding. Category 3 talks about, by the way, here Indian citizen or Indian origin, both are covered. Category 3, Indian citizen, Indian origin not covered here. Okay? Plus not taxable, not liable to tax outside India. Correct? Outside India plus 15 lakh logic. Easy. What do you mean by 15 lakh logic? Indian source income logic, how much? Now, if a person becomes resident as per category 2, category 3, for example, see, by the way, how should I verify? Can I verify any order? First I will check 3, then I will check 2, then I will check 1, or first I will check 2, then 3, 1. Can I verify in any order? Never. First you should check in 1. If 1 does not satisfy, then I will go for 2. If 2 does not satisfy, then I will go for 3. Be careful. The order you should always be careful. Able to understand? Now 1 again 1. B1 satisfied. 182 logic satisfied. He is a resident. No B1 sir. B2 he is satisfied sir. Then also is a resident. But B2 does not apply to 3 SSCs. Indian citizen leaving India for employment or as a member of crew in foreign bound ship, or Indian citizen or Indian origin visiting India. For them also we will not apply. For them we will only check B1. Satisfied. Then I will go for additional conditions. Additional conditions. Additional conditions are called as A1 and A2. Additional conditions are called as A1 and A2. Now what are they? Now category 1, category 2, category 3. Through this I determine residential status, right? I call them as basic resident at first. I will call them as basic resident at first. And further, if at all through category 2, category 3 you became a resident, like 1 completely failed, you became a resident through 2 and 3, you are by default RNOR. You don't have to go for additional conditions checking. You don't have to go for 6 subsection 2 additional conditions checking. Clear? Suppose you satisfied category 1 and became a resident. Through category 1 you became a resident, either B1 or B2 route. Through these 2 routes you became a resident. Then I will go for A1, A2 check. So A1, A2, when should I check? 182 logic you satisfied. That time I will check. 60 days logic, 365 days logic is applicable to you and you satisfied that. That time any of these 2 logics satisfied. Then only I will check A1, A2. What is A1? Very simple. Last 7 years you take data. Last 7 years. Last 7 years means relevant previous year or not. You should not take that. Before that 7 years. In that, how many days he stayed in all 7 years put together? How many days? Minimum 730 days. Minimum how many days? 730. He's a A1 satisfied. Not sufficient. A1 and A2 both should be satisfied. Both should be satisfied. A1 and A2 it is end. B1, B2 it is OR. Okay. A1 and A2. A2 is what? Sir, take last 10 years data. Last 10 years data you take. Any 2 years. Any 2 years. Any 2. For any 2 years out of last 10. Minimum 2 ma. Any means here what? Minimum 2 years out of last 10 years. He is just a resident. He is just a resident. Last 10 years he is a resident, I said, right? It may be category 1 resident, category 2 resident, category 3 resident, doesn't matter. In the last 10 years, for all the 10 years, I will apply 3 categories, 3 categories, 3 categories. Year 10 I will take 3 categories, I'll check. Year 9 I will take 3 categories, I'll check. Year 8 I'll take 3 categories, I'll check. Year 4, year 7, year 6, year 5, all 3 categories I'll check. Any one category they satisfied and become a resident. Okay, in any year. Like that, for any 2 years you become a resident minimum. Enough. A2 satisfied. A1 when it is satisfied, 730 days or more in the last 7 years, A1 satisfied. 2 years out of 10 years in the last, you became a resident, A2 satisfied. If both are satisfied and you satisfied B1 or B2, you satisfied B1 or B2 and you satisfied both A1 and A2, then you are a ROR. Are you clear? Tell me, A1 and A2, I will check when? Only when B1 or B2 is satisfied. B2, B1 means what? 182 days logic. B2 means what? 60 plus 365 day logic. By the way, if at all B2 condition is not applicable at all, 3 cases, then I will ignore them. Okay, then I will check only B1. If B1 failed, B2 not applicable, then I will go for category 2, category 3. If an individual becomes resident in category 2, category 3, he is by default RNOR. That's it. Over. Residential status major topic is over. Are you clear? Next, now we'll discuss about HUF. Again, HUF also the same logic. First you should decide resident or non-resident. HUF no, first you should decide resident or non-resident. Because no, in HUF no, residents are again 2 types, ROR, RNOR. Now first know, before I go for OR, NOR category, first I should know is it resident or not, basically. Just like individual, 3 categories are there. First to know resident or not. Okay. Now for resident, no. For HUF I will say control and management. For becoming a basic resident, a HUF will become a basic resident. When you know, if control and management is partly or fully in India. Sir, if control and management are fully outside, HUF is, if control and management is fully outside, it's a non-resident. If control and management is fully in India or partly in India, it's a resident first. Now, is the HUF ordinary resident or not ordinary resident? Then, you remember A1, A2 we covered, no? Conditions A1, A2 we discussed, no? A1 and A2, both conditions you apply for Karta. Did Karta of HUF satisfy A1 and A2? Karta last 7 years 730 days stayed. Last 10 years 2 years Karta is resident. Check out. Yes sir, he is a resident for 2 out of last 10, 730 or more in the last 7 years. And control and management of the HUF is partly or fully in India. HUF become ROR. Sir, Karta failed with A1 sir. A2 satisfied sir. A1 failed sir. A1 and A2, any one condition failed, doesn't matter. HUF is just RNOR. Are you clear? Easy or not? So now here one logic. Sometimes HUF can be ROR, but Karta is non-resident. That is also possible. Why? Now tell me, if HUF, can I say HUF residential status is equal to Karta residential status? No. Karta is a separate person from HUF. Karta is an individual. For Karta of the HUF, how should I set residential status? Category 1, category 2, category 3. A1 and A2 as usual I check. He is an individual there. First of all, I'll check as per that. For HUF, how should I check? Control and management. Then Karta's A1 and A2 satisfied. Then HUF will become ROR, RNOR. Are you clear? So for a particular previous year, HUF can become ROR. Still Karta can be NR. Possibility. Same way, for a particular year, Karta can be ROR. 100% control and management is outside India. That is also possible. HUF can be non-resident. So there is no link between HUF residential status and Karta residential status because both of them are 2 different SSEs. That's it. Entire residential status topic is over. Then we have something called section number 9 discussion. Okay. Section number 9, what I will recommend is my previous version marathon is there. My previous version CA Inter income tax marathon is there. The same is applicable. My previous version September written marathon. That related video I will attach to this. In the YouTube I will attach to this. Okay. There I will discuss that, you follow. Clear? With this residential status is done. Okay, and watch this continuation where I spoke about section 9. If at all I missed to attach that in this video, just watch my previous marathon which I uploaded for September 25 exams of CA Inter. In that section 9 I discussed. That is sufficient. That's it. With this, residential status chapter is over.